improving for the Ukrainian side. So Putin needs a win, a political win inside, and no matter what kind of win. And that is a dangerous situation. And that's where Ukraine is advancing, and we see that Europe is defending Ukraine, is giving financial
in Long Island, I think so. Someone will check me. Anyway, they put in all this framework, the Department of Energy and the Nuclear Regulatory Commission, and it's been a bit of a split between those two agencies as to who is in charge of what. These new startups can't get these reactors online, but people get a bit nervous when you start saying we're removing regulatory framework.
Because, well, we have to live together in the future. So that's number one. That's number one. Yeah. Number two, what is the point of engagement if the other party doesn't want to engage? So there has to be clear signs that Russia wants a peace talk. Up to now, that is not really shown.
So is it your position that it is still not appropriate for the Europeans to be engaging diplomatically with the Russians? There's been talks potentially about electing somebody who could be a go-between, an Angela Merkel, for example, a Mario Draghi. Do you think those would be interesting people to broker that effort?
First of all, there should be one person, if the peace talks are in place, who has the political mandate to do that, and the states. We don't want to repeat what the history had, where Baltic states were left on a dealing table without us knowing. So we have to have a clear understanding what is the message, what is the substance. The channels, of course, if we want to have peace talks, there should be diplomatic channels available. That is true, but somebody needs to have a mandate to do that.
And thinking also about some of the comments we've had from President Trump and the sort of troop posture of the United States within Europe, withdrawing troops potentially from Germany. Do you have any idea how that will affect Latvia? Are there conversations open with the government right now of the United States trying to lobby to get more troops actually sent over? What is your position on that? What are those talks like?
U.S. is our strategic partner. Nothing has changed. I just had a meeting with the ambassador in Latvia, U.S. ambassador in Latvia. We had very friendly discussions. We were talking about much stronger ties economically and also in defense area, and she's really for it. There is no signs. We are strong. We have the troops available on our grounds. We definitely are asking for more because we need to show that the European eastern border, eastern flank, is as strong as it can be. So there should be no ideas in mind of the aggressor to do something unnecessary.
And I don't want to go too deep into the details of the MOU with Iran, but there are two ways in which it will be affecting Latvia directly. Obviously on energy prices, so I'd like to get sort of your reflection on how you think it's going to impact the economy if you sort of now can breathe a sigh of relief. And the second part is Latvia will also participate in a possible mine-sweeping efforts on the Strait of Hormuz. Where are we on those discussions? When do you think such a mission, do you think, could be deployed?
First of all, we're strategic partners. We treat USA as our clear strategic partner. And it goes both ways. US helps us, we do the same. Yeah, the size, there's a difference in size, but not in the heart. So from that perspective, but looking at Hormuz, it's an important factor, not just for Latvia, for the whole world. First of all, it has a huge effect on agriculture. I mean, the fertilizer. We're not having an effect now, but in a very near future, it's a clear uncertainty what's going to happen. It's going to drive prices up. It's going to drive inflation. It's going to drive the whole development. So that's one. Aviation fuel, 50%. That's clear affecting a lot of aviation companies, as well as Latvian Air Baltic. So for us, it's a direct impact, and it's as important as fast as we can stop this and have a clear understanding that goods are traveling.
And one of the reasons that the last government in Latvia fell was because of the drone incursions and the inability to shoot them down. Just very quickly, how do you intend to address that issue? Obviously, it's got to be front and center. It's sort of surprising that this was able to happen and there was not a plan to really sort of effectuate that.
Number one, our defense has to be our number one priority, and that's for us We signed an agreement with Ukraine, a drone agreement, which gives us a clear, full package and umbrella from detecting to actually shooting down and surveying. That is an area where I think number one priority, and I also spoke yesterday in NATO with Mark Rutte about this, that we have to integrate Ukrainian system in the NATO system, and Baltics has to be the front line and the first ones to do that.
Well, Andris Kulbergs, thank you so much for your time, and thank you for speaking to us here on the sidelines of that first UCO summit that you'll be attending, the Prime Minister of Latvia there, on all the many issues that will be discussed by the European leaders today, including, of course, top of the agenda, Ukraine.
Ollie, thanks so much. Oliver Crook, there, our Chief Europe Correspondent, with a very nice and nuanced conversation about Europe and the U.S. Now, that's it from me, from Viva Tech. After the break, Anna Edwards will be speaking to Giorgio Pradelli, the Chief Executive of EFG, about the future of Switzerland as a financial hub, now that the proposal to cap its population has also been rejected. That's coming up next, and this is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Welcome back to The Pulse. I'm Anna Edwards in London for the last bit of the programme. Now, the Swiss private bank EFG has said it's benefited from the volatility caused by the conflict in the Middle East, in the sense that clients have moved their money out of the region. Perhaps some of it lands in Switzerland. So how is the interim deal that's just been signed, the MOU, likely to affect investor sentiment? Giorgio Pradelli is the CEO of EFG International, one of Switzerland's biggest wealth managers. He's here in London visiting subsidiaries, clients, investors, and can tell us how things are. Good to see you, Giorgio. Thank you very much for coming in.
Good to see you, and thank you for having me.
So did you see inflows that you can attribute to the changing geopolitical dynamics in the Middle East, and what do you expect to happen there now?
Well, for sure, and this is, let's say, the backbone of our strategy for the next 3 years. We see that wealth globally, despite all the turmoils that we see, the volatility and uncertainty of the markets, is being generated by entrepreneurs. The economies are very resilient, and also we see that wealth is on the move, i.e. that wealth is moving from the countries where it has been generated to international financial centers as a form of risk diversification, a geopolitical risk diversification. Clearly, what happened at the end of February accelerated that, and we have seen that obviously wealth on the move accelerated. There was a risk of having clients being risk-off. We saw that at the beginning of March, but then at the end, this did not materialize, and the activity continued very strong.
Do you think that the MOU that's now been signed between the US and Iran will lead to clients being more risk-on, or is it too premature for that kind of conversation with clients?
But to be fair, I must say that after the initial couple of weeks, probably the month of March, from April, after Easter, to be fair, we have seen again a moderate risk-on, or let's say a lot of activity. Maybe there was not a clear direction, but as long as there is no clear direction, but is risk-on, obviously for wealth managers and private banks like us, this is very, very positive. I believe that now that the situation is stabilizing, this is good for the sector, is good for investors. Clearly, a lot will depend on how inflation will be determined, what the Fed will do. Yesterday was obviously very interesting to see the first meeting, but overall I think is a positive sign for sure.
Yes. Did you spend more time over the last couple of months talking about the closure of the Strait of Hormuz or AI and the possibilities around tech?
That's a good call, I would say. Clearly these are the two dominant topics, is about geopolitics, geoeconomics, as some people call it, and obviously AI. And to a certain extent, they are obviously very interrelated, because clearly, if in the race of AI, at the end of the day, the topic is energy, and clearly the Strait of Hormuz was all about energy at the end of the day, and clearly are very interrelated.
Yes, you mentioned the Fed, and we heard, of course, from Kevin Walsh for the first time just last night, European time. We've seen bond markets respond, some flattening of the curve, higher expectations of interest rate hikes out of the US. Are clients continuing to adapt to a higher interest rate regime? Is that an ongoing story for you?
I think that, to be fair, the tone was more hawkish than expected overall, so there was a bit of surprise. Overall, for us, as long as interest rates remain in this environment, is quite positive, because clearly for banks, you want to have a level of interest rates which is above zero for sure, and overall is not so high that is dampening too much growth in the economy. So for us at the moment, the situation is pretty good.
Okay. Periodically, we talk about consolidation within the wealth management space. What does EFG International's role in consolidation look like at this point?
Well, for us, our strategy is about sustainable and profitable growth. Is mainly an organic growth strategy, but we like M&A. In the last 12 months, we've done 3 acquisitions, which is about 10% of our total assets under management, which is almost 200 billion Swiss francs. And we like M&A, but and in theory, the sector should consolidate. Now, how fast? This is, a key question. So we are ready. We have clear criteria. We would like to continue growing and also acquiring, if possible, where we're already present. So we don't want to venture in new markets. For us, cultural fit is extremely important. We have a specific business model, and clearly we need to have a return on investment of 10% over 3 years.
Yes, the competitive threat, Giorgio, briefly, does it come from traditional wealth managers or from fintechs?
Well, this is a very good question, and we have waves, right? I mean, a few years ago, were fintechs. Now, at the end of November, beginning of December, there was the sector sold off because everybody thought that AI will substitute the advisor, the traditional private banking or financial advisor. We believe more in the concept of augmented client relationship officer. So we believe that AI will have a major role in our industry, but it will complement and supplement the skills of our client relationship officers and our teams. So it will be a combination of specialized teams and AI.
Okay, Giorgio, thank you so much. Really nice to speak to you. Thank you very much for joining us here on Bloomberg TV. Giorgio Pradelli, the CEO of EFG International. Coming up, we will have plenty more. You saw Francine over at Viva Tech in Paris. Plenty more still to come from there, including a conversation with the Physics X co-founder, Giacomo Corbo. That's at 10:45 a.m. London time. No doubt a lot of conversations about AI sovereignty, getting a lot of play here in Europe as well. Up next, though, Bloomberg Brief. This is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these. Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stock future is rebounding as an interim U.S.-Iran deal takes effect and opens the door for more negotiations. The 2-year yield topping 420 after a hawkish FOMC news conference. That yield easing slightly this morning. All as Fed Chair Kevin Warsh debuts with a firm commitment to price stability and an overhaul of the institution. Well, it's been a big evening around the world. Let's get a check on markets. Here's Paul Dobson in Singapore for the latest from Asia. Paul.
Yeah, hi there, Bunny. So Asia's market's torn by a few different narratives today. You might have expected that the Federal Reserve meeting would have been more of a negative for the financial markets in Asia. But in actual fact, a couple of other things swept in and gave us some more momentum. So first of all, the Trump signing of the peace deal, which pulled down energy prices. That was pretty helpful for the MSCI Asia Pacific Index. And then we also had another rally in the chip market. See there, South Korea popping higher, even though less than 100 of the stocks on the gauge were rising, while 700 odd were falling. So tech really driving the market higher today. Have a look, though, spare a thought for the Malaysian ringgit, which came under pressure from both the falling oil prices and also the higher interest rates, which were boosting the US dollar. On the flip side of that, you've got, let's take a look at the competing narratives in China. A couple of gauges, one of them on the cusp of a bear market, the MSCI China Index. There you've got the platform economy companies like Tencent and Alibaba having a miserable time of it, dragging it down. But if you look at another gauge of Chinese stocks, this time the Star 50, that's close to a record high, being driven by smaller startup companies, chip sector, all of the buzzy AI. So 2 different ways to slice and dice China's markets, depending on which way you look at it.
Thanks, Paul. Paul Dobson there. I'll be back in a few moments to talk about the various push and pulls around the world. Now to London, though, for a look at what's been happening in Europe. Here's Justina Lee. Justina.
It's a day of central bank rate decisions here in Europe, Bonnie. Now, we start with the stock market here. The FTSE 100 down quite a bit, dragged down by weakness in some of those miners and oil majors. And now, the first rate decision I'm going to talk about is, of course, the BOE coming later today. Now, it's widely expected to be a hold, but the question here is, what are they going to signal about kind of the prospect of another rate hike this year? And we're seeing the two-year gilt yield rising a bit, also reflecting a bit of that hawkish signal from the Fed overnight. And another rate decision that came today, also a hold, is from Norway. But the central bank did signal that they will probably hike again later this year. And so actually, right now we're seeing kind of quite a bit of strength in the dollar, but earlier the krone did weaken quite a bit. Now, another interesting decision, the third one kind of today out of Europe, if we flip the board here, is kind of from Switzerland. And, you know, another hold. But what is interesting is that the central bank kind of said, you know, if needed, they're still watching out for kind of potential intervention against strength in the Swiss franc. And we see kind of the cross rate between the euro and the Swiss franc year to date. And we're kind of seeing that signaling has been pretty effective in keeping a lid on the strength of the franc. And of course, at least like right now, maybe those haven flows are easing up with kind of a peace deal in the Middle East, but clearly the central bank is still watching out for kind of further gains in the Swiss franc, Bonnie.
Justina, thank you so much. Justina Lee there in London. A massive bear flattening move triggered by Kevin Warsh's first meeting as Fed chair. A unanimous decision to hold rates steady, but a very split committee, in fact, divided down the middle. One member sees 3 rate hikes just this year alone, and 5 see 2. It was a little bit of a surprise to the market, immediately pricing in at least 1 rate hike by October. And as you can see, we're at 4.17 and change on the 2-year now. We actually topped 4.20 in the session yesterday. We were up 13 basis points on that 2-year yield. If you look at the long end, though, we stayed basically where we were. We're at 4.8828. That 2-10 spread at 27 basis points now, extraordinarily narrow. Obviously, not too much concern in the future about inflation. A lot of confidence in this Fed chair that he's going to focus on price stability, as he said yesterday, and that he may be leaning a little more hawkish than some had expected. Let's move to oil, because this is also part of the story today, a big part of the story. In fact, we have gasoline dipping below $4 for the first time since March, which is going to come as ease to consumers out there buying gas. New York crude below $75 a barrel, Brent crude below $78 a barrel. In fact, just this week alone, we have lost 11% on Brent crude. So a fascinating move there as the Strait of Hormuz starts to kick into gear again. And then we'll take a look at stock futures, see how we might be positioned for the day. Well, it looks like stocks are rejoicing in this new Fed decision and, of course, the Memorandum of Understanding. Let's get to some individual movers now. Here's Chloe Melly in London.
Good morning, Vonnie. Intel is firmly in the green this morning after Trump said on Truth Social that Apple had reached an agreement with Intel to manufacture some of its chips in the US. And so this confirms a report from the Wall Street Journal from a few weeks ago about an agreement being reached between those two companies on this. And so we are seeing that really drive those Intel shares this morning, up almost 10% in pre-market trading. Moving on to SpaceX, which is still in focus today after getting initiated at a buy rate with a street high price target as well, with the analysts saying that there are going to be really massive opportunities in that space sector for that company. We had seen some fluctuation in the shares, but we are up slightly, about 1% this morning. And finally, let's end with the firearms manufacturer Smith & Wesson, which is up very strongly this morning, about 15%, after reporting strong sales that beat estimates and saying that there's going to be really healthy demand for firearms going into the new financial year, and actually even better than they had seen in 2026. So we're up very strongly there on the back of those earnings.
Chloe Melly, thank you so much. Coming up this hour as well, we look at the Fed's rate path with Chair Warsh at the helm with Christopher Hodge of Natixis. And we'll be live from the Viva Tech conference in Paris with Giacomo Corbo, PhysicsX CEO. But first, a new era for the Federal Reserve.
Appointing a task force in each of 5 areas that are central to the broad conduct of monetary policy. I did not submit a dot For me, it's not helpful in the conduct of policy. We've dropped forward guidance. We have the capability and commitment to deliver on our price stability objective of 2%. That's exactly what we're going to do. These will be our decisions. We can agree to some of the recommendations, disagree with others, have a good family fight about it. But what comes from them will, I hope and believe, make the discussion we have internally better, stronger.
Chair Warsh's messages driving traders to bet on a rate hike as soon as next month. The two-year yield, as we've been saying, posting its biggest jump in more than a year, matching the largest increase on a Fed meeting day since 2008. Joining us now is Bloomberg's Alistair Bull. So, Alistair, a unanimous decision, but a very split committee. One person even seeing 3 rate hikes this year. So, if Fed Chair Warsh is going to be the deciding vote, is it fair to say that we're getting at least 1 rate hike, and potentially before the midterms?
Potentially, yes, but Chair Warsh was very clear about not providing forward guidance other than committing to delivering price stability. So if the assessment in the coming weeks is they need to raise rates to do that, then I'm sure he will, for the sake of his credibility and the credibility of the Fed. And we'll see that as the data comes out over the course of the next 6 weeks, up to the meeting in July, through the summer to September, when they also have a meeting. If the data is better than expected, if inflation is cooler than forecast, perhaps because of the interim deal signed last night in Versailles by President Trump with Iran, then they may not need to raise interest rates. But he's clearly put it on the table. I'm sure he finds the tightening in financial conditions that he's getting through the sharp rise in 2-year yields helpful in containing inflation expectations, and then he'll let the data do the talking. I think it's going to be very interesting how we adjust and how the markets adjust to this new era with the Federal Reserve under Kevin Warsh.
Absolutely. He expressed that the markets should interpret the data themselves, right, and not look to the Fed. How that will work, not quite sure. 5 task forces on monetary policy. Does that take the onus off Chair Warsh if changes come? And also, does this not expand now who is part of the Federal Reserve watching system? Won't we have to see who's going to be appointed to do all these tasks? And won't the markets be trying to decide how they will change the system?
Yeah, no, definitely. I mean, he also said during the press conference last night that we'll listen to these voices, but we'll make our own decisions. These task forces will come up with recommendations, but the FOMC will own the outcome. The period he's got, the 6 months between now and the end of the year, when he's expecting to get those recommendations, also gives him plenty of time to socialize ideas, to build coalitions and consensus around what he wants to do. And although this is going to add up to dramatic, well, we don't know if it's going to be dramatic, but potentially dramatic change, he's got a lot of time to sort of get the thoughts out into the open, gauge market reaction, and deliver a relatively smooth rollout of his reform agenda. But who's on those task forces is going to be very interesting, and we'll obviously be scrutinizing what they've said in the past to get a sense of where they may come out now in their recommendations.
And he is literally calling them to ask himself, so you can imagine they have the same types of philosophies as him potentially, although he did say he would look for a spectrum of people. Alistair, thank you so much. Bloomberg's Alistair Bull. President Trump's interim peace deal with Iran has officially taken effect, but it faces severe backlash from political allies who argue the U.S. conceded too much. For more, we're joined by Bloomberg's Abir Abu Omar in Dubai. Abir, President Trump backtracked on some of the things that we thought were red lines for him. What did he backtrack on exactly?
A lot of things, Vonnie, and that's what is apparent in this MOU with the 14 provisions that we've reported on that was apparently signed yesterday in the Palace of Versailles. So it looks like the deal, or this interim deal, because we have to bear in mind this is not permanent, is a little bit lopsided, and that tilt is towards Iran's side. So here are a few key things, right? The first thing we know in the deal that works in Iran's favor is it paves the way to unlocking frozen assets, billions of dollars to those, lifting oil sanctions sanctions on Iran, as well as allowing Iran to continue developing ballistic missiles, as well as the $300 billion in a development fund that President Trump said Gulf allies would help rebuild. And J.D. Vance also said that to Fox News earlier. Now, it's unclear if Gulf nations will be ready to contribute to that fund, but that is one thing that contributes to Iran's benefit. For the U.S. side, the reopening of the Strait of Hormuz and a promise, possibly by Iran, to not develop a nuclear weapon. So our geoeconomics team has actually put out a list that studies what these provisions mean. And the 14 provisions, 10 of them work in Iran's favor, 3 of them are neutral, and just 1 works in the U.S. favor, Vani. And again, for the U.S., it goes back pretty much to what the situation was pre-war. For Iran, it is set to win a lot of concessions, including, again, as I mentioned, billions of dollars. For the time being, the Strait of Hormuz is seeing a little bit more trickle of shipments. We're seeing tankers that are connected to Saudi Arabia or Qatar making their way either in or out of the strait. So that is good news that is starting to get reflected in the price of Brent that has fallen below $80 a barrel, for example. But when it comes to the overall deal, the 60-day period that will pave the way for the permanent deal, what we're seeing is it's really tilting to Iran's benefit at this point.
Abir, thank you so much. Bloomberg's Abir Abu Omar. Brent crude sinking below $78 a barrel as that interim U.S.-Iran deal goes into effect, and U.S. gasoline pump prices fall below $4 a barrel. Let's get more with Bloomberg's Will Kennedy. Will, what did we find out through all of this? Did we find out that we actually do have ample reserves and we really didn't get to a crisis point?
We didn't. We never saw some of the extreme prices that many had predicted. I think there were several reasons for that. The stockpile release globally was one. China's ability to cut back its oil imports because it could use less and use its own reserves was definitely something that people hadn't foreseen. And the ability to get some supplies, especially in recent weeks, through Hormuz was another factor. And you put that all together, and the global energy system, the global oil system, was perhaps more resilient and more flexible than many people had expected. Now, that's not to say that it wasn't a big shock, and had this continued for a number of weeks more, that we wouldn't have seen severe stress throughout the global oil system. But we're not there at the moment. Oil is back down a long way, 15% over the last week, as you showed. And as you're showing there, gasoline prices at the pump in the US are responding too, and we're back below $4 a barrel, which will be a big relief to President Trump.
You know, we have a scenario analysis that the pickup in shipments might be completed by the end of July. Gulf production could recover by October. Also, Goldman saying that 70% is going to be the new 100% because there will be other lanes now going into effect. The Gulf countries, for example, won't be just solely focused on the Strait of Hormuz anymore. Does all that seem like a reasonable 2 to 3 month outcome, Will?
More oil will flow quite quickly. We're already seeing signs of that right now this morning. We've seen some Saudi Arabian supertankers having transited the Gulf through the Strait of Hormuz for the first time since the war began. That's really interesting that the Saudis feel confident enough to send oil through the strait. I think we'll see more things like that in the days ahead as people gain confidence that this agreement holds and that Iran will allow ships through the strait unmolested. And then I think it's a real question of how quickly we can get things back up and running again. But history shows that the oil industry is good at recovering from emergencies, recovering from crises, and that's why you've seen such a marked response in the oil market so far, because there is that expectation that the oil will start to flow quite quickly, even though it will take a number of weeks and months to get fully back to normal.
Will, amazing context. Thank you so much. That is Will Kennedy there in London. Coming up, weakness in tech dragging a Chinese stock gauge towards a bear market. More on that next. This is Bloomberg.
how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bloomberg Brief. I'm Bonnie Quinn in New York. The MSCI China Index set to enter a bear market with internet and e-commerce stocks falling on concerns over dim earnings prospects and sluggish domestic demand. Bloomberg's Paul Dobson is back with us for more. Paul, how much of this has to do with geopolitical pressures from AI to oil supply constraints, and how much of it is China's domestic policy?
Yeah, hi there, Bonnie. So I think I would lean more to the latter to explain these moves, although there's some wrinkles within that as well. So this is the MSCI Asia gauge, which is very heavily biased towards some of the platform companies, the likes of Alibaba, Tencent, which are really in this very competitive price environment, which talks to this idea of the weak domestic economy in China at the moment. And their stocks have been performing particularly poorly as a result this year, dragging down that index. It's not the only gauge of Chinese equity markets, as you know, and I think that if you were to look at another one, the StartupPal 50 index, for example, which includes much more of the more sort of dynamic startup companies, more tied into that AI trade, you actually see that that's close to a record high in a bull market. So there's different ways to look at the China markets at the moment. I think what we're typically seeing is most mainland gauges performing more strongly at the moment, Hong Kong under pressure, and the weightings of Alibaba, Tencent, and other related companies in a similar situation, and a similar funk is really sort of teasing it out. I think it's that K-shaped China economy where the exports from the new technology is really booming, whereas the domestic consumer is still pretty sad. I'm going to say sad, Bonnie. That's a bit mean, but you know what I mean.
Yes, I do know exactly what you mean. Paul, the yen is trading at 160.71. We were even above that a little earlier. It's been above 160 for days now, a couple of weeks even, with one or two exceptions, but pretty stable above there. What is the BOJ thinking?
Well, the BOJ has just hiked interest rates. Is probably pretty pleased with itself that it managed to do that with barely causing a ripple in the currency markets. And the Japanese authorities, the government, will also be heaving a sigh of relief that there wasn't more pressure on the yen after that Federal Reserve meeting yesterday, which came across quite hawkish. It did tip the yen to the weakest level in over a year, but the key level now for everybody to be paying attention to is 161.95. That's the weakest level that it's been at since the 1980s, and the market is betting that were we to get closer to that level, it may well tempt the Japanese authorities to intervene again by buying back the yen to try to offer it some support. So the market's in this sort of cat and mouse situation a little bit with the yen, though, Bonnie. It is under pressure, it is weakening, but everybody knows that if you push it too far, then you do run the risk of that sort of mousetrap pinging with the intervention and being caught out. So as a result, it does have that sort of almost artificial stability right now.
Briefly, Paul, after the Memorandum of Understanding was signed, oil markets seem to be getting back to something towards normality at some point, I guess, right? What does it mean for the Southeast Asian currencies and countries that were really suffering with this oil supply shock?
Yeah, it's been so fascinating to watch the currency markets here over the last couple of weeks. Everybody was in real panic, it would seem. About 2 weeks ago, we saw extraordinary measures coming in. We saw India introducing a whole bunch of reasons to repatriate money back in to help support the rupee. We saw Indonesia doing emergency rate hikes. We saw Philippines doing lots of rate hikes and intervening in markets. Then we got signs that the peace deal was coming, and that was giving everybody a sigh of relief. With the Fed sounding a little bit more hawkish, that's put things under a little bit of pressure again today. So we saw another rate hike by Indonesia just to shore up its markets some more. We're also seeing similar moves in other central banks in Asia. And that does seem to stabilize most of them. One that stood out today, which is really interesting, is that Malaysian ringgit. That came under pressure because of the strength for the dollar, but also because as an energy producer, it actually fares better when the energy prices are higher. So when the war was on, that was benefiting the Malaysian ringgit. So now with oil prices weakening, Malaysian ringgit facing a double whammy. It closed at the weakest level year to date today.
All right, we'll be following closely. Paul, thank you so much. That is Bloomberg's Paul Dobson. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stock futures rebounding today as an interim U.S.-Iran deal takes effect and opens the door for more negotiations. The two-year yield topping 420 after a hawkish FOMC news conference, easing slightly this morning. All as Fed Chair Kevin Warsh debuts with a firm commitment to price stability and an overhaul of the institution. So let's take a look at Treasuries then, because you saw the two-year yield rise massively, up 13 basis points, topping 420. We're back just below 417 now, but a huge bear flattener triggered by that first meeting. Short and long-term yields converging, so the 2-10 spread at 27 basis points right now, and on the decline, in fact. It's about to hit 26 basis points. A split committee, a focus on price stability, 9 members then leading towards a hike as the next move. One member even sees 3 hikes by the end of the year. Let's have a look at oil, because that's the other part of this story. Down 11% so far this week on Brent crude, just at $78 a barrel now as ships start to move through the Strait of Hormuz again. New York crude below $75 a barrel, and AAA retail gas on average across the country at $4. We dipped below that, in fact, at the pump yesterday. First time that's happened since the month of March. If you look at stock futures, we are primed for nice gains today after the market digests everything that happened in yesterday's session. Stocks did sell off after the hawkish tone from the Fed chair, but we are rebounding today with that NASDAQ 100 down 1% yesterday and looking to rebound more than that today. Let's get to some individual movers now. For that, we'll go over to London and Chloe Melly.
Good morning, Bonnie. Intel is having a pretty good morning. We're up about 9% after Trump said on Truth Social that Apple had reached an agreement with Intel to manufacture some of its chips in the US. So this confirms a report from a few weeks ago from the Wall Street Journal about those two big companies reaching such a deal. And so this is seen as, of course, very positive for Intel. And we are seeing that really driving those shares in the green this morning in pre-market trading. Moving on to SpaceX, which is still in focus, as it has been for the last few days. We have seen the stock fluctuate a little bit in pre-market trading. We're up about 1% right now. It just got initiated at a buy rating with analysts saying that there were loads of opportunities for that company and giving it a street high price target as well. And so this is driving the shares a little bit this morning for SpaceX. And finally, let's go over to Smith & Wesson, which is up very strongly in pre-market trading. We're up about 14% after reporting net sales that came in ahead of analyst expectations. And the company said that demand for firearms was going to be still very healthy in 2027 and actually even better than it was in 2026. And so we see that reflected in those shares this morning, up very strongly for Smith & Wesson.
Chloe, thank you so much. Chloe Melly there in London. Now, a few top stories trending on the terminal this morning. The Swiss National Bank keeping its interest rate at zero for a fourth straight quarterly meeting. Policymakers reiterating their increased willingness to intervene with the Swiss franc. The Swissy weakened against the euro after the decision. Defense Secretary Pete Hegseth says the U.S. will kick off a review of its military presence in Europe. He made the announcement in his opening remarks at a meeting of defense ministers at NATO headquarters in Brussels. Hegseth also signaled more cuts may come as the U.S. presses Europe to take primary responsibility for its conventional defense. And today marks the New York Knicks' first ever ticker tape parade following their NBA championship. Fans are paying professionals, line sitters, as much as $950 to guarantee themselves a front row view. The parade is expected to be one of the largest in New York City history, the NYPD deploying 10,000 officers to the route. Fed Chair Kevin Warsh jolting the bond market with his debut news conference.
I'm appointing a task force in each of 5 areas that are central to the broad conduct of monetary policy. I did not submit a dot. For me, it's not helpful in the conduct of policy. We've dropped forward guidance. We have the capability and commitment to deliver on our price stability objective of 2%. That's exactly what we're going to do. These will be our decisions. We can agree to some of the recommendations, disagree with others, have a good family fight about it. But what comes from them will, I hope and believe, make the discussion we have internally better, stronger.
Joining us now is Christopher Hodge, Chief U.S. Economist at Natixis. So not just a hawkish Fed chair in some ways, Chris, but also a hawkish committee, more than we thought. One member is seeing 3 rate hikes by the end of the year and 5 members seeing 2, very split decision, 9 seeing hikes after all. How quickly does the Fed chair actually need to hike, given that he didn't yesterday, but he's really focused on price stability?
That's really a great question. His discussion of inflation was actually fairly nuanced as well. So there was no doubt that the priority is on achieving price stability. The focus is firmly on inflation. But he did offer, a fairly nuanced perspective on inflation, saying that there are some prices that the Fed cannot control. And the Fed's primary job is to make sure that these energy shocks don't bleed through to the rest of core prices. So that is a little bit of a more nuanced take, and I do think that there is a firm commitment to bring inflation back down to target. And without any sort of forward guidance, that also means that Chair Warsh didn't give the market any indication about the reaction function of the Fed either. So I do think if hikes are going to come, they're probably going to come sooner because the market's expecting them right now. And if he doesn't deliver, he risks a credibility problem.
Yeah, on that, how is the market supposed to glean the Fed's reaction function, if it can at all? And, he also said that the market should interpret the data that comes in as it wishes and not follow the Fed for any kind of, example on how to interpret that data.
Yeah, he's clearly going to be a lot more comfortable with live meetings. So whether or not he actually pulls the trigger on that and shocks the market with a hike when they're not expecting it is a different story. But at least the story that he's telling right now is that he's very comfortable with not having clear expectations about what the Fed is going to do on a meeting-by-meeting basis.
Chris, on the balance sheet, he said the committee reaffirmed its policy of maintaining ample reserves in the banking system. What is ample, and how soon does this balance sheet shrink?
Well, I think if you ask 12 policymakers, you'll probably get 12 different answers on that. I've said from the very beginning that I think Warsh is firmly committed to a smaller balance sheet for the Fed, or at least the balance sheet growing with the size of the economy in general. But that is something that I think he's going to need broader political buy-in from the FOMC on. So any sort of changes on the balance sheet, especially structurally, I think are going to be incremental and they're going to happen in time.
So on that, he's outsourcing some of these decisions, it would seem. All of these task forces, 5 of them, one on communications, one on the balance sheet, one on data gathering, which typically is the BLS's job and other federal agencies, right? One on productivity and jobs, and one on inflation drivers. Are we going to see huge changes at the Fed, and will we have to watch the personnel that are coming in on these task forces to try to gauge what that might look like in 6 to 12 months' time?
I think you're putting a time frame on it is the key issue here. So I do think you're going to see a different process and analytical framework that's going to be employed under the Warsh tenure at the Fed. The question is, when does that happen? And, I still do think that these sort of big structural and analytical changes do happen incrementally. And, he is going to need that sort of broader political buy-in in order to do that. So I think it's a very welcome development to have a fresh perspective and a new analytical way of thinking. But there's a lot of really smart people, not just on the board, but on the Fed staff, at the banks as well, that are willing to give input and provide really important input. So, I do think many changes are afoot, but I think they're going to be very gradual as well.
Chris, this bear flattening move that we saw, we're at 28 basis points now on the 2-10 spread, and the 30-year yield stayed at around 4.88. What is that an indication of? Is it that markets are looking forward and suggesting that perhaps inflation won't be a problem in the future? Has it a view on growth? Is it a view on the deficit?
Well, I think it's a combination of a lot of those things, but I think if you look at the dots as well, the dots move up in 2026 and then back down in 2027 and back down again in 2028. So there's clearly no read from the Fed about what the proper policy rate is going to be in the future. So it's really hard for markets to interpret what the Fed is going to do. Also, I think the major question is how willing and how often is the Fed going to be to change policy? Typically, once the Fed has started a particular cycle, whether it's hikes or cuts, they tend to move in that way. The dots would tell us that the Fed is going to be more comfortable changing policy more frequently, without really adherence to that previous playbook.
That would be a fascinating change. The statement said job growth was said to keep pace with labor supply. What happens if we get a weakening in the job market, which analysts out there say could very well happen?
Yeah, indeed, we actually have the unemployment grinding higher throughout the year, not to, really troubling levels, but to 4.5%. And really what's going to be very interesting is if you do get softer inflation prints from, dampening consumer demand or the energy shock fading a little bit, if you do get inflation coming down, but not coming down fast enough to target, and you have unemployment going up, but not going up to troubling levels, what does the Fed do now? Now, in the past, the Fed would look at those sort of inertial moves and be more concerned about the part of the mandate that's moving away from its target. What's the Fed going to do now? I think they're still going to be more concerned about inflation, but, Warsh has talked about productivity gains and possibly running the economy a little bit higher because of AI and technological adoption. If he views the stable rate of unemployment maybe closer to 3.9% rather than 4.2%, what's he going to do if there is an upward shift in the unemployment rate, even while inflation stays sticky but not accelerating? That is the major question for me right now.
Chris, thank you so much. So many questions this morning. Christopher Hodge of Natixis joining us. Coming up, Giacomo Corbo, PhysicsX CEO, is with Bloomberg's Francine Lacroix at Paris's Viva Tech conference. That conversation next. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving something.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. An interim U.S.-Iran peace deal officially taking effect. 3 Saudi oil supertankers are starting to cross the Strait of Hormuz. For more, we're joined by Bloomberg's Abir Abu Omar in Dubai. So they got going pretty quickly once that MOU was signed, Abir. Can we expect an uptick now in tankers crossing?
Seems to be the case, Vonnie. So what we're seeing is 3 super tankers laden with oil. They're owned by the Saudi oil giant Bahri that are making their way through the Strait of Hormuz. What we're reporting is that they could be carrying about 6 million barrels of oil. And so, look, what we're seeing right now is definitely an uptick in the traffic movement in the Strait of Hormuz. This was expected to happen because President Trump did say that upon signing the MOU, a ceasefire of about 60 days will be extended, and also the Strait of Hormuz will be reopened immediately. This is not the first time we're witnessing an uptick, and Saudi Arabia is not the only country that is seeing movement in its tankers and ships through the Strait of Hormuz. We reported earlier that some Qatari vessels, some Kuwaiti vessels are also trying to make their way through the Strait of Hormuz. Now, analysts, experts, people looking at the traffic in the Strait of Hormuz, Vonnie, are saying that, yes, we're seeing this uptick. It is very positive for oil markets. It is very positive for GCC exporters, but traffic for that to go back to the pre-war state, it'll take weeks, if not months, for us to start witnessing that level of movement. But this is definitely a step in a positive direction, and something that both parties had agreed to establish once this MOU has come into effect. That's Iran and the United States, Vonnie.
And then a couple of red lines blown through, apparently, on the part of President Trump in justifying this peace deal. Abir, briefly, what were they?
Yeah, so look, I mean, Iran is possibly getting more of a win out of this MOU. President Trump had agreed to unblock frozen assets eventually to Iran, lift oil sanctions, and allow Iran to continue developing its ballistic missile program, as well as a $300 or at least $300 billion of a development fund for Iran to rebuild its infrastructure that is damaged by war. The U.S. in return would get the reopening of the Strait of Hormuz, and also a promise by Iran to not seek a nuclear weapon. So what we're looking at is a deal where Iran wins more concessions than the United States. Still wait and see what the official permanent ceasefire looks like within or after the 60-day period, Vonnie.
Absolutely. Bloomberg's Abir Abu Omar, thank you so much. Now over to Paris. Global tech leaders gathered for Viva Tech. Bloomberg's Francine Lacroix is joined by PhysicsX co-founder and CEO Giacomo Corbo. Francine.
morning, Vonnie. We're excited to be here at Viva Tech, and I'm even more excited to speak to Giacomo Corbo, as you say, Chief Executive of PhysicsX. Giacomo, thank you for joining us.
Delighted to be here.
You're really at the frontier of something that you think could change the way we look at hardware. So in my mind, there's like the hyperscalers, there's of course the LLMs, and the kind of the big companies that we know. And then you have to apply this into hardware. So where does physics come in?
So, maybe to start off with, the world needs more hardware. We need industrial innovation. We need better chips. We need more efficient jet engines. We need, better gas turbines. And so much of that runs through what engineering and manufacturing looks like today. And so much of that is powered by, it's almost, it's ironic that these sectors that are so critical, that's so predicated on innovation are also slowed down by software tools that haven't really evolved in more than a generation. And so we're building better software and ultimately AI to power industrial sectors.
Yeah, so where do you see this, the biggest application? Is it semiconductors? Is it cars? Like, if you give us a sense of practically what this changes and in what kind of time frame?
So our largest sector is aerospace. We're working, with jet engine primes to accelerate their time to market, to come up with better and more performant, jet engines. We're working downstream of that in manufacturing on, complex castings, metal alloy casting. We're working in, aluminum smelting and steel production. We're working in semiconductors. We're working especially in semiconductor manufacturing equipment. So the manufacturing equipment to make semiconductor chips. So it's pretty horizontal what it is we're doing, and that's because so much of engineering and manufacturing runs through a lot of the same software tools. So we're building, we're oriented around the large enterprises across a few big verticals. But ultimately, we're trying to bring a very different way of doing the work of engineering and manufacturing in virtue of bringing AI to all of that.
But so what I'm trying to understand is, does it actually change the way you do and think about stuff, or does it just accelerate the timeline?
It's a good question. So that will look different depending on the application. So for some of our customers, the big imperative is engineering productivity. For other customers, it's there are too many technical profiles that are too scarce, that they don't have enough of, that are bottlenecks to doing the engineering or the manufacturing that our customers are doing. And in some cases, especially in semiconductors, a process needs to just work. You need to get to something that can etch at a certain nanoscale. And so ultimately, it's about product performance. And so in all of these things, we're bringing, a different level of optimization, a different level of automation, and that's in virtue of having this AI native stack to do a lot of the work.
Right. What are large physics models exactly? Like, explain it for, so that people understand exactly how fast this will change what you're working on.
So the way that you should think about them is in the same way that so much of AI, sits on large language models, and these large language models, as they've gotten bigger, have become more capable. The same thing is happening in robotics. Well, in our domain of physics and certain chemistry, we're seeing the same dynamic, which is to say that as these models are trained on more data, as these models get bigger, they become more capable. They become better at generalizing to new applications, at learning different physics. And so we're building these, what are foundation physics models, physics AI models, in order to be able to, power, a lot of the engineering and manufacturing that our customers are doing. But they are not language models, so they don't have a language backbone. They're trained on mostly synthetic data, numerical simulation data. And then one of the really nice things is that they can also be trained on experimental data that's coming from a wind tunnel, from a wet lab, from a test dyno.
So again, give me a sense of whether that could lead to a big breakthrough. I know we talk a lot about the protein folding that, for example, Google DeepMind was able to do. Is there something like this in physics? Because we don't really talk, that much about AI in physics. Could there be a aha moment where suddenly it changes and you're in the spotlight?
So, the big breakthroughs that, we've met at our customers is the ability, for example, in a semiconductor manufacturing process of, changing, of accelerating the time to configure a given process produce the first perfect wafer from something that typically takes between 6 and 9 months to something on the order of 4 days.
Okay.
So like this is an industry first.
Yeah.
Right. So and we have stories like that across a lot of the manufacturing and engineering that our customers do.
Yeah.
Whether it's a question of simulating at scale data center workloads and current and thermal workloads, or it's a question of controlling a smelting process. These are 4-day long simulations that we can run on inference in seconds. This is these are producing industry first across a lot of the applications that we touch.
We're just getting a headline from Peter Hegseth saying that the U.S. can reimpose a blockade of Iran if needed. Now, this is geopolitics, but does it actually change your world at all in physics? There does seem to be a difference between what AI is doing in the world of physics, in the world of semiconductors, and then the geopolitics that we're living day to day.
We are operating, if you think about, mining materials and energy, right? A lot of the things that we do, are relevant to commodities like lithium and certain, copper,
yep. Rare earths,
scandium alloys,
yep.
So we're touching critical minerals. We're touching, aerospace and defense. We're touching semiconductors and data centers and high-value industrial machinery. Like, these are some of the most geopolitically charged sectors, right? When people think about manufacturing, supply chain resilience, yeah. They think about, driving economic growth. They think about, global competition. It's these sectors that we are building into that are the ones that countries are thinking the most about. And, therefore, like, we have to think a little bit about how do we grow the company, who are the right partners for us and customers for us, what is the ecosystem of which we are a part that ensure that we are aligned, yeah. To the, let's say, for the most part, that we can serve global industries, but that we're making selective choices in the way of alliances that don't lock us up or have us in the crosshair of these geopolitical currents, yeah. So things that are outside of our control.
So interesting. Giacomo, thank you so much for joining us on Bloomberg.
Thank you.
That was, of course, Giacomo Corbo, Physics Chief Executive. With that, Vani, I'm going to send it back to you in New York, and we'll have plenty more throughout the day here at Viva Tech Paris.
Wonderful, Francine. Thank you so much. That's Bloomberg's Francine Lacroix and PhysicsX CEO Giacomo Corbo. Now, I just do want to mention one headline. Pete Hegseth there, the Defense Secretary, saying that the U.S. could reimpose a naval blockade in the Strait of Hormuz if Iran doesn't comply with everything that's in the Memorandum of Understanding and continue to work on goodwill. Also could resume bombings if that ended up being the case. Let's take a look at what's ahead today now. First up, earnings coming out from Kroger. They come before the opening bell. We'll have a look at the consumer in that situation. Then it's the Bank of England's turn after a whopping week of rate decisions. The BOE rate decision comes at 7 a.m. New York time. And we're going to get a little look at the labour market with initial jobless claims at 8:30 a.m. Eastern. Of course, the market is closed tomorrow for Juneteenth. Macro movers then. Here's your macro picture going into the session, the final trading session of the week. And what a session, what a news conference yesterday. We have the 2-year yield rising above 4.20 after those hawkish comments from Fed Chair Warsh. Perhaps the market was expecting something hawkish from him, but perhaps not exactly a split down the middle on the committee, with 9 members thinking that directionally we're going towards a hike and 9 members thinking directionally we're going towards easing. The statement as well shortened, 4 paragraphs, a lot less communication from the Fed, so there'll be a lot more concentration on individual speakers and Fed speak. Also, a host of people are going to be brought in from the outside on 5 task committees, looking at various things from the balance sheet to communications policy, even though we just had a review of communications policy. So we're going to take a look now at some pre-market movers. Intel soaring. President Trump just now on Truth Social saying Intel and Apple are going to get together to do a deal so that Apple can make its own processors using Intel's processors. He touted the deal between NVIDIA and Elon Musk and said that that's going to happen with various other chip makers. You see a halo effect across the chip makers. SpaceX rebounding just a little bit. It's been a little volatile. It had its first down day yesterday since its debut. Still trading just below $200. I was going to say a barrel, because oil is on the mind, wouldn't you know? Smith & Wesson, fantastic outlook for their materials for 2027, up 17%.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
The committee decided to maintain the target range for the Fed funds rate in support of the Fed's dual mandate.
This was a very deliberate and patient approach, and we'll see through the path of incoming data how this plays out.
It's hard not to interpret that as a little bit more hawkish than otherwise people might have expected.
Half of the committee is expecting rate hikes this year. We were thinking 2, maybe 3 to be decorative. We didn't think half the committee.
That's one of the challenges the Fed faces is they've got to manage to the economic aggregates when the devil is in the details.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning, live from New York. Welcome to Bloomberg Surveillance. It's tug-of-war Thursday with 2 competing factors buffeting markets. On one side, stocks rising on the prospect of a signed deal between the U.S. and Iran. On the other, a bold new Fed chair putting a hawkish stamp on the world's most important central bank, locking in market expectations for a rate hike as soon as October. For the moment, however, traders taking more signal from falling oil prices than potential rate hikes.
And you have gasoline this morning in America falling below $4 a gallon. So that's a big deal for this White House. And of course, this market. You see with the signing of the Memorandum of Understanding last night by the President of the United States at the Palace of Versailles, you see oil falling lower and an uptick in traffic already, almost immediately in the Strait of Hormuz. Now, we know potentially there's going to be issues down the road when it comes to this deal, and there's a lot to be negotiated. And not all of the president's red lines, or most of them actually, not even hit. But the fact of the matter, to this market, more barrels are going to be available.
Yeah, to your point, we are hearing about the first Saudi tankers traversing the Strait of Hormuz with their transponders on. This highlighting just how much more traffic could potentially go through. There are a lot of details. We don't know whether this was part of the agreement or not, or who else might be going through the Strait of Hormuz. But this is what markets are looking for, and this comes despite this new focus by the Fed on bringing inflation down without much mention at all of the employment market.
A minimalist approach now from this Federal Reserve. A very short statement, the word count much lower. You had a short press conference, and you had a Kevin Warsh that decided to not put a dot on the plot, not submit a forecast. This is an individual who is going to start a really brand new era of the Fed, and also a lot of emphasis, Lisa, and I'm sure because you did a fantastic job yesterday on the Fed special, a lot of emphasis on these special committees that are going to look into different parts of how the Fed operates, like communications, inflation, the balance sheet, etc. And maybe that was a punt for the Federal Reserve chair, but definitely getting his his feet wet and saying, we're going to need some help when it comes to some of these issues.
There's some real meat behind these task forces. I went home last night and I said, okay, we're going to have a task force about dishes. But there is a sense right now, these 5 different task forces are getting assembled right now. And going forward, they are expected to come to some conclusions by the end of this year. Right now, you bleed it all through the markets. Yesterday, real risk-off tone heading into the close when it came in particular to bond-sensitive sectors. Today, we're pulling that back. S&P futures up 0.9%. The tech-sensitive sectors of the market are gaining that much more. You're seeing dollar strength continue. This was a big story yesterday, particularly with the Bank of Japan and what the yen is doing. Today, you're seeing that continue versus the euro, 114.73, the euro dollar cross. You're seeing yields come in just a bit after surging yesterday. Watch the front end of the yield. You saw that rise 14 basis points on the day in crude, solidly lower, $74.58 on WTI. Coming up this hour, Ed Yardeni of Yardeni Research and Kevin Warsh's hawkish debut. Norman Rule of CSIS breaking down the interim deal to end the U.S. war with Iran, and Jennifer Huddleston of the Cato Institute as AI leaders make their case at G7. We begin this hour with stocks rising and bond yields falling after Kevin Warsh made it clear the central bank will not tolerate high inflation. Ed Yardeni of Yardeni Research calling Warsh a, quote, hawk in dove's clothing, writing, we thought he was a dove who favored lowering the federal funds rate. Instead, he hammered home a strict orthodox message on inflation with a strong commitment to price stability. Ed joins us now for more. Ed, great to see you. Thank you for being here. So is this more of an Alan Greenspan rather than, say, an Alan Burns?
I really can't answer that because I have a task force working on that.
Don't we all?
It's very Greenspan. I mean, it's, not a lot of information, a lot of ambiguity, and occasionally some surprises. He started right off the bat with a surprise. It's kind of like he had an interview with President Trump and yesed him, told him everything that he wanted. Yes, we're going to lower interest rates. Yes, AI is creating productivity. Then as soon as he got the job, it's like the old Warsh concerned about price stability. He mentioned price stability over and over again. And not only that, but he pretty much committed to 2%. He didn't finagle that too much at all.
Mike Reed of RBC said, by their count, inflation was mentioned by Kevin Warsh 19 times compared to 4 times where he mentioned the labor market.
Right.
Is this...
And the labor market's looking good.
Right, exactly. There was no mention of a dual mandate or a sense that maybe there's some weakness there in conflict in the dual mandate. Is this all talk and not action, right? I mean, if you were skeptical, you would say this is somebody who wants to jawbone the market. You're seeing the move that he wanted in the flattening of the yield curve. And then he won't necessarily
deliver. I think he's hoping that he'll be lucky because so far so good. I mean, the price of oil's coming down. As you mentioned, the price of gasoline's coming down. We are going to see the headline inflation news coming down substantially. And if he's lucky and the recent inflation surge doesn't spread into the rest of the inflation numbers, then he may very well just kind of sit back and let that all happen. And then he'll say, well, look, things are going in the right direction. We don't have to do anything. And at the same time signal that down the road, maybe the productivity story will come back as a reason to lower rates. But right now, it may be a do-nothing Fed for a while.
What if we see a labor market that does weaken, though? What's his reactionary function going to be?
Well, he kind of locked himself in. I mean, he didn't say very much except on price stability. He said that over and over again. And I think that if you get a weaker labor market, he's going to be called on if he suddenly becomes very liberal, in the mandate and says, well, people are getting hurt. We've got to focus on the unemployment rate. He basically said that in order to have a healthy economy, in order to have a healthy labor market, you have to have price stability, which, by the way, is deja vu all over again because that's what Powell had been saying for quite some time.
Do you think he was the one that threw out the proposal of discussing a rate cut at the meeting just so he can, when he has breakfast with the Treasury Secretary, say, look, I threw it out there and I was pushed back?
We don't know. I mean, it's a good conspiracy theory.
Right, could work.
It makes sense. You could go back to the president and said, hey, I was the one who, but he said he didn't vote on the dot plot, so, I don't know where he is on all that.
So when you take a look at some of the projections coming out of a number of different Wall Street houses, some have been raising their expectations for a rate hike this year. You saw that with Deutsche Bank saying that with less communication, they could be more nimble and hike rates sooner. Even Citigroup, which has been on the more dovish side, pushing back the potential for a rate cut. If there are rate hikes, does that curtail the roaring 2020s and some of the enthusiasm that we're seeing in equities? Yes,
my story.
your
Thank
story.
you.
Yes. So
Thank you.
does it affect it?
Last time I was here, I think John mentioned that we were 6 years into the roaring 2020s. If you just counted, we're actually 7 years into the roaring 2020s. And so if I get this year right, I only have 3 more to go. And every year there's, it's a roller coaster ride. You get all sorts of things to worry about. Maybe that's the next worry, is suddenly we're worrying that, if the Fed actually has to raise interest rates, then won't that spoil the roaring 2020s, the party we're in? And I don't think so. I think the economy has demonstrated its resilience. People have been kind of getting all bent out of shape about the bond yield being back up, but it's back to 4.5%. That's kind of normal. I think the bond yield is normalized. I think Fed policy is normalized. I mean, I think Warsh can just kind of leave things alone here for a while because the economy is performing just fine.
Those are two different things, though. Leaving it alone versus hiking rates, two different things.
Yeah.
And understandably, people are watching what he does, not what he actually says. At the same time, if you do think about hiking 2 times this year, which even Bob Michael of J.P. Morgan was talking about yesterday, how much does that infect potentially some of what we're seeing?
Look, when the payroll numbers came out real strong, we kind of reiterated our position that there was not going to be any rate cuts this year, and that the Fed would probably switch to a tightening bias at this meeting, which is exactly what happened. They didn't go from an easing bias in April to a neutral bias. They went right to a tightening bias, and so we got that right. And the thing that really surprised me is how hawkish that Warsh came across. If the Fed were in a position where they had to raise rates, it'd be a quarter, 50 basis points. It wouldn't be a big deal, in my humble opinion. And the bond market might actually rally on that. Back in 2024, when the Fed lowered the Fed funds rate by 100 basis points, I said, I think you're making a mistake here because the economy is resilient and you haven't gotten down to 2%. And the bond market agreed with me, my bond vigilante friends. The bond yield went up 100 basis points. And even last year, they cut 35 basis points on the Fed funds rate, and the bond yield, where is it today? 4.5%. So they haven't accomplished anything. So lowering rates hasn't helped, but they may conclude. Look, the thing that really came across to me is that, and he said it, Warsh said, look, we haven't gotten down to our 2% inflation target in over 5 years. And he said he committed the committee to get down to, get inflation down to 2%. So, how are you going to do that without raising interest rates? So I think the market's got it right now. When we thought that there would be a tightening bias, and there could be an increase. If the Fed really wants to get it down to 2%, that may be necessary.
But Ed, what about the Fed policy on the housing market? Because he said that's one area where he does think it's restrictive.
Well, at the same time, he's talking about reducing the balance sheet and particularly focusing on, the Fed's been talking for a while about reducing the mortgage-backed securities down to 0. That's not going to help the housing market. I don't think they've got an answer for that. It's a shotgun. It's not a rifle. There's only so much the Fed can do. I'm a believer that, if the Fed is not in our face as much as it was when Powell was around, I really don't mind less communication. I fondly had been calling them the Federal Open Mouth Committee.
Well, are you on the task force? Any of the task
not
force?
on the task force.
This is my first question to everyone. Are you on a task force?
Yeah.
Which one?
Yeah.
Ed Yardeni, thank you so much for being with us. Wonderful to have you on the show. Ed Yardeni of Yardeni Research. As we analyze this new Federal Reserve under Kevin Warsh. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Isabel Lee. Isabel.
Hi, Lisa. The U.S. and Iran signing an interim deal, opening the door for 60 days of negotiations. The deal prompted criticism from some of Trump's allies, who say it amounts to a victory for Tehran and that the U.S. is conceding too much. Talks on nuclear issues and potential further financial gains for Iran are to follow. And the Fed holding rates steady at the first meeting of Chair Kevin Warsh. President Trump reacting to the news.
It's all right. whatever.
And it looks like they might even raise them later this year. It's up there. Do you have any comment?
It could happen. I mean, it's hard to believe. It just keeps the country down, you know, so it's so unusual. But we have a very good guy over there now, so I'm guided by what he wants.
Warsh said the central bank won't tolerate high inflation. And SpaceX shares falling for the first time since its record IPO, sliding 5% at the end of a volatile session. Still, shares remaining more than 42% above the IPO price, the low float amplifying the impact of retail buying. That's your Bloomberg Brief. Lisa?
Thank you so much, Isabel. Up next, a tenuous deal.
My whole life is all about deals. That's all I ever did is make deals. If they don't honor the agreement, we'll probably go back to bombing them.
Chairman Rule of CSIS joins next to parse through the details of this deal. This is Bloomberg Surveillance. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It is a tug of war, and right now oil prices winning out. We can see enthusiasm building under the hood despite a more hawkish Federal Reserve under Fed Chair Kevin Warsh. Right now, we're seeing that more pronouncedly in the tech sphere, in the more high beta areas of the market, up 1.6%. On the NASDAQ, you saw that also in the Kospi. It's around the world. Meanwhile, you could take a look at what's bleeding some enthusiasm into the Russell 2000, up about 1.2% ahead of the open, and that comes from the bond space. Today, this morning, we're taking a little bit away from what we saw yesterday after the statement by the Federal Reserve. Yesterday, 2-year Treasury yields shot up 13 basis points. That was the biggest jump since April of 2025, but that matched the largest increase on a Fed meeting day since 2008. Today, we continue to build on some of that increase, 4.19% on the 2-year yield with a full rate hike baked in by October. The yield curve flattening really notable. 30-year yields sharply lower than where they were yesterday, 4.88%, continuing down another 5 basis points today. To Ed Yardeni's point, and this I think is really important, if this Fed were to hike rates, that could potentially be good for the bond market and cause a rally. That is the point that maybe people are taking home when it comes to duration. But the oil story really front and center here. With oil prices back down to where they were just at the start of Operation Epic Fury. As people take a look at this deal, and Amory seem to think that, yes, there is some teeth behind it.
Well, you need to see what actually is happening in the Strait of Hormuz. And as we mentioned earlier, we are already seeing an uptick of vessels that are going through the Strait of Hormuz. Already we have Saudi Arabia being able to get their state tanker giant, being able to get some vessels through. So this is a good sign, a very good sign for the oil market. When it comes to this deal, though, Lisa, it didn't address the president's red line. And at the same time this was happening, signing a deal that a lot of critics were talking about didn't really address his red lines. His Fed chair that he thought was going to be dovish came out swinging as a hawk.
Yeah, well, let's get to that deal. Under surveillance this morning, the tenuous agreement.
My whole life is all about deals. That's all I ever did is make deals. If they don't honor the agreement, we'll probably go back to bombing them.
Here's the latest. President Donald Trump signing an interim peace deal with Iran last night. Bloomberg's Laura Davison joins us now for more. Laura, what do we know about the details of the deal and what went up to the actual signing of it?
Yeah, so the deal includes 14 points, but it really reduces the U.S. or brings the U.S. back to where it was pre-war. It's the end of a fighting, and it allows for ships to continue passing through the Strait of Hormuz as they were before the war began. But in there for Iran, to get them to agree to this deal, there's a lot of financial incentives. There's an easing of sanctions on selling their oil, as well as this $300 billion economic development fund funded by Gulf states, that it was sort of the carrots to get Iran to sign on to it. Important to note that this is also really just sort of the start line for negotiations. It basically starts a 60-day clock to come up with some details around some of the more thorny issues here. But this was really, a month or more in the making, as you had Gulf allies really quietly shuttling behind the scenes between Tehran, Washington, and other Gulf states. Qatar playing a key role here of trying to figure out exactly how to get this deal agreed to. But this has been, a long time in the making. There's been some criticism from the U.S. side, including from Republicans. Folks like Bill Cassidy and Mike Pence have said that this is quite a bad deal. But we're already starting to see at least some Republicans breathe a sigh of relief as they head into the midterms and as gasoline prices cross for the first time since March below $4 a gallon.
Laura Davison of Bloomberg, thank you so much for that. Norman Rule of CSIS writing, the reported U.S.-Iran deal is best understood as a high-value pause in the current military phase of the conflict, not a durable strategic settlement. The deal buys time. It does not buy trust. Norman joins us now for more. Norman, wonderful to get your perspective. Can you just elaborate on that? Why do you think that this 14-point deal is simply a placeholder and not necessarily a roadmap for what's to come?
Good morning. The deal certainly has drawn a fair amount of criticism from both opponents and supporters of the administration for its language, but it provides a mechanism for the administration to transfer the process from a military conflict, which had no longer provided options for a low-cost way to restore access to the Strait and to achieve its previous goals, into a diplomatic process. Now, the diplomatic process may not offer any optimism for its success, but the diplomatic process immediately relieves pressure on the world energy markets and the world economies and sort of reshuffles the deck of options for the administration. Now, in terms of what the Iranians will get out of this, absolutely, they will get some financial relief. But in fairness, the $300 billion fund is described as a plan. There's absolutely no reason to believe that anyone in their right mind will donate money to this, given the fact that money will be hostage to Iran's policy, future sanctions, and that Gulf states have been victims of Iranian attacks and are devoting most of their investments to their own economies. And my last point that I would make on this is that this process itself is tenuous. The president and the administration will need to prove early on that this process is narrow, it is reversible, and it is achieving something besides giving the Iranians additional liquidity.
Norman, given the fact that it is narrow, what happened to the president's own red lines that he's spoken about for years?
Well, his red lines that he mentioned again in the press conference yesterday remain threefold. First, Iran cannot have a pathway to a nuclear weapon. That remains part of this process. And indeed, that's the primary effort of upcoming talks. Now, he's talked about missiles, and his statement yesterday is that Iran can have a normal complement of missiles that any country in the world might have. Now, that's not an ICBM. That's not an intermediate-range ballistic missiles, but that would be a defensive complement that any country would have. And that's got to be worked out with its neighbors. And last, Iran's got to do something about its militias, that it can't have a process. The sense is that there's conversations that are going on the side of this deal that will work that out, but that's a complicated regional diplomatic issue that they don't want to put in the same basket as their initial discussions with the already very hard nuclear issues.
The vice president, when he was making the rounds, doing some interviews with reporters, said that Iran's regime is, quote, a much different group of people for whom, quote, something has fundamentally transformed. Norm, do you see any evidence that this is really a new regime?
Well, they're a new generation. They were raised in a different world, a post-2003 worldview. So certainly they have a different perspective, but there's no evidence whatsoever that they believe that Iran should not be a regional hegemon, that they don't believe that they have a right to and a reason to run militias such as Hezbollah and the Houthis, and that they won't remain a threat to their neighbors in the near term. But clearly there are conversations going on between the administration and some elements in the Iranian government that have given the administration reason to believe this may be the case. The trick is the administration needs to demonstrate somewhat early on in the process that this process is proving that possibility may be realized.
Norm, do you think that this realigns the U.S. in the region? It seems like the Gulf nations are happy that the kinetic conflict will at least cease for now. At the same time, Israel is pretty upset because some of their goals have not been reached. Do you think this aligns the U.S. more closely with Gulf nations and further away from Israel?
Well, let's look at Israel's goals. Iran's nuclear program has been devastated. Iran's missile program has been severely damaged. Now, at the same time, the regime remains in place. The militias are no more active than they were prior to this. The question, I think, for Israel is how long would that conflict continue? And there are people in Israel and the United States who would like this conflict to continue, and that's an ideological position. Now, within the Gulf, they're paying the price for that conflict with the missiles striking their population. There's no evidence the Gulf states as a group oppose the deal the president has put forward. And the United States is seen as the indispensable security partner of the GCC. It may not be sufficient to be the only partner, but it is the indispensable partner. And it leaves this conflict much closer to all of these of the GCC states.
Do you think that buying time means 60 days, or do you think that buying time means till the end of the year?
Yes. I think the answer is it could be either, but it's going to depend upon events. And that's important because all it takes would be some sort of high casualty event that might take place, God forbid, in Lebanon, which remains a separate arena from this. Neither Israel nor the Lebanese Hezbollah were parties to this agreement, although Lebanon is mentioned in the agreement. And some sort of event could take place during this, the discussions, which could take these conversations out of joint and move this into a different sort of dynamic. But the administration is going to look for some way to show that the Iranians are moving in the right direction, and that will take time. Remember, nothing moves fast in talks with Iran, no matter which administration is dealing with them. And these issues are issues that every administration has spent years struggling to work with Iran. So no, it would be unfair to expect that the Trump administration could achieve any of this quickly.
Norman Rule of CSIS, thank you so much. It does seem like buying time is the takeaway at a time when the market is looking on this very favorably.
And buying time at a time when you have a midterm election, it's peak driving season, and you cannot afford $5 a gallon gasoline.
And now it is below $4 for the first time since March. Coming up, Jennifer Huddleston of the Cato Institute as AI leaders make their case at G7. That's coming up next. This is Bloomberg.
are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel. And energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
This is one of the most interesting Thursdays I could imagine in terms of price action. You have a risk-on move, particularly led by the tech stocks, but not because of what you might think. We did have a Fed meeting yesterday. You might infer, oh, wait a second, this is because the Fed was dovish. Not in the slightest. This is because oil prices are falling. NASDAQ futures up 1.6%. You could also see the Russell 2000 up 1.2%. Again, you would think, oh, this comes from a Fed that is easing off some of the rate hiking expectations that have been baked into the market. Right now, if you expected that, you would be completely wrong. If you take a look at 2s, 10s, and 30s, you can see that two-year yield continuing to just grind a little bit higher after yesterday seeing the biggest one-day move in that 2-year for a Fed day going back to 2008. Almost back at that 4.2 level on that 2-year with a rate hike baked in. You could see a rally into the long end of the curve. This is the yield curve flattening that we have seen in a pretty violent fashion over the past couple of hours. 30-year yields now 4.88%. But a lot of this is overlaid with oil prices. And if you take a look at oil prices at the lowest since the beginning of March, you can understand, AMH, how this really is the driving story right now. A deal in Iran is enough to give this market more ammunition to go up that much further.
And it's not just the fact that the president signed the deal last night. The negotiations are going to continue to work out some of the more difficult issues, especially when it comes to nuclear with the regime. It's the fact that we are actually starting to see an uptick of oil through the Strait of Hormuz. And as you noted, we're seeing tankers that have their transponders on. They aren't trying to do this, you know, in the middle of the night with their transponders off to sneak by. The Strait of Hormuz is slowly starting to open. Now, is it going to take a lot of time to get those 600 vessels that have been trapped out? Yes. But this is moving in the right direction. The market sees more barrels are coming on.
And they see this as being a long-term phenomenon. If you take a look at the December contracts of both WTI and Brent, WTI, it's less than $72, down from a high of about $85 last month. When you take a look at the Brent December contract, $76. That is down from a high of $93. I mean, AMH, this is a huge shift in expectations.
Well, this is why the IEA the other day came out and said we will see demand destruction 2026. We're seeing that now, especially in parts of Asia. We have seen some of that. But what they're seeing for next year is a supply glut.
Right now, we're 3 hours away from the cash open. Some really interesting stories under the hood as well. Here are your morning movers with Vonnie Quinn. Vonnie.
Yeah, Lisa, beyond the fact that we have a general market enthusiasm showing up in equity index futures today, you have Intel up 9%. This after the president truthed out that Apple is going to work with Intel on U.S. domestic chip production. Now, this is a huge boon for Apple, which has been trying to find external customers, right, to build domestically. Apple has already had discussions with Intel, and of course, the president's lighting the example of NVIDIA and Elon Musk's Terafab project. Bear in mind, Apple has surged fourfold since the U.S. invested in it last August. We're also seeing an Apple impact on memory chip makers today, right? Apple's CEO, Tim Cook, gave an interview to the Wall Street Journal in which he said they were finally going to have to up prices because it was just becoming unsustainable, the memory chip price increase. That, of course, might mean good things for memory chip makers and their margins. And you can see Western Digital, SanDisk, and Micron all up to the tune of 4% plus today. And then we're also keeping an eye on SpaceX, of course, as well. Very volatile day. It was up 4% and down 7% at various points in the market session. However, with yesterday's move, it just gave up the previous day's gains, right? Yesterday was down 5%, looking to a small decline right now again, but we're still at 190, more than 40% above that IPO price.
Thank you so much, Bonnie. I don't think anyone's crying about that, at least not if they're holding the shares. On our radar this morning, the U.S. and Iran signing an interim deal to end the war and reopen the Strait of Hormuz. President Trump defending the deal, with some Republicans saying it amounts to a victory for Tehran. The agreement will go into immediate effect. Fed Chair Kevin Warsh ushering in a wave of change at the central bank.
I'm appointing a task force in each of 5 areas. You'll hear quite a bit more about these task forces. That'll be taken up by the task force. We've got a task force for that. The good news for you is we have a task force for that. We have a task force on that too. I've been on a task force or two in my life. It's one of the things we have a task force to do.
So there's going to be a task force for that. We're saying 5 task forces will consist of internal and outside experts to advise the Fed on core objectives. And Microsoft growing its footprint in China despite the heated AI arms race with the U.S., selling models from OpenAI and its Azure cloud services to top Chinese firms, including over $1 billion in orders from ByteDance. A really interesting moment right now, given some of the pushback in the U.S., given the U.S. tech firms and certain bans over in China. They say it's an independent operation, but at a certain point, you start wondering if the lines are getting blurred.
Do you know who's going to be interested in this? There's a congressional task force when it comes to China, the China Select Committee, and this is something that I imagine is going to irk them. Microsoft thinks this is useful to have this presence in China, and the President Brad Smith actually said recently during congressional testimony, it's relatively small amount of money they're making there, 1.5% of overall revenue. That's not the issue. Fact of the matter is this administration has serious export controls on Anthropic right now, and their 2 models that they don't want in the hands of adversaries. Are they going to start to do that and follow through and tell other firms like Microsoft, we want you to dial back the work you're doing in Beijing?
It's not just congressional task force. It's also OpenAI. OpenAI is not pleased either because they're worried about China distilling some of their models and then replicating them in the region. The bigger question here is what kind of firewalls are there? The reason why one company gets an advantage in being in many different places, particularly the US and China, is you get exposure to both areas and you can share information in a way that can add to the development of new things. How much can they do that if there truly is a firewall? At what point are they benefiting? They might say this is a very small part of sales, but it's rapidly growing and they are very proud of it in internal calls.
Exactly, and also this comes from a place where we know have had issues with intellectual property theft, have had issues with harmful uses. The technology is potentially moving faster than the regulation can and catch up. But I think the direction of travel is more towards the Anthropic route of the world, not what Microsoft is doing.
Let's stick with tech. AI executives pitching their case at the G7 summit. Anthropic boss Dario Amodei arguing world leaders to, quote, resist the temptation to splinter over the rollout of advanced AI models. Jennifer Huddleston of the Cato Institute writing, there is a conversation about the role voluntary international standards could play in AI. Industry agreements and norms could be an alternative to more heavy-handed regulation. Jennifer joins us now for more. Jennifer, there are 2 issues here. On one hand, there's an issue of national supremacy when it comes to AI dominance. On the other, it's actual security as some of these models get ahead of what a lot of people are prepared for. Which do you think is the more pressing concern for national leaders?
You know, we've certainly seen a debate recently about what is the best way to have a conversation around AI and around some of these serious cybersecurity risks. We saw this weekend export controls imposed and kind of an attempt to limit any foreign nationals, including allies, from accessing Anthropic's most advanced model, Fable. So as we're starting to see these conversations at the G7, I think there is a kind of question of what can be done, particularly given American leadership in AI, to ensure that there is a serious discussion around cybersecurity, but not one that could harm the industry long term or create these kind of scenarios in the future.
Do you see any pathway, Jennifer, to getting industry norms that would be accepted by competitors that could set them back versus, say, pedal to the metal, go forward and try to develop as advanced technology and systems as you can?
You know, we have seen that these companies are thinking a lot about safety in their own sense. We saw this when Mythos first launched, that there was an attempt to keep it very small, to make sure that they were testing the product before they launched it more widely. So if there were potential vulnerabilities that they could self-address. There also can be opportunities to voluntarily provide this information in certain cases. Again, something that allows that kind of innovation and the changes in models in what is a very dynamic industry versus a having to prove that there's no risk at all type of scenario that we could see with more heavy-handed regulation.
These AI leaders met amongst the president with other leaders, notably European leaders. How big is the gap right now to where the Europeans want to regulate AI and where the United States does?
As we've seen with other technologies in the past, there's a pretty significant gap. The EU has its AI Act that is a much more regulatory approach when it comes to AI. Additionally, we've also seen other laws like the Digital Markets Act come into play with some of the companies not being able to launch their most advanced products. For example, the latest AI-enabled iPhone isn't going to immediately be available with that feature when it launches in Europe. We are seeing that the U.S. continues to try and take this light touch approach. And while there's discussion of a congressional framework or of further actions around issues like cybersecurity that may need to be more specifically addressed or have norms established, there does seem to be a continuation of this trend where Europe seeks to regulate tech companies while American companies are the leaders in innovation.
Jennifer, in some aspects, they're taking a light-handed approach, but not when it comes to Anthropic. These are serious export controls, and it's very heavy-handed. So do you see the administration potentially rolling back those export controls? What kind of deal do you see them getting done with Anthropic?
You're right to point out the distinction here. We've seen several actions recently, whether it was calls to invest in American AI companies, whether it was something like the export controls on Anthropic that we recently saw, that seemed to be a deviation from this more approach that has focused on regulation that could really allow innovation to take off and that very light hand approach. So we are continuing to see that this administration isn't just looking in terms of how do we build that framework. There are serious concerns that have been raised around how this could be picking winners and losers in this very dynamic space, as well as concerns about how this could impact speech or privacy rights of Americans and of American innovators.
Jennifer, when this first came out in terms of Mythos and the potential threat that we were hearing from Anthropic, there was some speculation that it was overdone, a way of trying to make them feel like their models were essential, important, and must-have for different companies, regardless of how expensive. But as we've talked to an increasing number of executives, there is real worry there about what some of these models can do. And Christine Lagarde raised the specter of a possible financial crisis as this gets rolled out. From your perspective, can you just put into some sort of light how serious the risk is and how seriously different executives are taking this?
With any model, with any technology, there's going to be a risk of harm as well as a risk of benefits. And one of the things that I think we're seeing is that executives, companies are realizing they have to prepare both for the benefits of AI and also making sure things like their cybersecurity are up to date. In addition to the cybersecurity risk, we've also seen how models like this can improve cybersecurity, how they can identify potential vulnerabilities and identify potential attacks that can actually allow companies to respond to those quickly rather than having those vulnerabilities exploited.
Jennifer Huddleston of the Cato Institute, thank you for being with us. And I will just say, on having some of these AI leaders in the world stage really highlights how much they have become the heads of state of their own. Essentially, there's their size of a state and the influence of a state as well.
Well, if you truly believe their technology is a new industrial revolution, it's going to impact every single economy. And if you're concerned that it's going to get in the hands of adversaries, then this has to be a work in progress with your allies, which is why it was pretty incredible to see all of these leaders there at the G7. At the same time, there are discussions underway of how this administration might take an equity stake in some of those companies.
Yeah, and we'll talk more about that coming up. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Isabel Lee. Isabel.
Hi, Lisa. President Trump signing an interim deal to end the war with Iran and reopen the Strait of Hormuz. The president insisting Iran will never obtain a nuclear weapon, but has the right to enrich uranium for electricity, access frozen funds, and develop ballistic missiles. And gas prices dipping below $4 a gallon for the first time since March. According to AAA, the national average for regular unleaded is now $3.99. Prices are still well above where they were before the war and aren't expected to return to those levels until next year. And this is for Anne-Marie, a historic day in New York, the Knicks getting their first ever ticker tape parade. The parade through the Canyons of Heroes kicking off at 10 a.m. Eastern and is expected to draw millions of fans. Some fans are paying as much as $950 for professional line sitters to secure a front row view. So that's a lot. That's your Bloomberg Brief. Lisa?
Thank you so much, Isabel. I just want to note that Emery is getting the mug ready. She's putting her hair together. She's getting her orange and blue outfit prepared. This is your last day.
But I'm not going to the parade.
Why
It's too
not?
intense. Also, you have to line up. You would have had to line up 45 minutes ago.
Well,
my phone is blowing up with people saying the subways are packed with Knicks fans. It's going to be crazy. Get there very early. You can't bring a bag. So it seems like by the time we get off this show, it's work. Work got in the way.
Oh, clearly. That's what we're going to say. That's why she didn't pay $950 to have a line sitter get in for her. At this point, though, we can expect that maybe her blue and orange outfit has been fully
Yeah, because we don't
exhausted.
want anyone to think it's for the Mets after the Knicks pandemonium
up
is
next,
over.
Up next, we can have a little bit of love for the Mets and the Yankees. Go New York. Up next, the hawkish chart.
We have the capability and commitment to deliver on our price stability objective of 2%. That's exactly what we're going to do. The commitment to deliver is strong, unanimous, and unambiguous.
Kai Hay of Goldman Sachs joins next. This is Bloomberg Surveillance. Good morning. Here's Sophie.
We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The Enthusiasm in markets continues despite some sell-off in the bond market. Let's take a look at what's going on. You can see equities bleeding higher, grinding upward. 0.8% gain on S&P futures. You're seeing a bigger outperformance from the tech sector. You are seeing dollar strength. Watch the Japanese yen that yesterday was flirting with some of the highest level, or the lowest levels, I should say, versus the dollar, the weakest levels going back to 2024. This morning, you're seeing it across all of the G10 currencies. Euro 114.64, and 10-year yields going lower. This is interesting. The yield curve flattening that has come back into the market with the expectations of rate hikes, with crude now lower by 1.7%, $75.49. The story really yesterday into the afternoon after the Fed meeting was that 2-year yield that jumped 13 basis points on the day, the biggest one-day increase going back for a Fed meeting to 2008. And we're looking right now at the 2-year yield continuing to grind higher, getting close to the levels where it was on February of 2025. Under surveillance this morning, the hawkish turn.
We have the capability and commitment to deliver on our price stability objective of 2%. That's exactly what we're going to do. In the Fed's review of its strategy, the Fed statement says that inflation is primarily determined by monetary policy. You bet it is. The commitment to deliver is strong, unanimous, and unambiguous.
Here's the latest. Fed Chair Kevin Warsh vowing to get inflation under control at his first policy meeting, with nearly half of the committee forecasting higher rates by the end of this year. Kai Hay of Goldman Sachs writing, our base case remains that the Fed can just about avoid hikes, but the path is narrow, and there will be a high premium on the incoming inflation data. Kai joins us now for more. Kai, thank you so much for being with us. Let's just start there in terms of your reaction and whether you changed anything in your rate hiking expectations as a result.
Well, good morning. Look, clearly the meeting was unambiguously hawkish, but there was a lot more actually that we would like to focus on. I think that the communication was extremely clear, prioritizing inflation in the short term and making it very data dependent as to how the Fed is going to react at the next meeting. So what does that mean for our expectations? Look, it means two things really. The first one is we will also look and track the data very, very closely, particularly inflation data, particularly to understand how sticky inflation will be and continues to be. But then there's a second factor, and looking at the 2-year yield chart, I think we will see much more volatility in the 2-year sector going forward. And that's a combination of, firstly, focusing on inflation, calming down the longer end of the curve and seeing that flattening action. And then a lot of commentary around kind of forward guidance indicating that there will be less of it, that the Fed will be more data dependent, and a lot of that will translate into 2-year volatility. So we will see much more of the type of price action that we saw last night.
The irony, Kai, is that we could see less volatility at the long end, right? I mean, how much does this actually increase your expectations of stability at the long end of the yield curve and endorse some people who have been going into duration as a result of this promise to get to price stability?
Yeah, great question. Look, it's early days, but I think the chairman started off very, very well in terms of reducing volatility at the long end. And we spoke about, the impact communication will have and the clear focus on inflation. There are also these task forces that he alluded to yesterday, and they were very clearly designed to kind of re-examine the kind of operating model of the Fed. And we were very curious as to how that develops, if there are other sources of data, different inflation framework, communication, and all of those things. We need to see how that pans out, but that could very well translate into less volatility at the long end, which in our view would make it much more attractive for investors.
Right. Basically, what Kevin Warsh said and announcing all these task forces, are you actually more interested in buying treasuries now?
But the task forces themselves, we don't think right now are going to drive kind of allocation into duration. But I very much the kind of focus on inflation and keeping the longer end under control, the Fed doing its job in getting inflation closer to the target. all of that is very supportive for treasuries. So yes, at the margin, that's a positive.
We've seen individuals on the Fed get concerned with higher oil prices. Obviously, this is all coinciding with the fact that we have this deal the president signed. We're actually seeing more ships move through the Strait of Hormuz. Did you get a sense that Kevin Warsh is concerned about other parts of inflation as well? And where are those other parts?
Look, I think he said very clearly yesterday that second, third order effects are important, right? So, you know, we've got to now track a little bit the kind of reduction in the oil price and how far it will drop, because of course, you know, there's every indication that countries are going to replenish their reserves, and that's going to put some upward pressure on oil. So we've got to see where the equilibrium gets to. But then the second and third order effects are very, very important, right? He talked a little bit about the housing market. He talked a little bit about the financial markets, financial conditions. We're going to continue to focus on the labor market and see how that develops. So I think you're right. It is not just the price of oil, but how that propagates throughout the economy. That will be very important.
Kai, this is my stock question to everyone in fixed income who comes on this morning. Are you on any task forces?
No.
Okay. Well, this is to me going to be a key question, but not yet. But the door is open. A key question for a lot of people is going to be exactly who are shaping some of these expectations. There were 5 different task forces. They are a range of different issues, from communications, balance sheet, data sources, productivity and employment in an era of AI, and sources of inflation. Kai, how concerned are you about the balance sheet? We've heard about that as one of his goals, and that directly feeds into liquidity, given some of the tweaks that the Fed has made around the edges that have really fueled a wave of liquidity, at least earlier this year.
Well, let's see what comes out of that debate. Actually, the positive is that there will be a debate, there will be a task force, and people will look at that. You know, it is not just the size of the balance sheet, but the speed of reduction. It is not just only the speed of reduction. It's then also what will be the kind of duration of the issuance that the Treasury will bring to the market. So there's a lot of variables that are important. In principle, the idea of reducing the balance sheet in a kind of controlled environment is not necessarily a bad one. So let's see how that evolves. But I wouldn't call it a concern at this point.
Kai, when you do get called for the task force, please let us know. We'll have you on to talk about what some of the details are. Kai Hay of Goldman Sachs, really appreciate your insights as we analyze what we heard yesterday, really putting a stamp yesterday on the Federal Reserve.
Oh, yeah. Kevin Warsh came out swinging. Everything we were speculating potentially he could do, he delivered on. There was no dot. He talked about price stability. The statement was much shorter, less word count, and this is what we expect going forward. Also, shorter answers. There is going to be less communication and less forward guidance, or no forward guidance, from this Federal Reserve Chair.
We've also talked about how the ECB is a single mandate central bank. We've talked about other central banks and how that's been a bug, not a feature. He seemed to indicate maybe it was the other way around, talking much more about inflation, not necessarily employment, and said one line: inflation has been running well ahead of the Fed's long-stated inflation goal of 2%. That's been going on for more than 5 years, and in his words, that's got to end now.
When Neil Dutta heard what all of this was about, he put out a note and said, this concludes, he concluded noting that the FOMC would deliver price stability reminds me of the single mandate stuff from Paul Ryan. And actually some individuals that we've seen hired by Kevin Warsh, some of them have been proponents of just looking at price stability and inflation.
So it's not just the Fed, other central banks also on deck. Coming up next, Pooja Krumra of TD Securities as we get a Bank of England decision, Colonel Wayne Sanders of Bloomberg Intelligence, Anastasia Amoroso of Partners Group, and former Kansas City Fed President Esther George. Maybe she's on a task force. This is Bloomberg Surveillance.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Famous dogs. You have they look like balloon kind of figures to some extent. How do you make those?
In the case of the balloon dog, I blew up a balloon dog. So I had this balloon, which is kind of like a latex type of piece. molded it, cast it, and then blew that up in scale and put it into a clay, and eventually had that transformed into stainless steel.
So when you have a balloon dog, let's say, a regular size one or then a big one, did people say, Jeff, you're crazy? Were you shocked that people were willing to pay very high prices for this?
When I was making my first balloon dog, one of the purchasers was Eli Bro. And originally I thought I could make a balloon dog for around $300,000 that I could manufacture. It's a large piece, over 10 feet long, or 12 feet long, 10 feet high. But it turned out that the fabricator came back to me and said, you know, Jeff, I can't do it for $300,000. It's going to be $650,000. But eventually, then they raised the price again, and they finally brought it up to $1.6 million. And I told Eli that this is the reality of it. I showed him everything, and he ended up paying for the production costs.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
I'm appointing a task force in each of 5 areas that are central to the broad conduct of monetary policy.
This is a welcome thing. The Fed needed to change. Maybe it is time that they try a different approach.
He seems to be very smart about getting everybody on his side and getting the consensus.
You have Warsh basically telling you we're going to get rid of the dot plot. The task force has its job ahead of it.
There was actually kind of a positive tone about both the economy and the functioning of the institution.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. Stocks rising on the heels of a deal between the U.S. and Iran. Oil prices plunging. Equity traders shrugging off a hawkish turn by the U.S. Central Bank yesterday. Bond markets digesting a hawkish turn more broadly around the world. The Bank of England just dropping their decision. No change necessarily, keeping their guidance that they stand by to act on inflation. And Andrew Bailey, the governor of the Bank of England, saying that the pressures from the Iran war are still in the pipeline despite the truce, highlighting the concern here that even though there is a deal with respect to the U.S. and Iran, that doesn't end all of the concerns.
But how quickly do those pressures start to ease? Because at the same time that we just got this BOE decision and they are concerned about where they're seeing the elevation of energy costs, Iran is releasing the text of the MOU and says that Iran will arrange Hormuz ship passage with no charge for 60 days. So I think Norm Rule put this really well earlier in the program, talking about the fact that this is really an end of military hostilities. It's a high-value pause in the current fighting and current scenario. And 60 days, we are going to see a large number of vessels be able to safely get out of the Strait of Hormuz.
Just to note that this was a 7-2 decision in terms of 7 people voting to keep rates at 3.75%. 2 members voting to increase the bank rate by 0.25 percentage points. So on the margins, a bit of a hawkish tilt. Lizzie Burden has more. Let's head over to Lizzie for the details. Lizzie.
Lisa, this is exactly as expected. The Bank of England doing absolutely nothing, keeping rates at 3.75%. It's hard to seem as hawkish as the European Central Bank, which of course hiked rates last week. or to match the hawkish measures from the Fed last night, our time. Plus, there's good reason not to be as hawkish in the UK. We had inflation yesterday coming in softer than expected. Oil prices, of course, dropping on this US-Iran memorandum of understanding. At the last BOE meeting, we were above $100 a barrel on Brent, and now we're sub 80. But of course, the Bank of England wants to wait and see what happens geopolitically and how it feeds into the domestic economy as well. So as you say, Andrew Bailey here saying that pressures from the Iran war are still in the pipeline despite the truce. They want to see what happens over the next 60 days and beyond. Now, the vote split, as you say, 7-2 as expected. In terms of the guidance, no change. They stand ready to act on inflation, they say. And so looking ahead, traders have been pricing in one more Bank of England rate hike for this year. Economists saying maybe they'll just be on hold for the rest of the year and the next move could be a cut. And if you look at the market reaction here, the pound pretty much where it was before this decision, down 0.5% at $1.32. Gilt yields on the 2-year up 6 basis points at 4.20. So again, pretty much where we were before all of this, because you've got to take into account the Fed, take into account the war and the politics that's going on in the UK today, a special election which could be having its own impact on UK markets.
Lizzie Burden, thank you so much, as always, for breaking that down. Right now, also, you're looking at the pound versus the dollar. Losing cloud pretty significantly, down about 0.5%, as you see it fall to 132.19 versus the dollar. Again, this sort of points to the question of how high the bar has gotten for other countries and other central banks as a result of the Fed's hawkish turn. They've been making it easier by being somewhat dovish relative to the others.
Absolutely. For the rest of the world, Kevin Warsh coming out as his old Kevin Warsh, a hawk, plus on top of that, the MOU coming out from the President of the United States and potentially could be easing some pressure on energy prices. That's going to help the rest of the central banks.
So bond markets are reeling in all of this information. Here's the view from Wall Street. Pooja Krumra of TD Securities writing, upside risks remain. We postpone our call for a last Bank of England rate cut from the November meeting to April of 2027. Pooja joins us now for more. Pooja, thanks for being here. Can the Bank of England wait so long, given some of the pressure now coming from the U.S. Central Bank?
Totally with you. But when it comes to BOE, they do have a trade-off between higher inflation as well as weaker output. I think at this stage, even by staying on hold, they are being restrictive. But again, this is something that we are dealing with on a rolling basis. And as like all central banks, BOE has been pretty much blatant that they are ready to act if required. I think price action-wise, we are reacting much more than what we got from this statement. I think primarily because it's the Fed effect that we are seeing in markets today.
Right now, I'm wondering how much, Pooja, you think that inflation will ultimately be proven to be an overstated story as a result of the MOU with Iran, of this idea that potentially ships are already starting to go through the Strait of Hormuz.
So, I mean, I don't think central banks want to be actually complacent right now, because I think the key thing, right, is not just the spot prices of oil. It's how you look at the forward futures when it comes to oil. And that's not coming back that quickly to the 60 level, which means that most of the central banks have to deal with elevated inflation pressures. I think for BOE, the only different thing is that our starting ground when it comes to economy has been weaker. And that is something why we feel that even if they act, they are going to be the last of all the central banks here.
When it comes to the ECB, given what we're seeing with the BOE standing on a hold, do you think the ECB acted too soon?
I don't think so. In terms of, first of all, they did not, as Lagarde has been pointing out, that wasn't an insurance hike. I think they were pretty much clear that the inflation pressures were going everywhere. Whatever data, whatever the model that they were following when it comes to inflation expectations from consumer households, as well as the PMI, that suggested that some form of restriction was needed. I think what is the difference between ECB and BOE is ECB was at neutral and BOE is at restrictive policy. So, ECB had to make the first move to come a bit more restrictive.
Given the fact that we are seeing oil prices lower, Lisa talked about what's going on with the MOU. The Iranians have released the text. Ships are actually moving through. Do you think the ECB is just one and done now?
in all the scenarios, it was never one and done. They need at least one or two. I mean, the minimum they talked about was 2 hikes, right? I think the scenario with respect to the war definitely says that July possibly remains a hold. But September, if the situation still remains the same, i.e. of elevated oil prices, if the disruption is not yet done, ECB will be ready to act. And I think that is a clear message that we got from the meeting. And we also keep that option open. I think for BOE, it's a tricky one, whether they still want to hike when the economy, the signals are not that strong. Because if they hike here, it is hurting the economy. And especially, it's not just about monetary policy ever in UK. We have the fiscal policy as well as the political policy also coming in and hurting the markets.
Pooja Kumar of TD Securities, thank you so much for being with us as we get that Bank of England decision to hold rates at 3.75%. The tone was set yesterday with a very hawkish Federal Reserve, a new Federal Reserve, with Kevin Warsh taking the helm, the 5th central bank head going back 30 years. Michael McKee was there in the room. He joins us now. Mike, it seems like that was a press conference that may not become the status quo going forward. He might pick and choose when he has press conferences.
Yeah, that was one of the top questions, I think, not just because I asked it, but everybody wants to know what kind of communications are the Warsh Fed officials going to be making. And the press conference has become a major thing for the markets in terms of understanding what the Fed is doing. And so if they change that, it's going to take away a lot of information, especially if suddenly Kevin Warsh, the chair of the group, is not as accessible as he used to be. So we'll have to wait and see what they decide in their task force, but it is something that people might have to get used to.
Task force was definitely the key word in a drinking game, drinking water, of course, yesterday during the press conference. Mike, there was a sense, though, that 9 out of the 18 members did vote to, or did put in their dots, the idea of a rate hike this year. Was your sense that that was more verbiage, that it was a desire to take action?
No, I think it is a real desire to take action. There had been a growing sense among members of the Open Market Committee that they really needed to do something about inflation, because not only is it rising, but it has not gone in the direction of 2% for quite some time. And they haven't hit 2% in more than 5 years. So they really started to think that this could unsettle inflation expectations, and people could begin to think, especially with talk about changing monetary policy under Kevin Warsh, people could begin to think that inflation is going to be regularly higher, and they don't want that to happen. So the pressure has been building for some months. We saw it right after the first of the year, when we started to see people dissent or talk about the idea of the Fed on hold. Then it became more people thinking maybe we should change the guidance so that people know we could raise rates if we need to. And now you've got 9 people who think that they should raise rates.
Michael McKee, thank you so much, and great reporting yesterday. AMH, a lot of this has to do with oil prices. That was one of the real reasons why everybody got really concerned about inflation. The reacceleration, yes, coming from other places, but most notably within gasoline. I mean, really, this is the key question. How much does that pressure ease rapidly, as we're seeing in the oil futures market?
Well, right now, you have Brent and WTI both with $70 handles. You have gasoline under $4 a gallon. That's pretty extraordinary, given the fact that the Strait of Hormuz is just beginning to really open today with this MOU. We do have to remember, though, how difficult is this going to be? I'm looking through some of these headlines coming from the Iranian text that they just released. How the U.S. won't impose any new sanctions, how there's not going to be any tolls for 60 days. It all sounds great for 60 days. What happens after?
Yeah, Norm's saying that it could potentially be 60 days. It could be potentially
maybe it goes
buying
longer
time for a bit longer. The idea, though, that the Bank of England highlighted that they are looking to understand how quickly these pressures abate, given that everybody needs to restock their inventories. The U.S., the Cushing metric, coming to its lowest level going back to 2004.
Everyone has used their inventories. We're living on those buffers right now. So not only do we need to replenish those buffers, but also get to places that have had demand destruction, to places like Asia. But looking out to next year, and you brought up what's going on in futures, we are seeing lower prices in December. You're seeing a $69 handle when it comes to this time next year. And the IEA is saying, well, guess what? We're going to have a supply glut.
All right, well, let's get you other stories that are happening this morning, and not just on the Long Island. expressway. Here is your Bloomberg Brief with Isabel Lee. Isabel.
Hi, Lisa. Iran's president publishing the text of the interim deal between Tehran and the U.S. on X. Some of the details include traffic of commercial vehicles through the Strait of Hormuz to start immediately with no charge for 60 days, as well as the U.S. will fully end its naval blockade in 30 days. And Intel shares surging in pre-market. President Donald Trump saying the chipmaker will work alongside Apple to design and produce semiconductors domestically. Trump posting on Truth Social, "I decided to help Intel because we need to design and build our chips right here in America." And in sports, England beating Croatia 4-2 at the World Cup. The British captain Harry Kane scoring 2 goals, bringing his career World Cup total to 10. Jude Bellingham and Marcus Rashford also scoring for the 3 Lions. That's your Bloomberg Brief. Lisa?
Thank you so much, Isabel. Up next, signing a deal with Iran.
My whole life is all about deals. That's all I ever did is make deals. If they don't honor the agreement, we'll probably go back to bombing them.
Colonel Wayne Sanders of Bloomberg Intelligence joining next. This is Bloomberg Surveillance. Good morning.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Rally holding in U.S. equity markets despite the hawkish tilt across the world from central banks. Right now, you're seeing equities rallying up about 0.7% on the S&P. Futures higher, although pulling back just a touch from where they were earlier. Really, the outperformance in big tech and, frankly, the Russell 2000 with yields lower on the long end right now. 10-year yields 4.46%. Watch for that yield curve flattening that has really reasserted itself in strong form. And crude prices driving a lot of the enthusiasm, down almost 2% on WTI to $75.38. Question how much this can hold given the restocking that's necessary, the deal that still is ongoing. I mean, there still is quite a bit of uncertainty.
Right, but we did get the MOU text. The Iranian president has released it on Twitter. Iran to arrange for ship passage through the Strait of Hormuz with no charge for 60 days. So obviously what happens after that? No Arab country is going to accept a fee of an international waterway, neither would the United States. So you do see potentially some issues that are going to brew, but they're being put down the road. The can is being kicked. And for right now, this is good news because it's not only what they're saying, it's what they're doing. And we are seeing some vessels be able to now traverse the strait.
Under surveillance this morning, signing a deal with Iran.
My whole life is all about deals. That's all I ever did is make deals. If they don't honor the agreement, we'll probably go back to bombing them.
Here's the latest. President Donald Trump signing an interim peace deal with Iran last night. Bloomberg's Laura Davison joins us now for more. Laura, we did get some confirmation, as AMH was talking about, from the Iranian side. What's the latest?
So the latest is that this 14-point plan has essentially been confirmed and by both sides, which is really a first for the past 4 months. We've had a lot of mixed messaging come from the Iranian side and the U.S. side. So that is a step forward. However, this deal, while it does, allow for the Strait of Hormuz to start opening up and at least toll-free for 60 days, it also has some financial benefits in there for Iran, sort of as an incentive for moving forward with this, potentially a $300 billion economic development fund, the easing of some waivers, and also down the line some access to its frozen assets. It's being panned by several. Both the Israelis aren't very happy with this deal, as well as in the U.S. Even some from Trump's own party, some Iran hawks, have said that this deal gives too much away and that the U.S. really only gets a pledge in advance while Iran gets some tangible benefits. This really is just the starting line here. This really starts the talks for more thorny issues on what the future of Iran's nuclear program looks like and what a more lasting peace looks like in the region and what the future of the Strait of Hormuz looks like. But for right now, we're seeing positivity in the markets. We'll see where we are 60 days from now.
Laura, why was it brought forward? The initial expectation was for the MOU to be signed on Friday. It was brought forward to last night. Do we have a sense of what was behind that?
A couple different things. One, Trump happened to be at Versailles for a dinner, sort of the home, the birthplace of big global treaties. So there's a little bit of a sort of a photo op and sort of a symbolism there that the White House was looking to project. There was also some uncertainty about exactly what was signed on Sunday. They signed it again yesterday, and then potentially there is still talks about some sort of in-person signing in Switzerland. So this will be the deal that will be signed on multiple occasions.
Bloomberg's Laura Davison, thank you so much for being with us. Colonel Wayne Sanders of Bloomberg Intelligence joins us now. He was also at Versailles? Maybe not. I don't know. How many people can say, oh, I just happened to be at Versailles? Colonel, I'm just curious from your perspective, what you think has been accomplished with the signing of this deal?
Well, I think the biggest thing that I like about what's going on now is that it's given the 60 days right up front and saying this is where we're actually trying to go. The opening for Iran's side of the house, the fact that they actually have one singular voice right now that's saying that we're moving forward with this deal is a really good sign. Up until now, we've heard from President Trump say, hey, the things are moving forward, but then we would hear multiple different things from either an IRGC counterpart or for the presidency side of the house on Iran. So the fact that this is actually a solid effort coming out from them, I think is a really good sign right now.
From who? Because I know the Iranian president tweeted the MOU, but the Iranian president most normally, historically, focuses on domestic issues. Who is really the decision maker?
Well, so, I called it a four-headed hydra before. When you think about it in terms of supreme allied leader, from the theocratic side of the house, you also then have the presidency, you have IRGC, and then you also have members from the Chief Justice side of the house. So really all four of them have to speak in one. But the fact that what we haven't seen when the president was putting this out is we haven't seen something that's come back from the IRGC or somebody else that is actually refuting what the president put down. And they've had a little bit of time to do that at this point in time. I would have expected it by now.
Yeah, this is the new supreme leader that said the only place for Americans in the Persian Gulf is at the bottom of its waters. How serious can we take that this is going to be a strategic win for this administration, given the red lines this president has talked about for years?
I think one of the biggest pieces there is there's always going to be some type of messaging right there. It is part of the way that that Iran actually leverages power is to be able to hold on to that specifically. But in terms of the military side of the house, you've seen most of what the U.S. has done to their military capacity. It is more on the asymmetric threat that is remaining. That is still part of the piece that needs to be dealt with over the next 60 days. So from a strategic win on the U.S. side of the house, opening up the Strait of Hormuz right now is one of Trump's probably biggest ones that he's going to be able to put out. Dismantling their military so that their ability to come out and reach the United States to protect the homeland, I think is another one of those key pieces, as well as the Gulf state security. And you've seen a lot of that coming from Saudi Arabia, UAE, and Kuwait and beyond.
When we look at asymmetric warfare, how long do you think it's going to take for the United States of its partners to demine the strait?
So That's a very difficult one because of right now, a lot of the reporting is that it's not that heavy. And if you look at a lot of the capability that Fifth Fleet has brought with them, they have both uncrewed surface and undersea vessels that actually do a lot of this. They also have additional aerial capability. So what you're going to probably see is a phased approach to make sure that you have a clear channel within the channel, if you will, so that they can immediately come in and say, all right, here is the area that you want to stay within, and then they will slowly be able to start bringing it out. But you're going to see that initial piece. As you saw, some of the tankers are already starting to flow through, so it's going to stay. When CENTCOM and Fifth Fleet started talking about it taking multiple weeks, if not months, they're talking about making sure confirming the entirety of the strait, even the areas that aren't being traversed by the tankers.
Colonel Sanders, from a military perspective, what happens during this ceasefire? I mean, it's more than that. It's a memorandum of understanding, but it's a 60-day pause where both sides can take stock of the situation. Do you expect a rejigger in some of the ammunition production? Do you see some sort of shifting around of troops or returning to the U.S. by some of the naval operatives that have been on the water for months?
I think what you're going to end up seeing, who rotates home potentially after 30 days, right? I think that right now everybody's a little resident to be able to pull it back too far in terms of what you're actually going to bring back. But you're going to see some of your surge capabilities come home. You're not going to have 3 strike groups stay. You probably see some of the extra carrier wings come home, some of the strategic bomber fleets. But a reminder to everybody, though, Fifth Fleet's headquarters is in Bahrain, right? So the naval presence, a lot of it is still going to be around in that area in case something went wrong. There would be a very quick redeployment. You wouldn't have to see a surge of those strike groups to be able to come back. Continued intelligence assets, as well as fighter jets to keep air superiority. Those things remain because we have such a large presence from the U.S. We have a large presence across some of these Gulf bases. So there's still going to be quite a bit in the area.
Colonel Wayne Sanders of Bloomberg Intelligence, thank you so much for being with us this morning. And as we're talking, the oil prices and gasoline prices for average Americans continues to fall below $4 a barrel for the first time going back to March, 3.999% on an average basis across the nation. This was, some speculated, one of the key red lines for the president, which was getting oil prices lower ahead of the midterm elections and providing one of the last-ditch efforts at stimulus into the market.
Well, it's why everyone thinks potentially he got rid of some of the other red lines he has in terms of their ballistic missile program that is not explicitly addressed in this, as well as money to proxies, because he's so concerned with oil prices and energy prices moving higher ahead of the midterm elections. And it's not just that today we're seeing vessels being able to move with their transponders onto the Strait of Hormuz. In the MOU, the U.S. will issue waivers for Iran oil exports soon after the deal. So basically, potentially, we're going to see a statement in the next few days from Treasury's OFAC that allows Iranian crude to hit the market, which will bring prices potentially down further. It's pretty astonishing to see, given the fact that this was an administration that was obsessed and kept pushing for maximum pressure on this regime.
When you push that through the economy, it's unclear exactly how that's going to go. On one hand, there are stories about prices increasing throughout a whole metric of different places, including what we're seeing with respect to Apple. We'll get to that in just a little bit in terms of component prices and memory costs. On the other hand, we're looking at retail sales that have been pretty robust across the board. How does this factor into employment? We're going to be getting jobless claims. We haven't even mentioned that in our time because, frankly, the Fed seems less concerned about what's going to be happening in the labor market.
Well, how many times did Kevin Warsh say price stability and we will get back to 2%? Well, then you have to think inflation's coming from elsewhere. You look what Apple's doing. What did Dan Ives say this week? Compute is the new oil and gas when it comes to that pricing, how critical it is to the economy.
Yeah, we're going to be getting those jobless claims right ahead of the Knicks parade, which also is going to stimulate the U.S. economy. Coming up, Anastasia Amoroso Partners Group as markets react to the Fed's hawkish hold, plus Vonnie Quinn with your morning movers. Intel climbing with the support of President Trump.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
There is some heat to this market. No thanks to the Federal Reserve. That's coming from oil prices falling. Take a look at stocks. You can see the outperformance coming from both what we see in the tech sphere as well as the Russell 2000. Futures up by about 1% on the Russell 2000 and 1.3% on the Nasdaq, just fading a little bit ahead of the open. It's the S&P futures up 0.7%. The bond space, fascinating. Yield curve flattening to the tune that we haven't seen in a couple of years. Really market yesterday with a hawkish tilt continuing this morning. The 2-year yield up 2 basis points to 4.2%. That long end coming in. So that's where the flattening comes into play. Yesterday, the 13 basis point increase on the 2-year yield was the most for any Fed meeting that day going back to 2008. But really sucking the oxygen out of the room, not just the NIX, but also oil prices, where you do see them falling yet again to some of the lowest since the beginning of March. Brent crude $78.70, down about 1%. WTI down 1.5%.
Vessels are starting to go through. The MOU says that we're going to have waivers on Iranian exports. This is all healthy to get more oil barrels to the market right now, especially in places that have been dealing with demand destruction. A viewer writes in and says, is it plausible that promised lower oil prices from the MOU with retail sales and employment already healthy will be net stimulative, aka interest rates stay high?
Well, this to me is going to be the key question. How much has the inflationary push come truly from oil prices versus myriad other areas? We're talking about retail sales that have been doing pretty well outside of gas and automobiles. We're talking about people buying blue and orange. We're talking about people buying mugs. We're talking about people who are not going to the parade somehow, even though they've come out and worn every single part of their outfit that's orange and blue.
The Knicks are, and I'll stop doing this because, again, like I said, I can't have people thinking I'm a Mets fan. Once the Knicks excitement gets over, definitely not. And also, did you see yesterday, just quickly, Jalen Brunson, Josh Hart throughout the first pitch at Yankee Stadium? That's where they chose. That's where they chose to go. But World Cup, Knicks, seriously, all of this is very stimulative to the U.S. economy, regardless of potential inflation from gas prices.
And potential inflation from ticket prices. 2 hours away from the cash open, here are your morning movers with Vonnie Quinn. Vonnie.
Well, Lisa, it might be an up market, but we'll start with a down stock, and that is Accenture. Now, it did beat in terms of profit, but it cut its revenue guidance, and it continues on this acquisition spree. The latest, 3 more companies in the cybersecurity space. Obviously, its core business is getting dinged from AI concerns, investors dinging it as well, and it's continuing to try to pivot. But again, today, with that revenue guidance cut and the news that 3 more acquisitions are going on the books, this stock is down by 12–13% in the pre-market. Let's take a look at Intel, though. That is having a very different day, and we'll look at that in a moment. First, we'll look at the memory chip makers. Tim Cook gave an interview to the Wall Street Journal in which he said, look, we're going to have to finally put up prices on Apple products. Now, he declined to say when, which products, or by how much, but he basically said the reason was memory chips and storage are costing Apple a lot more money, and it's unsustainable. He has to pass some on to consumers. Well, that's good for margins, right? It means that there's pricing power for these memory chip makers, and those stocks are benefiting today, particularly Marvell Technology, which have been down a little more than the others. And finally, let's look at Intel, because it's again an Apple story. The president tweeting out that Intel was going to get into partnership with Apple on domestic chip production, a little bit like the NVIDIA Elon Musk Terafab partnership. And that has Intel stock rising. Of course, Lip Bhutan has been trying to find clients. If Apple were to be a client, a large client, it would bring in a lot more. And that's definitely positive for a stock that's already risen 4-fold since the US took an investment last August.
Thank you so much, Vani. On our radar this morning, the U.S. and Iran signing an interim deal to end the war and reopen the Strait of Hormuz. Iran's president publishing the text of the agreement on X, calling the deal historic. The Federal Reserve holding rates steady. Chair Kevin Warsh vowing to curb inflation and receiving support from President Donald Trump.
It's all right. Whatever.
And it looks like they might even raise them later this year. It's not clear. Do you have any comment?
It could happen. I mean, it's hard to believe. It just keeps a country down, you know. So it's so unusual. But we have a very good guy over there now, so I'm guided by what he wants.
Whatever, whether he raises rates or doesn't. Fed Chair Warsh avoiding giving any signal on his preferred rate path, but new projections showing many officials expect to raise rates at least once this year. And on the inflation story, this to me really stood out. Apple planning to raise prices to offset the surging cost of memories and storage chips. Outgoing CEO Tim Cook telling the Wall Street Journal, quote, price increases are unavoidable. Cook declining to offer further details or timing or scale. But again, this pressure is not just oil prices.
Right, and how do you maintain a profit margin if you're one of these companies, if you're seeing such sky-high prices when it comes to memory and storage chips? On top of this interview you did with the Wall Street Journal, the Wall Street Journal then turned around and said, well, how much could the iPhone 18 Pro cost? Because everyone's thinking that's probably where there's going to be this increase in prices. $1,299. $1,300 basically for a brand new iPhone when that comes out. That's a lot of money.
This, though, also speaks to what we're talking about with the build out of technology and how that's going to cause inflation that does come into consumer goods in other ways.
Can't escape it.
You can't escape it. And the iPhone is something that increasingly is a staple, whether you like it or whether you don't. And so this is one pathway to see some of the build out and the investment come into other inflationary inputs. Can people take some of what they're saving on gasoline prices and put it into their new iPhone? Maybe, but then it goes to the point of rates staying high regardless of oil prices coming in.
And it's not just iPhones. It's going to be the PCs and the MacBooks as well. And Morgan Stanley estimates a 15% bump for this across the year in the U.S. when it comes to not just the iPhone, but the other products. That's a lot of money, and yes, speaks to why Kevin Warsh is talking about price stability and not just focusing on energy prices.
You know, there's a task force for that. Let's turn back to the Fed. Investors taking in the central bank's hawkish hold and pricing in a hike by October. Anastasia Amoroso of Partners Group writing, we wouldn't be surprised if expectations for the number of hikes and cuts flip many times between now and the fall. A big pencil with a big eraser. Anastasia joins us now. Anastasia, great to see you.
Good morning.
Good morning. What was your takeaway from yesterday?
Oh, look, the market's takeaway was that this is clearly a hawkish message. I don't actually think so. And the reason for that is all the task forces are designed to buy a whole lot of time. And, you know, look, there was sort of a dismissal of the dots. You know, he specifically talked about them being really penciled in based on the current information with a big eraser. And there's this allusion to the fact that a lot can change in the next 6 weeks. So I think it is a premature conclusion that we actually have a hawkish bias. You know, there are other things that really stood out to me during the press conference, and one of them is a conversation about alternative data or the real-time, real-world contemporaneous data. I think that is really, really important. And I'll give you one example. If you look at the shelter inflation today in the CPI reports, then you'll see 3% roughly year-over-year change in shelter inflation. When you look at Zillow, CoStar, and others real-time data sources, you actually are seeing between -1% and maybe +1% or so. So a very different picture. So the question is, what else might we be overstating by relying on some of the backwards-looking surveys? And then the last point kind of to make on that is, you know, Lisa, you talked about the price of semiconductors. And one thing that Kevin Warsh said is, look, we can't control, if I'm in a grocery store, I can't control the price of milk or eggs or oil and perhaps semiconductors. So maybe, just maybe, the committee is likely to look through some of those one-off increases that they can control. But what they can control is the secondary impacts, and that's most likely looking at services and wage inflation.
I hear you. The one caveat being, in terms of the hawkish tilt, is the narrow focus on inflation. That the Fed has not achieved its 2% target for 5 years, and so this has to change. This is something they can control and they need to lean into, and they didn't even mention the dual mandate of the employment market. Why is that not unabashedly hawkish?
Well, let's think about what drove inflation over the last year. It is a set of one-off factors. It was the tariff increases and the core goods increase as a result of that. Then is the energy prices that also increased, and then is some component of the AI tech trade. But when you project that out, if you model that out through the back half of the year into 2027, some of those one-off factors are likely set to roll over. Core goods inflation, for example, if you look at core goods, the last CPI report that we got, month-over-month change was negative. That was the first time we saw that in about a year or longer. So that's already sort of a positive forward-looking sign. Then you look at energy. We were looking at $120 barrel of crude oil. Today, the forward strip is $75. It is a vastly different picture. So I think that's going to trend down. And maybe the stickier component is going to be the semiconductors and software. But if you take all of those one-off factors in aggregate, that's about 1% that has been added to core inflation because of those things. But if they're going to diminish, the significance is going to diminish into the back half of the year, maybe that doesn't actually call for rate hikes. I will say, though, Lisa, 3.5% range is probably where we're going to be for some time.
Do you think he was just managing inflation expectations?
Yes. Yes, I mean, if you were an incoming Fed chair and, you want to make a very strong statement, and I think it was the exact right statement to make, the commitment to the inflation mandate, and as a result, Lisa, to your point, you have seen that yield curve flattening, and that's kind of constructive because that manages the 10-year part of the curve as well. Now, for us, for example, as private markets investors, while short-term rates are important because you do have some floating rate exposure, let's say in private credit, or for the portfolio companies, if you think about infrastructure assets, if you think about data centers, if you think about real estate, a lot of the valuations of those and the loans that they may be undertaking are tied to the 5-year part of the curve. So I see that actually net-net as a positive development.
Do you think also he had to come out and say this because of the fact he's entering a Fed? He was an inflation hawk in the past. He said in his hearing, inflation is a choice. Was he kind of almost trolling his predecessor who, for 5 years, they haven't hit their target?
Well, I mean, maybe it came across that way. We can't be the judge of what he really meant by that. But I think as an incoming Fed chair, he was there to reestablish the mandate and, to focus on the battle at hand, right, which is still inflation. If you look at the labor market, the positive thing there is the labor market has actually been reaccelerating, and we printed something like 166,000 jobs on average over the last 3 months, and that's the best level that we've seen since 2024. So there's not an emergency state in the labor market. While inflation, the core PC, is still running at 3.3%, that sounds a lot more urgent. So I understand the focus on that.
I want to pick up on the point about private markets and that being more hawkish in the near term leads to more value on the long end, with the idea that you could see yields come in. Does this actually encourage you to take more risk when it comes to housing sensitive or building sensitive types of sectors?
I think in parts, absolutely. I'll give you one example, which is the data center business. When you think about how you price a data center, you price it of your operating income, and you discount it by the cap rate. And the cap rate is a function, of course, of what the base rate of what the rates are in that part of the curve. And to the extent that lower rates across the curve can translate into lower cap rates, all things equal, they mechanically lift the valuation of things like data centers, for example. So that's certainly supportive. If you think about real estate and parts of and infrastructure, there's leverage that's undertaken to build a data center or to build a commercial building. So to the extent that the leverage costs come down in that part of the curve, that's also supportive as well. So I would say yes, constructive there. When you look at some of the private equity businesses and the leverage buyouts, they may use more short-term floating rate debt, I should say, which is tied to the short-term rate. And certainly it's not great news that we're not going to see as many rate cuts there. But I will say, Lisa, for our portfolio companies and in general, the coverage ratios have improved significantly versus what they were in 2022. So the cash flows have improved as well. So it's actually most meaningful for the private equity companies is the EBITDA growing, or is the profitability growing? And for us, we do see that acceleration in EBITDA growth from last year into this year and into the following year. So I'd say that sort sort of trumps some of the rate considerations.
Anastasia Amoroso, thank you so much for being with us this morning.
Thank you.
Anastasia Amoroso of Partners Group, as we look at the hawkish tilt having maybe dovish consequences in the long end of the yield curve. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Isabel Lee. Isabel.
Hi, Lisa. Federal Reserve Chair Kevin Warsh announced 5 independent task forces. During his first press conference, Warsh said the groups will be responsible for fundamentally rethinking key elements of central bank operations and monetary policy. And Apple is preparing to release the second generation of the iPhone Air. The new model added a second rear camera for ultra-wide-angle photography and improved battery life. The model is expected to release in spring of next year. And gas prices dipping below $4 a gallon for the first time since March. According to AAA, the national average for regular unleaded is now $3.99. Prices are still well above where they stood before the war and aren't expected to return to those levels until next year. That's your Bloomberg Brief. Lisa?
Thank you so much, Isabel. Up next, reforming the Federal Reserve.
I'm appointing a task force in each of 5 areas. That'll be taken up by the task force. We've got a task force for that. I've been on a task force or 2 in my life. It's one of the things we have a task force to do.
Former Kansas City Fed President Esther George joins us next to answer the question, is she on the task force? From New York, this is Bloomberg Surveillance.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it. Wow. Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the 3rd floor or the lobby. You actually have to start in the basement.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Can you be not dovish, but send rates lower with being hawkish. Right now, even though we had a real shift in tone from the Federal Reserve, you are seeing risk on continue with the long end of the yield curve coming in. This morning, 0.6% gain on the S&P. 10-year yields lower by 3 basis points. Dollar stronger, crude lower as that MOU gets signed between the U.S. and Iran. Where does the Fed fit into this? Under surveillance this morning, reforming the Federal Reserve.
I'm appointing a task force in each of 5 areas. You'll hear quite a bit more about these task forces. That'll be taken up by the task force. We've got a task force for that. The good news for you is we have a task force for that. We have a task force on that too. I've been on a task force or 2 in my life. It's one of the things we have a task force to do.
Here's the latest. Fed Chair Kevin Warsh appointing, guess what, new task forces, saying professionals inside and outside of economics will review 5 areas central to monetary policy. Former Kansas City Fed President Esther George writing, uncertainty will heighten as to how the outcome of these reviews might refocus the FOMC frameworks and processes. Esther joins us now. Great to see you. Thank you for being with us, Esther. Let's just start off. Were you asked to be on any of these task forces?
Well, there's plenty of opportunity with 5 of them, and I will stand by waiting for the call.
Were you surprised by anything out of yesterday's press conference?
So I don't know that I would call it a surprise, Lisa, but I do think what we were waiting to hear and what a new Fed chairman would be expected to do is sort of establish the tone. And the tone, I think, came through loud and clear with the emphasis on price stability. And of course, the other thing people were waiting for is how exactly will the changes that Kevin Warsh foreshadowed play out? And of course, we saw that again in his explaining the task forces and what they would be assigned to do.
There seemed to be a de-emphasis on the labor market, this idea that you can have a dual mandate and that mandate can come into conflict. He answered and said, really, he doesn't see it that way, and it's not really the right way, given the fact that if you have price stability, that fosters a robust economy that can allow full employment. What was your take on the fact that he really de-emphasized one side of the mandate?
Well, I think it has been highly emphasized in the past for sure. And that has not always been the case in the history of the Federal Reserve, even with that dual mandate. The research, too, last year, but I don't expect that either undermines the mandate nor the focus that this committee has to have, which, as you noted, squarely on the inflation issue that they've been wrestling with for a number of years.
It feels like Kevin Warsh is a minimalist when it comes to facts only in the statement, not a lot of forward guidance. In that sense, do you think that is clear communication, or do you think it creates more uncertainty for financial markets?
Well, you're right. I think it can have more effects, because the point is not the number of words that you're using. It is really the clarity with which you're expressing what you're trying to communicate. And that, of course, will be the challenge, I think, going forward. One could argue there's been a lot of communication and maybe not the right amount of clarity. And I think if you move to the other end of that spectrum, which is let's shorten it up, let's be more concise, also leaves a lot of room for misinterpretation too. So again, I think this focus on communication is a good one. I think it's one that FOMC has looked at over a number of years, trying to figure out where do you get the bang for your buck in the communications you're trying to deliver. And again, he has a task force for that, so we'll see where they come out on that.
Well, will other members of the committee line up behind him and when they give speeches, refrain from talking about forward guidance?
Well, we'll have to see, and I think we'll get a chance next week. There'll be some of the FOMC participants will be out speaking. Remember, when Fed presidents, which I can speak to most directly, go out, they are out there in their regions really trying to explain policy to people. I think this committee is always operating with a degree of deference to the chairman. I think they're willing to let the direction be led here, but they will have to speak about their views as they go out. And again, their view, I think if we can look back to the past meeting, the past year, and how they've communicated and have clues about how they're thinking about the policy path.
Our resident Fed expert wrote in to let us know of your prominent position for the World Cup committee in Kansas City. And this does play into inflation. There's a task force for the World Cup committee. I can say that I saw some of the Argentinian fans lining up to get on a plane to go to Kansas City, all decked out in blue and white, incredibly excited. I'm sure you're incredibly excited and have great seats to the game. I'm wondering, from your perspective, how do you see it as representative of the strength in the consumer? I mean, how much is this an increasingly economic story as well as one of incredible fandom for the soccer sport?
Well, we're excited here in Kansas City about our connection to the World Cup, and the Argentinians. The Algerian game was an exciting one for sure. I think, Lisa, your question really speaks to how is the consumer doing today? And we do see consumer spending strong, retail sales are moving, and I will tell you, the seats were full at the stadium where I watched that game. So there is spending going on in the economy today, which of course is why the FOMC has to be particularly attentive to its mandate around price stability, that they have to follow through, again, I think as we heard yesterday, on that mandate.
Do you think it would be advisable for them to hike rates later this year?
Well, I think there's a good argument to be made for that. And of course, I think what we heard yesterday is we're not going to prognosticate about that, but we're going to watch the data carefully, which of course is what the committee has to do and has done for some time. But when you look at the persistence of inflation, notwithstanding that we see some good news coming out of the oil markets, there has been an underlying issue with inflation being sticky. And so looking at whether the current interest rate is going to be sufficient to bring that back to target, I think is a real question and one they're going to have to tackle.
Former Kansas City Fed President Esther George, thank you so much, and good luck throughout the World Cup, given the fact that I really did see an incredible rush of people heading over to Kansas City.
Of course, because you get a chance to see Messi, right? Didn't he have a hat trick in that game? So pretty incredible and probably worth buying the tickets for, right? Because some of these games a lot of people view are just once in a lifetime, so you're going to pay up.
All I can say is that the Mets are single-handedly trying to disinflate some of those ticket prices as a result of their their results. So you know, it's not even across the board. Some pockets of strength.
But New York's getting evened out with the Yankee ticket pricing, and obviously, I mean, the Knicks tickets were insane. Before I decided to go to Game 5, I checked Game 6 ticket prices. Get in price, worst seat in the arena in MSG. $11,000.
Just a programming note, this is the last day that Anne-Marie is allowed to talk about the fact that she did attend Game 5 of the Knicks. Coming up next hour, Scott Cronert of Citigroup, Charles Schwab of CEO, Rick Wurster, Claudia Sam of New Century Advisors, and Jessica Noviskis of Marquette Associates. So we see risk on reassert itself with a deal signed between the U.S. and Iran, a day early from New York. This is Bloomberg Surveillance.
Being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid? I don't think I was reading magazines until I was in them.
You are on the cover of all of these. Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world, right here on Bloomberg. Context changes everything.
The committee decided to maintain the target range for the Fed funds rate in support of the Fed's dual mandate.
This was a very deliberate and patient approach, and we'll see through the path of incoming data how this plays out.
It's hard not to interpret that as a little bit more hawkish than otherwise people might have expected.
Half of the committee is expecting rate hikes this year. We were thinking 2, maybe 3 to be decorative. We didn't think half the committee.
That's one of the challenges the Fed faces is they've got to manage to the economic aggregates when the devil is in the details.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance on a Thursday that feels like a Friday. It's tug-of-war Thursday with two competing factors buffeting markets. On one side, stocks rising on the prospect of a signed deal between the U.S. and Iran. On the other, a bold new Fed chair, Kevin Warsh, putting a hawkish stamp on the world's most important central bank, locking in market expectations for a rate hike as soon as October with a really hawkish projection from the committee. For the moment, traders taking more signal from falling oil prices than potential rate hikes and almost shrugging off the jobless claims that we get in 30 minutes time.
Because the Fed has told us they are focused on price stability. And what we see right now in financial markets and also bleeding through the real economy, oil prices are lower. Gasoline is now under $4 a gallon. This is what this White House wanted to see ahead of the midterm elections. I love what Norm Rule talked to us about when it comes to this deal. The reported U.S.-Iran deal is best understood as a high-value pause in the current military phase of the conflict, not a durable strategic settlement. We're seeing all this good news. It's for 60 days. What happens next?
At the same time, you are seeing oil prices come down, and it's not just on the front end of the contracts, it's also on the longer end. When you take a look at the December contracts, some of the lowest levels that we've seen since early March. Does the Fed have an easier time, and do central banks around the world, given that there is this reprieve in oil prices? Maybe, but we were talking about last hour how Apple is going to be raising prices as a result of the memory component. So how broad-based is this inflation? How much can the U.S. labor market truly support the ongoing spending?
And I love what Michael Purvis just wrote in. Is Warsh the hawk who keeps rates lower? He's coming in very hawkish. He's setting a new tone. He's not putting a dot on the plot. He's issuing less words in the statement. He is certainly setting a new tone, but how much is that just to manage inflation expectations so it doesn't get out of control and potentially at some point be able to deliver on what this White House wants to see, which is an interest rate reduction? Time will tell.
Whatever. That's the response from President Trump.
Salty,
seeming
no?
a little bit a little bit to take the pressure off. Right now, taking the pressure off in equities and giving it some juice, in particular with the tech trade, seeing a rally across the board, led by the NASDAQ, 0.7% gain in S&P futures. You're seeing yields lower on the long end. Are you potentially leading to easier financial conditions at the long end by being hawkish in the near term, 4.46% on that denomination? And crude lower by about 2% on WTI at $75.30. Coming up this hour, Scott Kronert of Citigroup with tech leading stocks higher. Charles Schwab CEO Rick Wurster as SpaceX shares pull back after historic retail demand. And Claudia Sahm of New Century Advisors as Fed Chair Kevin Warsh kicks off a new era for policy. We begin this hour with stocks bouncing back and oil falling as markets digest a hawkish Fed with a peace deal in Iran. Scott Kronert of Citigroup writing, the City House view remains for 3 cuts starting in September. Our S&P 500 8100 year-end target is not predicated on lower Fed funds. That said, tightening from here would certainly put some pressure on our views. Scott joins us now for more. Scott, I just want to welcome you and get your take on what we heard yesterday to see if you think that's enough to shift your likelihood of a potential rate hike significantly higher.
Hi, Lisa. Good morning. Well, I'd say, our economist's view is that there's still a likelihood for Fed cuts later in the year. Overnight, they pushed their expectations out to a first cut in October from the previous September. So now I think we're officially looking for 2 cuts between now and the end of the year. So, we incorporate that into our U.S. equity views in a number of ways. But I'd say first and foremost, it plays to how we think about the broadening dynamic within U.S. equities. Like heretofore, we've been very, very adamant of the view that we're actually having to make 2 market calls here. One on the AI-related cohort that is now approaching 50% of index earnings. The other on everything else, which is where your more traditional macro issues come into play. So we'll navigate this. I think what we got out of Warsh in hindsight was not a surprise given his inflation hawkish background and perspective. And also just we need to allow, as we've talked about, it seems like several months ago, that as you got into new Fed chair mode, you had to prepare for some volatility around the change in the language and the commentary.
Did oil steal Kevin Warsh's thunder on some level, given the fact that the decline in oil prices gave potential stimulus in its own right to the consumer-facing sector to maybe support some of that broadening out?
I think you highlighted earlier, we've been all in on the focus on the futures curve for crude, and there you're seeing a fairly dramatic, downward sloping pattern unfolding here as we've gone into this latest Iran negotiation. So I think we all, are quizzical on will it persist. The oil markets are telling you that they expect it will persist, and then the question becomes one of, well, were the Fed members in a position to adequately address the potential impact of this now falling oil price? Our suspicion is that as we get further into the fall months, you'll see this balance between signs of inflation coming in, some nagging labor concerns creep in, probably keeps the Fed on pause for now, certainly to our team's view, until we get a little bit further into the fall months.
But Scott, given the fact that the Federal Reserve Chair Kevin Warsh continuously talked about price stability, he was talking more than just the rise in energy prices. Isn't he seeing inflation elsewhere?
Well, I think this is one of the issues when you get into the details on a lot of the inflation data. It's like, okay, what's the force driving the data this month? And sometimes those forces can be fairly narrow as opposed to how you think about it in a more classically broad-based approach. So I think we just have to be aware that, as we've said earlier, that Mr. Warsh's views coming in kind of started out with a hawkish inflation bias. I would say that I think, identifying that 2% target, I thought was pretty telling in terms of setting the tone for this. He's making it clear. He's not going to let this inflation issue get away from him. But I do think that there's still a lot of wood to chop here in terms of how the Fed's going to go through their process, how they're going to evaluate all the puts and takes. And we'll see. I know the markets are leaning incrementally hawkish in terms of timing for a next Fed rate hike. And we'll have to navigate that as a source of volatility. For now, not changing our U.S. equity views, which are still net constructive as we enter the second half.
I love your take as well, just from your position in terms of an equity strategist. Does it matter to you? Were you interested in knowing more about these task force, or you just read them as this is a Federal Reserve chair who's buying some time?
Well, I'm not an economist by trade. We follow this pretty closely, obviously, and I think the task force makes a lot of sense. And I think, taking a fresh look at the Fed process was something that we expected from Mr. Warsh all along. And I think that's terrific. I think one of the issues that, we've been kind of, dealing with over the past several years is a Fed that seems so data dependent that sometimes it puts itself behind the curve in terms of reacting to events as they unfold. And sometimes that can be to the detriment of both economic conditions, in many cases, U.S. equity fundamentals. So, again, I welcome the refresh. We'll see where this takes us. I think it just probably says that, hey, again, just be prepared that the Fed messaging is going to be a little bit different than it's been as we go into the next couple of meetings from here.
Scott, I love how you framed the different market calls, the idea of the broadening out trade in the economy versus the AI trade, which seems somewhat independent of everything. Given what we've seen from SpaceX, given what we've seen in terms of the attention being paid to the mythos and fable iterations of Anthropic, given how central the AI leaders are to the entire G7, do you only see this particular trade continuing to gain, or are you starting to see some cracks?
Well, I think we know that the supply that's coming and is expected to come via issuance is an early sign that we have to pay attention, okay? And this is something that we've called out. A lot of this is a double-edged sword. You want the funding to support the investment. On the other hand, the funding leads to share price dilution, and there are other nagging issues that come with that. So we know that also, and this has been part of our recent view to take our S&P target up for this year to now 8,100, is that what this is driving is let's call it an AI CapEx super cycle that we think we're still in the middle innings of. So essentially the setup here is for an expectation that we see fairly consistent beats and raises out of that part of the market, certainly in Qs 2, 3, and probably 4, and we'll have a fairly positive view of going into 27. Beyond that, it gets a little bit more murky, I would say. And so I think we have to look at some of the earnings tailwinds that we're getting here out of the AI play as here for now, part of this CapEx super cycle, but we have to be wary that it's not going to last forever. On the flip side, the broadening call has always been about getting back to where we started the year, which was for sort of soft landing conditions with expectations for a somewhat easier Fed that allows other parts of the market to re-engage. We haven't seen that in their fundamental follow through thus far into the reporting cycle, with Q1 results not showing much change in the forward earnings picture for that other half of the index. So, we've got a couple of hands that we're playing here. We think the best opportunity for a market, hitting persistent new highs is going to be a combination of those two forces at work.
Scott Cronert of Citigroup, thank you so much for taking the time this morning as we parse through these dueling factors. I love that, these different markets that seem completely divorced from one another. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Isabel Lee. Isabel.
Hi, Lisa. Iran's president publishing the text of the interim deal between Tehran and the U.S. on X. Some of the details include traffic of commercial vessels through the Strait of Hormuz to start immediately with no charge for 60 days, as well as the U.S. fully ending its naval blockade in 30 days. And the BOE holding interest rate steady at 3.75%. The central bank saying the recent drop in oil prices is, quote, encouraging. Two policymakers voting for an immediate quarter-point hike due to concerns over persistent inflation. And a historic day in New York, the Knicks getting their first ever ticker tape parade. The parade through the Canyon of Heroes is kicking off at 10 a.m. Eastern and is expected to draw millions of fans. Some fans paying as much as $950 for professional line sitters to secure a front row view. That's quite a price. That's your Bloomberg Brief. Lisa.
Thank you so much. A word just to all of the bosses out there. If your employees are a little bit late, they might be stuck in the subway behind a lot of different uniforms.
How many people are also just calling in sick? It feels like once in a lifetime. Yeah.
I hear a little bit of raspiness there.
I mean, I'm on TV, so obviously I'm not there. But also, can you imagine paying $950 for a professional seat holder. That's not a bad gig.
Oh my God. Are you thinking of
maybe on the weekends?
All right. Well, this is a once in a lifetime thing. And maybe Anne-Marie is rethinking her career choices. Up next, the morning calls, plus Charles Schwab CEO Rick Wurster on the blockbuster run for retail investors following the SpaceX debut. That's kind of wage inflation, right? I mean, that would really cause some increase in spending capacity.
Yes. Maybe that's where John is today.
Ooh, I highly doubt that. That conversation is not coming up next. Rick Wurster is. This is Bloomberg Surveillance.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
With any model, with any technology, there's going to be a risk of harm. Executives, companies are realizing they have to prepare both for the benefits of AI and also making sure things like their cybersecurity are up to date. Models like this can improve cybersecurity and identify potential attacks that can actually allow companies to respond to those quickly rather than having those vulnerabilities exploited.
That was Jennifer Huddleston of the Cato Institute on potentially finding some of those holes. Of course, it is a timing mismatch. How long does it take to patch up some of these holes as you find those vulnerabilities? Right now, people looking through some of all of the concerns, seeing some gains in risk assets, 0.7% gain on S&P futures, yields lower on the long end as people take a look at a potentially more hawkish Federal Reserve raising rates in the near term to lower inflation and benchmark rates in the shorter and in the longer term. And crude prices really in the front seat here, down 2.4% as we look to a deal between the U.S. and Iran. Time now for the morning calls. First up, Wedbush more than doubling its price target on Micron to $1,300, saying estimates for revenue and EPS have increased substantially. Those shares surging 4.5%, though some of this is also some sort of rebound from some of the sell-off that we've seen in the past couple of weeks. Next up, KeyBank raising its price target on Marvell to $385 from $280. The analysts saying networking should increasingly be a focus for investors. And finally, already initiating coverage on SpaceX with a buy rating and a street-high $401 price target, saying the company is breaking down hard engineering challenges into stepwise tasks as it builds scale into space. SpaceX seeing historic appetite from retail investors, drawing over $370 million in demand since Friday. Charles Schwab was one of the firms that brought the listing to Main Street. Joining us now, I'm so pleased to say, is the Schwab President and Chief Executive Officer, Rick Wurster. Rick, great to see you. Thank you for being with us. I want to start just with how you see the retail investors' role in this particular IPO and how it highlights, in some ways, a changed market.
Well, it's a breakthrough event, I think, for the retail investor who was allocated roughly 20% of the deal, which is triple a typical IPO. So it's great to see retail having a meaningful seat at the table. It created tremendous engagement with our clients and broadly with retail clients. Demand was off the charts, and that demand continues. We've seen in the 3 days following the IPO, nearly $7 billion of additional orders come from our clients alone. So lots of interest, a great breakthrough for the retail client. Having a seat at the table was great to see.
There's a little bit of concern in some corners, albeit with skepticism, because you never want to bet against an entire crowd of people who are going in one direction. But Rick, there does seem like it's more kind of in vibes and support of the ideas of things rather than traditional valuations. Does that concern you, or does that frankly give you faith in the crowds, the wisdom of crowds, rather than Wall Street analysis?
Yeah, it's tough to know with foresight what the returns will be, but I think what's so exciting about the market is the level of innovation that you're seeing. And the retail investor sees that every day in their life, and they want to be a part of it. And so you're seeing tremendous interest in AI-related names and the space names. I think it comes from the retail investor being able to touch and feel the level of innovation in our economy. And I think clearly they're holding names that are doing, stocks that are doing well with really strong fundamentals. Exactly what the returns will be, only time will tell.
This was like a Super Bowl moment for financial markets, and we learned that there are war rooms. You set up various ones, and you increased your team. Can you just give us some color? Where were you during all of this? What was the vibes like in these war rooms that you set up?
It was a pretty amazing event in that it was one of the top 5 most active days for our clients in the 50-year-plus history of the firm. And if you think about all the market events we've had over those 50 years, for the IPO to crack the top 5 is pretty unbelievable. We had 140,000 clients call in live. We had lots of digital engagement. It was impressive to see, and our teams were fully staffed, ready, and able to handle our clients' needs that day. It was wonderful to see the teamwork and the effort that went into making this a success on our side.
How do you think this is going to establish potentially what's next when it comes to other mega IPOs like Anthropic and OpenAI?
Hopefully it establishes retail having a really strong presence at the table. I think it's wonderful for the retail investor to be able to participate in something like this. So I hope this IPO establishes that. I think it also establishes an incredible level of interest among our client base for new and innovative technologies and being able to participate them. We recently closed a deal with Forge, which allows our clients to invest in pre-IPO companies. And so I think that the interest around these new ideas and emerging companies is quite high and will only continue.
Charles, Rick, the point that you just made is actually really important, given the fact that people note that increasingly the value is being created before the IPO when companies are still private. Do you think that some of these IPOs will expedite the efforts to get access to retail investors into private markets through a whole host of different ways?
I do think it will expedite it because people will have interest in getting in earlier because these companies are waiting far longer to go public. And so there's a lot of value being created while they're private and people want in. I know on the Forge platform, these companies were brought with much lower valuations. SpaceX in particular, I think first came to the Forge platform when it was roughly $60 billion in value. And so those investors who were able to participate early at a $60 billion valuation are seeing it now well over $2 trillion and are enjoying the very significant returns that they had. And I think more and more people are getting to see and experience these companies that are private. They're benefiting from a lot of their technology, and they want a way to access the returns that are going to come from the innovation that they're driving. So I do think it'll create more interest in private companies, and we want to participate in that.
Rick, what's the demographic of some of the retail investors who have been most interested in some of these IPOs? And I ask that because it seems like there are some generational divides that have emerged in terms of who is more actively trading some of the zero-dated options and other instruments versus the 60-40 crowd that grew up in another era.
Yeah, interesting. We saw demand for this IPO across the demographic, from young investors to our older investors. So really high demand across the board.
Are you seeing your retail investors having to move money out of certain positions so they can get ahead of something exciting like the SpaceX IPO?
A couple things. We saw in May more new money being put to work, so people taking money from cash, getting it invested. We also did see some rotation, and part of what drove the high levels of activity around the SpaceX IPO were clients who are repositioning their portfolio to free up money to invest in SpaceX. So I think it's a little bit a combination of both.
When you look at some of the other brokerage that are involved, Fidelity, Robinhood, E-Trade, why do you think investors should come to you? I know a lot of young investors are very excited about Robinhood and also how some of their software operates. Why for you, given the fact that this is going to be a massive summer for IPOs?
Yeah, I think Schwab is the place to be because we've got what we think is the world's greatest trading platform in Thinkorswim. We've got a research and education platform that is built with the client first, putting information and analysis in their hands to make informed decisions. And we have the support and service that can't be matched. We had took 140,000 client calls, all from a tell me what an IPO is to how do I actually purchase the IPO and how do I get involved? So I think at Schwab, you get full end-to-end service from a person that can help you, a great digital experience, a leading trading platform, and the research and insights that are going to put your interests at the forefront. So that's why if you look at our trading activity, we handle the most daily average trades, I think by double the next largest broker. So we do think we are the premier destination for trading in our country.
Just real quick, Rick. I'm wondering if the Fed is more hawkish and does raise rates, do you think that that's going to limit some of the profitability due to the contracting yield curve?
For the company or for
the company?
For the company, we're well positioned, and if rates rise, that's generally beneficial to our company. But we're an all-weather business model, and we've got three major sources of revenue: trading activity, asset management and fee-based revenue, and then revenue that comes from net interest margin. So we have a diversified business model, can handle, we think, a lot of different environments. But in general, with the environment that we're seeing around rates, that only provides a tailwind for our business.
Rick Wurster, thank you so much for being with us this morning. Charles Schwab, CEO, after the IPO that broke records and has rallied more than 40% since the first day of trading, even with a bit of a pullback yesterday.
And excitement for retail investors in something like SpaceX. Are we going to see that same sort of allocation and excitement when it comes to Anthropic, when it comes to OpenAI, when they hit the market this summer? And places like Charles Schwab are excited and hopeful for a second coming almost of another IPO.
Yeah, incredible competition to get a slice of this deal in any which way. We are just about 5 minutes away from initial jobs claims. Remember the jobs market? That's hard to sort of think about given how much inflation was emphasized yesterday. Do we get an increase similar to what we saw at the previous read? Plus, Claudia Sahm of New Century Advisors on the new era of communication at the Fed. There is a task force for all sorts of things. If you have been selected for the task force, please call in from New York. This is Bloomberg Surveillance.
morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
The rally extends this morning with oil prices falling across the board, giving some heat in particular to the AI trade. The NASDAQ 100 leading the charge out the gate, 1.6% gain in futures. And you can see the Russell 2000 right there behind it, 1.3%. The extra stimulus not coming from the Federal Reserve, but coming from oil markets. When you take a look at 2s, 10s, and 30s, it's yield curve compression. As we get some data on initial jobless claims, how much are we banking on some sort of ongoing strength in the U.S. economy and the labor market? Just crossing the numbers now, brought to you by Michael McKee. Mike, what do you see?
Well, what I see is Kevin Warsh gets a break. He doesn't have to worry about the labor market. Didn't talk much about it yesterday. It does seem to be stable. 226,000 initial jobless claims, and that's a decline from 230,000, which is revised up from 229 last week. Either way you look at it, it shows jobless claims relatively stable. They've moved up over the last couple of weeks, but not significantly. The country is still maybe not hiring. A few more people they are, but maybe not hiring in big numbers, but they're certainly not firing at this point. Continuing claims, 1,810,000 do rise from 1,786,000. So maybe some people are having a little harder time getting a job, but these are weekly numbers, so they do bounce around a lot. But the bottom line is it's not a major big deal. The Philadelphia Fed numbers are out as well, and the Philly Fed index rises to 10.3 from negative 0.4. The prices paid index is at 53.2 versus 47.9. So we still have inflation. That's no surprise given that we saw prices rise significantly during this war. We don't know how much or how often they're going to go down, but it does show business a little bit stronger in the Philadelphia area. So it does look like at this point the economy is in relatively good shape, and the labor market is in relatively good shape. So if you're going to be the Fed and want to take something on, it can be inflation.
Yeah, if you take a look at markets, taking this all in stride, as expected, Mike, as you were mentioning, there hasn't been a huge shift in the expectations or the labor market in terms of reasserting itself as a primary story. In the bond market, you could see two-year yields actually come in just a touch on this data, but otherwise, across the board, staying pretty much where you were. The rally actually escalating on the 30-year yield at 4.86%, down 7 basis points as people take a look potentially to some weakening there. Mike, I wonder how much the employment data has been de-emphasized as a result of the statement that we heard from the Federal Reserve, unless it has to do with wages, which more directly feeds into inflation.
Well, there's no wage pressure out there, certainly, because average hourly earnings and other wage measures have been dropping, and they're now below the level of inflation. So if you're going to try to do something about wages, it's probably going to be bring down the inflation rate so that people can get ahead a little bit. I think they basically are saying, as long as the labor market doesn't show signs of falling apart, we're going to completely focus on the inflation side of the mandate. It's been something that's been growing for a while, concerned that they haven't hit the target in over 5 years, the 2% target. And it's about time they do that, or they risk the idea of inflation expectations getting out of control, people thinking that inflation is going to be always higher.
Michael McKee, thank you so much for breaking that down. As we see, that's kind of flatlined in terms of any kind of excitement coming from jobless claims, really indicative of the low hire, low fire environment that we're in. This is all going to be analyzed by a number of task forces. Claudia Sahm of New Century Advisors writing, I think it was a mistake by Warsh not to participate in the statement of economic projections. Warsh is leaving huge blanks in his communication. The dot plot's days may be numbered, but it was critical for credibility. Claudia joins us now for more. Claudia, great to see you. Always love getting your perspective. Let's start there. Why was it a mistake not to put a dot on that plot?
Right. Well, I think the statement ended with a very forceful, this committee will deliver price stability, which leads to a natural question of, well, how are you going to do that? Right? Like, how are you going to deliver? And the summary of economic projections, it is not perfect. It's often misunderstood, but that is actually the exercise of the dot plot. It's actually, each individual is like the FOMC. What is the appropriate path for federal funds rate? What's the right monetary policy to get us to the dual mandate? That price stability, 2% is where all of those forecasts end in 2028. That's because of they're working their way towards price stability, and they adjust their federal funds rate to get there. So they're like putting together plans individually. And Kevin Warsh didn't participate in that exercise, and he didn't flesh out in the press conference his views of what a plan could be of how to get to that price stability.
And this is partly by design, right? I mean, he talked about how he wanted the market to be one of the key metrics that they do look at, and that the market, he wants to have clarity of focus on the data without trying to interpret how the Fed would look at the data and then respond to the Fed's response to the data. I mean, what do you make of that argument?
I think it's going to be a tough sell. And honestly, I can, set aside, he doesn't want to talk about plans. He doesn't want to talk about the future. Okay, that's a debate to have about communication. But what was really striking is he didn't want to talk about the decision they made this week. I mean, they say they want price stability. They voted unanimously to hold rates steady. How is that in service of price stability?
Are you saying you think they should have hiked this meeting?
No, I think they should have explained why they chose to hold rates steady. I agree with that decision, but it's like totally pointless that I agree with it. I want to hear what the Fed chair thinks about it, what the committee thinks about it. Why was that the right decision? We know from the summary of economic projections that many of them think it's going to be appropriate to raise rates later. Many of them don't think it will be. Like, tell me about why you decided to do what you did today. Communication's also about accountability. Like understanding who these people are that are making these big decisions. They don't have a crystal ball, but I really do expect them to explain what they're doing right now and show their work.
Is it potentially that Kevin Warsh views as a slippery slope to then be an individual that's up there on the podium giving forward guidance, which he doesn't agree with?
Again, I don't, don't tell me about the future, but I feel like there's some hiding behind the jargon. And I will say, first press conference, right? Like this, unevenness out of the gate, totally understandable. But I do think there's room for adjustment. And if you just want to talk about the decision that was made today, fine. But do talk about that. And yes, I think it's important, the slippery slope, okay, fine. But the service of accountability is important. And we do need to, I think, have some insights onto the discussions that they're having and how they're weighing the data and what they're thinking about. Because honestly, right now, monetary policy is tough, right? So we should have some insights into the debate that they're having about those policies.
We're going to get more information about how they plan to communicate going forward. What's the potential consequence of this approach in markets? Is it more volatility? Is it just more uncertainty expressed in other ways? How do you filter this into being potentially pernicious in a way that maybe people don't understand?
Right, so markets are going to fill in the blanks, right? They're going to try to come up with some views that's going to mean we're going to have more uncertainty about what the Federal Reserve is going to do, which is going to lead to potentially more volatility in interest rates, and investors are going to want to be compensated for that uncertainty, right? So it does come at a cost. And so, there's no free lunch here in terms of how the Fed interacts with markets. And, we had a Fed long ago that liked to surprise markets and didn't give a lot of information. And no, the recent regime may not be perfect, but we moved away from that, so the Fed surprising markets for a lot of good reasons. And I think backtracking into that could cause a lot of problems down the road.
We did learn something pretty crucial, and this added to the hawkish message that the market took from the statement, and frankly, the statement of economic projections in particular, which is that 9 of the 18 members of the FOMC saw the next move as a hike later this year. That's new, and that's significant. How do you interpret that, and do you think that that's the appropriate stance?
Right, and what those individuals are saying is not necessarily they expect hikes, but they think that's appropriate. That is going to be necessary to get us back to price stability. That's a really important statement. Again, I think we'll hear speeches, we'll get this fleshed out with individuals thinking, but they also said in the statement that, a big part of what's happening with inflation are supply shocks related to energy. The textbook is for in energy supply shocks, the Fed should look through it. The Fed shouldn't be raising rates into that. So it's telling you something to have a group of Fed officials say, we've had enough of these supply shocks. It's spread out over time. We need to be raising rates to rein this in, even if it goes against, the textbook response to one supply shock individually. That is a big shift in monetary policy, and it was a very divided committee. You had the other half not going down that route. So there's a lot going on in the committee in these debates, and, it would be nice to understand a little bit more about what the exact debates are. The dots are hard to read from the outside.
Speaking of the SEP, though, and I know you think it was a mistake for Warsh not to participate, do you think it's a signal that potentially the dot plot could go away one day?
Oh, it could, but I think the tool, the communication is important. There may be a better way to do it. I think it's very helpful to get a sense of, how committee members react to data, how they think about weighing inflation or unemployment. Maybe the dot plot is not the best way to do this. I think the committee in their framework review were clear. There are some flaws with it, but nobody had a better idea. I think that's the thing is that, you just deleting information, deleting tools is not going to be very satisfying. Improving them is going to be awesome. So if Kevin Warsh can lead to real improvements, I think that'd be something to be excited about. But that's going to take time. And this committee has really thought hard about the issue. It's not simple to answer these questions, but we'll see where the task force and then the committee, how they weigh the ideas that the task force come up with.
Claudia, do you think that Jerome Powell will stay on for longer due to some of the scope of changes that are currently underway?
So I take Jerome Powell at his word that he is, his decision to stay on is very much tied with these concerns about independence, concerns about the building, the review of the building renovation. And so when he feels like, those issues have been resolved to his satisfaction, then I would expect him to go. I didn't see anything this is like a protest vote of Kevin Warsh. I mean, it sounded like everyone on the committee is really trying to set the new chair up for success.
Claudia Sahm of New Century Advisors, thank you so much, as always, for being with us and breaking it down. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Isabel Lee. Isabel.
Hi, Lisa. Recapping the data we just got, jobless claims coming in at 226,000 last week, down from the prior number, but slightly above estimates of 225,000. Continuing claims rising from the previous week, coming in above estimates at the 1.81 million. And a private credit fund managed by Oaktree telling shareholders that the redemption requests dropped by nearly half in the second quarter, falling within the 5% limit, allowing the fund to fully satisfy demand. Oaktree is the first major firm to stem a growing exodus from the $1.8 trillion industry. And traders betting on a Fed rate hike as soon as next month after Fed Chair Kevin Warsh's first meeting. President Trump reacting to the news.
It's all right. Whatever.
And it looks like they might even raise them later this year if Trump's there. Do you have any comments?
It could happen. I mean, it's hard to believe. It just keeps a country down, so it's so unusual. But we have a very good guy over there now, so I'm guided by what he wants.
Warsh saying the central bank won't tolerate high inflation. That's your Bloomberg Brief. Lisa?
Thank you so much, and thank you for this morning, Isabel. Up next, Jessica Noviskis of Marquette Associates on the downside risks to the equity rally, and Bonnie Quinn with your morning movers. SpaceX shares extending declines following its first negative trading session. Still, however, up about 40% since the IPO. From New York City, this is Bloomberg Surveillance. Good morning.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
The thing that really surprised me is how hawkish that Warsh came across. If the Fed were in a position where they had to raise rates, it'd be a quarter, 50 basis points. The bond market might actually rally on that.
That was Ed Yardeni of Yardeni Research, and guess what? That's exactly what you're seeing this morning, at least at the long end of the yield curve. You can see enthusiasm in equity markets as oil prices fall, an agreement reached between the U.S. and Iran, even if it's only for 60 days. You can see that really giving a lift to the Russell 2000 futures up 1.25%, and the NASDAQ up 1.6%. In the bond space, that yield curve flattening, really engaging, and you can see two-year yields, at least before we got the jobless claims, inflecting upward, now down along with the rest of the curve, but 7 basis point decline at the 30-year end, 3.86%. And take a look at that 2s10s curve. You can see it at the narrowest level going back to March of 2025 as people expect near-term hawkishness to lead to stability in the long end of rates. That is what a lot of people are banking on going forward. Less than an hour from the cash open, here are your morning movers with Bonnie Quinn. Bonnie.
Lisa, we're going to start with an upgrade from Barclays for, we're actually going to start with SpaceX. So SpaceX, we're keeping an eye on this. Obviously, we lost ground yesterday, down 5%. That really just gave back what we had taken the previous day, which was an up 5% day. Obviously, we're still at 185.69. We're a good 40% or so above the IPO price, but we'll be watching the volatility of the trade today. Yesterday, at one point, we were down as much as 7% and up as much as 4%. All right, let's move to elsewhere in the technology sector. So you have now the semiconductors and specifically the memory chip makers higher today. Marvell Technologies, the most profitable among them at the moment. This is because Tim Cook gave the Wall Street Journal an interview in which he said that he was going to raise prices. Finally, Apple products are going to be higher because it's just unsustainable to raise memory, to continue to pay the prices that memory chip makers are asking. And finally, consumers are going to pass it on. Now, that's good for margins for memory chip makers. And then finally, here is the upgrade. Enphase Energy up almost 6%. Barclays upgrading, but it's come on the back of a few upgrades this week. And that's because Enphase is also moving into the AI space. It's not doing so well in the residential sector anymore. China has eaten our lunch when it comes to energy technology residentially. So now it is moving into the data center and it has started shipping products already. Lisa.
Thank you so much, Bonnie. And have a wonderful weekend. Counting down to the opening bell. Here's a trading diary for the week ahead. 11 a.m., Vice President J.D. Vance speaking from the White House. I want to get to that in just a second. Friday, U.S. markets closed for the Juneteenth holiday, which is why today feels like a Friday, at least here in the United States. Tuesday, we get PMI data. Really interesting to see that kind of momentum in the economy. And Thursday, PCE data. How much does that have an added push given the focus on inflation at the Federal Reserve? 11 a.m. What's going to be that? What's that going to be about?
So this was just added to the White House briefing schedule. You know, he's set to go to Switzerland with the Iranian counterparts. Obviously, the president signed the MOU yesterday, but I imagine he's going to walk through with the press exactly what's in this MOU. Given the fact that the Iranians have already released it, maybe we'll get an update on those sanction waivers we're supposed to get of this administration according to the MOU and how many vessels they see or what is going to be the procedure. Remember the Chevron CEO saying you really have to map out who gets to go first and how this all is going to operate to give confidence to these ship vessels and ship owners and the insurance companies to allow those ships to traverse the Strait of Hormuz.
Yeah, the details matter. And ultimately, we might get some details at 11 a.m. this morning. Counting down to the market open, stocks rebounding. Jessica Noviskis of Marquette Associates writing, earnings strength is clearly part of what's driving markets. The market assumes the strength continues unabated. That sets a really high bar and creates more risk to the downside. Jessica joins us now for more. Jessica, thank you for being with us. Are you bearish? Because we haven't met a bear in a long time. I just want to get flesh that out from the top.
I would not consider myself a bear, but I will say when no one else is concerned about the risks, that makes me feel a little bit more concerned about the risks. I think one of the things that's really telling, so we obviously had a good earnings season, earnings strength is obvious, but the 2027 estimates have increased more than the 2026 estimates year to date. So this was not, right, one quarter, a couple quarters of strength. The market really is assuming that this continues for at least the next 2 years, maybe perpetually with the AI secular themes. And that, right, that doesn't leave a lot of room for hiccups or stocks getting over their skis. And it's that sort of thing that can maybe lead to that market crack. And then who knows what happens in a world where leverage and options are more prevalent than they've ever been.
We were talking to George Concalves yesterday, and he was talking about the year of the bond market or the summer of the bond market and how he thinks actually this is a good time to start going into duration. Would you agree with that? This was even before the Fed meeting. Would you agree with that as an alternative in the case that earnings don't keep up?
I think that can be part of the strategy, and especially what the Fed outlined yesterday. I think we could certainly see more volatility in shorter end rates and less volatility in longer end rates. So I think that's probably a good strategy, though I'm an equity girl, and I think equity earnings will always drive the market. It doesn't mean that, you know, there won't be risks or hiccups or volatility, but I think the earnings trends are real. I just worry that we're not leaving any room for any mistakes.
When it comes to the rotation trade, I guess what's going to help it is the fact that we do have this 60-day extension of a ceasefire. Hopefully vessels will be moving to the Strait of Hormuz, but then at the same time, the Federal Reserve is talking about or leaning towards, at least at the moment, a hike. So how do you deal with the two?
Yes, and I know a lot of folks have talked about the war is essentially over, at least the market's looking past it. So let's go back to the playbook that was working at the beginning of the year. But I think this situation is very, very different from that at the beginning of the year. It was very strong expectations for cyclical strength that included rate cuts, that included tax refunds, which now have been eaten up by higher gasoline prices. That included, I think, an expectation of fiscal stimulus going into the midterms. The focus, we had a lot of headlines coming out that were very focused on affordability and the consumer experience, which is sort of the playbook going into a midterm election. And now time has sort of run out of that. The months that have been consumed by the war have left little time for new stimulus measures. Now we could still see headlines, but in terms of real impact, real things that could help the consumer from here, I'm more skeptical there.
Are you expecting those things to happen before the midterm election that could be potentially a stimulant, not just to the consumer, but to the market?
I think the Republicans are incentivized to try, We know the war has been pretty unfavorable with folks. We don't like higher gasoline prices. They're coming down now. But the 60 days and the straight partially opening isn't really enough to solve this whole problem. So I think it depends on how the next few months play out. But there's strong historical precedent for the president's party to lose seats in the midterms, and they don't have a lot of cushion for that. So I would expect them to do everything they can.
Jessica Noviskis of Marquette Associates, thank you so much for being with us. Have a wonderful weekend. And right now, ahead of the open, we are looking at a bullish sentiment, really helped by Intel shares. I mean, it's important to note, this is a market of stocks, not just a stock market. And some of these stocks have been outperforming in different pockets, driving the tech trade. Intel shares up 8.4%. As Trump gets involved, and there is a deal right now with Apple, again, emphasizing this focus on domestic resilience.
Trump gets involved again in Intel. And in this latest post, he's talking about this work that Apple and Intel can do together when it comes to chips. It also comes at a time when the Wall Street Journal has this report of an interview with Apple, and they're talking about how they're going to have to raise prices because of just the extraordinary, insatiable demand we are seeing when it comes to semiconductors.
The inflation from the AI trade making its way into the other story of the moment, which is the economy and inflation. How much can those two come together? We are seeing the beginnings of that in some of these share prices to watch. Heading into the open, we are seeing that resilience in equity markets continue. It is led not only by Intel, but in general by chip sector stocks, as well as what we see in the memory sector space. This really has been the one high beta trade, although this time coming along with the Russell 2000, given the fact that oil prices really, once again, setting the tone.
They're off to the races lower. This is great news for the White House and the consumer. Devil, though, in the details. A lot of vessels are trapped. Do the insurance company, do the ship owners, do they have the confidence now to go through the Strait of Hormuz? The next 60 days is going to be critical.
Well, the next 3 hours are also going to be critical for all you Knicks fans out there. Enjoy the parade. Have a great time. It has been quite the crowd gathering. Coming up next Monday, Lori Calvasina of RBC, Nouriel Rubini of Hudson Bay Capital, Seema Shah of Principal Asset Management, and Amy Gower of Morgan Stanley. Yes, we can get that mug in the shot.
It's iconic. It's an iconic day for New York.
Oof, oof. Have a great weekend. Take care.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Return of the rally, 30 minutes until the start of the cash trade. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, President Trump signs an Iran deal that reopens the Strait of Hormuz, brushing aside pretty much all of his previous red lines.
New Fed Chair Kevin Warsh stuns markets, makes it clear the central bank won't tolerate high inflation.
Plus, President Trump's Made in America chip push puts Intel back at the center of the AI race.
Intel, part of the reason why we're rebounding today. A really good day for chip makers. Let me show you what it's doing pre-market. It's up 8.7%. As you mentioned, Matt, President Trump said that Intel has signed a deal with Apple to design and develop chips in the U.S., going on to say, we're going to help Intel out.
So, I mean, they're getting ever closer to a $1 trillion company now. They must be about $700 billion.
A lot of those these days.
In market cap. Take a look at the broader AI trade here as most stocks rise on the U.S.-Iran deal. SpaceX, you say, isn't that a rocket launch stock? No, I think we've pretty much determined it's AI. Right now, it's down after closing down yesterday for the first time since it started trading on Friday. NVIDIA, though, up 1.5%, and Micron gaining more than 5%. Danny, that's your chip stock mover here.
Yeah, again, the chip stocks also saving the equity index from being much worse yesterday after it rebounds. Let's discuss all these with Bloomberg Tech host Ed Ludlow in San Francisco. Ed, let's start with Intel. What are its plans with Apple?
Yeah, I mean, all we have to go on is verbatim what the president said, which is Apple has agreed to work with Intel to design and build its chips in America. What the word agreed means in practice, we don't know. The market is clearly interpreting it as a win for Intel's foundry business, the business of being a contract manufacturer of chips for third parties. The idea isn't new. In May, Bloomberg reported that Apple basically was worried about its ability to manufacture semiconductors without relying solely on TSMC, and that they had held preliminary talks, not just with Intel, but with Samsung as well. But at that stage, the key point of the story was that no orders had been placed. And that's been the story for Intel, right? There's been a lot of hope under multiple CEOs, foundry business, the idea of customers, but no deals ever signed. So, whether this moves forward, it remains unclear, but that is the bigger picture. Intel's foundry business needs a win. The president framed this in the context of American chip manufacturing coming back, and Apple has already been looking at this. It's just nothing concrete.
Ed, I'm a Claude user. Actually, I'm platform agnostic. I also subscribe to OpenAI as well as Gemini, but I'm waiting for my Fable 5 to come back. When am I going to be able to use this again?
Yeah, just like zero progress, really. While the president and all of the AI CEOs were in Evian, including Dario Amodei, what Anthropic's technical staff, these are software engineers and computer scientists, have been trying to explain to administration officials, Commerce Department officials, is like, you have a concern. This is how we are explaining that concern to you, whether it's a material risk or not. And what we've discussed on this program this week, right, the idea of a jailbreak. Each model has guardrails, a set of rules that prevent that model from doing something it's not intended to. But there's a workaround to that, which in the hands of a malicious actor would mean that they could get the model to do things that it is literally coded against. And they just haven't made any progress on that so far, is my understanding.
All right, Ed Ludlow, really appreciate you joining us this morning. Of course, you'll be able to catch more of Ed at 11 a.m. when he hosts Bloomberg Tech. Let's get to oil, though. Brent trading well below $78 a barrel after President Trump signed an interim deal ending the war with Iran. The memorandum is now in effect, with Iran arranging passage for commercial ships through the Strait of Hormuz at no charge for the next 60 days. Before signing the deal, the president spoke at the G7 summit.
If they don't honor the agreement, or some things aren't even mentioned in the agreement, it's a memorandum of understanding, but we have an understanding of certain things without writing it. And if they don't honor that, we'll probably go back to bombing them until they honor it. It's amazing what bombs can do.
Christina Ruffini, co-host of Bloomberg This Weekend, joins us now, who has an extensive history of covering geopolitics. Christina, so where does this all leave us?
It's a good question. I think we're waiting to find that out. The main thing that I think is relevant to a lot of our audiences is what Matt was just talking about. So there's this 60-day agreement that anybody can go through the strait free of charge. It's open for business. But that's very specific, because what happens on the back end of that is the big question, because the key point is it's allowing the safe passage of commercial vehicles no charge for 60 days. They don't put things in diplomatic language by accident, which implies that there will be some sort of fee or Hormuz easy pass system or tolling happening between Oman and Iran. Have already talked about possibly wanting to be the arbiters of that strait. And look, that's something that they did not have control over before this conflict. So no matter what, as you go through, and our colleagues at BN have put together this really interesting chart of who wins and who loses based on the different points in the MOU, it's almost all Iran, and that's because they have come out pretty much where we were, except they've gotten a few other things. The other thing that really stands out is they did not address Iran's proxies, and they did not address their ballistic missile program. And when you look about the damage that was done to Gulf allies during this conflict, those were rockets, those were ballistic missiles, and that's not in this. And the president was asked about this at this press conference and gave this really remarkable answer where he said, well, other people in the region have them. It's not fair that they wouldn't have some. The Saudis have some. So, I'm not really worried about it. Gulf and regional allies are very worried about it.
It was a red line at some point, wasn't it?
Well, yes. I mean, he said it's amazing what bombs can do. And to me, what's amazing is what bombs can't do. They can't change the regime, which hasn't been accomplished. They can't stop Iran from producing and using ballistic missiles. They can't stop Iran from enriching uranium. The president also said that they probably should be able to use highly enriched uranium for electricity purposes, since all the neighbors can. Maybe not highly enriched, but...
Well, and they do have this nuclear reactor that Russia kind of provides some fuel for and has been monitored in the past, but that's on the table as well, yeah.
I thought it was really interesting that somebody reproduced the president had written in response to Obama's deal in 2013, saying, hey, this is horrible. Iran gets nothing, or everything, and we get nothing. Plus they get like boatloads of cash, and now we're allowing them to have twice as much cash as they had back then. It just looks like the economy, essentially, the global economy, forced him into capitulation.
There was an interesting argument at the start of this conflict that Iran might have been more willing to give up their nuclear weapon because they have discovered their better leverage is the strait. Now, at this point, it looks like Iran is doing neither and or both, but that to me is really what Iranian leadership learned during this. The president was asked about regime change as well, and he said, we've got a new group of guys. I think they're better. They're easy to deal with. It's not a new group of guys. It's the guys that are left from the same group of guys that were there originally, and now they have learned that when it comes to brinksmanship on the international international stage, this is the better card because this impacts people's constituents. Look, all politics are local. That even comes to geopolitical issues. And when people back home in Asia, in Europe, in the US start clamoring at their leadership to do something about these prices, that puts more pressure on these regimes to come to a deal, even more so than kind of this esoteric, terrifying nuclear argument that you don't really feel. You do feel the price at the pump.
Well, we are hearing from the Kuwait Petroleum CEO speaking in an interview saying that they see faster oil output boosts than previously thought, that they're going to start ramping up oil output. We also had Goldman Sachs commentary that oil would be at about 70%, would only get to 70% of output after the war finishes. Christina, thank you very much for joining us. Christina Ruffini, and of course, catch Bloomberg this weekend live at 7 a.m. Eastern every Saturday and Sunday on Bloomberg, even after a holiday Friday. You're still up and at 'em on a Saturday?
It'll be lonely, but we are here for you and all of you so you guys can take a nice weekend off.
Well, we are looking forward to watching.
Thanks. Thanks for having me, guys.
Elsewhere in markets, traders are betting on interest rate hikes as soon as next month, as after Kevin Warsh's first meeting as Fed chair. Two-year yields jumped yesterday, the most in 15 months, following Warsh's comments that the central bank will tame any inflation.
We have the capability and commitment to deliver on our price stability objective of 2%. That's exactly what we're going to do. In the Fed's review of its strategy over the last any number of years, in January, the Fed, including the strategy that we're still bound by, the Fed statement says that inflation is primarily determined by monetary policy. You bet it is.
Joining us now is Bloomberg International Economics and Policy correspondent Michael McKee. Mike, for any market participant that thought Warsh was a reason to see yields lower has been sorely mistaken, especially on the front end. Claudia Salm was on earlier, and I was reading some of her posts basically saying you deliver on price stability without explaining how you might do it is empty words. Is that ultimately what we got from Chair Warsh, saying, I'm going to do this, but not explaining how he will do it?
Well, I don't think it was empty words. I think that this represents a new focus, a refocus by the Fed onto inflation. There has been a growing chorus of Fed officials since maybe around the turn of the year that, hey, we have not hit our inflation target in 5 years, so we should do something about this, but it's not clear what we can do. And that becomes the question. Because of the war, a supply shock, raising interest rates doesn't create more oil. So can they come up with something to do? That may be part of the problem, part of the reason that they didn't do anything yesterday, even though half of them wanted to raise rates. But I think you'll see this focus on the inflation side of the mandate. We got jobless claims today. They were barely moved. They went down just a little bit, 229,000. So Warsh's idea that the labor market is kind of out of the equation for right now gets some support from the data, and they can focus on inflation. We'll have to see how fast prices come down, how fast inventories go up, as you were saying with Christina.
I mean, you could see Warsh as kind of Max Hawkish after yesterday's press conference, because all he talked about was inflation. I mean, he barely mentioned labor at all. On the other hand, Kevin Muir from the Macro Tourist said that one equity sales trader said, Warsh is going to delay any action with all of these committees so he can come up with a way to manipulate inflation readings lower. It's a great conspiracy theory.
Well, Wall Street wouldn't be Wall Street.
There were a lot of committees. It's like a task force for everything. Like, we're punting everything until the end of the year.
That's become a great meme. You know, there's a task force for that. But Wall Street is also the place where you go if you want to buy a tinfoil hat. So that's kind of thing. It was a hawkish surprise, definitely, because Warsh sold himself to Trump on the idea that I can cut rates. But Kevin Warsh has always been a hawk. I was not surprised.
As far as we know, right? We don't really know what his conversations with President Trump were private.
I've also heard this argument, too, that basically the press conference and the statement were distractions, and that Kevin Warsh doesn't even matter anymore because he's not giving us our opinion. So the only thing that matter is the projections. And the dots were hawkish.
Well, that was the question I asked him, was if you're not doing forward guidance, then why is the market taking the dot plot as forward guidance? I suspect the dot plot will go away, but the biggest takeaway might be that he is going to try to flip the narrative. Under Alan Greenspan and his predecessors, the markets made decisions about what they thought interest rates should be based on the data that were coming in. Then Ben Bernanke changed that to let's give people some guidance so that they can incorporate that into their interest rate moves, and maybe that makes policy act a little more smoothly. And now they want the markets to lead the way again. Will the markets do? Nobody from the Greenspan years is still on a trading desk. So will the markets do that, or have all the new dogs gotten too old to learn new tricks?
Michael McKee, really fascinating. I think probably the most fascinating story Danny and I heard.
And great questions yesterday.
Great questions.
Really good
Great to see you there. And really a new era that we'll be following along for you obsessively. Let's check the equity markets, though, right now. You can see that we're looking at futures rising right now. S&P futures, after a big drop in the cash trade yesterday, NASDAQ futures are up 1.7%, so massive gain there. I have the 10-year yield, but I'm going to say
it should be 2-year.
We should be looking at the 2-year yield, if not the 30. And it's amazing because we saw that delta come down, that spread compress so much. Oil as well continues to hold well below.
I think the 2-year yield, like the cleanest read on the day, like the cleanest verdict of what markets thought about.
And because the 2-year yield rose at the fastest pace in what?
15 months.
15 months.
But for a Fed decision, it was more extreme.
On a Fed decision day, we haven't seen that kind of move since 2008.
Yeah.
You know, which was like a great financial crisis. So really interesting to watch. Let's get a look at some of the individual stock stories that we're following for you. Kroger, sales exceeded expectations as price cuts lure more shoppers, but shares fall on disappointing guidance.
Accenture is falling. Its revenue missed estimates, and it cut its outlook, falling 16.7%.
And Take-Two shares just now surging after Rockstar Games said Grand Theft Auto 6 pre-orders will begin June 25th.
But that doesn't mean it's coming out yet, right? It's just they get
the pre-orders. I can't believe we still haven't gotten 6. I feel like
we've had so many wars, and yet we haven't had a Grand Theft Auto 6. That's wild. Coming up, governments are policing AI models over national security concerns. That creates a whole new risk factor for investors. We're going to discuss that next. This is Bloomberg Open Interest.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Let's get now to high interest. Look what's making headlines around the world. Private equity billionaire Orlando Bravo is defending Thoma Bravo's software-heavy strategy after a $5 billion plus loss on Medallia. As AI reshapes the software industry, the firm is betting billions on AI tools, partnering with Google and telling investors the Medallia wipeout was a one-off and not a sign of broader trouble. Nick's fever has taken over New York, and it persists today as millions of people pack Broadway for the team's first ever championship parade. The celebration runs from the Bowling Green to City Hall, where the team will receive the keys to the city from Alicia Keys. Fans are so desperate for a prime view, some are paying professional line sitters as much as $950 to hold front row spots. And if you're just heading out now, you're too late. The NYPD says viewing areas along the route have already reached capacity and are closed. And if you leave those pens, you won't be able to get back in later. The AI boom is getting a jolt from Washington. The U.S. move to restrict access to Anthropic's most powerful models is raising a new concern, though, for investors. It's not just whether AI companies can grow fast enough, but whether governments will decide who gets to use their best technology. That could turn political risk into a major new factor for AI valuations. Danny?
And let's discuss all that with Bloomberg Intelligence head of global tech coverage, Mandeep Singh. Mandeep, it's a new thing to consider, but granted, everything about the AI revolution we're experiencing is new. What's your understanding in where talks are with these frontier models and the White House, and what it means for these companies as they look to go public?
I mean, given Anthropic has been the only one caught in the crosshairs among the frontier labs, we don't hear about OpenAI's models being blocked or Google's models being prevented from, access to foreign citizens. So from that perspective, Anthropic being on the frontier and, the fact that they have talked about how they can uncover cybersecurity vulnerabilities more than anyone else, probably they kind of landed themselves in this situation. And yes, they were also labeled a supply chain risk by the U.S. government. So I would say the messaging hasn't been great from the company on a lot of fronts, not just this one. And that's probably the reason why we are talking about it. In addition to the fact that there's always a distillation risk with these models. And we saw that with DeepSeek, and if it's a really powerful model, then distillation is a real concern for Anthropic's models.
Mandeep, I want to ask about, well, first of all, the Apple deal with Intel. Are they going to be ordering $1 billion of chips a year from Intel? I mean, how big is this? How important is it to the company that still loses, many billions of dollars every year?
I mean, there's no doubt that right now we are capacity constrained on the fab side, and TSMC probably hasn't done a great job of, comforting their customers that they will be expanding capacity. And so now everyone, who is a TSMC customer is looking for that diversification on the fab manufacturing side. And what are the options there? I would say that's part of the reason why, SpaceX is considering Intel for their terafabs, and now Apple is considering Intel. So the fab side of the Intel will definitely get a boost because of, the geopolitical concerns and the need to diversify your supply chain, for a company like Apple.
Is this order or potential order Tim Cook throwing Intel and via Intel President Trump a bone in order to get memory restrictions lifted so that he can get cheaper components and doesn't have to raise prices the way he has told the Wall Street Journal he's going to?
I mean, there could be a little bit of that, and there's no doubt that, the U.S. administration wants companies to use more local manufacturing. So in that regard, clearly, all these companies have to do something about it, especially the ones that are heavy TSMC users. But from the perspective of memory pricing, I don't think there is a lot, in terms of the immediate impact. These are more longer-term plans in terms of when they will start using the Intel fabs, and it'll be a few months or maybe a year before we'll start seeing any chips that actually show up in Apple's phones that are made here.
Mandeep, thank you very much for that. That's Bloomberg Intelligence Head of Global Tech Coverage, Mandeep Singh. Coming up, Ann Maletti talked about potential interest rate hikes as stocks near all-time highs. A rebound on our hands this morning. This is Bloomberg Open Interest.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Check on markets ahead of the opening bell. You can see that we are back to big rallies after falling more than 1% yesterday. Futures are up more than 1% this morning, and NASDAQ futures double the gain of S&P futures. We are back with the opening bell in just 2 minutes' time. This is Bloomberg.
with being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise Ahead or Gattaca?
Maybe somewhere in the middle.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Moments away from the start of our return to rally mode after a drop of more than 1% on the cash trade yesterday. You can see that we're up on S&P futures 1.1%, NASDAQ futures up 2%, with chip stocks powering our climb higher. Down at the New York Stock Exchange, you've got GHM ringing the opening bell. I didn't really even bother to check what it is because I was so focused on this. I personally would never ever dream of going to something like this because I'm too old and I don't want to be in a crowd in the heat and penned in.
I was actually thinking about this. I was like, okay, so this starts at 10. Oh, look, it's the trophy, right? Or is that a fake one? That's got to be a fake one.
I imagine that's a fake
one. Yeah, okay.
one.
Yeah, not some random guy. Anyway, I was like, our show ends at 11. I'll go straight down there. Surely it's still going on. But then the NYPD put out a tweet at basically 7 a.m. saying, if you're not here already, don't come, the pens are full.
Yeah, and also they said, if you're in the pen, you can't leave.
Right, what happens if you have to go to the bathroom?
Exactly. I guess just pee your pants.
Or like a Times Square diaper situation?
In any case, it's pretty cool that we get a ticker tape parade. There's no more ticker tape.
I hope they still have confetti or something.
Yeah, they just make confetti and throw it out. They just shred documents.
Shout out to the New York street cleaners. What like an absolute mess they've had to deal with over the past week.
Shout out to Intel.
Yeah.
Driving the rally higher today.
Yeah, we're up 8.6% here at the open with Intel. It's at a record now, a record high. President Trump saying that it has signed a deal with Apple to design and to develop chips in the U.S. That's basically all we know about this story at the moment. Enough, though, to keep that rally going with Intel, which already has that stake from the government, Matt.
Yeah, absolutely driving futures higher and now the cash trade as well. Let's take a look at the broader AI trade as we see these stocks rising. Not helping SpaceX, although still 185 puts them at $2 trillion plus valuation. NVIDIA up more than 1% right now. Micron up 6%. So it's really the chip stocks that are leading us higher as the AI trade brings us back to rally mode. 2-year yields yesterday jumped on Kevin Warsh's message that the Fed won't tolerate high inflation, even as the Fed forecasts high inflation for the next couple of years. Goldman Sachs' Rob Kaplan warned officials may need to raise rates, though, as soon as September.
If the inflation prints over the summer don't cool a little bit, they can maybe wait a little bit. They can maybe wait.
Yesterday until powerfully against inflation until he started getting questions about how he would beat inflation. And his answer was task force, task force, task force, task force, kicking the can down the road. And we still forecast more than 3% this year and not getting to 2% until 2028.
Yeah, look, I think he wanted to be taken seriously. I do think he believes inflation is an important thing for them to watch, probably the most important thing right now. But it's clear there's a lot of change happening in the midst, right? Look at where oil prices are today, where they were yesterday when they held the press conference. What did he say? They penciled in with pencil, even the dot plot. So there's a lot of...
He made some good points,
yes.
but I mean, it still feels like kicking the can. The Fed has not hit inflation target for years, and they forecast not hitting their inflation target for years.
Yes, they have. And I think there's this balance, and I do think when you listen to Warsh, even before yesterday's press conference, he believes that things are changing dramatically with the economy and that you have to assess things on a different level maybe. And I think that's where the task force came in, or the forces came in. I do think it's pretty interesting to have somebody say, we may have to look at all the data sources we use. Are we basically future-proofed for what we need to do given all the changes in the economy? So I'm kind of okay with it right now. I think the market will help us determine the direction, though.
Well, one thing, though, that forward guidance is really good at is calming markets, is making sure that they're not too volatile. Does that mean that this is an era, and essentially what we're hearing from Kevin Warsh is the Fed put is gone, if he's not going to hold the market's hand through every decision?
I think that is changing. It's hard to know if it's completely gone, but I do think it's going to be minimized compared to what we've seen more recently.
So just more volatility then?
More volatility for sure.
I mean, it seems like he's willing to trade that volatility or lack thereof for a stronger effect when they actually do something. When do you think they're going to actually do something? When are they going to raise rates to bring inflation down?
My best guess is they sit on their hands the rest of this year unless something dramatic happens. And we all know the geopolitical risks continue to be uncertain and high. So if nothing changes from where we are today from a geopolitical standpoint, I would say they'll sit on their hands the rest of the year and kind of,
wait for inflation to come down naturally, try and find some measure that says inflation has come down.
That's right.
Yeah.
Yep.
So with all of this, where does it leave how you see how you see risk markets from here? Because we did have a sell-off yesterday, and we rebound easily today.
Yeah, we did. Look, these markets are hard to stop. There seems to be reason for the market to want to climb every day, and I think that kind of boils down to the underlying fundamentals. And what we're really seeing is strong earnings growth. It's been, we used to say don't fight the Fed. Now it's like don't fight earnings, because earnings are what's really driving it up. And from a fundamental investor myself, it's really nice to see that fundamentals are driving. Now, have we gotten a little frothy? Maybe, but the multiple, again, because the overall multiple of the market has shrunk a little bit because earnings continue to be strong. So I think the key focus is what are earnings going to do for the rest of the year, and are the projections correct?
Yeah, I mean, we've been looking, Jay Hatfield brought in the EEO screen, which is the consensus overview of earnings. And I just keep looking at how strong earnings are going out, and the estimates continue the revisions keep rising to the upside. At some point, that's going to fall away, right? Jim Chanos was talking about the dot-com bubble and said back then they had 30% earnings growth too, until they didn't. And then it was a 40% drop. Do you need to get out before that happens? What signs do you look for?
Yeah, I think, look, we have to look for underlying earnings, and it's not just what's going on with, the Mag 7 or the strongest 10. You got to look under the surface and see what's happening across the broader economy. And again, what we're seeing is margins are improving, earnings growth is improving, that's good, but we'll look for cracks when that happens. And I don't disagree with Chanos. The only thing I would say is, I covered media and entertainment back then and technology. It was not all built on earnings. Again, it was very specific areas of the market that were growing quickly. It wasn't broad, and that bubble did get created, and it burst. I do think there's a chance that there's a lot of spending going on today that won't result in real returns, but it's hard to fight that this innovation cycle is very, very real. So I think we're on solid foundation. The question is there sand kind of underneath that foundation?
It's a perfect metaphor for the moment we're in. Anne, thank you so much for joining. Always a pleasure to see you when you're in town. Allspring Head of Equity Investments, Anne Maletti. Let's get a check on your equity market now, just over 8 minutes into your trading day. And we put in some gains after yesterday's fall that was led by a 2-year, which saw its biggest gain in about 15 months. The net change for this equity market at the moment is about 57 points. We're up 0.8%. A lot of that is thanks to just like an AI chip kind of led stock rally. So Broadcom adding the most points, it adds 8 points. That's followed by NVIDIA, Micron, Intel having a good day after the president said that it would be working with Apple to develop more chips. Intel goes up 10 1/3%. But again, all these names here, it's all the chip makers: Applied, Lam, Western Digital. I was looking at it, and the Philadelphia Semiconductor Index is now just 0.1% away from its all-time high after just 6 days ago being down 12% from its all-time high. So we've climbed back a lot, but Microsoft, Alphabet, Tesla, the Mag 7 still having a not-so-good day. Maybe we're going to be moving on from the Mag 7 as this market force very shortly. When it comes to the sectors, again, I mentioned the semis doing really well, which is why Infotech is one of the top ones alongside industrials. That's up 1.6%. And the price of oil continuing to fall. Kuwait saying that they would be able to get barrels of oil back on the market quicker than they had anticipated. So we saw oil took a leg down, energy falling 2% in today's market, Matt.
Yeah, I'm looking at the SOX index. That's the Philadelphia Semiconductor Index. It's doubled year to date, and the annual equivalent gain, so if this were to continue for a year, 347% to the upside. So massive, massive gains. Coming up, Bain Capital's Chris Gordon weighs in on how private equity executives are dealing with the current logjam in the industry. This is Bloomberg Open Interest.
We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions: software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Fifteen minutes past your equity market open. Let's hear from the sell side and get you your top calls this morning. First up, Citi upgrades Albemarle, saying that higher lithium prices over the next 3 months could lift the company as battery storage demand improves. Not helping shares this morning, though. Next up, Barclays, they upgrade Enphase, saying its push into transformers gives it a real shot at breaking into the fast-growing data center market. Shares only up 1%. Finally, UBS, they downgrade Jefferies, saying the stock already reflects most of the good news, and a major Japanese bank appears to be wrapping up its share purchases. Those shares little changed at 0.5%. Let's now turn to private equity, and senior executives say that the industry must compromise on price to shift assets built up in the boom era of 2021. Some buyout houses could disappear altogether. I spoke with Chris Gordon, co-head of global private equity at Bain Cap, about the logjam in the industry.
This environment is a great reminder that private equity was never meant to be a passive business. It is a very active business. And we had such a time of economic tailwind from, call it, post-GFC up through 21, early 22, that this more passive model almost unintentionally emerged that was pay really high prices for good assets, let them grow, and sell them for more than you bought them for. And look, that's great when it works, but that only works in an environment with a lot of tailwinds. The environment we're sitting in right now has all kinds of complexity, and it's a great reminder that you really do have to very actively add value, create outcomes, be proactive, drive transactions, and that model can still be effective. But it's different than the way a lot of private equity was working for a long time.
Does that mean that just some funds aren't equipped to adjust, that they were successful because they could live in this passive world, and now that the world has become active, it's hard to get back on track?
Yeah, look, there's been a whole range of strategies out there, and it's hard to use a cookie cutter definition to define them, but for sure, the buy high, sell higher, I buy great assets, I just pay whatever I need to pay for them model. And a lot of that model accrued to software assets in many cases, not because it was specifically designed for software, but those were good assets that were growing and were trading at very high multiples, and so it was very applicable to that segment of the market. I think that business model has been challenged.
What does your software exposure look like, and what have you been doing with some of those companies?
Tech has been an important part of our business for a long time. I would say in that late teens, early 20s period, we really struggled with the valuations that were being paid for lots of different types of tech assets. We worked hard to try to find the ones where paying high prices was going to feel appropriate and justified. But that, to us, that was a smaller subset of the market. So it's been about 20–25% of our activity, and it's performed well. But it has been different than the industry, where it was closer to half the industry activity for a couple of years there.
And another sector that Bain really excels at, and you yourself have an expertise in, is healthcare. And I was really shocked. I was looking at a report that global healthcare PE activity was an all-time high in 2025. Some of that might be because there were some big, large deals out there, like Hologic, for example. How do you see 2026 shaping up? Because it does feel a bit more quiet for healthcare private equity at this moment.
Yeah, I think one of the reasons healthcare has been a great space for private equity in general, and certainly for our model, is it is a really complicated sector. So it lends itself to that kind of agile, hands-on, activity-oriented governance and the ability to really drive inflections in complicated spaces. But that's evolved a lot over the 30 years that I've been in the business. In the early days, it was a lot of healthcare services and the developing models there. A lot of that activity has really shifted to, I would say, really two big pillars of our focus. One is biopharma, where I think we're still in the early innings of an incredibly interesting innovation wave. And the other is healthcare tech, where the healthcare world for a long, long time was well behind many other industries in tech investment, but that's been changing rapidly. And the applicability of tech tools to the complexity of the data and the ability to really change patient outcomes in healthcare is incredible. So I think we've got a long way to run with that as well.
I hear that too, and I just think, isn't that also being disrupted by AI? How big of a force has artificial intelligence been for healthcare IT?
Look, it's still very early, but I'm incredibly bullish on the opportunity for AI to be a terrific tool for, healthcare providers, but more importantly for patients and the outcomes they can get. I think one of the questions that we're all grappling with as we think about how much can AI disrupt any given sector is, what is the right to exist for any business? And it does have some proprietary position in the market that lets it at least have the right to go try to be an AI winner versus a business model that's going to be disrupted by AI. I mean, nobody has any guarantees, but when you think about the proprietary private nature of healthcare data, if you have access to that data and then can layer AI tools on top of that to drive better efficiency, better health outcomes, that puts you in a really interesting place to go try to win. You still have to do the work to do it, though.
Right, so it's one of these moats that everyone is searching for, a holy grail of that. Elsewhere in the world of AI, Bain has been one of the founding partners for this Open AI Deploy Co. This partnership you did alongside some of your peers. I know it's still very early days. It's only been a month, but have you gotten your hands on their FDEs, their forward deployment engineers yet? Are they starting to look around some of your portcos? What's sort of the latest on that?
Yeah, look, it's all of the above. I mean, we're incredibly excited about the opportunity to try to be a winner in helping our companies deploy AI. If you think about AI, obviously it's an important technology. We don't think we have a right to win in being the inventors of frontier technology. That's not what we do. Where we think we do have a right to win, though, is in helping our businesses transform their operations to benefit from these technology tools. And we have 40 years of history helping our businesses grow, transform, and inflect. And that's going to be at least half the battle in deploying technology. So this kind of a partnership, I think, is going to be terrific in terms of being able to, pour gas on the fire of all that inflection. But there's a long ways to go in terms of building out the people and the tools and the capabilities to really drive that at scale.
That was Bain Capital co-head of private equity, Chris Gordon. And it's a conversation I had a lot at Super Return too, Matt. I mean, it's been years of private equity investors, of LPs saying, we want cash back. We want you to exit. But the issue is for this industry, they bought things that were really expensive in 2021, and they look at their options. They could sell it to another company, they could sell it to another private equity, they could IPO it, and the reality is they can't get the price that they want, so they're just sitting on it.
I mean, it's so amazing in what is shaping up to be the year or the 2 years of IPOs, right?
Yeah,
we're expecting
that's
$1.5 trillion in equity to come to market, plus the boom in secondaries, right?
Yeah.
It's gotten so huge.
Yeah, you could argue that's a lot of can kicking too.
Right, you could argue that, but still, it's an exit, right?
Yeah.
And the fact that they're still not able to get rid of these assets means they have to come down on price.
Well, I was talking to a banker yesterday who was like, I'm about to have a really tough call with a private equity fund because I need to tell them that they're not going to be able to get the price that they want. And I just wonder how often that conversation is going to be happening. In the next hour, speaking of looking for investments, I have an exclusive interview alongside Scarlet Fu with the Live Golf CEO, Scott O'Neill, who's currently in the market looking for about $300 million in order to keep Live Golf alive. That conversation in the next hour. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Fresh insider trading concerns continue to swirl after one newly created Polymarket account placed U.S.-Iran deal bets that could pay out $1 million. Bloomberg's Denitsa Tsekova did analysis of these well-timed bets along with the team. Denitsa, I mean, this is something that the market has certainly paid attention to after Iran, whether it be equities, oil, Polymarket. What did the analysis show that you and the team did?
So yeah, we've been looking obviously a lot about insider trading and prediction market, but what happened is actually all the contracts related to the Iran wars have been the ones with the highest percentage of insider trading. Just today, we had one cash out, about 1.5 million. It was around the Iran peace deal. That was the latest. Just on one market, their profit was like 400,000. So we're seeing those profits grow rapidly. Obviously, prediction market, just in the past 6 months, the volume have doubled and tripled. And realistically, all those people have insider information and profiting more and more. We have seen those companies clamp down on insider trading, but nevertheless, we're seeing that activity continue to be strong. A lot of the analysis is on Polymarket, which kind of has been in the center of attention. We looked at the broader number. We saw 45 million in suspicious transactions. This is just based on Iran strikes, Iran peace deal, and some of those Iran adjacent markets. But definitely one of the biggest categories for insider trading.
Is insider trading a feature of the Trump administration, or is it just that we can more easily see it because of the rise of Polymarket and Kalshi and these, betting markets?
I think more of the latter. Prediction markets open a whole new universe of bets. We write a lot about Polymarket, but Polymarket is very different than stock market and everything else we see. It's on the blockchain. We can go and I can see all those trades. I can see a lot of the insider trades obviously happen like a few minutes before a big announcement. It's from a wallet that was created 2 hours ago. That's one of the cases we wrote about. So it's much easier to figure that out. It's much harder to do it in the stock market. It's much harder to do it.
I mean, you could argue Congress has been doing this in the stock market for decades.
Yeah,
right?
I think that's the main argument when you ask prediction markets forums. They're like, okay, this is nothing new. I think here it opens new bets. Like in the stock market, you cannot bet on the outcome of strikes on Iran. You cannot bet on geopolitics. You cannot bet on a peace deal. You cannot bet on markets where your personal action can influence the outcome of the event and maybe could even influence violence and all those things, which things get very risky. And I think that's one category.
Well, they pulled back on some of the things, right? Like you can't bet on like nuclear obliteration or people dying or things like that.
Yeah, exactly.
Nuclear obliteration would be a losing bet in either way, right?
It would be a losing bet, you're right.
Yeah.
But it's really the extreme outcomes. There's still very, dangerous outcomes that are available. Most of them are on Polymarket, but it just opened this whole new category. And most of the cases that have been flagged are in the U.S., but you can imagine that a lot of foreign nationals can also access those websites.
Like the French weather.
The French weather one was a fun one.
It is a fantastic story. This is in Business Week.
Just Bloomberg.
And on the Bloomberg terminal.
Yeah.
Denitsa Tsekova, thanks very much.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television. Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersacci in El Ola, Saudi Arabia, and this is Bloomberg.
ABC News. I'm Brian Clark. The national average of gas falling below $4 a gallon in the U.S., according to AAA, and that's coming down as the Strait of Hormuz reopens under the terms of the U.S.-Iran ceasefire. ABC's Mary Bruce says that deal could bring Iran greater financial relief.
For the first time in years, the U.S. lifting restrictions, allowing Iran to freely sell oil. The U.S. also committing to negotiate lifting all sanctions against Iran and the release of billions of dollars in frozen Iranian assets if certain progress is made. But last month, the president said this.
No, we're not talking about any easing of sanctions or giving money. No sanctions, no money, no nothing.
As details of the 14-point memorandum have emerged, some Republicans were critical of the U.S. position. Some Democrats have also criticized the president, including the top Democrat in the Senate, Chuck Schumer.
This will be regarded as one of the biggest American disasters, and it's because Trump started this war. He didn't know how to finish it, and it looks like in too many ways he has just capitulated to the Iranians.
Defense Secretary Pete Hegseth criticized NATO countries for not allowing the U.S. access to their facilities to strike Iran. He said the U.S. is going to review its force posture in Europe.
Make no mistake about it, this will be a real review. It will be designed to ensure that NATO is moving fast and irreversibly toward Europe leading.
The jobs market remains strong, says ABC's Jim Ryan.
225,000 out-of-work Americans filed their initial applications for state jobless benefits in the week ended June 13th, a decrease of 4,000. The previous week's reading, 229,000 initial filings, was the highest since February. Still, economists describe the labor market as stable and in a condition of low hiring and low firing.
You're listening to ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they perform.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals, and the Bloomberg Business app.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube, streaming live at Bloomberg.com as well. Coming up here today, we got green on the screen here today. We'll get to that in just a moment. Lisa Mateo downtown at City Hall getting ready for the parade that's kicking off like now. So we'll get to the latest reporting from there. Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist. Get his thoughts on the Fed yesterday. We got a new sheriff in town with Kevin Warsh as the new chairperson, changing things up there. Wayne Sanders, Senior Defense Analyst for Bloomberg Intelligence. He covers all the defense stuff for Bloomberg Intelligence. Get his thoughts on this pending deal with Iran. Ann Maletti going to be in studio, one of my old buds, head of equity investments at Offspring Global Investments. Get her thoughts on these markets. Anurag Rana, Senior Tech Analyst. We want to talk to him about Intel. I also want to talk to him about Accenture. Stock's down like 19%. Companies that are spending more and more on AI, money's got to come from somewhere. And Anurag's been telling us for quite a while that it's going to come from some of these consultants here. So we'll break that down. Right now, let's get a sense of where the market is. We'll do that with Alexis Christophers.
All right, thanks a lot, Paul. And Wall Street is staging a comeback with stocks climbing and oil sliding. A peace deal between the U.S. and Iran has traders optimistic that a reopening of the Strait of Hormuz will ease inflation risks. The S&P 500 is up 60 points, or 0.8%. The Dow Jones Industrial Average climbing more than 214 points, or 0.4%. And we've got the NASDAQ Composite up 250 points, a gain there of nearly 1%. Meantime, Brent crude is at $77.10 a barrel, its lowest in months. That's down about 3%, while West Texas Intermediate crude is just under $74 a barrel, down more than 3.5%. The Bloomberg Dollar Spot Index up 0.1% at 1215.62. As for some stocks on the move, Intel is up more than 8%, leading the advance for the S&P 500 after President Trump said Apple has agreed to work with Intel to design and build chips here in the U.S. Meantime, shares of Apple up 1%. The iPhone maker plans to raise prices on its products to offset surging memory and storage chip costs. That's according to CEO Tim Cook. He told that to the Wall Street Journal. And shares of Take-Two Interactive Software rallying 3.5% after announcing that pre-orders for Grand Theft Auto 6 will take place June 25th. It's kicking off the launch of one of the most anticipated video games of all time. And that's your Bloomberg Business Flash. Paul and Scarlett.
Thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. Let's go down to City Hall Plaza. That's where Lisa Mateo is. She's a co-host of Bloomberg This Weekend. Lisa, the parade's kicking off. I guess that in the Battery is making its way to your way in City Hall.
It definitely is. It definitely is. And you can feel the excitement. I've got the merch on. I am ready to go, guys. But yeah, this is City Hall Park. So behind me, for those of you on radio, I'll paint the picture for you. It is City Hall. It is draped in banners of the Knicks. You have the Knicks key players, their names, their jersey numbers right across the windows. So this is where things end off. The parade's already kicked off. It went from Battery Park up Broadway, Canyon of Heroes, and it'll end here probably around 11 a.m. And that's when the Knicks will get the keys to the city. That's what we've been waiting for, too. Apparently, reportedly, Alicia Keys also supposed to be singing today. We'll see for that. But it's just the excitement about it. Some estimates are saying between 1 and even 5 million people expected. We'll see about that. But the Pens were closed. They were locked up just 2 hours before the parade kicked off at 10 a.m. People were coming here in the wee hours of the morning because of the excitement behind it. Some people even paid people to stand in line for them, almost $1,000 if you believe that. But it is because of the excitement. Travel in the area. If you want to come down here, it's going to be tough. The MTA is saying bus service has been suspended in Lower Manhattan right now. There's issues with the subways right now, closed down in certain areas. And cars cannot travel throughout Lower Manhattan right now. This is all during the parade. But it's the excitement about it, guys. I mean, it's the first time in more than 50 years that the team has won a championship. And it's the first time that they're getting a parade. And the last time that the New York City has had a ticker tape parade, that was back in 2024. That was a New York Liberty. So it's been a while. People are excited. And that's what they want to see. You know, they want to see their team because there are so many Knicks fans here in New York City, guys. It's incredible.
It's not just Knicks fans from New York City, Knicks fans streaming in from Long Island, Westchester, New Jersey. All the public transit saw a ton of people coming in. Yes. Lisa, talk to us about the security right now, especially given those estimates of up to 5 million people.
It's crazy, I know. So they're saying about 10,000 officers. Just to put that in perspective, that is the most officers that have been at a planned event ever. And we're talking, think about Times Square, New Year's Eve. It's more than that. Because you know what happened is that in the past, after the championship, right, there was some fans got out of hand, right? You had some fans, they were setting buses on fire. There were some issues as well. So NYPD, they just want to make sure everything goes off okay without a hitch. And people are just here to have fun. And that's what, NYPD commissioner is saying. Just have fun, enjoy the moment, don't go crazy.
All right, Lisa, thank you so much for your reporting. Really appreciate it. Lisa Mateo, she's a co-host of Bloomberg This Week, and she is at City Hall Plaza, and the Knicks parade is making its way up to City Hall. So
it doesn't look that crowded where she is, but we know she probably got special permission to go in there. I mean, the other shots of the crowds are insane.
Yes.
My son flew in on a red eye this morning to Newark at 5:55, showed up at the office to drop off his luggage, made his way downtown.
Is that right?
Yeah, and by 6:50, he texted me and said, I can't get in anywhere.
Wow.
It's all full.
Don't feel bad. My family, same thing. They got down there at 7 and said, can't get too really close. So they're like a block away from City Hall. They're staying down there because what else can they do?
I don't even think they can get out of there if they wanted to.
It's true. It's true.
Exactly. So, yeah, be careful if you're down that part of the city here today. All right, let's see what's happening out there. We got stocks on the move here. The markets are moving higher here. Let's see some individual stocks on the move, and we can do that with Avalon Purnell from Bloomberg News. Avalon, what are you looking at here?
We have to start off with SpaceX. That's ticker SPCX, currently sliding about 5.7%, on track to fall for its second straight day after its 49% run after that record IPO. Investors are telling us that volatility is likely to continue as the markets weigh those lofty expectations for future revenue with no real clarity on how exactly SpaceX will achieve it. Still, worth noting that this isn't completely out of the norm. If you remember, Meta did plunge more than 30% in their first year after a similarly record-breaking rise.
All right, what else we got here?
Accenture, that's ticker ACN. Definitely not a great day there, sinking about 15% most intraday since 2008. And that's after the consulting and IT services provider gave a fourth quarter bookings forecast that fell short of expectations. Baird highlighting that while the pullback in full year guidance seems a bit excessive to them, it does fit investors' fear of the AI thesis. And also worth noting that we've already been seeing the layoffs and start date deferrals at other consulting firms like McKinsey, PwC, Deloitte, EY, and it's going to be really interesting to see how exactly Accenture will move forward from here.
Yeah, kind of painful, 15% drop. All right, last one.
Take-Two Interactive Software, that's ticker TTWO, currently climbing about 4.4% to hit its highest intraday level in nearly a month. And that's after Rockstar Games said that Grand Theft Auto 6 pre-orders will begin on June 25th. This has been a game that they have really been wanting to have, especially for gamers. And Grand Theft Auto came out in 2013, so they've been waiting for quite some time. Piper Sandler saying earlier this week that they expect 43 million unit sales once the game does end up launching.
All right, very good. We appreciate that. Avalon Purnell, Bloomberg News, giving us the stock movers here today. If you want more on that stock movers, we got a podcast out there, Stock Movers, so you can check that out for all of the stuff happening there. We have a Federal Reserve meeting yesterday. That was pretty interesting.
It was a doozy.
Hindsight. Yeah, terse statement. Pretty clear language from Kevin Warsh, the new Fed chair.
He's a Gen X Fed chair, so
Okay.
I feel like he went old school. He's bringing it back to what it was before the era of let's hold a news conference after every decision. Let's overly communicate under Ben Bernanke and Janet Yellen and Jay Powell.
Let's talk to somebody who actually follows closely what the Federal Reserve is doing, and that would be one Ira Jersey. Ira, what was your takeaway from the meeting yesterday? What did your market tell you?
Wow, there were so many takeaways, Paul. I'm not sure that I could do just one. I think from a market perspective, it was clearly that the committee has turned hawkish, and Kevin Warsh, surprisingly to some, had basically let that hawkishness linger out there because he didn't take any of it back during the press conference. So the market is now priced for a couple of interest rate hikes, but then an interest rate cut, which something is wrong. And this is in a note we put out this morning on the terminal, which either the market is, the market's pricing for some risk of 2 hikes, which is completely feasible, right? I can lay out a scenario where the Federal Reserve would do that given the inflation situation and how strong the economy seems to be. But there's no chance, I think, after that they wind up cutting within a couple of months, right? It just, one of those two things is wrong, and I think ultimately the market has to figure out what it believes. Is it going to be a slow meandering group of hikes, or is the Fed going to hike and then hold rates at a somewhat higher level for a while?
Ira, one of the things I was super fascinated by was Kevin Warsh saying that he wants to let the market price in new data and react to what's happening in the economy rather than try to price in what it thinks the Fed will do in the face of new data. He wants a pure market reaction, but does this pure market reaction then become an input for the Fed?
Well, I disagree. I mean, it always has been, right? The Fed has already taken into account what is the market pricing. I think he thinks, and wrongly, and I disagree with him on this. The market has always, right, since I've been in this business since 1994, the market has always tried to anticipate what is the Federal Reserve going to do. That changed a little bit with the more communication, because now instead of the market waiting for a meeting or waiting for, the H4.1, look, I remember getting the H.4.1, that's the Fed's balance sheet. I used to get that off a fax machine so we could determine whether or not the Federal Reserve was easy or hawkish, right? Like, but we had to anticipate what the next move was going to be, and that's always what the market is trying to do. The market is trying to discount what those next moves are. Now, it became, easier to determine what they were going to do at a meeting because of all the Fed speak, and you can take a preponderance and the whole mosaic of all that information that you could coalesce into what's the Fed going to do. But you still had, people try to anticipate things even before you had all of this communication. So I disagree with that idea altogether. The Fed always looks at things like inflation break-evens and, what the market's pricing for hikes or cuts, for sure.
Ira, I'm looking at the 2-year Treasury and the 10-year Treasury, because Lisa Abramovich taught me how to do that. And I see it's only like 28 basis points between the 2s and 10s, and that's a lot less than it was 3 months ago, 6 months ago. What does that tell me?
Yeah, so what's gone on recently, right? Yesterday, you saw 2-year yields go up by 14, 15 basis points, and the 10-year didn't do very much of anything. And then today, you see the 10-year rallying and yields coming down while the 2-year is hardly doing anything. I think that's an acknowledgement that the Federal Reserve is going to be hawkish. There was this fear going into Kevin Warsh's first meeting that he was going to try to be as dovish as possible because President Trump wants interest rates to be cut and the like. But he acknowledged that they want to get inflation down to 2%. In saying that, the market is now pricing for the Federal Reserve to be somewhat more hawkish and be on hold for a little while. I think ultimately we probably will see us get back to maybe 50 basis points on that 2s, 10s curve, but that's predicated on my idea that the Fed's probably just on hold for the rest of the year, which is not something that the 2-year currently is pricing. The 2-year is pricing those 2 interest rate hikes that we talked about a little while ago.
So we talk about the politics of it all. What was fascinating as well was President Trump's response to the Fed's first rate decision under his new chair, Kevin Warsh. He basically said, yeah, it's possible the Fed might raise rates. It's all right, whatever. How do you interpret that, Ian?
Well, I suspect
Ira, I'm so sorry. My mind is somewhere else.
I suspect that President Trump just, wants to give Kevin Warsh at least a little leeway, coming into the first meeting and trying to determine, how he can work with the other members of the FOMC. And I do think that the task forces that Kevin Warsh announced is kind of a more diplomatic way for him to, first get a sense of what his colleagues are thinking, and secondly, kind of influence things through these task forces and say, hey, we can't do things as we've been doing them, or I don't want to be doing things the way they've been doing them because they haven't always worked, and maybe things aren't as cohesive as they can be. So some of the things that might come out of that is like a change in the way that they think about inflation and the inflation framework. Is the 2% target correct? Is using the PCE deflator the right measure, right? So those are things that they're going to discuss. And the market may react either positively or negatively depending what comes out of some of these discussions. And I do think that Kevin Warsh is it's actually pretty smart. I mean, I'll give him a lot of credit for trying to work with his colleagues through this task force environment.
Ira, thanks so much for joining us. Appreciate it. Ira Jersey, Chief U.S. Interest Rate Strategist, Bloomberg Intelligence. So, Scarlett, your son came home on the red eye last night. Was he scheduled to come home, or is he just come home for this parade?
He was scheduled to come home at some point during the summer. He just moved it up, or asked me to move it up because of the Knicks parade. But now he's kind of soaking up the Knicks parade atmosphere downtown somewhere because he can't get to the actual parade.
That is a real fan. Good stuff there. Coming up, we're going to check in with Wayne Sanders. He's a Bloomberg Intelligence senior defense analyst. Get his thoughts on what's going on with the U.S. and Iran in terms of negotiations. That's coming up.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's coming up on 10:22 on Wall Street. I'm Alexis Christoforous. This Bloomberg Business Flash is brought to you by IBKR. Trade, election, climate, and economic outcomes with IBKR prediction markets right alongside your stocks and options. Earn interest on your position and receive $1 per contract if you're right. Learn more at ibkr.com/prediction. sanctions. We've got a nice rally underway on Wall Street for stocks as oil continues to slide after President Trump signed an interim peace deal with Iran and the Strait of Hormuz slowly reopens to traffic. We've got the S&P 500 up 67 points, the Dow Jones Industrial Average up about 190 points or 1/3%, but the NASDAQ Composite, the star of the day, up 1 1/3% or 327 points, led higher by a rebound in tech stocks. Brent crude is down 3 1/3%, below $77 a barrel, its lowest level since late February. West Texas Intermediate crude down nearly 4%, just under $74 a barrel, and the Bloomberg Dollar Spot Index up 0.1% at 1215.29. As for stocks on the move, we've got shares of Kroger sinking today. This is after sales barely beat expectations, but the grocery store operator signaled that economic pressures on consumers, including higher gas prices, could weigh on near-term performance. Kroger is also planning its largest round of price cuts ever as it tries to gain market share. From here, about 11% after the IT services company gave a revenue forecast that fell short of estimates. And we've got SpaceX lower by about 5%, second straight day of losses following last week's historic IPO. SpaceX, though, still up about 35% since its debut. And that's your Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thank you so much. We appreciate that. Scarlett Phil and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As Alexis was just reporting, President Trump has inked a deal with Iran, shifting the focus to the Strait of Hormuz and getting that open with. So let's get a sense of what's going on here under the hood. Wayne Sanders, he's a senior defense analyst for Bloomberg Intelligence. He's retired U.S. Army colonel, so we thank him, of course, for his service. Wayne, what do you make of this, I guess, memorandum of understanding? I think like we're inking a real estate deal here. I'm not sure what's going on. Talk to us about the Strait of Hormuz. Can the Western world really reopen the Strait of Hormuz?
Yeah, I take it as a pretty good sign, actually. I think one of the biggest pieces, the fact that the Iranian president is involved in this, and we have not seen any backlash yet from IRGC or anyone else, meaning that the four-headed hydra from Iran that you have to get all in place at the same time to be able to move forward with an agreement, we're actually seeing some of that movement. So now as you start to see some movement in the Straits, and you're actually, I think at this point in time, it also allows for the military, as they start moving back from some of the blockade positioning that they're in, they can move into a zone defense while still being able to very quickly maneuver back if they had to.
Wayne, where does Israel fit into all of this?
Israel right now, I see the next 60 days as being obviously very critical. Israel is going to pressure the U.S. as hard as they possibly can, especially when it comes to the nuclear enrichment program. President Trump originally said no escalation in enrichment, and he backed off a little bit about that in the MOA, where he's now talking about low-grade enrichment. So think 3 to 20%, which is normally used in that civilian power projection, power production perspective. And you need 90% high-grade enriched uranium for nuclear weapons. So there's a very large gap. However, at this point in time, Israel doesn't look at it that way. Israel looks at any type of enrichment is going to be used towards a military-grade program and therefore shouldn't even be started.
So I guess over the next 60 days, Wayne, the U.S. and Iran will try to agree on restrictions on Tehran's nuclear program. What should expectations be here?
It's going to be rough, honestly. I don't know whether or not they can even do this in 60 days. I think that you may end up seeing an extension beyond that 60-day agreement if going towards that, because they are so hardline on both sides. Iran needs to be able to come back with a win and say, no, we still have a nuclear program, even if it is that 3 to 20%. However, the Gulf states, as well as Israel, is looking at this saying, do we want Iran to have any type of nuclear capability, even if it is at the low end?
So if you were in the oil markets, Wayne, what would you be watching for? What do you think you can kind of key off here?
I'm definitely not an oil expert, but I would say that I think right now both Iran and the U.S. are looking at right now the replenishment of stocks becomes a very key piece to this. And so both sides have a very large positive upside right now to allowing the Strait to open to be able to alleviate some of that pressure. I think the key then over the next 60 days, though, while that starts, is can we start reaching some of the agreements that the longer term agreements, ballistic missiles, the nuclear program, and easing of sanctions, the other things that are in the deal. can all those things actually be solidified to the point where both can return to their countries and say that we've won?
All right, Wayne, thanks so much. Appreciate it. As always, Wayne Sanders, he's a senior defense analyst for Bloomberg Intelligence. He's a retired U.S. Army colonel. He's based in Washington, D.C., and it's great to have him as a resource here. Looking at the markets, we're trading higher. What else is new? That's what John Tucker says every day. New all-time high. We hear from John Tucker.
Well, yesterday wasn't. Yesterday was an interesting reaction.
Yesterday was an interesting day. Let's get a sense of where we're going on these markets. We've got a new Fed chairman. We've got a new sheriff in town, it seems like, but the market's reacting well today. Ann Maletti joins us. She is the head of equity investments at Allspring Global Investments there in Milwaukee, Wisconsin. Again, pound for pound, the best money managers I find in Milwaukee. I don't know what it is out there, but they're pretty good. And thanks for coming on in here today. I know you're going to the parade in a minute. What do you guys and what are your portfolio management teams? What are they doing here in this market these days?
They are trying to remain calm and focused on their investment processes and what they do every day. And as you know, it's really hard to do that when the market seems to shift every day, and January and February look like a completely different market than March. And then April and May and even June now have been different as well. So again, sticking to what they do well, and that's really focused on fundamentals.
So how are you rethinking, or maybe not at all, your portfolio construction, given what we heard yesterday, given this renewed focus on fighting inflation from the Federal Reserve under Kevin Warsh?
Yeah, I mean, I think we were pretty balanced in our views going into it in terms of, yes, there's a new chair. Directionally, are things going to shift dramatically? Probably not. And I think there was more kind of confirmation of that yesterday, him really trying to establish his own credibility, probably with his cohorts. But I thought what was new and interesting are the task forces that they've announced. I do think it's kind of time to think about the future. Are we looking at the right data sets? All of those things. And I think he brings that to the table too. So I think there still is strong independence at the Fed. No real reason to change direction. We're focused on obviously earnings, but also inflation. And I think that the inflation story will really give the shift of what happens longer term.
And we're starting in this market to get some just mega IPOs coming down. We had SpaceX. We're going to have Anthropic and OpenAI probably in the fall, I guess. Huge valuations, huge numbers of shares being issued. What does that tell you about the market? Is that a signal one way or the other?
I mean, Paul, you know, it does. Like, look, it does give me a little bit of angst. Certainly lived through cycles like this before, and when you see that much capital being thrown into IPOs, makes you feel a little uncomfortable for certain. I think what's different this time for me is fundamentals in terms of earnings and earnings growth continue to be really, really strong. And more importantly, they seem to be broadening out, down cap especially, right? So mid cap and small cap companies seem to be also increasing their earnings. And so if that is really the driver, I'm a little bit more comfortable. But like, look, this AI spend, not all of the capital will be put to good use, as we know, and there will definitely be a rocky road ahead, I think.
In a rocky road scenario, where can you go for shelter?
Yeah, there's a couple of spaces that we're looking at that we think are interesting. You know, we've thought about this AI innovation cycle. We know how important it is, but we think the next phase kind of goes down into applying it at an enterprise level into different industries. And that is creating some of the profit growth and earnings growth. So generally speaking, we like industrials. That seems to be at a perfect intersection between the growth in AI spend and what's going on there, but also at the intersection of kind of re-globalization. So that's an area we like, especially as you go down cap. The more mid-cap names have less global exposure, so they tend to be a little bit more stable. And the valuation differences are, make it even more attractive.
Small and mid-cap.
Yep.
Time to shine here? How are you thinking about that?
It has been, Paul. I mean, it's kind of been the quiet little winner this year. And yes, has it been pulled up by some of this AI spend? It certainly has. The thing I don't love about it is we still see kind of a low earnings quality factor continue to be really, really strong. And so the market seems to be not just focused on high quality companies in the small and mid cap space, but also the companies that may not screen quite as high for us.
And looking outside the U.S., which, you know, people were reluctant to do for a long time, but on a valuation basis, it's hard not to consider it. How are you thinking about the emerging markets? How are you thinking about the developed markets and ex-U.S.?
Yeah, I mean, I think the emerging markets, and Paul, you can attest, I think more than a year ago we were talking about it, and most of my career I've spent obviously in the domestic markets, but you could see the interest level, but more importantly, the fundamentals really start to shift last year. And we just published our mid-year review this week. We came into 2026 believing there was a lot more room to run in EM. That has been the case. And we believe that will be the case the rest of the year. And it's, yes, some of it's tied to the AI spend, but also some of these emerging market countries have really matured, are much more stable than they were before. And the biggest factor is there's only 5% of global AUM devoted to the space. The average over a long period of time has been 7%. And so if that just rises a little bit, it could be $500 billion in investments yet to come. So we think it's still an attractive area to be, especially relative to the US.
Ann and I have been in this investing game for 30, 40 years now. And how do you think about this AI story just broadly? We've been through internet cycles before. We've been through great financial, telecoms. I mean, how does this ring for you?
Yeah, I mean, look, this is probably the most innovation I've seen in my lifetime, absent just, you know, the markets. But I am a big believer. Our investment teams are big believers in it. We're using it already in our business. I only have a little bit of angst on this solid foundation we have right now, including the fundamental, the earnings growth and other things that we have with it. I worry, do we have another DeepSeek moment? Do we have another kind of black swan moment that just triggers a reversal of some of the glory that the space has had? So again, I fundamentally believe that this is real. Have we gotten a little overexcited and a little too narrow focused on just AI in the markets? I would say probably, yeah.
All right, Ann, thanks so much for joining us. As always, Ann Maletti, Head of Equity Investments at Allspring Global Investments. Looking at the markets here, we're just holding on to those gains. The S&P is up 65 points, 0.9%. We've got the NASDAQ up 285 points. That's 1.1%. The Russell's also higher. That's up 1.1%. So we're seeing some broadening out there. 10-year Treasury yields, they're coming in about 6 basis points, 4.42%. I'm still not refinancing the mortgage on the Jersey Shore compound quite yet. Oil coming in $2.75, right at $74 per barrel. Tom from the Upper East Side asking for a Bitcoin quote. It's lower here, sitting just below $64,000 per token.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
10:40 on Wall Street. I'm Alexis Christophers from the Bloomberg Interactive Brokers studio. Wall Street is staging a comeback with stocks climbing and oil sliding. That's after a peace deal between the U.S. and Iran was inked earlier, and traders are now waiting for the reopening of the Strait of Hormuz. The S&P 500 is up 73 points. The Dow Jones Industrial Average racing ahead 265 points, a gain there of 0.5%. And the NASDAQ Composite is up 1.25%, a gain of 323 points. We've got the Russell 2000 along for the ride today, up 1.25% or 36 points. In the oil pits, Brent crude is down 3% at 77.21 the barrel, and West Texas Intermediate crude down nearly 3.5% now at 74.15 a barrel. That is its lowest level in more than 3 months. Shares of Intel on the rise, up 7% after President Trump said Intel will work with Apple to make semiconductors here in the U.S. Meantime, Smith & Wesson stock also on the rise today. That's after posting better than expected quarterly profits and revenue and confirming guidance. And SpaceX down 6%. That's on top of yesterday's 5% slide. Shares of Elon Musk's rocket company still up nearly 40% since last week's historic debut. And that's your Bloomberg Business Flash. Let's hand it back over to Paul and Scarlett.
All right, Alexis, thanks so much. Appreciate it. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. I'm going to say a year, maybe 2 years ago, some tech analysts came in here and said, you know, all these companies across industries are spending a lot on AI. It's got to come from someplace, that money. And he highlighted one area that it's going to be hitting, which is some of these consultants out there. Let's pull back on some of the money we're spending on consulting because we have to invest in AI.
So it's not so much that they don't need their services, it's that we're investing in AI so we can hold off on paying these guys.
Absolutely. And I think, and that analyst was Anurag Rana, senior tech analyst for Bloomberg Intelligence. Anurag, we saw Accenture today give some guidance that really disappointed the street. The stock is down 15% year to date. It's down 50% on a year to date basis, down 15% today. What did you hear from Accenture?
I mean, to be honest, look at the carnage, and what they said was, you know, maybe 100, 150 basis points less growth for them. I mean, this is really shocking because they talked about Iran, they talked about projects being pushed out into next year and so forth. And this goes into the, you know, thesis that you just repeated, because at the end of the day, if you're going to spend money, if an enterprise or if a corporation is going to spend money on AI, where is that money going to come from? You don't have budgets that are going to go up 50, 100%. You're going to take it out from the software bucket. You're going to take it out from consulting bucket. You may not upgrade your PC. I mean, it has to come from somewhere, and that's what we are seeing right now.
It has to come from somewhere, and if it's coming from software, it's coming from consulting. Does that mean that the companies realize that they can get by just fine without these consultants and they'll never need to go back to them? Or do the consultants become something that they just go to as needed on an emergency basis?
So again, over the last 25 years, we have seen this movie many times. It leads to a year or so of anemic spending, and then it bounces back very strongly. The reason it bounces back is because you cannot put those projects on hold forever. You need your data cleaned up. You need your software systems. You know, earnings today is their headcount still went up. I mean, if there was massive AI disruption going on in that company, why would these guys hire any more people? A company like Accenture has over 700,000 people. Their attrition rate is about 14%, which means all they have to do is not hire, and their headcount goes from 700,000 plus to, let's say, 600,000, which is what you would expect when somebody is being disrupted by AI. This is a classic case of traditional spending not being strong and these guys getting punished on it.
You mentioned software is another area that's under pressure. And again, you know, you look at Salesforce, some of these names that are down 40, 50%. How's the thinking on Wall Street kind of evolving here, Anurag, about software broadly defined as it relates in an AI world?
The thinking is very simple right now. Trading is led by short-term focused, you know, you could say investors or speculators, and the trade is very simple. They understand 100% go long semis and get out of anything that is software or services related. We already heard yesterday from even Apple that, you know, memory prices are up, and so Micron is up again, you know, on that stuff. So it's a very easy trade for people to see. They can't see by what's going to happen in 3 years to software companies or consulting companies, why bother being in it when the trade is very simple in front of you? Google is raising capital to invest more in AI infrastructure. Let's stick with the semi trade. Let's stick with the AI infrastructure trade.
Anurag, we got news this week that Medallia, which is a private equity-backed software firm, is being taken over by creditors led by Blackstone. Thoma Bravo, its sponsor, said it wasn't going to inject fresh cash into the company. Does this spill over in any way to the public market?
So this has been a story for, I would say not just right now, but for decades. When software companies lose their market share or are smaller, they actually go to private equity, they raise debt, and that's how they exist. Our argument is that's how they exist. Our argument is companies with leading market share, companies like ServiceNow, companies like Workday, companies like SAP, they're still growing and they have a commanding market share in their area. Somebody like a Medallia are honestly a blip when it comes to the market share of the entire software landscape. So it's not surprising those companies that are private, they are not growing, they're, a lot of debt. You will see a lot more issues on that spectrum. For our side, when we look at the larger companies, I think this risk is insulated from them.
Understood that, the big software companies are a class unto themselves. But if we're not seeing these software companies see their valuations adjusted, meaning their owners are not marking down the value of these companies, when they eventually do, does that have any unintended consequences on the publicly traded part of the software industry, even if it's not the big names, maybe some of the mid-cap ones?
Yeah, they will all be getting butchered. I mean, you can even see today they're getting clobbered because of Accenture. Because the whole risk is anytime you have a company at this point that is not semis related or hardware related and has to do with human capital, people just say, find an easy way to say, you know what, they are going to get disrupted. This is not a business I want to be in. I would rather stick around to something that's tied up with chips or servers.
I remember when, not so long ago, everyone wanted to be in software because you didn't want to be in hardware. Hardware was a commodity business, right? No chip companies, no big mainframe computers or anything like that. Let's go into software, recurring revenue.
Yep, exactly. Recurring revenue. That was definitely the key. Hey, so
look at Accenture for that matter.
Yeah,
right now.
Exactly.
It's about what 12-13% free cash flow yield. I've never seen that. At least in the 23 years I've covered Accenture.
Let's switch gears real quick. Intel shares soar after Trump says it has struck a deal with Apple for a chip deal. What's going on there?
Yeah, we'll have to find out whether it actually happened or not because I haven't seen the release from the companies at this point. Now, the question here is, Apple does make its own chip. It goes to TSMC to get them made, and those their custom chips have been a big story of selling their Macs and their phones. Now, if they are getting a little bit of, you could say, backlog issues because TSMC is really busy doing AI chips, they could go to Intel. But the big question, which I don't know the answer for, is can Intel even manufacture the chips for Apple at this point? Because this is not something that you could just, it's not like construction. You can find another vendor. You need to have that technology and those nodes in order to fulfill the demand from some of the leading tech companies like Apple.
Yeah, to Anurag's point, Intel declined to comment. Apple did not comment as well. But, that's to be fair. Okay. Now, Intel, of course, has this deal with the White House very quickly here, Anurag, where the U.S. government is the biggest investor. So even if it's not a lot of chips, just a symbolic amount says something to the market, doesn't it?
Yeah, but that's the case. But that's also could be just driven by market forces right now. We really are in a crunch that you can't get enough semis and chips out in the market given the AI infrastructure demand. So they will go anywhere they can find chips at this point.
All right, Anurag, thank you so much. Appreciate that. Anurag Rana, Senior Technology Analyst, Bloomberg Intelligence there. Looking at the markets here, we're holding on to the gains, trading at pretty much right towards the highs of the day. The S&P 500, it's up 82 points, 7,500 on the S&P. That's 1.1% higher
Almost
here.
erasing yesterday's decline.
Exactly right. The Dow up a nice 300. That's 0.6%, just moving higher there. The Nasdaq's leading the way, 1.4% gain. To 26,000, almost 400 there. So nice move there in the NASDAQ. Yields coming in, 10-year Treasury yield in almost 6 basis points, 4.42%. WTI crude oil off about $2.80, sitting right at $74 a barrel. John Tucker and his gasoline tax.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu on this Thursday. It's the last trading day of the week, given that tomorrow is Juneteenth. It is a public holiday. And of course, all this week, we've been keeping a close eye on SpaceX, given that it did go public last Friday, and it's had a tremendous run-up. But I guess we could say, Paul, that the initial optimism or joy has kind of faded a little bit here in the last day or so, right? I mean, SpaceX currently down for a second day, off by 6.5% right now after losing 5% yesterday. And of course, that's after it had run up to more than $200 a share in the first 3 days of trading. Let's bring in Michael Ball. He is one of our macro strategists here at Bloomberg News. And Michael, how are you looking at SpaceX and in especially the options activity when you consider where this stock is headed and how much momentum there is really behind it?
Yeah, well, thanks for having me, guys. And yeah, I think it's just the kind of buzz has faded and the market's moved on to the next thing. Obviously, the Fed kind of helped shift the macro picture back into the forefront versus this more micro story. You've also seen semis now retake kind of the lead and regain momentum as the main driver there. And that means that like the funding we saw into this event, which had taken some froth out of that trade, out of the semiconductor trade, to kind of fund positioning into SpaceX has sort of played out as well. And when looking at the option market, we had some massive implied vol moves, so that the catalyst would have had to keep coming for SpaceX to actually meet those expectations. Otherwise, you're going to get premium decay from your calls, which basically means you overpaid. And to get paid out on that, you need to still have the stock going up a lot every day. And that just didn't happen.
Michael, any sense of kind of who's buying and selling stock here? I know it right after an IPO, the stock is really trying to find a longer term home here from some of the maybe short term traders. What are you seeing?
Yeah, so that's a great question, and I think it's still mainly being driven day to day by retail here. You have obviously some concerns with the lockups coming, but that's still in the future. So the day to day flow right now seems to be more in the smaller lots, and that's also true in the option market as well. You did have some big, obviously, buying out of the gates from people who had to sort of benchmark and had to have allocations to it, but that subsequently have come off. And when I speak to actually individual people in my world who got allocated some of the IPO, some of them have actually sold and, they made 30, 40%, and they were quite happy with that in a day or two.
So how do you think this sets us up for when Anthropic and OpenAI eventually go public? Is this kind of the blueprint?
Well, look, we're going to have to see where those pricing is and what the valuations are. This is obviously a very expensive, very large proposition. It was taken down quite well, but now like I said, the exuberance, the excitement of it has passed and the market's moving on to other stories. As it stands, those models are going to, interestingly shed a lot of light into the parts of the sort of AI trade we don't have that much visibility on. SpaceX obviously has the Grok component, but it's also being sort of more pitched as a new type of neocloud, provider of actual capacity versus a model kind of play. So they are two different beasts, but it is a good sign it was taken down well. It's a good sign it's still hanging above IPO prices. We still obviously have some concerns with selling from insiders and from later investors in different rounds. But, retail clearly and institutional clearly were on the same page for the first day or two.
And of course, Michael, you've been keeping an eye on what's happening with the yield curve, the Treasury yield curve, which flattened tremendously yesterday following Kevin Warsh's debut as the Fed chair and speaking before the public. We definitely saw flattening in the yield curve to the flattest since, I believe, April 2025. Is that the path forward? I mean, how much more flattening could we see here as traders continue to price in a more hawkish Fed?
Yeah, I wrote about that yesterday morning, and I was really thinking he was going to come out of the gates trying to establish credibility. And Kevin Warsh, he threw the gauntlet down, not only to the markets, but to his colleagues and said, this is unacceptable. We can no longer just pretend to have a 2% target and for years now be above that. We're going to build all these task forces, really just code for he's moving the research and the staff to now figure out ways to either recommunicate, or in his case, less communication, that this is now the priority, that yes, we're okay, comfortable with growth, we're okay with the labor market, those aren't really the forefront concerns. Let's go now and get this finally inflation picture back to where it needs to be. So again, I was quite impressed with how little he said, but how strong his words were. And again, I think we have to just stop thinking that he's going to be a puppet of Trump and that this is going to be a dovish Fed leader. He clearly has a ideology here he wants to reestablish that has a smaller balance sheet, smaller financial imprint, and has much less touch points every day. So the market can just do what the market does and doesn't have to always worry about what the Fed is thinking.
30 seconds, Michael. DOTS, one of my favorite functions on the Bloomberg terminal, its days numbered.
Mm-hmm. Dots today?
Yes. Are we going to have the dots function, or is Mr. Warsh going to do away with the dots?
No, the task force.
Oh, yeah, great question. Sorry, Paul, I missed you there for a sec. Yeah, look, I'm okay if he gets rid of it. They're constantly wrong. They add confusion. I mean, it's great for us in the sell side to talk about, but overall, if I'm a trader, I'm not going to be trading on that, and that's sort of what we need. We need people in the front end, the SOFRs, who are trying to properly hedge the rate of policy, not to have to worry about, all these different dots in the median. I think to answer your question, Paul, yes, he will get rid of it.
Okay.
Over time,
DOTS.
though, not a rush.
All right, days are numbered, I guess, for DOTS. Michael Ball, macro strategist for Bloomberg News. Thanks so much for joining us. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. What are you looking at here, Scarlett?
Well, I'm keeping an eye on the Treasury yield curve because we just saw such an extreme move yesterday. Yep. People are really, really taken aback by how hawkish and how strident Kevin Warsh sounded. All the talk about a sock puppet and being, President Trump's, walking, reflection. I don't think that's happening. Not anymore.
All right, we'll have more coming up.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Thursday morning. It's actually kind of a Friday here, given that the stock market and bond market are closed tomorrow for Juneteenth. But Paul, you're working, right?
Tom and I will be bringing Bloomberg Surveillance 9 a.m. to 12 noon tomorrow.
Okay, but no Bloomberg Intelligence, at least on radio, because there is no market trading. This is Bloomberg Intelligence. We are, of course, broadcasting live from the Bloomberg Interactive Broker Studio in Midtown Manhattan. Paul Sweeney, Scarlett Fu, and Charlie Pellet with you. The day after the Fed meeting, the day of the New York Knicks victory parade. We'll get to all of that in just a moment, but we want to bring in Charlie Pellet first with our Bloomberg Business Flash.
Hi, thank you very much. Happy Knicks Day here in New York. New York, what a day. We've got the Dow, the S&P, NASDAQ, no orange, no blue, plenty of green, though. Right now, we got the S&P up 77. That is a gain right now of 1%. We are at 74.97. The Dow keeps on going, up 283 today, up by about 0.5%. NASDAQ Composite up 353 for NASDAQ, gain there of just about 1.4%. We're looking at the 10-year, currently yielding 4.42% with a 2-year 4.14%, your 30-year 4.87%. All of this against the backdrop of VIX just above 17. Cannot ignore the semis today. What a move there. Thank you, Intel. Intel up 8% right now. The SOX is surging 6.2%. That is the Philadelphia Stock Exchange Semiconductor Index. Spot gold down 0.1%, 42.52 the ounce. The slump in crude continues. 74 handle on WTI, down 3.4%. Barrel of Brent just above 77, down now by 3%. Intel up 7.9%. This after President Trump said the chip maker will work alongside Apple to design and produce semiconductors domestically. Apple up by 1%. Cannot ignore SpaceX wrapping up its first full week of trading. Actually, 4 trading days. We got SpaceX, though, slumping today by 6.5%. Scarlett and Paul, that's a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. It is Knicks Parade Day. Right there in the middle of it all is our own Lisa Mateo. She's co-host of Bloomberg This Weekend. Lisa, what's happening at City Hall right now?
All right, so things are starting. We heard the cheers. The cheers are getting a little bit closer. I'm even looking to my right, and I'm starting to see people throwing off confetti from the top of the building. So that's about 2,500 pounds of confetti has been delivered out to about 20 buildings here in the area. But this is where the party ends, okay? So the party ends right here in City Hall Park. So behind me is City Hall. You have the Knicks banners draped down. You have all the players and their name, their numbers draped across all the windows. So the excitement's here. We have the music starting. They're just waiting for the team to get here because they're already making their way up Broadway, down the Canyon of Heroes. And here is where they're expected to get the keys to the city from Mayor Mondami. But it has been an exciting morning. People have been lining up since the wee hours. They're talking about between 1 and some estimates are saying even 5 million. We'll see. But the pens to get in here were even closed 2 hours before 10 a.m., before the parade even kicked off. Travel in the area, don't even try it. We have MTA saying buses are suspended. Subway service is being affected right now. They're saying that cars in Lower Manhattan during the parade time not allowed as well. Security extra tight too. 10,000 officers expected here, and that is the largest amount for a planned event ever. We're talking bigger than Times Square in New York City on New Year's Eve. So a lot going on. The excitement is here because it's been so long. It's been more than 5 decades since they've taken home a championship, and this is the first time they are getting a parade. They won the championship in 70 and 73, but this is their first parade. And also the excitement in New York because this is the first time we've had a ticker tape parade since 2024, and that's when the Liberty came down and we're able to walk down the Canyon of Heroes. So an exciting time. We're ready for it. I've been here with the Giants parade and the Yankees parade, but this one feels a little extra special, guys.
Absolutely. You know, you mentioned it's like Times Square on New Year's Eve, except that this time everyone who's jammed downtown is local. They're from the New York tri-state area as opposed to coming in from outside the U.S. There was a lot of controversy about the scheduling of this parade because a lot of the high school kids can't attend. They still have school, and the New York Regents test is scheduled for today.
Yeah, so the schedule, I believe it's a little loud here, but I'm trying to hear. I think what you're saying.
Yes.
So basically what it is right now, as far as subway service suspended in the area, MTA bus service suspended in the area right now, and no cars allowed in Lower Manhattan. That's the latest here, but we're still waiting, guys. I'm hearing the cheers come a little bit louder, so stay tuned. There's going to be a lot more coming out here.
All right, Lisa, thank you so much. Appreciate it. Getting loud down there in City Hall. Lisa Mateo, co-host of Bloomberg this weekend.
She got a good assignment.
She got it, and she's done it before, so she's a grizzled veteran of these ticker tape parades. Who knew?
Maybe she paid someone to stand in line for her so that she could get into City Hall Plaza pretty quickly.
She knows what she's doing. All right, we got stocks moving higher here today. Let's take a look at some of the stocks on the move today. We can do that with Christine Aquino. Christine, what are you looking at today?
All right, Paul, we got to take a look at MSG, of course, in honor of the Knicks parade. That stock was actually up earlier this morning, but now down for, get this, the 5th day in a row. You'd think that the championship would do well for MSG stocks, but that is not the case. It's currently down about 0.2%. But, you know, as we heard from Lisa, there's a lot of people still over there. Apparently, for the NYPD, they have 10,000 officers at the event, and that is the largest force to be deployed for a planned event in the New York City's history. And apparently, viewing areas were open as early as 6 a.m. I know this for a fact because as I was commuting in, there were people in Knicks gear trying to make their way into the city. It was closed by 8 a.m. Like, the pens were absolutely full. But so clearly the value of a Knicks championship very much on display today. But earlier this week, apparently, John Rogers from Ariel Investments spoke to Bloomberg TV's Romaine Bostick saying that maybe MSG should split into two companies because its share price at the moment does not reflect the value of the Knicks or the Rangers.
Yeah, and that was definitely something that the company has actually filed paperwork. So that's certainly a possibility. But then, of course, that raises questions about whether James Dolan might want to sell the Knicks. Probably not, given what just happened. Next up on your list of stocks.
All right, Scar, we got to take a look at Intel as well, ticker INTC. That shares are doing really well today, actually, extending gains, now up more than 8%, and that is after President Donald Trump said that it will work alongside Apple to design and produce semiconductors domestically. So the president mentioned this in a Truth Social post, did not provide details, but Apple has held exploratory discussions about using Intel and Samsung to produce the main processors for its devices in the U.S. And so for Intel CEO Lip Bhutan, it is crucial to find external customers for its chip production because that is key to the company's comeback plan.
All right, one more.
Let's take a look at SpaceX today, Paul. Again, down more than 6%, so down for a second day in a row after a whole week of trading. It is still on track to end the week about 35% above its IPO price of $135. And, you know, we know that SpaceX will be eligible to be added to the NASDAQ 100 index after 15 days of trading. So that could potentially be another boost to the shares, given that about 30% of its free float is set to be owned by passive investors. Here's a great quote from a story about SpaceX today from Michael Monahan from Founder Funds in Dallas. They got very comfortable owning the stock because they could see $200 billion of revenue in 2030, but literally and figuratively, you need a rocket to get to those revenues.
I like that. You came full circle, Christine. Thank you so much. Christine Aquino is our managing editor here for MLive. It is our Markets Live blog. You can check it out by typing MLIV Go on your Bloomberg terminal. And for more conversations like this, subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Stock Movers is available on Apple Podcasts, Spotify, or anywhere you listen. All right, let's talk about the markets because investors are cheering the fact that they're now seems to be some kind of peace agreement between the U.S. and Iran. Again, the details are still kind of vague. A lot of things are TBD, but it is moving oil prices. So let's bring in our next guest. David Kudla is founder and CEO of Mainstay Capital Management. And David, I'm looking at WTI now at $74 a barrel. It's been a kind of a pretty straight line down since about June 3rd or so. As long as oil prices keep coming down, investors are feeling better, aren't they?
Yeah, they are. First, we have this geopolitical risk that we believe with the MOU will diminish. Oil will make its way around the world to restock the global supply chain, so we don't have that, that worst case scenario of a global recession being sparked by this conflict in the Middle East and the Persian Gulf. And so we have essentially, with oil coming down, that also lessens inflation concerns. We heard about some of that yesterday. So this is there's some good news for the markets here, certainly over the past week or so, and we're seeing good rebound again today.
So focus, presumably back on some, I guess, more fundamentals like earnings and things like that. How are you thinking about that? How are you kind of charting out the path forward from today?
Yeah, if we look at the two factors that have most impacted the market this week, it's been this development with the Iran war and the MOU, which I believe and many believe the MOU is literally to get oil moving. Even Iranian oil has been sanctioned for years, and we've now heard from Kevin Warsh, the new Fed chair, on how he views inflation, how he views his monetary policy. We don't know what he's going to do or how he's going to do it, but he's made clear there's definitely a hawkish tilt now, and we saw that even in the votes for the FOMC meeting. So we have those two things that are impacting markets. When we come back to earnings, Paul, the earnings are spectacular. The best earnings we've had since the late 90s, 28.8% earnings growth for the first quarter. We expect that double-digit earnings growth to continue. Margins are incredible. So when we look at fundamentals, things look very good for this market. We've had expansion in stocks without any multiple expansion. It's just been that earnings are keeping up with the price that's been shooting up higher and higher.
So if you were to look for value, if you were to look for someplace where the price has not caught up with the valuations, price has not caught up with the fundamentals yet, the earnings picture yet, could you find one in the U.S. market?
You could. I mean, you could go, with the Iran war, there's been concern about industrials. They're concerned about anything that's economically sensitive, and that's really the same around the world. So with the risk, that external risk coming off, we've seen risk assets rally just incredibly well over the past week, and we still favor over value, over staples, or over consumer, the consumer defensives or defensive stocks. We still favor the AI trade. We have renewed vigor in our bullishness there, and emerging markets, whether it's Asia, Taiwan and South Korea, where it is part of the AI trade with chip manufacturers and so forth, or commodity producing countries. And so we're really still biased towards growth. Even though growth has come a long way, that's where the earnings are going to be going forward. That's where we want to be.
So, David, you've been in this business a long time. You've seen a lot of IPO cycles, a lot of big companies come to market. When you see the SpaceX IPO, just its sheer size is amazing. And then we've got filings from Anthropic and OpenAI. I mean, again, more mega billion-dollar IPOs. What does that tell you about this market, broadly defined?
I think there's a combination of things, right? There's that we have a good environment for an IPO to come to market. We saw that with SpaceX, probably doing better and continuing to do better than many had thought, doing up 20% on IPO day and now up even higher. The other two are down the road quite a way, but quite a ways. But I think it's a combination of that enthusiasm for the whole AI space and the space, the space, what's happening with SpaceX and the other stocks. So we're in a good IPO environment, and we're with industries that have a lot of future promise. So it's a good environment for these companies to be coming forward. SpaceX has been around a long time, and it's been a good decision to launch that IPO now.
I hear what you're saying. You're clearly feeling good about where things are with the economy, with the market, with valuations. But what are you concerned about? What worries you? What potentially keeps you up at night?
Inflation. That was our biggest worry. We knew we were going to get that print above 4%. We got 4.2%. And with the conflict in the Middle East, we had continuing pressure on inflation. AI, Kevin Warsh has made this argument that down the road, it will reduce costs. And that's really what we've seen with technology since the 1980s. We've had that technological revolution that created a disinflationary environment in the U.S. and other parts of the globe. We're going to see that with AI. But right now, because of the investment, because the energy demand, it's going to be driving inflation. So that's really our concern. That's where we could see some cracks in the market. But boy, if it's about fundamentals, we still are very constructive on stocks.
How about fixed income, David? What's the call there these days?
Yeah, we've stayed away from duration. We made that call in late last year. A lot of people are calling for rates to come down this year. Our forecast was for rates to go up. Now, certainly that's been exacerbated by the Iran war, by what's happened with oil. But we still see a inflationary environment for now, higher rates, not lower rates. And what's happened with the Fed? Let's just use the Fed as an indicator. They came into the year thinking they were going to cut rates sometime this year. Now there's no talk, especially yesterday, no talk about cutting. It's a matter of when they'll raise rates. So, we're still, staying ultra short, not ultra short bonds, but well, we're doing some of that, but ultra short on duration. We don't want the interest rate sensitivity. A little bit of a reprieve here today and this week with developments in Iran and the Middle East, but we're still concerned about bonds. We'd still rather go to a diversified commodity play to diversify the stocks in our portfolio rather than bonds. We just don't think bonds offer that great an opportunity, especially interest rate sensitive. You
might not like duration, but the companies that are issuing debt like a lot of duration. NVIDIA joining the debt issuance parade, selling investment grade debt for the first time in 5 years. How do you think about taking on some of that debt? It's not a credit risk in the same way that the companies adjacent to the AI trade are.
Right. It's high quality debt, or for the most part, higher quality debt. So it is going to be interest rate sensitive. But as far as, the financial engineering, if you want to call it that they're doing, makes total sense. The issue debt, buy stock back, invest. They're doing it all for the right reason. And that debt in terms of default risk, credit quality, it's a good place to be. We're just concerned, as we would be with treasuries and high quality bonds, are interest rate sensitive. And we're still a little bit concerned in that area. Although we have, with what's happening, if this is really the end of the Iran war, and I even question that, right?
Yeah.
This was about getting oil back on the market, even Iranian oil that's been sanctioned for years.
We got to leave it there. David Kudla is founder and CEO of Mainstay Capital Management. We are looking at a market that is in rally mode, with the S&P 500 up 0.9%, the Nasdaq Composite gaining 1.3%, recovering from yesterday's drop.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. A day after the Fed Wednesday sell-off, the Dow, the S&P, NASDAQ, all staging a comeback today. We got stocks higher across the board. This after a peace deal between the U.S. and Iran spurred optimism that a revival of the Strait of Hormuz will ease inflation risks. Those ships are moving. Right now we got oil lower, but the S&P pushing higher by 68, up 0.9%. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide, goldencrestmetals.com/guide. S&P up 68 to 74.87, up by about 0.9%. Dow Industrials up 170, up by 0.3. NASDAQ Composite Index up 321, up 1.2%. The Russell 2000 Index of small cap shares up 1.4%. Cannot ignore the move in the NASDAQ 100 Index, full of big tech names, up now by 2.1%. We've got the VIX just above 17. The SOX is surging 6.2% with a 10-year 4.42%, the 2-year 4.14%. Gold down 0.3%, 42.41 the ounce. West Texas Intermediate crude down 3.8%. WTI right now again at 73.86 a barrel. Brent 76.72, down by 3.6%. Oil majors lower across the board. ExxonMobil down 2.6%. Chevron shares down 2.1%. ConocoPhillips down 2.9%. And final trading day of a holiday shortened week for SpaceX, down again today, 2 in a row. Right now, SpaceX is lower by 7.2%. I'm Charlie Pellet, Scarlett and Paul. That's a Bloomberg Business Flash.
All right, thank you so much, Charlie. Live Golf is on a mission to raise capital, and this comes after Saudi Arabia's sovereign wealth fund said it will pull its funding from the golf league after infusing it with more than $5 billion in the first couple of years. Bloomberg Deals anchor Danny Berger and I spoke with Live Golf's CEO Scott O'Neill as he makes the rounds making his pitch to investors to raise $300 million.
We're talking to a combination of traditional private equity investors that invest in sports, talking to family offices, and a group that I would characterize as sports team owner billionaires. And they take place mostly in North America, a good healthy dose in the UK, and some in Europe, and then, of course, some in Asia, Australia, and South Africa.
What kind of rights are people demanding? What kind of stakes are they looking at? Just give me a sense of what the conversations look like and how they're shaping up.
You know, it's a really interesting dynamic in that we have billions of dollars of NOLs, net operating losses, that we believe we can carry forward with the business. And so that has us structuring the company in a very unique way. So we're spending a lot of time with investors really understanding how to best preserve those NOLs, which is, for me, you know, I love my way around a deal, and being able to work with the advisors we have and Ducera, our bank, has been quite an experience.
So it's not just a stake in the league that perhaps people are looking for. They might also have team-level investments that they could be looking to achieve.
Yes, absolutely. I'll just tell you a little story. Is when I was at Madison Square Garden, I was the president of Madison Square Garden. I started in 2008. You very well know what was happening in 2008 with the financial crisis. And the Knicks were valued around $600 million. The New York Rangers were valued about $400 million. And you look today, and there isn't a person on the planet that would value the New York Knicks under $10 billion.
Especially not now.
And not a person on the planet that would value the New York Rangers at under $4 billion. And you think about this growth in team valuation, and that's what we think is the economic engine to drive Live. So when you invest in the league, you also get stakes in all the teams.
I mean, Live also just... All right, let's go now to the White House, where Vice President J.D. Vance is speaking.
Second night in a row did not shoot at any ships in the Strait of Hormuz. So far, they are honoring their end of the commitment. And on the blockade, CENTCOM has allowed north of a dozen ships to go through our naval blockade, and so we're also honoring our end of the early part of the agreement. On the military side, a couple of things that are still true and will be true whether the Iranians comply with the rest of the deal or not. Number one, their nuclear program has been completely destroyed. Their capacity for enrichment, the facilities at which they were using to develop enrichment and develop a potential nuclear weapon, those facilities are still destroyed. Their conventional military is still destroyed. Their capacity to threaten their neighbors is still largely gone, and now we see whether they are willing to comply with the next step of the president's peace plan. As you all know, the part of the peace plan, the part of this MOU that I think have been most misrepresented by certain parts of the media is the idea that the Iranians get all these benefits. You will hear things about $300 billion or $24 billion or this or that number of money or amount of money. And the simple fact is that the only way the Iranians get any of those resources, not a single penny, by the way, from the United States of America under any circumstances, but the only way that they would ever get any benefit of the bargain is if they comply fully and change their behavior. And so you really have a win-win situation for the United States of America. If the Iranians don't change their behavior, their military and their nuclear program is still destroyed. If they do change their behavior, then they are going to have a transformative relationship with the Middle East, and the Middle East will have a transformative relationship with the people of Iran. That's a win for the American people and for the President of the United States, regardless of which option the Iranians ultimately choose. We obviously want them to choose the right option. The interesting thing about their system, and I think it's important for the American people to appreciate this point in particular, is that there are real divisions within their country about how exactly to proceed. And what we've seen over the last couple of months is that the pragmatists within the Iranian system, the people who really do want to transform their relationship with the Middle East and with the world, those people are winning the argument. The United States wants those people to win the argument. The United States wants to have a better relationship, but in order for that to happen, the Iranians have to perform. And if they don't perform, as we've said before, they don't get any of the benefits of the bargain. So what I'd ask all of you is just to report honestly that the United States isn't giving up a cent of money to Iran, and even the economic benefits, the sanctions relief and so forth that comes along with this bargain only happens if the Iranians perform. So with that, I want to say thanks to all of you. It's good to be with you this morning, and I'll kick it over to questions. Let's start right over here to the right.
Thank you, Mr. Vice President. I wanted to ask a follow-up on something you just mentioned. You talked about the possibility of the current Iranian leadership fundamentally changing their behavior. Do you think that the current Iranian leadership recognizes the leverage that the U.S. holds over itself economically and militarily enough to actually go forth with fundamentally changing their behavior over the long term and going about things differently?
So I certainly think they recognize the leverage that the United States has over them. We've seen that in a number of our conversations. We've seen that just in their behavior over the last couple of days. They certainly recognize that the United States has great leverage. Will that ultimately lead to a change in behavior? I don't know. I've seen skeptics of the deal. People say the Iranians will never change their behavior. Well, maybe that's true. And if so, they don't get any of the benefits of the bargain. But isn't it worth trying? Isn't it worth seeing whether this incredibly weakened position that the President of the United States has put the Iranians under, whether that motivates them to change their behavior, not just vis-a-vis the West, but vis-a-vis the Middle East? And one of the interesting things about this is, the technical details of this we can, of course, get into. There are going to be any number of opinions about the negotiation, about where it's ultimately going to go. But I tend to think that you should trust the people who know the Iranians the best and who have the most to lose. What are the Gulf Arab states saying about this deal? What are they saying about this deal compared to the JCPOA in 2015? This is the Obama nuclear deal. Well, back then, they hated that deal. They felt like it empowered the Iranians to be bad actors across the region, and of course, that's exactly what happened. They were right about that. What are they saying about the president's peace deal? They're saying this is an amazingly transformative thing for the region because either way, we and the broader region win. Iran is weakened, their nuclear program destroyed, their economy in desperate straits, and if they change their behavior, big things are going to happen for Iran and for the world. If they don't, no skin off our backs. Either way, we win, and that's the way the president has set up this deal and this negotiation.
Thank you, Mr. Vice President. Just a quick housekeeping question, which I think you answered in your cover, but did the 60-day period officially begin yesterday?
I would say the 60-day period officially started today. It was signed late, and it may have even been signed technically, because of the time shift. I think it signed technically today, Iran time. So yes, the deal started yesterday. We're going to start the 60-day clock today. Go ahead.
Can you help us understand President Trump's shift on his stance for Iran's ballistic missile program? Initially, it was a key objective to dismantle it. Yesterday, he said it would only be fair if they had some, if the countries around Iran also had some. So when and why did that change? And will the final agreement have any restrictions on these missiles?
So we destroyed a substantial number of their ballistic missiles and their ballistic missile launchers themselves. It's not just the bullets, but it's the actual gun. And that's what we were extremely effective at in destroying during the last 3 months of the campaign. All the president said yesterday is that, of course, countries don't give up the right of self-defense. Israel doesn't give up the right of self-defense if Hezbollah fires rockets or drones at Israel. The Iranians don't give up the right of self-defense in their country, but we do expect that as part of the final deal, they are not going to be able to build the kind of missiles that can broadly threaten the entire world. And that's what the President of the United States said yesterday. And look, I mean, it's very simple. You can't tell a country, whether Israel or Iran, they're not allowed to have any self-defense. That's not what the president has asked. That's not what the president has requested. But as part of the final deal, what we want to see is Iran not funding regional instability, funding regional terrorism, and of course trying to rebuild their nuclear weapons program. That's the main thing. The nuclear weapons program is destroyed. It is gone. If the Iranians decided tomorrow to build a nuclear weapon, they simply don't have the capacity in order to do that. What we're trying to ensure is they don't rebuild that capacity, not just a year from now, 2 years from now, but many, many years from now, so that our children never have to worry about a state sponsor of terrorism having a nuclear weapon.
Thank you, Mr. Vice President. You were just saying that you're hoping this deal would prevent Iran in the future from getting a nuclear weapon. But from what's been put out there of the MOU, I'm curious, how does the MOU reflect that in the future Iran will not, in fact, get a nuclear weapon? What's stopping them from down the road, to your point, rebuilding and restarting from where we were pre the war?
Well, number one, they would have to get a lot of money in order to rebuild the nuclear program. You're talking about billions and billions of nuclear infrastructure that the United States destroyed. In order for them to rebuild that program, they would have to get a lot of money. And we have them in an economic chokehold right now that we're not going to release until they fundamentally change their behavior. What would that look like? That would mean a real inspections regime. That would mean a real enforcement regime. As the MOU contemplates, that would mean the destruction of their enriched stockpile. All of these things are the sorts of steps you're going to take if you're serious about ending your nuclear weapons program. And that, again, is why I go back to this fundamental trade that's built into the deal. They need money to do anything. Their economy is in absolute dire straits. But in order for them to get any integration into the world economy, they're going to have to show us and verify for us that they are changing their behavior. And that's why the deal is set up in the way that it is. Go ahead.
President Trump said yesterday that he was going to blame you if the talks with Iran go sideways. Are you worried that he's going to make you the fall guy?
No, not at all. I mean, I think the president was joking, but as he often does. But no, I think, look, the entire team has worked very well on this, and we've got this thing to a very good place for the American people. Now, I have seen some progressive criticisms of me personally saying, what experience does the Vice President of the United States have with hostile, high-stakes negotiations? And I would point those progressive critics to the fact that just 2 days ago, I spent over an hour on The View. So I actually have great experience in very hostile negotiations. want to see is the Lebanese government, the elected representatives of the people of Lebanon, who are able to police southern Lebanon so that Hezbollah has not taken over the country, the Israelis are not threatened, and then consequently the Israelis are not attacking southern Lebanon or Beirut either. That's the plan there. You asked about the Iranian oil. Look, one of the interesting things that you've seen is that the Iranians have been completely unable to sell oil, not because of sanctions, but because of the blockade. Fundamentally, the thing that we have done here, the original, what we give, what they give, is that we said we're going to lift the blockade, we're going to allow you to sell some of your oil, and they're going to open the Strait of Hormuz. We see that process starting to work already. It's going to take a little time before it picks up fully, but that's where we are today. Go ahead.
Thank you, Mr. Vice President. The MOU, just on the Strait, the MOU guarantees these 60 days of toll-free passage, but after that, it has, of course, led to a regional dialogue with Oman and Iran deciding the future governance of the Strait. A senior U.S. official told us yesterday that they expect Iran to push aggressively on this, but also that Gulf states won't allow any kind of tolls. How strenuously will the U.S. fight to keep tolls out of the Strait and keep any fees away from the future Strait and commercial traffic? And are you going to leave it to the Gulf states to kind of fight this battle?
Well, first of all, we believe international waterways should be free of tolls, and that's been our position. That's what you see, of course, in the 60 days of the MOU. And when you say it leaves it open, it doesn't really leave it open, except in the sense that, of course, the final negotiation is going to set the terms of what comes afterwards, right? You said, I think that it's the Omanis and the Iranians, but it's actually the MOU contemplates that the Omanis, the Iranians, and the Gulf Coast Coalition together will figure out a proper security framework for the Straits in the future. And what I mean by that is that we don't ever want this to happen again. Right? That's not about tolling. That's about ensuring that the Straits are never used as a choke point for the global economy ever again. It's frankly not what the Iranians want. It's not what the Omanis want. It's not what the GCC wants either. So what we're going to do, of course, working with our allies in the region, is to ensure that that is reflected in the final deal. And if that's not reflected in the final deal, there's not going to be a final deal. And that is, I keep coming back to this fundamental structural point of this negotiation, which is that we have all the cards. If the Iranians want the benefits of the bargain, they have to give us the things that are necessary to get those benefits. Go ahead.
Thank you, Mr. Vice President.
We'll do both. Okay. Both you guys. There's one in the white and then one in, orange, I think.
What about the pink?
I'm sorry? Okay. Maybe I'm colorblind. It looks more orange to me. I don't want to have a debate about that. Orange, pinkish. You go first, and then in front of you can go second.
Thank you, Mr. Vice President. How does the points about granting some immediate waivers on sanctions, especially from the Treasury Department, how does that square with the Iran Nuclear Agreement Review Act? And are you planning on briefing Congress on this portion?
Yeah, so I talked to James Braid, our head of OLA. We do plan to brief Congress very soon. I believe that they got the formal copy of the signed document this morning, and if not, they're going to get it at some point later today. We are planning a briefing. I believe right now the House is out of session, the Senate is in session, though maybe I've reversed that. But we're going to ensure that the team briefs Congress and, of course, answers their questions. We've been doing that informally, of course, talking to a number of people in Congress just over the last week. We'll keep on doing that, and we'll have a formal briefing. I won't say exactly when that will be because it depends a little bit about session schedule. Your point about the sanctions is I'll go back to what I said earlier, which is really the choke point on Iranian oil was never the sanctions. We didn't see that as a major concession to the Iranians. Frankly, the Iranians didn't see that as a concession to them because what prevented them from selling oil was not the sanctions. They were selling plenty of oil without any discount because the sanctions were just fundamentally ineffective at that point. What the sanctions did do is move the Iranian financial system to sort of the shadow banking system. So by lifting the blockade, that's the significant thing that has changed. And by lifting the sanctions, we're actually going to be able to see a little bit where their financial system actually sends money and receives money. That's a real benefit to the American people. And that's really the only thing that has changed by the change in sanctions. Oh, sorry, I forgot that part of the question. No, we don't think so. We actually have an opinion from OLC we feel quite confident about that, Congress does, there are certain things that require congressional approval. There are certain things that don't require congressional approval. We feel quite confident that we can temporarily lift those sanctions without going to Congress and seeking their approval on that.
Apparently, there's been reports coming out of Israel that Iran is already funneling oil money to Hezbollah even before this particular MOU was signed. And how exactly is the U.S. looking at this? If we're talking about behavior on part of Iran, I mean, October 7th happened, and if there's concern that perhaps Hezbollah could end up doing some sort of attack on that scale, then, you know, how exactly are we talking about the reaction from the United States if we're talking about perhaps a humongous scale attack that actually could happen? Are we waiting for that type of attack? I mean, what exactly is a scale here?
Sorry, you said what exactly is a scale?
Yeah. Well, I mean, like, what type of attack would it take to actually get a reaction from the United States to say, okay, now we're actually going to start dropping bombs on Iran for having bad behavior?
Well, we don't want a scale of any attack. Any attack, whatever its scale, is unacceptable under this agreement. Now, you asked the question saying that oil money was flowing to Hezbollah before the MOU was signed, and it's one of the reasons why we are actually engaged in this process is to ensure that no money is flowing to Hezbollah. So it's interesting where people will say that the MOU is bad because the MOU produces consequences that were actually happening well before the MOU was signed. That's not a reflection on the MOU. That's a reflection of why we need the MOU to ensure that we have the regional peace and stability that we need. Now, what I would say to some of the critics of the deal that I've heard that will say, well, Iran's going to get all this benefit. I'll repeat what I've said, and I'm probably going to have to repeat it a number of times, is what is the benefit that the Iranians get that they didn't have before? And the answer is nothing. They don't get anything unless they change their behavior. If they change their behavior, that is a thing to celebrate. That's going to transform the Middle East for a generation. If they don't change their behavior, they don't get the benefit of the bargain. And I think, I got to be honest, I think fundamentally this idea that, and it's a misrepresentation of the MOU, this idea that the Iranians get all these benefits before the deal is actually consummated. The idea that they get benefits before they change their behavior is fundamentally a talking point that is issued by people who want the conflict to continue indefinitely, despite the fact that that's not good for the American people and it's not good for the region. Way in the back. All the way back in the red.
Thank you so much, Mr. Vice President.
Mr. Vice President.
Red here, you mean? Are you red?
We'll do, okay, sorry.
Thank you. I'm wearing bright red.
So many people are wearing red. You can go first. Kara, right?
Thank you, Kara.
Okay, and then next after that.
Okay, great. Could you highlight the major differences between this deal and President Obama's deal in 2015 and why the administration believes that this deal is superior? And second, Mr. Vice President, President Trump has been vocal lately about his disapproval for Bibi Netanyahu's attacks on Lebanon. Has the administration spoken to Bibi Netanyahu directly about the president's concerns recently, and what is the feedback from Israel?
Yeah, so we speak to Bibi or speak to somebody in the Israeli government, just as we speak to the Gulf Coast Coalition, our regional partners, pretty much every day, at least at some high level of our government. Look, the president's been very clear. He does not withdraw from Israel. No one could withdraw from another country the right of self-defense. Israel has the right to defend itself. But fundamentally, the Israelis, just like everybody else, have to respect this peace process that is fundamentally good for them and good for the entire region. What the president gets grown frustrated sometimes is that we seem to be right on the cusp of a major breakthrough in the agreement, and then all of a sudden there's a major explosion that goes off in a civilian population center in Beirut, and a lot of people who have nothing to do with Hezbollah lose their lives. That's not acceptable. That's the sort of thing that we've asked for closer coordination so that we ensure it doesn't happen. And our message to the Israelis, just as our message to everybody else, is fundamentally, we want this peace process to be good for you. We do not want Hezbollah attacking Israel, but in order to ensure that that happens, we have got to actually build the kind of regional framework that can cut off the money to Hezbollah, cut off Iranian support for Hezbollah, and also ensure that Lebanon's territorial sovereignty is respected by all parties. And the difference between the two agreements. So first of all, the two big differences are not even in the substance of the deal itself, but something I said earlier are, number one, the Gulf Coast Coalition loves this deal because they think that it makes Iran weaker. They hated the Obama deal because they thought that it made Iran stronger. They know more about this, and they have more to lose than anybody, including the United States of America, so I trust their judgment. The second thing is where the deal came from. You have to remember, in 2015, Iran had built a sophisticated nuclear weapons program with a nuclear weapons stockpile. So the perspective that we came at as the United States was, you already have a really nice nuclear program. We're going to bribe you with American money in order to stop it. Our perspective and where we're coming at it is, we already destroyed your nuclear program. And so if you promise and show verifiable pathways to not rebuild it, then we're willing to give you some sanctions relief and things like that. So it's a fundamentally different perspective. Now, there are all these substantive differences as well. The Obama nuclear deal allowed enrichment. Ours will not. The Obama deal allowed the accumulation of stockpiled weapons-grade material. Ours is actually leading to the destruction of that stockpile of enriched material. So there are many differences. The Obama deal gave them over $1 billion of American money. This deal gives them $0 of American money. So a lot of substantive differences, but I think the most important differences are where we're coming at it from a position of strength and the fact that our Gulf Coast partners love this deal. No, sorry. I said the other, all the way in the back. Thank you.
Margaret with the Daily Wire. The president has said that if Iran doesn't behave themselves, we're going to resume military action. So what is the red line for what Iran can do before they cross that red line and we do resume military action?
Well, it's going to be a holistic approach where we look at their behavior. Are they funding terrorism? Are they leading to attacks of other people? Are they trying to get centrifuges to redevelop their nuclear weapons program? There are all these questions that we're going to ask about whether they've actually changed their behavior. Do they allow the inspectors in as they have promised that they would do, or do they refuse to allow those inspectors in? A whole host of things we're going to see. We're working towards a very successful resolution of this process. But again, it takes two to tango. And what the president's just saying is that we maintain economic, diplomatic, and military leverage that nobody else in the world has. So if the Iranians want to change, great. We're going to help them. If they don't change, we still got all the cards. Thank you. Yeah. Oh, sorry. In the blue jacket. Yep.
This one right here. This one right here, Mr. Vice President.
That's a Navy jacket. Should we have a debate about the difference between blue and Navy? Not that guy, because you give a speech whenever you ask a question. I'm going to give her an opportunity.
Sir, have you seen the Pope's reaction to this?
Hold on.
There's been a lot of frustration among
Guys, you're speaking over the person who's asking the question.
There's been a lot of frustrations with Americans, particularly about the gas prices. You touted the fact that they're coming down. The president has gone on True Social touting this. But when should they expect to see gas reach that $3 threshold?
Well, I'm not an economist, and I think even the economists would get this wrong, but the fact that you've seen gas come down about 65 cents a gallon on the national average, and the fact that you see oil prices that are basically close to where they were at the very beginning of the conflict, I think you're going to see a substantial reduction in gas prices. I'm not going to predict the exact price. If I was able to do that, I might be in a different business than politics. But we do think you're going to see significant relief at the pump on top of what we've already seen.
Thank you, Mr. Vice President. You keep saying that Iran will only reap economic rewards if they comply and change their behavior. But under this deal, they are being allowed now to sell their oil freely. Again, how is that not a financial benefit? And they're being allowed to do that without making any new concrete nuclear commitments. So can you explain how is that not lopsided?
Well, first of all, they've made very concrete nuclear commitments. They have committed to the destruction of the highly enriched stockpile that they have in their possession. But number two, all we've done is lift the blockade in the Straits of Hormuz. We basically returned it to where it was before the conflict. The blockade is off. We put that in after the conflict started. The straits are now open. That's not a new benefit to the Iranians. They were selling oil for many, many years, well before we ever put the blockade. We opposed that blockade. They stopped selling oil, and now we've lifted the blockade in order to promote the free flow of energy across the world. Go ahead.
A U.S. official described having secured some of these quote-unquote gentlemen's agreements with Iran on certain aspects of the negotiation. So when it comes to highly enriched uranium, can you walk us through what's been secured, even in these kind of gentlemen's agreements, on how exactly they're going to get rid of the stockpile? Are there agreements on low-grade enrichment? How long is the moratorium on enriching uranium for Iran? And are any of these gentlemen's agreements written down anywhere?
So some of them are written down, but fundamentally, whether they're written down or spoken, this is why we structured the deal that we did, because we don't trust words. We trust action, and we trust conduct. And so we're going to reward conduct, and we're not going to reward any words, whether they're written on a sheet of paper or not. There's a lot of discussion, the MOU, the gentleman's agreements, the final deal. words don't matter, ladies and gentlemen. We're about verification. And so what we're going to do is to say, if they do the things that they have promised to do, they have promised not to enrich. They have promised that they would allow inspectors in to destroy that highly enriched stockpile, and then, of course, it's not usable anymore. You take it somewhere else. They promised a number of things, and that's why the deal contemplates a number of benefits if they do those things. But it doesn't do anything if they don't actually meet those promises. Go ahead.
Follow up on that, sir.
Go ahead.
If they don't follow through with their commitment, will the U.S. go back to imposing sanctions and the blockade, or does Iran get to keep some of the concessions that it has already secured?
Well, first of all, the sanctions are still on, with the exception of the oil sanctions, which I talked about were no longer effective. The purpose of the oil sanctions is to drive down how much Iran is charging for a barrel of oil. Those sanctions had stopped being effective. The blockade is what's effective. And again, that's the thing that has changed in accordance with them opening the Strait of Hormuz. No sanctions will come off unless they perform the benefit of the bargain, and every sanction will come back on. Like hypothetically, let's say 2 years down the road, they've done what we need to see on the nuclear program, and we release the sanctions as the deal contemplates. Then they decide they're going to start rebuilding the nuclear program. Then, of course, those sanctions are going to come back on. And that's why it's really kind of like a dial. As they dial up their good behavior, we can dial up the economic relief. If they dial down their good behavior, we can turn it off. It's the good thing about having the leverage, and it's a good thing about being the United States of America, where we just fundamentally have so much influence in the world financial system. Go ahead.
Thank you, Mr. Vice President. Thank you, Mr. Vice President. Leader Thune said it's unrealistic to get the Save America Act passed by attaching it to FISA, which is what the president's looking for. Do you believe this is possible?
Well, why don't we try? Why don't we try and at least force people to vote against it? One of the things that sometimes frustrates me about the legislative process is that people will go into it saying, this isn't possible, therefore we're not even going to try. Well, let's actually see. Let's try it. And if it's not possible, then let the people put their name on it. This is also good for the American people. How many American senators know that the American people love the Save America Act because they believe in voter ID? But how many of those same senators don't want to vote for it because they know that the radical elements within their own party would punish them for it? Let people go on the record and actually answer to the American people, which is why I think we should do exactly as the president said. Rob. Rob.
Thank you very much. On Monday, we were told the MOU will be published within 48 hours. The president then said after Friday. You, I think, then said by Friday, and then it ended up being read out on a briefing call yesterday. We were told the MOU had been signed electronically on Sunday. There was an Axios report that it hadn't been. There's going to be a signing ceremony on Friday, and then it signed at Versailles last night. Is what's going on behind the scenes as chaotic as your public messaging?
Well, I don't think our public messaging has been chaotic. I think dealing with a fractured Iranian system where communication isn't great is just sometimes something that we don't fully appreciate or we don't fully understand. What really happened here is that we did sign the MOU on Sunday. That locked into the terms of the deal. What the Iranians came to us and said is, we'd like not to release the text until Friday. I didn't really understand that. I wanted to get the text out immediately. But in order to be accommodating to them, we said, sure, okay, we'll wait until Friday. And then what happened over Monday, Tuesday, the president was in G7, maybe foreign leaders were talking to the Iranians and encouraging them to do that. We were definitely saying to them, we understand your desire not to have the text out until Friday, but we live in a democratic system. The American people want to see the text of this deal. We would certainly like to get it out as soon as possible. And so they came up with having their president sign it, our president sign it, and then just releasing the text as a signed document immediately at that point. I do wonder, Rob, this is pure conjecture, I'm just guessing at this. I wonder if part of it is that they wanted to have a Persian translation, a Farsi translation that they felt good about. And then, of course, once they translate it into Farsi, our State Department has to confirm that the Farsi translation matches the meaning of the English. I think that is part of what was going on here. But the text is out there now. We said that we would be transparent about it. But the reason why it went back and forth a little bit about when exactly the text would be released is just we were trying to show good faith to the Iranians, who, for reasons I have no idea, cared a lot about how the text itself was rolled out. Blue tie there.
Thank you very much. Thank you very much, Mr. Vice President.
President. As you know, because you were involved in this process, the MOU allows for Iran to sell its oil right away, which means that Iran can take in on a monthly basis tens of millions of dollars. Iran's economy was in tatters. How is this not essentially giving a lifeline to Iran economically? And what's to prevent Iran from using all of that money, all of those millions of dollars, to prop up its proxies in the region?
Well, the number one thing is that we actually see where the money moves now because of what we've done with the financial sanctions. We actually know where the money is going to move. And so we have great confidence that we're going to be able to see if they try to fund terrorist organizations, we're going to be able to see that. But you said that millions of dollars is a lifeline. Right now, the Iranian nation is a nation of 94 million people. Their economy is in a free fall. They have sky-high inflation, and fundamentally, about $1 trillion of damage to their industrial base was caused over the last 3 months. The idea that selling a few $1 million worth of or a few $1 million worth of oil is going to fundamentally transform the Iranian economy, that's just not true. We thought that it would be good in order to lift the blockade and open the Straits of Hormuz to allow the free flow of energy. We felt that it was reasonable that if we're going to allow everybody else to sell their energy during this period of negotiation, we would allow everyone to sell their energy. That's all we're doing. We can slap everything right back on if the Iranians don't make the deal that we expect. Yeah. Either one. Yeah. Guys, how about both of you? Go ahead.
Mr. Vice President, so President Trump said we'll finish one, talking about Iran. And he said, then Cuba is next. Is Cuba next? And also on Colombia, Mr. Vice President, he has mentioned Colombia 3 times this week. Why is it so important, the election day in Colombia for President Trump?
You guys have to ask Marco about Cuba. That's not... Look, our view, go ahead in a second, but let me just actually answer this guy's question. Fundamentally in Cuba, it is a system that hasn't worked. They can't make any money. Their economy is, frankly, probably in worse shape than the Iranian economy. It's 90 miles from our shore, so every time that there's a crisis, you end up having desperate refugees or desperate, people who can't feed their families trying to flood into our country. We want the people of Cuba to be happy and successful. We're actually talking to the Cuban government right now about how they could change their ways to change that. We're going to see what they do, and obviously, if they do one thing, we're going to do something. If they make smart decisions, we're going to have a much better relationship with that island. Go ahead.
Mr. Vice President, thank you so much. I know that you are still not sure if you are going to run for president in 2028, but if you do not, is there anyone in particular that you would want to see run?
What's your name?
Stephen Kapuska, sir.
I want Stephen Kapuska to run for president in 2028. Go ahead. Go ahead.
Thank you, Vice President Vance. I've got 2 questions. Could you describe the status of your Switzerland trip? Are you definitely still going? What are your plans? And also, if we could drill down on frozen funds. There's been a lot of focus on oil sanctions, but on frozen funds, what's your understanding of how much money is frozen? How much of that is in the U.S.? And a senior administration official briefed some of us reporters earlier this week that there might be small antes, is what he said, like small releases of money to build trust with the Iranians early on. Could you describe that whole situation?
So on the frozen funds, the amount of money, I honestly don't know. I've heard numbers north of $100 billion. I've actually heard numbers north of $200 billion. Most of it is not in United States accounts. Most of it's either in the Gulf or in Europe or somewhere else. But I don't know the exact amount of money. It's a lot. It's one of the reasons why we've had such a successful chokehold on the Iranian economy, though by not even close to the main reason. We're not releasing a single dollar of that money until the Iranians perform. And there are a number of ways they could perform. For example, let's say they actually take meaningful steps, and this could happen very quickly, to destroy that stockpile of enriched material, then we're going to have a conversation about it. But they have to perform. I've seen some reports, I don't know where this came from, that the Qataris had released billions of dollars in Iranian assets. That's just not true. It would be impossible for the Qataris to do that without our buy-in and certainly without us seeing it. So a lot of this reporting is just fundamentally wrong. They don't get a dollar of unfrozen assets, their money, not our money, but but they don't get $1 of unfrozen assets until they actually perform under the deal. You asked about Switzerland. Our plan is to go to Switzerland. I don't know exactly when. The way that we're setting up this technical negotiation is that obviously you're going to have the political leadership involved. Excuse me. We're going to have people on the ground actually driving the technical talks, the nuclear talks. How do you destroy this highly enriched uranium? All that stuff that you really just have to get into the nitty gritty on. So, I plan to go to Switzerland. Exactly when, we think these technical negotiations are going to start sometime this weekend. That's still the plan, but that could change because it's not an easy country, Iran, to get out of. And so we're trying to figure out exactly when that's going to happen. I suspect this weekend, but I'm not sure. I may, it just depends on exactly when the Iranians can get there. We're trying to figure that out as we speak. But again, I suspect it will happen this weekend. We're going to find out exactly whenever the coming days. Go ahead, babe.
Well, thank you so much, Mr. Vice President. Just two questions for you. To follow up on an earlier question, Secretary Rubio said in March that the goal of this war was to, quote, to eliminate the threat of Iran's short-range ballistic missiles. You just said earlier that the military program is destroyed. U.S. intelligence estimates that Iran still retains roughly 70% of its pre-war ballistic and cruise missile stockpile. So when did the administration decide to abandon that part of the original mission? And then just second as well, moving forward, are you leading the U.S. team moving forward in terms of the negotiations? How involved will you be?
Yeah, so I'm certainly planning to lead the U.S. negotiating team. But on the first question, you talked about an intelligence report that was anonymously leaked to a reporter that was not with context and that, frankly, is not accurate. What has changed about the Iranian ballistics missile program is it matters much less the number of missiles they have, the number of bullets. What matters much more is the number of launchers they have, and importantly, the teams on the ground that have the capacity to launch those missiles. Their ability to launch missiles has been substantially degraded. Is it zero? No, but it's substantially degraded, and in that sense, we haven't abandoned the mission. We have accomplished that particular part of the mission. If you look at the Gulf Arab allies, and obviously the Israelis who faced a lot, the two of them together faced a brunt of these missile attacks, each of them feels substantially safer today from the Iranian missile threat than they did before. Obviously, that is something that we would like to continue. All the president said yesterday is that you can't expect any country to give up its right of self-defense. You have to have parity, and that's what the president of the United States was talking about. Go ahead. No, guys. Yeah.
Leo's reaction to the MOU, the Memorandum of Understanding.
I have it. What did he say?
All right, okay. Well, I'll give you the short version. Sir.
Yeah, sorry.
Okay. He said.
Go ahead. After you.
I'll give you the short version. All right. He says he welcomes the agreement between the U.S. and Iran. He says it hopes it will help strengthen mutual trust, security, and stability in the Middle East. And he also hopes that it's truly a solution to the war and that the war is really over. What do you say to the Pope, sir?
My response to that is praise Jesus. I'm glad that the Pope has positive things to say about our MOU. I think that the Pope is fundamentally accurate, and it's going to be good for the entire world. But we got to keep working at it to make sure that the Iranians honor the commitments that they've made. And then yes, you in front. Go ahead. Guys, the thing is, there's so many people in here. I could say the red tie, and then 9 of you start shouting at us. The burgundy tie.
The MOU calls for
There we go, that guy.
Yeah, sorry. Thank you. The MOU calls for a U.S. troop withdrawal from the Gulf region tied to the final deal. Can you say whether the drawdown will affect U.S. forces past Iraq and Syria, where American troops currently help protect Kurdish-held areas from Iranian-backed militias?
Okay, so the drawdown contemplated, again, this is the final deal. This is assuming that the Iranians comply, that they give us verification, that they take real substantial conduct towards this peace agreement. What we're saying is that we will withdraw troops to the pre-conflict level, meaning we're not going to keep a couple of extra aircraft carrier groups over there. The Iranians don't want that. Frankly, we don't want that either. Go ahead. Yeah.
Going to be funding that $300 billion fund. Who exactly is funding that? Is it private companies? And I also noticed that your voice is hoarse. Are you sick? Have you been using your voice a lot?
Well, I've been on a bit of a book tour the past couple of days, but I can't promote my book here in the White House press briefing room. I had a cold about a week ago. That and talking a lot about this deal and talking a lot about the book, I'm definitely a little bit hoarse. But you asked, your first question was about
is funding that $300 billion.
Oh, I see. So what's interesting about this is there is a great desire from the Arab world and from outside the Arab world to actually get involved in Iran if they behave properly. So, for example, let's say the United Arab Emirates, who've been a great ally over the last, not just few months, but over the last many years, let's say that they would like to invest in building a power plant. That actually is impossible right now because of the way that U.S. sanctions work. And so what we're saying is that if you behave, and if the Emiratis themselves want to build a power plant, then we will do the sanctions relief necessary to make that possible. The good thing about that is that it actually creates integration, which is leverage. A world where the Gulf Coast Coalition has greater leverage into the Iranian economy is a world where the Iranians are going to be heavily prevented from misbehaving. So it's a lot of the Gulf Coast Coalition, again, they see that Iran is weakened, they see there's an opportunity to build a new relationship there, and they're saying if they behave, and if the United States is willing to allow this to happen, then absolutely we want to change our relationship with Iran. No, well, I mean, I assume that in the United Arab Emirates there would be private money and so forth that would be part of this. But again, this is so far in advance because it assumes a transformation in Iranian behavior. Sir.
Thank you so much, Mr. Vice President. As you know, the Iranian-backed groups in the region were involved in this war, and they damaged U.S. facilities and your allies as well. How does this agreement affect Iran-backed groups across the region, especially the Iranian-backed groups in Iraq? And my second question, this agreement requires Iran to stop attacking the Kurdish opposition in Kurdistan region, which they did 2 days ago.
So what this agreement does fundamentally is it requires Iran to behave like a normal country. And if it doesn't, as so many people think that it never will, then it doesn't get any of the economic benefits. And if they do, then that's a great thing for everybody. It's a great thing for the Kurds. It's a great thing for anybody who has been under the brunt or under the threat of Iranian-funded terrorist organizations. The expectation is that Iran will stop that, and if they don't get the benefits of the bargain. John.
Thank you, Mr. Vice President. Many of the colleagues that you served with in the U.S. Senate and Republican conference have criticized this deal over the last 24 hours. What is your message, Mr. Vice President, back to them?
So I guess I would say to anybody, any of the critics, is number one, have a little bit of faith in the President of the United States. The idea that he is going to strike a deal that's been bad for the American people, it's preposterous. He is the person who has had the courage to fundamentally transform our relationship with Iran and with a lot of other countries over the last year and a half. He believes in this deal. He is going to see it to completion, and if the Iranians don't comply, we still have every single tool and point of leverage that we have today. That'd be message number one, is have a little faith in the president's ability, given that he's got us this far, to take us the final step. The second thing that I would say is so many of what I've read or heard that people believe about this deal is just fundamentally untrue. It is a memorandum of understanding. It is fundamentally a principle that, yes, the Straits of Hormuz are going to be open immediately, and they already are. Yes, they're going to give up their highly enriched material, but they've got to actually do it. It's about conduct. It's about rewarding good conduct and punishing bad conduct, which in some ways is what we've been doing for the last 3 months vis-a-vis that country anyway. So many of the criticisms, I saw Lindsey Graham came out with a positive statement after expressing some concerns. I think that when people get to understand not just the agreement, but our negotiating posture as a country, they will realize this is an excellent thing for the American people, but that's part of our job. We've got to tell the story about what this means for Americans, how it's going to make all of us safer and more prosperous. That's why I'm here talking to everybody, and we're going to keep on telling that story in the days and weeks to come. Go ahead.
Thank you, sir. Jordan Conradson with Gateway Pundit. I want to talk back to the Lebanon component of the deal. There's a report in Axios that Netanyahu's fuming over this. Israel doesn't feel bound to the MOU as it relates to Lebanon. If, as you mentioned in your frustration with Israel striking in Beirut, hitting apartment buildings, if that continues, could it torpedo the deal? And what would the U.S.'s response be to a broader war in Lebanon involving Israel and Hezbollah?
Yeah, well, I don't want to get into hypotheticals that could torpedo the deal, because I think the president's expectation is that all of our friends, the Israelis, the Arabs in the region, we're going to work together and actually see this deal to completion. Now, I saw the Axios report, that Netanyahu is fuming. That's not reflective of the conversations that I've had with him, but maybe he's saying something to somebody else that he's not saying to me. What I will say, and this does bother me, is that you've seen people within Bibi's cabinet who have come out and attacked the deal, and in some ways very personally attacked the President of the United States. And I guess my message to them would be twofold. Number one, Donald J. Trump is the only head of state in the entire world who is sympathetic to the nation of Israel at this moment in time. And he happens to be the head of state of the world's superpower. If I was in the cabinet of the Israeli government, I might not be attacking the only powerful ally that I have anywhere left in the entire world. And the second message I would give to some of those cabinet members, Bibi, to his credit, has not gone down this path, but to some of these cabinet members in Israel who are attacking the President of the United States, the other thing that I would say is that over the last 3 months, 2/3 of the defensive weapons that have protected your homeland have been built by American hands and paid for by American tax dollars. The problem for Israel is not Donald J. Trump. And anybody in Israel who thinks their biggest problem is the President of the United States needs to wake up and smell the reality of the situation that country is in. Thank you all.
What have you learned about going to war against Iran?
All right, there you have it. Vice President J.D. Vance holding forth in the briefing room for an extended conversation with reporters talking about the Memorandum of Understanding with Iran, which President Trump signed last evening at Versailles. Welcome to the Thursday edition of Balance of Power. I'm Joe Matthew in Washington. We've been watching and listening along with you, with the Vice President of the United States saying that they can temporarily lift sanctions against Iran without Congress. And when asked what is stopping Iran from rebuilding its nuclear program, he said they'd have a lot of money in order to rebuild. We have them in an economic chokehold. He said a lot more, including the fact that he may well, in fact, be going to Switzerland. It is unclear, in fact, if and when exactly that's going to happen. He was asked as well about President Trump blaming him in advance for what could be a poor deal. He said the president was joking. We're going to be talking in just a moment with Christina Ruffini as well. Colonel Wayne Sanders is going to join us as we break down everything we just heard and what we know about the contents of this deal and the path forward. But we start, as always, with a look at Wall Street. Charlie Pellet has that for us at World Headquarters in New York. The Thursday trade, Charlie, what do we have?
Right now, we got stocks higher, oil lower. Do want to begin with SpaceX because it is at the low of the session right now. SpaceX down for a second day. Right now, we got SpaceX lower by 9.6%. Bottom line, though, stocks higher. S&P 500 index staging a comeback after yesterday's sell-off. The S&P up 71 right now, 74.91 where we stand, up by 1%. Dow Industrials up 159, up 0.3%. NASDAQ Composite Index up 339 right now, up 1.3%. NASDAQ 100 Index full of big tech names. That index up 660 points, up by 2.2%. All of this is the SOX, the Philadelphia Stock Exchange Semiconductor Index, surges 6.4%. Intel having a lot to do with that today. Intel up by 9.8%. The VIX back below 17, and a 10-year at 4.43%. Gold down $28 the ounce, down 0.7%. A slump in crude, WTI below 75 a barrel, down another 2.5%. Barrel of Brent 77.81, down by 2.2%. Oil futures and retail gasoline prices falling today. Oil majors down. ExxonMobil is dropping 2.7%. Chevron down 2.5%. ConocoPhillips down by 3%. So again, recapping here, S&P 500 index up by 1%. We do have the VIX below 17 and the 10-year 4.44%. And Joe Matthew, that is a Bloomberg Business Flash.
All right, Charlie, thanks so much. In the fishbowl live at World Headquarters in New York, the voice of Wall Street and the New York subway. Listen for Charlie if you're taking the subway home from the big parade. He's the guy telling you what to do. He'll be back, by the way, in just a couple of minutes as we keep tabs on the Thursday trade. Looking pretty good so far, right? Up 1% on the broader indexes here. And oil prices are lower because, hey, we signed the deal. Did you see the pictures of Donald Trump at Versailles? He signed a treaty at Versailles. Who wants to tell him? Beyond that, the market feels pretty good about it. $75 crude WTI, $78 Brent. We're heading lower and everything is going to be fine. Although some of the forecasts that we're looking here might make you think otherwise. Goldman Sachs says only about 70% flows going through the strait may recover to only 70% of their pre-war level. The normalization in Gulf exports to pre-war levels might be achieved with a 13 million barrel a day increase in Hormuz flows. But that's not getting back to where we were. By the way, crude was at $67 a barrel before the war started, if you're still playing along on your home game. And Bloomberg Intelligence is making a pretty similar stab at what's going to be happening in the Straits. Although, look, we've got the big headline the White House was hoping for today. Gas back below $4 a gallon. And by that, I mean $3.99. Although I filled up for $3.79 here in Northern Virginia just a couple of days ago. So much of the nation has a 3 handle once again, and we're just all going to go spend our money on a long weekend. That would be a best case scenario. But of course, we're just starting now a 60-day turn on negotiations that will likely include, we are told, Iran's nuclear program. And all this will be based on Iran's behavior. J.D. Vance just said it again there. Are we calling this the Vance peace agreement? Here's what he said in the briefing room a short time ago.
If the Iranians don't change their behavior, their military and their nuclear program is still destroyed. If they do change their behavior, then they are going to have a transformative relationship with the Middle East, and the Middle East will have a transformative relationship with the people of Iran. That's a win for the American people and for the President of the United States, regardless of which option the Iranians ultimately choose.
Of course, it depends who you talk to. Some do think it's a win. What could be wrong with peace? But even a lot of Republican senators are criticizing the contents of this deal. Look no further than Ted Cruz, Lindsey Graham. I could go on. Bill Cassidy, anyone? So we thought we would get real with 2 of the smartest analysts we have on this story. Having covered the State Department for many years, my good friend Christina Ruffini is here, the co-host of Bloomberg This Weekend. And our buddy Colonel Wayne Sanders, military analyst, senior defense analyst, Bloomberg Intelligence, is here as well. Great to see both of you. I want to say happy Friday, but Christina's got to work the weekend, and that wouldn't be right.
No, this is my Tuesday.
Weekend, right,
don't even start wishing me a happy weekend.
It's Tuesday. I know. I won't do that to you. So let's get down to what's important to you, Christina Ruffini. J.D. Vance had a lot of tough questions to answer, and a lot of them have been spawned from those Republicans I just mentioned. Again, though, this is just the MOU. How different could a deal look following 60 days?
Well, that was the interesting part, because if you take J.D. Vance at his word, the difference between the MOU and what he and the White House are aspiring to get accomplished in a final deal is the difference of why this conflict has endured this long. The chasm there is enormous. When he was asked about these things, that the language in the, the 13, 14-point memorandum, our colleagues at Bloomberg did a very interesting analysis going through each point and whether or not it favors the U.S. or Iran. 2 of them are neutral. 1 favors the U.S., and that's that Iran reaffirms it shall not procure or develop nuclear weapons, something that was already in the JCPOA, the previous agreement. The rest of them all tend to favor Iran as this was presented initially. So what you heard from Vance was kind of a pushback in trying to talk about all those issues that Republicans, Democrats, and people kind of around the world have been criticizing this agreement for. One of the things he said that stood out to me was, our Gulf allies are really excited about this new deal. So I texted a senior diplomat in the region and I said, hey, J.D. Vance says you're really excited about this. The response I got back was a little sarcastic. Oh boy, are we excited. Because one of the things that Gulf allies are so concerned about is one of the things that is not in the 14 points written out, but the vice president was asked about, and that's ballistic missiles, right? The vice president was saying, you had that very strange comment from President Trump in France saying, well, we're not gonna, other people have them, the Saudis have them, we can't tell Iran that they can't have them. That's exactly what we were saying we were going to do at the start of this war from a U.S. perspective. So Vance was asked about that, and he said, well, countries have the right to self-defend, but, we've taken out a lot of the bullets. What's important is we've taken out a lot of the launchers, so they have fewer launchers, so they're less effective than they were. But it was a lot of finagling this argument and a lot of saying that what is on the page, as far as I can tell, is mostly irrelevant because where they're trying to get to is so much more stringent, and Iran would have to agree to so many more things that are not in this MOU.
All right, that was a nice setup. You heard what President Trump said. We were live right at this time yesterday at the G7 when he was asked about the ballistic missiles. Remember, there was one Sunday morning, Marco Rubio, everybody went out and said, look, yeah, the nukes are one thing, but it's about the ballistic missile shield. That's the urgency. Fast forward to yesterday. Here's the president.
It's a little bit unfair for them not to have some. A ballistic missile is not the same thing as what we're talking about when we talk nuclear. But if Saudi Arabia and Qatar, and they all have some, I would say in relative proportion, I think it's okay. That's what I mean.
Looks like the missiles are all right, Colonel Wayne Sanders. What does that tell us about the posture that U.S. forces need to maintain here in the near term?
Yeah, I think one of the biggest pieces here that a lot of people need to understand is when you talk about short-range ballistic missiles, even medium-range ballistic missiles, in that capacity, it's very, very difficult for the intelligence community to ever say that somebody, any type of nation state, is actually out of that capability, right? So what you don't want to do is come on national television and tell everybody, hey, they don't have any, so we're totally fine at this point in time. We know they still have Fatah 110, short-range ballistic missiles. That's pretty much what you've seen fired at UAE, Kuwait, and everyone else at this point in time. And but partnering that together, as Christina was talking about too, is part of the nuclear deal as well. Entering this conflict was not only taking down a large portion of that missile stockpile, but it's also then the nuclear capability. When you're trying to reach that 90% enriched uranium weapons grade piece, now you actually have additional range and the delivery mechanism to be able to do that. We saw once the Diego Garcia targeting that showed us that Iran had additional range, but beyond what we originally thought. So these are all parts of the piece, especially on the military side of the house, that comes into that decision calculus and say, how much do they have? How much do we expect them to have? And then also, what is their production rate? So when you start looking at what are they going to do over the next 60 days to capitulate some of this, is going to be one of those key pieces. Vice President Vance also brought up the, they asked him about the report about 70% stockpiles remaining in Iran. First off, based off the amount that Iran had at the beginning of this, even based off of what they expended, they would have already given up over 30% of that. So I don't lend a lot of credence to that report. It was a singular report. And based off of the timing that was actually used during that as well, I honestly don't believe that the U.S. military for 1 second would have had a piece of intelligence collection capability that said they still have 70% and we enter into a ceasefire. We would have continued to hit them and bombard them over and over and over again until they got that stockpile down to the number they want.
Really interesting. Christine, I want to ask you about what's going to happen in the Strait here in the meantime, because we're told that it's a toll-free Strait for 60 days.
For 60 days.
Of course, Iran says, yeah, tolls are one thing, fees might be another, but what happens after 60 days? The toll booths go up?
Get your Strait of Hormuz easy pass ready, Joe. I think you hit the nail on the head there, because there is this delineation. They've been splitting the language here. There will be no tolls, but there is a chance that Iran and Oman could get together and charge an administrative fee. This is like when you check into a hotel that you've paid for the pool, and they say, oh, you've got a resort fee. Essentially, they're going to be charging maritime traffic some sort of a resort fee, potentially. And a reporter pushed back on Vance and said, the MOU leaves it open. And Vance said, no, it doesn't. It contemplates that the Omanis, Iranians, and Gulf Coast Coalition together are going to figure out a proper security framework for the Strait in the future. That was his answer for a lot of these points, right? Ranging from how they're going to handle those nuclear materials, whether they get mixed down in the country, whether they're going to, we're going to solve it in the final agreement. We're going to solve it in the final agreement. Again, the chasm between what Vance just told reporters will be or aspires to be in the final agreement and what is in this is significant. And I think the maritime traffic element of that is important. I reached out to Arsenio Dominguez, who is the Secretary General of the International Maritime Organization, someone we've been talking to frequently about traffic in the Strait, these ships that are stopped. And I said, how are you feeling about this? Because it seems like after 60 days, there could be some sort of a fee. Very diplomatic answer. But he said, we're engaging, but he stand by his previous statements that it should be free to travel the Strait. So we're going to have him on this weekend. We'll talk more about it.
I'm looking forward to it, of course. It's Bloomberg this weekend with Ms. Rafini and David Gura. Colonel, before you leave us, what happens to this massive collection of hardware and personnel in the region? Do we keep the full strength of these carrier strike groups, the 50,000 men and women who are there for the duration of this 60 days?
I think that's actually going to be one of the big indicators as to whether or not the talks are going well over this next 60 days. So when you think about the surge capability to include some of the strike groups that are out there, if you start seeing some of those go home, you start seeing some of the strategic bomber fleets, you see some of the F-22, F-35 fighter craft that were brought in as a surge capability start to go home, I think that's a good sign based off of that. But it's also important to remember that 5th Fleet itself is headquartered in Bahrain, as well as we have a lot of forces that already remain, 30,000 plus, that are already in the region. So even if you have some of these capabilities start flowing back west, if anything goes wrong during this time frame and Iran goes back on something, the U.S. still has plenty of ability to strike during that. But I don't see anybody moving for at least the first 20 or 30 days. If it starts going well, you might start seeing some of that surge go back. But the U.S. military, CENTCOM, and 5th Fleet specifically will not let off. They're going to keep a zone defense in this particular time, specifically just to continue to put pressure on Iran to continue to actually follow through with the deal.
Got it. Colonel, great to have you and good to see you. Colonel Wayne Sanders, of course, Bloomberg Intelligence, and Christina Ruffini, co-host of Bloomberg This Weekend. Thank you both for your insights. If you see Miss Ruffini on the street in New York this weekend, don't tell anyone I said this, but wish her a happy birthday. I'm Joe Matthew in Washington. We're going to talk more about what's about to take place in the Strait with Adam Ferrer from Bloomberg Economics. Yeah, everybody's lined up to get out of the Gulf, but are we really going to send empty tankers back in the next 60 days to fill them up with oil? We'll talk to Adam Ferrer about that coming up after we look at Wall Street. Charlie Pellet has the Thursday trade live from New York. It looks like everybody's comfortable going long into the long weekend, Charlie.
Yeah,
what do you have?
Absolutely right about that, Joe Matthew. You set me up with oil. Let's begin with West Texas Intermediate crude, 74.70 right now. WTI down 2.7%. Barrel of Brent, 77.68, down 2.3%, as we often see. Not always, but very often. Oil lower, stocks higher. S&P right now up 75, rebounding from yesterday's decline, up by 1%. We've got the Dow up 174, up 0.3%. The Nasdaq Composite Index higher by 1.4%. The Nasdaq 100 Index, the outperformer, up by 2.3%. All of this as the SOX surges 6.4%. Intel up by 9.5%. We've got the 10-year at 4.43%. Spot gold down $31 the ounce, down 0.7%. And again, West Texas Intermediate crudes capping S&P up by
the markets here as we work our way toward a long holiday weekend. Does anyone else have bad allergies today? I'm dying in here. It's not, in here it was worse out there, but summer allergies, is that a thing? Every now and then I might ask producer James to cut the mic for me, and I'll apologize in advance if I sneeze in your ear. One of the headlines that grabbed me when I saw Daybreak this morning, I start my day every day, D-A-Y-B, go, or just do it on the app. If you want to know what's going on around the world in like 5 minutes or less, go to Daybreak. The reopening of Hormuz may not lower oil tanker rates for many weeks, according to the smart people at Bloomberg Intelligence. So we thought we'd call Adam Ferrer to talk about this. We've spent so much time talking about oil flows in the Strait, tracking these ships, and what it will mean to eventually reopen. We thought we would compare notes this morning with our geopolitics analyst, geoeconomics analyst at Bloomberg Economics. Adam, it's good to see you. So it's one thing if you're in the Persian Gulf and you've been bouncing around there for 2 months and you can't wait to get the hell out. If you have an empty tanker, though, and you're being told to go into the Gulf to tank up so we can sell oil, not knowing what the Strait's going to look like in 60 days, do you get the insurance and the crew to do it?
So I think what we're seeing now is the test of all of that, right? As you said, I think there's no doubt that we're going to see a surge of tankers leaving. And in fact, in the last 24 hours, we've seen that, right? Yep. Including potentially the first Saudi-owned tanker to leave since the start of the war. And that is a sign that things are opening. And the route by which they're moving is, through this new route that Iran established closer to its coast, which is an important caveat to kind of what this current state of affairs looks like. What that says is that the main thoroughfare, the traditional route, both eastbound and westbound, is still considered unsafe, right? That mines or some other restrictions remain there. And so with that in mind, though, right, certainly, as you said, ships are going to leave, and that is going to be a boon for oil in a short period of time. It'll increase reserves as they start to get to market, although that takes a significant amount of time as well. But the question is how many ships are going to come back, and certainly there is going to have to be a price premium to get ships to take the risk, right? Yes, you've got the deal signed and theoretically a 60-day window to work through. But nonetheless, there are still questions about the risks, as we just talked about, of mines, but also of a change in the status between the United States and Iran during that period. Obviously, there's an outstanding question of what Israel is going to do at any moment here in terms of Lebanon, and whether Iran may take umbrage of that and decide to attack Israel and maybe, disrupt this agreement. And we have to keep in mind that you're dealing with multiple factors on the cost issue. One is the actual shippers and how much they're willing to need to actually take the risk, but also it's insurance, right? The insurance companies have to decide what is a reasonable amount for folks to pay and what risk are they willing to take on. And what we're seeing here and what BI is assessing is that that is going to take a significantly longer time for folks to get comfortable with the current situation than just the assurances from the President of the United States at this moment.
Really interesting. Is that why Goldman Sachs says oil flows may only recover to only about 70% of pre-war levels, or does that have to do with some of the rerouting that's taken place? People are going to Plan B, don't want to use the Strait anymore.
There's so many different things going on in that, right? One is, as I think exactly as you said, that not only do consumers and consumers around the world and countries are looking for alternative supplies that don't face the same risk, right? And we've seen a huge pivot, particularly in Asia, towards the United States and Latin America for oil supplies from countries that traditionally relied on the Middle East for the majority of their imports.
Or even in the Middle East, they can't build enough pipeline to get around the Strait.
That's right, and there is that going on as well. We know that the UAE is already in the process of building a enlarged pipeline to avoid the Strait of Hormuz, which obviously will take years to do, but speaks to their intention in the long term. And then there is also just, again, this question about the flow and the logistics of getting ships to the right place with the right fees to get through the Strait. And the other thing to keep in mind is the physical transit through the Strait itself is still restricted in the sense that without those two central lanes, there's a lot more deconfliction that needs to happen in the throughput. Even if all the ships in the world wanted to start going right now, they're unlikely to be able to go at the same rate that we saw, which is about 100 vessel plus a day prior to the war. So all of those factors limit how much we'd probably see in the short term. And, that all will impact prices, which are significantly down, but still quite elevated compared to where they were before the war.
Wow, really amazing here. So what are you watching for the next 60 days? I mean, the back channel talks or formal talks will be underway. I guess J.D. Vance will be spending a lot of time on an airplane, but what kind of metric in our remaining moment do we use to judge whether this is going well or not?
So I think, we just heard from our colleague, Colonel Sanders, that, this idea of what's going on with U.S. force posture. I think that is an interesting question, right? Do we see a larger withdrawal of forces over this period, or do they all stay there? Now, that in and of itself doesn't tell us what's happening, but it might be an indicator. I do think, though, the biggest question here is Israel. And it is not only what it does in Lebanon, but how the friction that is building between the United States and particularly President Trump and Bibi Netanyahu starts to show itself. And if the internal political dynamics in Israel actually start to bubble up in a manner that leads him to take actions that the president feels puts his peace deal at risk, and whether Iran tries to take actions to reinforce it as well.
J.D. Vance has some pretty tough things to say about Bibi's cabinet, as he put it. We'll have more on that later. Adam Farrer, thank you. Bloomberg Economics. I'm Joe Matthew in Washington. This is Balance of Power on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P 500 index trading at close to the best level of the day. Right now, we're up 80 points, 74.99 on the S&P, ahead of a long holiday weekend for a lot of trading. U.S. markets close tomorrow. We have the S&P right now up by 1.1%. Dow Industrials up 179 now, up by about 0.3%. The Nasdaq Composite Index up 387 points, up 1.5%. The Bloomberg Mag 7 Index pushing higher by 1.1%, but the SOX is up 6.3% as Intel rallies 10.2%, the VIX below 17, and a 10-year at 4.44%. Spot gold is down $32 the ounce to $42.24. That is a drop of 0.7%. West Texas Intermediate crude oil tumbling 2.8%, $74.61 a barrel. Brent $77.55, drop there of 2.5%. Stocks are climbing as oil falls after a peace deal between the U.S. and Iran spurs optimism that a revival of the Strait of Hormuz will ease inflation risks. As for that Iran Memorandum of Understanding and the oil market, Anastasia Amoroso is Chief Investment Strategist at Partners Group USA, and she was a guest this morning on Bloomberg Surveillance.
We know that there's a political time clock and, there's a level of market patience that was going to force a resolution at some point. So I'm glad to see that we are here. And it's been a stunning turnaround in the price of oil from 120 to now, the forward strip pricing in $75 average for the back half of the year. That is a much, much better backdrop, fortunately, for risk assets now.
Anastasia Amoroso of Partners Group USA on Surveillance. And speaking of that stunning drop, again, barrel of WTI now at $74.56. It is down today by 2.9%. Amazon in talks to sell its custom-made artificial intelligence chips for use in other companies' data centers, a key expansion of its efforts to cut into NVIDIA's dominance. Amazon shares up today by 2.8%. NVIDIA taking part in a broader tech rally, specifically with chips. We've got NVIDIA up by 2.9%. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, thank you, sir. He'll be back at the top of the hour, 1 p.m. Eastern Time, with more on the markets here, shaping up pretty well for what is a session ahead of a long weekend. And obviously, traders are pretty comfortable laying out some longer positions here. On what is a huge day in New York, we can very easily connect the dots between Wall Street and a ticker tape parade. As a matter of fact, if you're with us on YouTube right now, there he is. Mayor Mamdani is speaking at City Hall because the Knicks victory parade just got to City Hall, having, of course, traveled the Canyon of Heroes. They started a short time ago, a couple hours ago, at Bowling Green, making their way up to City Hall Plaza. I understand people were paying line sitters to get a good spot in the parade. As much as $950? Is that? What an economy, man. New York Post today, a page branded the Nick York Post, reporting more than 1.25 tons of confetti dumped. Because that's what they do now. It's confetti. You remember, there's no ticker tape left in New York, right? That was back in the old days. The first one was in the 1800s to celebrate the unveiling of the Statue of Liberty. Wall Street firms opened their windows. They had nothing but ticker tape all over the floor, so they threw it out the window. Now we buy confetti and do it that way. Still pretty cool, nonetheless. And this whole scene that we're looking at here and listening to with Mayor Mamdani is a great day for New York. And by the way, it's coming here. The Knicks will become the first NBA champions to visit the Trump White House. We're not sure when, but this is going to be a big story when they do. Jim Dolan says we've still got to figure out the details. I invited the president to come for the game. He's a friend. I've known him for 30 years, and I'm very proud to bring the team to the White House. That's going to be a big day for New York as well. If Mayor Mamdani makes any news in the big speech, he's got his jersey on over the shirt and tie, by the way. We'll let you know here on Balance of Power. So thanks for coming along. It's Thursday, the day after the president signed the MOU. He did it at Versailles, almost as if some sort of intentional point of irony to end this whole saga, as he broke bread with the Macrons and other exclusive invited guests who were there at the chateau. President spent a lot of time at the G7 in France the last several days making the case for this moment that culminated with the signing. Listen.
It's signed, yeah. It's signed. You signed it. Keep your side. Why would you sign it?
If they don't honor the agreement, we'll probably go back to bombing them. My whole life is all about deals. That's all I ever did is make deals.
I love that he hits the B in the word bombing. Bombing. And look, we might be bombing them again in 60 days. He said that yesterday at this time in the news conference. Then he suggested there could be an extension, so we're not really sure on that. But the clock is now ticking on a 60-day negotiating period that will presumably get to all of the items that everyone is asking about, beginning with the nuclear program, followed quickly by the missile program, one that the president says will survive, at least in some scale. So let's get into it with the panel. J.D. Vance just spoke for about an hour in the briefing room as they try to sell what's actually not a deal. It's a deal to make a deal. And a lot of Republicans, specifically in the Senate, are still not on board. We're joined today on the program by Maura Gillespie, Republican strategist, founder of Blue Stack Strategies. Maura, it's great to have you. And Arshie Siddiqui with us here in Washington, Democratic strategist, CEO of Bellwether Government Affairs. Arshie, I'll start with you. As our Democrat, some of the Republicans we've been hearing from sound like they're on the same page as the Democrats. When we consider the reaction, Ted Cruz giving billions of dollars to theocratic lunatics who want to murder us is not a good idea. Mike Rounds, Armed Services. He's opposed to President Trump allowing Iran to have ballistic missiles of any kind. Bill Cassidy with an axe to grind. The worst foreign policy blunder in decades. What will Democrats do for the next 60 days while we wait to learn what this deal actually is?
Well, I think taking a step back, Democrats, whether they supported going into this war and whether there was a strategy or any sort of vision for this war, I think that has been established. But we are in the war at this point, so I think Democrats also want a good deal at this point. And so I think that's where Republicans and Democrats are aligned going forward into the 60 days. Because right now there are more questions than answers on this MOU. To your point, it's a deal to get to a deal. And so in many ways, the administration has effectively kicked the can down the road for 60 days with a little bit of relief with the Strait of Hormuz. But there's a lot of work to be done, and the hardest questions still have not been resolved.
Yeah. Maura, is this good for J.D. Vance or is it poison? They're calling it the Vance peace deal. He just stood up in the briefing room for an hour. The president yesterday was joking about how he'd blame J.D. Vance if this whole thing didn't work out. Senator Lindsey Graham calling the vice president, quote, the architect of the deal. Is this a setup?
It's really interesting to see where they're kind of going with this in terms of putting the blame on Vance, but then also Vance being somebody who has been against starting wars, or at least he told us he was against starting new wars and being prolonged wars. And so I think the Vance team probably feels like this may be a good thing for them to say, yeah, I wasn't on board with this war and I'm trying to stop it. So I think I think the Vance team feels like this is a positive. I don't know that the rest of the country thinks it is, or Trump world, because I think in a large sense, MAGA wants to find someone else to blame for problems other than Donald Trump. They don't want to blame him. So they're looking for anyone and everyone else who they can shift blame to so that they don't have to disagree with someone that they have, pretty much pledged their undying loyalty to.
So let me attempt to steer this conversation in the opposite direction. You made the point. Democrats don't want to see this war underway, so they're in favor of a good deal. Does this president not deserve some credit for finding peace at this moment?
I mean, there's still a lot of questions to be answered. So, I mean, the president himself talked about two kind of standards. One was totally dismantle the nuclear program, and the second was free and fair passage through the Strait of Hormuz.
Yes.
And there's some, the fact that the Gang of Eight top congressional leaders still have not been briefed about this deal, I think is a little bit of a warning sign, but it also shows there's a lot of work to be done. So I think so to call it a deal might be overstated.
I totally get that. And in terms of briefing, Maura, you spent a good deal of time working on Capitol Hill, and you worked for a former Republican Speaker of the House. Would he be demanding that briefing for his members by now?
His members would probably be demanding it of the speaker to speak to the president on their behalf, of course. Yeah. But I think to go back, kind of looking at this deal and the importance of coordinating with Congress and allowing Congress to weigh in, is again part of our structure in this country, of our government. But there was no real reason given for why we started this in the first place. And I think that when you look at this deal, largely people are right to say that we got nothing out of it. There has nothing been accomplished. And worse than that, countless lives were senselessly lost. And there really hasn't been responsibility taken by the White House, by the Trump administration. And I think that nobody wanted to be in this position in the first place. So yes, obviously we want this to end. But I don't see that there was ever a real positive way out of it for the president once he started this with Israel.
Israel is a whole other matter that I'll ask you both about. The president just posted on Truth Social while we're talking, clearly on the defensive here and not happy with the discourse. There is no $300 billion payment to Iran by the U.S., he writes. That's fake news. All there is for the U.S. is success, lower oil prices, and victory. Check out the stock market. Democrat propaganda at play. What do you think, Archie?
I think the president is a master of deflecting, and but at the same time, there are more questions than answers again. So I think Vance started with his press conference today, but there just needs to be more specifics. And you look at the nuclear piece, and you look at the Strait of Hormuz, and you look at all the outside analysis. It is not looking good. Now he did get a little bit of an escape valve in terms of his piece with the Strait of Hormuz for 60 days. But it feels like a fake it till you make it strategy. And that window is closing quickly because with the midterms.
Is this fake it till you make it, Maura Gillespie?
The Strait of Hormuz was already open before this war started, so I don't necessarily think that that's something that the Trump administration should be using on their victory lap. But yes, I think if they can continue to deflect and try and convince the American people that they've done a fantastic job, maybe they can gaslight enough people into keeping the Senate in the Republicans' hands. But outside of that, I do think people are just frustrated at a whole looking at what's going on here.
All right, well, we clearly have two political analysts, a Republican and a Democratic strategist, who are not fans of what's going on here. But you're also both professional communicators. And Archie, I wonder if what we saw today in the briefing room is an example of what's to come, that while negotiating is obviously the aim here, that a communication strategy could be just as important.
Yes, absolutely.
To the American people.
Well, we still haven't seen that to Maura's point earlier, is that they didn't make the case at the beginning, middle, and now we're
Can they do it now, or is it too late?
Well, the biggest challenge I think the administration is facing is that the American public can see the straight line between their policies and what's happening in the ground. So in terms of inflation, gas prices, economic uncertainty, all of these, you look at tariffs, all of these things have healthcare, all of these policies have fed into making things more challenging for American families. So that is what I think the case that's going to have to be made going forward, in addition to the geopolitical piece of this.
What happens inside the Republican Party, specifically on Capitol Hill in the meantime, Maura? We've had a number of Republican members. Ted Budd was one yesterday who was trying to tap the brakes, give the president the space and time to do this. But you can see how restless some of the Iran hawks are, whether it's Lindsey Graham, Ted Cruz, or otherwise. Is there going to be a split that's exacerbated in the next 60 days? Or can the president find some unity?
I do wonder if Republicans are seeing this opportunity because, one, they wanted this to be over so that they could get back to the issues that their constituents are most concerned about. We talked about gas prices, grocery costs, inflation concerns, housing issues. So they did want this to end quickly, swiftly, all those things. But to say that they're not happy with how it ended actually helps them at home because people, by and large, are frustrated by this war. Public approval on it is very low, and so they can kind of play both sides of it by saying, I disagree with the way that this was handled entirely, but I'm out here fighting for you to lower costs and look at our gas now. They're going to be able to do that, and I think that's hopefully was what they're looking for. But what that does to their relationship to the president, I'm not entirely sure. And it depends on them of how much they want to continue to tie their wagon to him and make him happy as opposed to the people who elect them to the office they hold.
And if it comes all the way to it, blame JD?
Well, I think he made a joke out of it. So,
He
but
did.
yeah, he made a joke out of it. But the president again is good at deflecting somewhere.
If they're
So
calling
maybe
it the
that's
Vance
JD.
peace deal, it's hard to wiggle out of that a couple of weeks down the road.
I also thought it was interesting that Secretary of State Rubio looked very uncomfortable in that briefing yesterday.
Straight face, serious as a heart attack when the president was joking about that. We've got a great panel for you today. Archie Siddiqui is with us and Maura Gillespie, and they're going to be back in our second hour with much more to talk about here as we drive forward on the Thursday edition of Balance of Power. Lael Brainerd is going to be with us coming up in our studio in our next hour, and we'll spend some time with the chair of the Federal Energy Regulatory Commission with Data Center, of course, front and center every day here on Balance of Power. We'll get you some headlines ahead. Kaylee Lyons will join the conversation, so stay right here on Bloomberg for Balance of Power, the Thursday edition.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lyons.
You're welcome. That word from President Trump after signing the memo with Iran. Welcome to the Thursday edition with the Strait of Hormuz now beginning to reopen and huge questions remaining over a deal the next 60 days. I'm Joe Matthew alongside Kaylee Lines here in Washington. Kaylee, the Vice President, J.D. Vance, tried to start answering some of those questions today.
Yeah, holding court in the White House briefing room where he faced a lot of questions about the way in which this deal would work in theory in terms of when Iran is going to get certain things. He also faced questions around the potential for tolls in the Strait of Hormuz after, and he suggested there will be no final deal if that is the case.
That's right. A lot of questions from reporters, some of them very challenging, as the Vice President, of course, keeps 2028 in mind, with people in Washington now calling it the Vance peace deal. And if this doesn't work out too well, it might have a big impact on his political future. It's something that he suggested the president was joking about yesterday.
Yeah, of course, the president in his press conference at the G7 was asked about the idea that J.D. Vance was the one who was supposed to be showing up to the signing in Switzerland. Of course, the physical in-person signing never happened in the first place. It was electronically signed and signed by President Trump at Versailles yesterday. But Trump said, yeah, I like that idea. If it goes well, it's mine. If it doesn't, it's Vance's.
That's true. We'll park that for now because that will come back, I'm sure, at some point soon. In the meantime, we're looking at the market reaction. Oil prices are lower today, even as Goldman Sachs predicts only 70% of oil flows will be restored in the Strait.
Yeah, and of course, we have to consider as well that these markets are still trying to digest the first ever press conference from Fed Chair Kevin Warsh yesterday, and a dot plot that suggested more hikes could come this year, even if Warsh himself didn't put a dot on said plot. We're going to get into that this hour with Lael Brainerd, the former director of the National Economic Council under Biden.
She'll be with us in studio this day after. We're looking forward to that as well, with a series of conversations that will be taking forth here, including our political panel. Maura Gillespie is with us alongside some others who are going to be talking with us today. Kaylee, it's all after a look at Wall Street.
Yep, let's get to that look at Wall Street now as we turn to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much. Got to begin with crude oil, certainly driving stocks higher. Right now, we have got West Texas Intermediate crude just above $75 a barrel, down now by 2.1%. Barrel of Brent just above 78 now. Brent crude down by 1.8%. Wall Street staging a comeback after yesterday's swoon. Stocks are climbing, oil falling after a peace deal between the U.S. and Iran spurred optimism that a revival of the Strait of Hormuz will ease inflation risks. Bottom line, stocks higher, 1% gain right now on the S&P, up 75. The Dow up by 0.3%. Nasdaq Composite up 1.5%. Nasdaq 100 index doing a whole lot better, up now by 2.2%. Tech stocks getting a lift, specifically semiconductors, with the SOX up 6.1%. Intel surging now by 10%. The 10-year 4.43%, 2-year 4.15%. Gold is down $33 the ounce to $42.23, down 0.8%. West Texas Intermediate crude $75.25 a barrel, down now by 2%. Intel is soaring after President Trump said the chip maker will work alongside Apple to design and produce semiconductors domestically. Intel again up 10.1%. Apple up by 0.6%. We're also keeping an eye on SpaceX shares. They are down for a second day. SpaceX down by 7.6%. Bankers for Elon Musk's SpaceX are preparing to hold calls with investors to discuss a potential bond offering, which is expected to be at least $20 billion. Again, SpaceX shares, they're down now by 7.6%. Tomorrow, of course, a holiday for a lot of people. We will be here covering global markets. Join us for a special edition of Surveillance between 9 a.m. and noon with Tom Keene and Paul Sweeney. Kaylee and Joe, that's a Bloomberg Business Flash.
All right, Charlie Pellet with the latest on the markets. Thank you so much. The latest from U.S. Central Command is that the U.S. blockade is over. It has been lifted on all Iranian maritime traffic. So the process here is beginning after the signing of the Memorandum of Understanding between the U.S. and Iran that, of course, is aimed at fully reopening the Strait of Hormuz. Part of that was that the U.S. blockade would end. The other part, of course, is the clearing of mines in Iran, allowing ships to pass through without being harassed and without having to pay tolls. The question, of course, is whether or not that no toll agreement that the Iran has agreed to for now is going to extend beyond this 60-day period. And our colleague Jen DeLuey actually pressed Vice President Vance about that specifically as he was briefing from the White House briefing room earlier today. This was his response.
That's not about tolling. That's about ensuring that the straits are never used as a choke point for the global economy ever again. It's frankly not what the Iranians want. It's not what the Omanis want. It's not what the GCC wants either. So what we're going to do, of course, working with our allies in the region, is to ensure that that is reflected in the final deal. And if that's not reflected in the final deal, there's not going to be a final deal.
Let's talk about the potential for a final deal with Mona Yacoubian, Director, Senior Advisor of the Middle East Program at the Center for Strategic and International Studies, CSIS. Mona, welcome back to Bloomberg TV and Radio. It's great to have you. What can be accomplished in the next 60 days here that can fill in some of the blanks, or do you see that timeline having to be extended?
Well, I think lots of questions about what actually can be done in 60 days. Certainly, the issue that's going to now be front and center is Iran's nuclear ambitions. Very little really addressed in the MOU. Let's not forget, this was the key driver for getting into the conflict in the first place. And there are several outstanding issues. What happens to the highly enriched uranium that Iran continues to possess? Will it agree to an enrichment freeze, and for how long? And what about the question of inspections, which will be necessary to ensure any deal is abided by? Those are some big questions, Joe, that will need to be addressed. Hard to see how that can all get done in 60 days.
Well, so as we consider the nuclear question specifically, Mona, Vice President Vance was also asked how this deal is ultimately going to be better than the JCPOA agreement that was reached during the Obama administration. He said two things, one being the U.S.'s position of strength, the other being that our Gulf allies like it. And I wonder if you do get the sense that the Gulf is satisfied with how things have turned out here.
I mean, I think on the one hand, Gulf countries are relieved that the shooting has stopped and the strait is opening back up. On the other hand, I think they're very concerned that the MOU leaves in place a very empowered Iran and doesn't address issues that are of key concern to them, namely Iran's ballistic missile capabilities and drone capabilities. Let's not forget, they really bore a lot of the brunt of this kinetic action by Iran, and also the question of proxies and support for groups like Hezbollah in Lebanon and the Houthis in Yemen.
A lot of Senate Republicans have been criticizing this deal, and many of them are looking specifically to Iran's ability to enrich itself, not only through this investment fund, but the actual sale of oil with the lifting of sanctions. To what extent are we empowering Iran economically? And is this the best day that's happened in Tehran in some time?
I mean, I think they're probably doing a bit of a victory dance in Tehran, given the terms of this MOU. It provides economic rewards to Iran just for signing the MOU. The immediate waivers, temporary but immediate waivers of sanctions on oil, on banking, on insurance. The blockade has been lifted, as was noted by CENTCOM, so Iranian oil is flowing again. And there's also the potential for the unfreezing of billions of dollars of Iranian frozen assets. All of that is in the MOU. That doesn't even begin to get to this $300 billion reconstruction fund, which, to be fair, hasn't yet been initiated. We don't know who would contribute, under what circumstances, et cetera. Likely investment. It wouldn't be aid. But still, these are a lot of significant benefits to Iran. And the nuclear issue hasn't even been touched.
Well, so as we consider the touching of the nuclear issue, I know we spoke to how Gulf states feel about it, but I also wonder, Mona, if you really think there's going to be a chance for any party, whether it's another Gulf state, whether it's the United States, whether it's an international body like the IAEA, to be able to accurately verify what is going on with Iran's nuclear program, if we're going to have access to credible information at the end of this deal, assuming one on the nuclear program can be reached?
Great question, Kaylee. And that question of inspections and the ability to verify that Iran is actually adhering to a deal has really not received the attention it deserves. Iran, if anything, has even more sophisticated enrichment capabilities than was the case during the JCPOA, meaning it can enrich uranium faster. That means the path to a nuclear weapon has been shortened. And yet, we don't really know what kinds of inspection elements would be part of a deal. And let's not forget, this regime in Iran is a harder line regime. It is more connected to the IRGC, and they may be even less willing to countenance somewhat intrusive inspection a regime which is going to be needed in order for the deal to be well verified.
How are you thinking about Israel and our relationship with Benjamin Netanyahu today, Mona? The vice president was asked about this, with Lebanon being an important component of the deal, reports that Bibi is fuming. He said it's not about Bibi, it's people within Bibi's cabinet who have attacked the deal and are in some ways very personally attacked the president. He had some advice for them. He said, I wouldn't be attacking the only powerful ally that I have anywhere left in the entire world. What happens to our relationship here?
It's a really good question, Joe. I mean, this is a strong and an enduring partnership, alliance with Israel, but we have seen some real points of tension, and Lebanon really resides at the crux of it. The president has made clear that he wants to see some kind of a deal. Let's not forget, there are direct talks that will start again this coming Monday between Israel and Lebanon, mediated by the United States. So the president is putting his own personal reputation behind some kind of a success between Israel and Lebanon. And every time that Israel has, undertaken significant strikes on the Beirut suburbs, a real provocation, the president has gotten very angry, and we've heard reporting of that, and he has as much as said so. So I think this is going to be an area to watch in the coming weeks, probably the key area. If there's anything that can derail the ceasefire, it is the potential for a resumption of conflict in Lebanon.
All right, Mona Yakubian, Director and Senior Advisor of the Middle East Program at the Center for Strategic and International Studies. Thank you so much. Of course, we did hear from Vice President Vance as well on Israel, suggesting that America, the global superpower, is the only ally Israel really has right now. Some pretty sharp and pointed words that he targeted specifically at members of the Israeli cabinet who might find themselves critical of what the Trump administration is doing here. And what the Trump administration is doing here, Vice President Vance suggested, is going to turn out as a win-win for the American people either way. This is how he phrased it.
If the Iranians don't change their behavior, their military and their nuclear program is still destroyed. If they do change their behavior, then they are going to have a transformative relationship with the Middle East, and the Middle East will have a transformative relationship with the people of Iran. That's a win for the American people and for the President of the United States, regardless of which option the Iranians ultimately choose.
So let's get into this now with our political panel. Maura Gillespie is with us, BlueStack Strategies founder and Republican strategist, alongside Democratic strategist Arshish Siddiqui, Bellwether Government Affairs CEO. Maura, as we heard Vance here, and welcome to you both, Vance describing a win for the American people and for POTUS. Are they one and the same? Do you think the American electorate and the president ultimately do want the same outcomes achieved here?
You know, I think it's hard to say. With polls showing that the American people, by and large, are not pleased with this war, don't really fully understand what we're doing. Again, if he's now saying that ballistic missiles is fine for them to have, when weeks ago he said that was all destroyed, I think that there's just been a lot of confusion, and there really hasn't been a good faith effort to explain to the American people what we're doing. And at the end of the day, this is just going to be problematic for the Trump administration and really problematic for Republicans in Congress to get by this without having answers to the many questions they have. I also think that with costs as they are, yes, they say gas is going down, but will it really? And how much and how quickly? And so those are questions that maybe they can't answer right now, and it's concerning to not have them for constituents who ask.
You saw what the president posted a little while ago, just in the last hour. He writes, there is no $300 billion payment to Iran by the U.S. That is fake news. This is on Truth Social. He writes, all there is for the U.S. is success, lower oil prices, and victory. Check out the stock market. Democrat propaganda at play. So we turn to our Democrat, Archie, $3.99 on average today for a gallon of gas. If gas prices keep dropping, will Americans be asking hard questions 60 days from now?
I think it's more than gas prices, number one. Number two is that we have seen the way the markets, both stock market and oil market, people want to believe that we're getting close to the end. So I think it's the proof will be as this plays out in the next 60 days in terms of the hardest questions are still need to be answered, and we need to still see where that goes. But on gas prices, there's also high prices because of tariffs, higher health insurance because of Republican policies, inflation, the cost of living, the issues go on and on and on. And so it's a more holistic conversation, but I do think that this last chapter with this MOU does reflect this need by the White House to get back to domestic priorities. And I think that's probably why we're seeing such a rush to declare this MOU, this deal, rather than being a path towards a deal.
Well, so as you talk about the holistic picture, Archie, is that how Democrats are now going to have to frame things heading into November? They can't just be like, look at the price at the pump. You have to go a bit deeper than that. I just wonder if the job gets a little harder.
You know, it's interesting you say that because all the Democrats I've been talking to have been saying this across the country and to their constituents in their districts. So, but it hasn't been as covered because obviously we have a lot of news and a lot of constant volatility. So I think that it's the same message that will continue. And I think Democrats are very focused on their districts, fighting for their constituents back home. And we'll see more of that.
The Iran hawks in the Senate, Republicans, Maura, are making a lot of noise. And I'm wondering if you think this could, in fact, impact outcomes. When you hear Ted Cruz say giving billions to theocratic lunatics who want to murder us is not a good idea. Bill Cassidy, the worst foreign policy blunder in decades. Mike Rounds is questioning why we would allow Iran to have ballistic missiles. Does this chorus start to die out in the next 60 days, or is the president listening?
I don't know if the president is listening, but I would hope that they're speaking to their constituents. You know, if they are getting calls in their office saying that their constituents are vehemently opposed to what's going on in Iran, the kind of initial start of this with Israel, then yes, they should be speaking out about it because that's who they represent. You know, for all that's been said about how strong of a hold Trump has on the Republican Party, the Republican Congress, I think that there are these cracks happening, and you're going to see more and more of them when they realize that their re-election bid is deeply in trouble, is in deep trouble right now because of the president's low approval, but also because they're not listening to their constituents. They're trying to appease one person as opposed to the 700,000, people in their House district or the people they represent in their state. And so I do think that while the president may continue to do what he feels is going to be best for his legacy, his own personal ambitions, members of Congress need to be reporting to the people who elect them.
Great panel today, Maura Gillespie and Archie Siddiqui. We thank you so much for the insights. We have a lot of questions still to answer, but we need to start asking them. Maura, with BlueStack Strategies, Archie, Bellwether Government Affairs, and Kaylee, we'll be getting into this a little bit more in depth as we make our way through the hour here. But there are, of course, huge questions about the impact on the markets that this could have in the meantime, with so many questions left unanswered.
Yeah, as President Trump today, as you mentioned, is pointing to the stock market as evidence that things are going well. But of course, the stock market, the economy, not necessarily the same thing. And we're going to get into the economy as we turn to Lael Brainerd, the director of the National Economic Council in the Biden White House, up next on Balance of Power on Bloomberg TV and radio.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ 100 index, they are all advancing. Wall Street staging a comeback after yesterday's sell-off. Stocks are climbing as oil falls. Let's begin with crude. West Texas Intermediate just above 75 a barrel, 75.04. It is down now by 2.3%. Brent, the global benchmark, below 78, 77.95 for Brent crude, a drop now of 2%. Oil lower, stocks higher. S&P up 89 to 75.09. That is a gain of 1.2%. NASDAQ Composite Index up 1.7%. The NASDAQ 100 Index, full of big tech names, up 2.5%. The Dow, by the way, up 0.5%. All of this with the SOX, the Philadelphia Stock Exchange Semiconductor Stock Index, up by 6.5%. Intel leading the way higher. Intel up by 10.7%. The VIX just below 17, the 10-year 4.43%, with the 2-year 4.15%, the 30-year at 4.89%. Gold at $42.27 the ounce, down 0.7%. And again, West Texas Intermediate crude down 2.2%, 75.10 a barrel. Oil selling off, and so are oil majors. ExxonMobil down 2.5%. Chevron now down 2.6%. ConocoPhillips down by 3.2%. Tomorrow, of course, a holiday, Juneteenth for a lot of people. Yes, Bloomberg will be here covering global markets. Join us for a special edition of Bloomberg Surveillance from 9 a.m. to 12 p.m. tomorrow with Tom Keene and Paul Sweeney. I'm Charlie Pellet. Joe and Kaylee, that's a Bloomberg Business Flash.
All right, Charlie, checking on the markets for us. Thank you so much. And the bond market, especially fascinating in the last 24 hours in the aftermath of the first Fed decision made under the new chair, Kevin Warsh. The market clearly was expecting something a little bit more dovish than what it received in the form of a dot plot in which about half of the members of the FOMC suggested they would like to see or expect to see a rate hike this year. That's why we saw the 2-year yield yesterday jump to the highest level since April of 2025. But of course, as Charlie mentioned, we are seeing yields a bit lower today, including on the 2-year by about 3 basis points. Of course, as I reference that dot plot we got yesterday, Kevin Warsh himself did not contribute a dot. As we know, and as he discussed in the press conference, he isn't really a fan of the Fed providing forward guidance. He also seems to suggest that financial markets shouldn't need forward guidance from the Fed. Maybe the guiding should be going in the other direction. Let's remind ourselves of what the chairman said at the press conference yesterday.
The more that markets are paying attention to what's happening in the real economy, deciding what's good data and what's less good data, the more financial markets can price what they believe is the most likely. Financial market prices are probably the most important source of information to guide central bankers. But when all the financial markets are doing is reflecting back what we've said, then we're taking the most important source of information and we're being blind to it.
So let's talk to one former central banker, the former vice chair of the Federal Reserve, in fact, and the former director of the National Economic Council under the Biden administration. Lael Brainerd is joining us now on Bloomberg TV and radio. She's now Distinguished Fellow at the Georgetown Soros Center for Financial Markets and Policy. Welcome back to Bloomberg, Director. It's good to see you. I wonder what you made overall of Kevin Warsh and his first press conference yesterday. Did he surprise you?
Well, it was a very interesting press conference. He stayed true to his vow not to really communicate his own views about policy or any sense of where policy might be going. The result of that was he really let the summary of economic projections do all the talking. And I think the markets really reacted because you had half of those projections, didn't include his projection, but half of those projections saying that inflation is going to be a lot higher this year, ending the year at 3.3% core, and that would warrant one or more rate hikes, and that's why you saw that big move in the 2-year. The other thing that was notable is that both in the statement and in his discussion, he really emphasized price stability and made it sound like a one mandate central bank. So those were the things that I think moved the direction of the market in a very hawkish shift. That's not actually what his comments, the sort of subtext suggested, but those were the main messages.
Well, so talk about his comments on what we just heard him say about financial markets receiving guidance from the Fed. In particular, I wonder if you have sympathy with the view that maybe the markets should be the one interpreting data on their own rather than interpreting the Fed's interpretation of said data.
Well, I think the difficulty here is that the market needs to, and the public need to understand not forward guidance in the sense that I think he is objecting to, which is suggesting here's what our action will be if inflation and unemployment come in at these levels, but at least a sense of how the Fed's policy is seeing current inflation, unemployment, and that gives both the markets and the public a sense of where policy might be heading. So what was interesting yesterday is he really didn't even want to provide a sense of what a lot of people call a reaction function. But his own biases seem to be sort of subtext in some of his comments. You know, he noted that half of the people who did submit projections didn't see a rate hike this year. He said there was no cruel choice between inflation and the labor market. So there were a few things that he said that might have pushed back in the other direction.
Well, and of course, as we consider what is said or what will be said going forward, we know there's going to be a whole task force on communications. There's going to be a lot of task forces under this new chairman. Has he asked you to sit on any of them? He said he was still making calls.
No. I think what was interesting about the task forces, we knew there would be a review of balance sheet policy. We knew there would be a review of communications. But I think what was interesting is the task forces on data sources, the task forces on the inflation framework, and the task forces on productivity all could be ways that even while emphasizing price stability, he tries to move the committee in a more dovish direction. So those were the areas that I think we just don't know where he's headed. But what we do know is that half of the committee is very worried about inflation, and that is consistent with the data we've seen.
So let's talk about that inflation framework, because he was asked specifically whether the Fed is going to be reconsidering the 2% target. And while he reiterated he's more focused on the 2, not what comes after the decimal point, he also said he sees no reason to change from 2% right now. Do you anticipate he could get there?
So what was interesting is that there are a number of things he said which suggest that he may not wish to stick with core PCE as the inflation target. He's talked about trim mean inflation when he is now referencing a task force on the inflation framework that too provides some wiggle room for potentially moving away from getting core PCE back down to 2%. And his comments on what's on the left side of the decimal point suggested that anything from 2.5 down to 2 might be acceptable. So all of those gave some suggestion that he might be looking for wiggle room. And that is not what we saw from half of the members who submitted projections where they saw inflation, core inflation, still at 3.3% at the end of this year, 6th year in a row of inflation well above target, new inflation pressures coming not just from oil, but now from AI, and saw the case for a rate hike or more.
Well, so on those inflation pressures, we obviously now have at least the beginnings of the reopening of the Strait of Hormuz via this memorandum of understanding between the U.S. and Iran. The U.S. naval blockade is now officially over, and Iran is supposed to allow the toll-free transit of vessels over the next 60 days. How quickly is that able to translate into lower energy prices that we have seen bleeding into other core inflation metrics?
So I think the question is, when will consumers really see it at the pump? Because that has a huge effect on consumers' perceptions of the economy. And right now, consumer sentiment is at rock bottom because they are so unhappy with high inflation. It will take some time. Buffers have really been used up during this transitional period. It will take time for production to come back online, for that Strait of Hormuz to fully clear. And so how much it still is going to move and lift core inflation, I think there's still some sense that core inflation could be given an uplift from oil for at least several months. And of course, we now have inflation coming from AI in electronics. We heard Apple's announcement. And so these are successive waves of inflation that are really likely to keep core inflation high through the end of the year.
I do want to ask you about AI, but the way you're talking about inflation right now lends me to believe you might have been one of those dots that sees a rate hike by the end of this year yesterday. Is that the case?
So I believe that conditions have really changed than we saw when the Fed started doing its easing cycle back in the fall. We've seen a tightening in the labor market. But what is really noticeable is that core inflation was actually rising before the oil shock, and we are now seeing new sources of core inflation from the AI data boom, and that's on the demand side. And so for all those reasons, given that we've had 5 years of above 2% inflation, I would probably be quite cautious about insisting that the Federal Reserve has to get inflation back to 2%.
So on AI, and we are actually going to speak with the chair of FERC up next on this program about data centers connecting to the grid, what it will all mean for ratepayers. Are you in the camp that sees AI firmly as inflationary because of higher energy costs, because of the actual infrastructure build out we are seeing, or that it eventually will be disinflationary because of increased productivity? Warsh's answer yesterday was, I have a task force for that.
So both, I think, are likely to be the case. It's clear today that AI is pulling forward demand for this just incredible data center build out, levels of investment that are equal to total fixed investment, non-residential in past years devoted to data centers. And of course, that means chips, and those are chips that would otherwise have been going into electronics and other parts of the economy. So because it's really pulling forward demand, we're seeing a near-term inflationary impulse, and that is likely to lift core inflation, on the back half of this year. That's fully consistent with AI becoming a disinflationary force as business models really transform and the broader economy starts to really become more productive as a result of using generative AI.
In our final 30 seconds here, we're also obviously seeing AI help bolster the stock market and therefore the wealth of people who find themselves at the upper end of the K. What happens if these market gains start to dissipate at some point?
Well, AI is really driving the stock market. There's a lot of credit in the AI space. There's a lot of leverage. And so if we see a really big piece of data that suggests that revenues are not going to justify these valuations, you could see a pretty big correction.
All right. Well, we're not seeing it today, but we'll see if that is going to happen sometime in the future. Lael Brainerd, formerly of the Fed and of the National Economic Council, thank you for being here on Balance of Power on Bloomberg TV and Radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Green on the screen for the Dow, the S&P, NASDAQ, and the NASDAQ 100 index. This as the price of crude oil declines. Let's begin with West Texas Intermediate crude, $75.50 a barrel right now, down by about 1.7%. We are looking at Brent crude, $78.38 a barrel, down 1.5%. Bottom line here, stocks staging a comeback after a peace deal between the U.S. and Iran spurred optimism that a revival of shipping through the Strait of Hormuz will ease global inflation risks. The S&P up 83 right now, up by about 1.1%. The Dow Industrials up 189, up 0.4%. NASDAQ up 1.7%, with the NASDAQ 100 index up by 2.4%. All of this with the SOX up 6.6%. That, of course, the Philadelphia Stock Exchange Semiconductor Index. Intel up now by 10.5%. 10-year at 4.43%, with a 2-year 4.15%. Gold is down $30 the ounce to $42.26, drop there of 0.7%. Crude bears repeating. WTI down 1.8%, $75.43 a barrel. Kroger shares are lower by 8.2% after the grocery store operator signaled that economic pressures on consumers and its investments to gain share could weigh on near-term performance. SpaceX bankers are preparing for a bond sale of at least $20 billion. SpaceX shares are slipping for a second day, have been down as much as 10%. Right now, SpaceX is down by 6.5%. And just a programming reminder, tomorrow, of course, a holiday for a lot of people, Juneteenth, but we are here at Bloomberg covering global markets. Join us for a special edition of Surveillance from 9 a.m. to 12 noon with Tom Keene and Paul Sweeney. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you very much. A long weekend indeed. We've almost made it there, except for the surveillance team that will be broadcasting to you early tomorrow. But it is, of course, a shortened week for financial markets, even if this week in financial markets certainly did not feel short, because we have seen a lot of volatility. Just take a look at the NASDAQ 100, which, as Charlie just mentioned, is higher today, about 2.5% higher at this point in the session. It was only down 1% yesterday, down 2% Tuesday, up 3% on Monday. We are seeing a lot of big swings in benchmarks such as this, and a lot of big swings, of course, in stocks like SpaceX after a multi-day boom post-IPO, now coming back down to earth. No pun intended, a little bit as well. So let's get into all of this now as we turn to Christine Aquino, who is also up in New York, where, of course, she helps us with the Markets Live blog. Christine, I just, when we think about the volatility in tech in particular, it's like one day we think, okay, AI trade is going great, chip stocks are rallying. The other day, everybody gives up on it, and we see pressure in those stocks most acutely. What exactly is the narrative here?
Well, Kaylee, it really is sort of a choose your own narrative sort of environment for markets at the moment. And, you mentioned, of course, whatever's happening with the AI trade. And then, of course, there's geopolitics with the latest twists and turns when it comes to the status of the U.S.-Iran deal. And then, of course, yesterday we got Kevin Warsh's Fed. And it seems to be a new era for the Fed, where they're really focusing on price stability, adding to those list of narratives for markets. And that's probably why we're seeing revival and volatility here, because now it's not just one, it's not just two, it's at least three catalysts battling it out in markets at the moment. And, I can see very easily how investors are now trying to make sense of what is a new era for the Fed, potentially rate hikes coming by the end of this year and into early next year, and how that factors into all the other catalysts that have so far been moving markets this year.
Well, so let's consider that potential rate hike for a moment, because you might think that you would see certain moves within interest rate sensitive sectors, or stocks with super high multiples might be struggling with that notion. Is that actually what's being borne out right now, Christine?
Well, Kaylee, I'm looking at the Philadelphia SOX index, of course, and just by looking at the continued rally there, the answer to your question would be no. It seems like chip stocks are really still very much in vogue in that that's driven much of the revival in equities today. But, we were pointing this out earlier on the Markets Live blog. Chip stocks, the rally that we've seen over the past 3 years came at the tail end of a Fed tightening cycle. And it was a time when interest rates were starting to pull back. But now this is going to be a new era. It's uncharted territory for chip stocks because they're potentially about to see higher rates, potentially more rate hikes than what's currently priced in the markets. And it'd be interesting to see if the durability in the rally lasts through all of that.
Yeah, well, certainly we didn't see a lot of durability in SpaceX's post-IPO rally, down for a second day. Christine, just quickly, is this some natural reversion back to a more, I don't even know if I can say appropriate valuation, because I think we've thrown that entire conversation out with the bathwater here with this stock now being one of the largest in the world. But what do you attribute these 2 days of declines to?
I mean, listen, every IPO experiences this, right? Once it starts trading for a full week, which is what we're seeing with SpaceX, still on track to end about 35% higher than its IPO price at $135. And don't forget, once it's included in NASDAQ 100 after 15 days of trading, there's going to be a natural boost to shares again, because a bunch of passive investors are going to have to own this stock automatically. So the story's not over for SpaceX, that's for sure.
Well, yes, that is certainly the case. Christina Aquino with us from New York. Thank you so much. Of course, SpaceX is still trading more than $40 above that $135 IPO price. Right now, we're just south of $180 a share. A lot of that valuation, of course, based off of the artificial intelligence aims of this company, with the idea of orbital data centers, compute power in space. It's the ambition. We aren't there yet. Therefore, we have a lot more data centers to build out here on Earth and in the United States specifically. And a lot of questions come with that, including how to power them, how to pay for what powers them, and how exactly these data centers can get connected to our grid. Currently, it's a pretty slow process, but the federal FERC, which of course is the Federal Energy Regulatory Commission, today is proposing a rule to speed this up. And I'm pleased to say the chair of FERC is with us now. Laura Sweat is here with us in our Washington, D.C. studio. Chair, welcome to Bloomberg TV and Radio. It's good to see you. When we consider the proposals you're making today, the accelerating of this grid connection process, something that could take years under the current regime, how quickly might this be able to happen now?
Well, under my leadership, the Federal Energy Regulatory Commission is going to ensure that our grid, which is very slow moving and has many barriers to it, is going to be accelerating our country into the future. And that means faster study timelines, faster connection of data centers, faster connection of generation that will power these data centers. But we're going to do all of that while protecting the American ratepayer and ensuring that no American will pay an unfair cost for data center connection.
Well, so talk to us about how you're going to achieve that component. Who ultimately is the bearer of the costs here? Because there are costs associated.
Yes, there are billions of dollars of costs associated with the data centers. And this is something that is very personal to me. I am the daughter of a Vietnamese immigrant and a 40-year civil servant. And my parents realized the American dream. And I very much felt the stress of the cost of utility bills as I was growing up. And that is something that I am vigorously safeguarding as the head of this federal agency that is tasked with ensuring that the cost of electricity in America is fair. Now, the president led a ratepayer protection pledge, which many of the hyperscalers have adhered to or pledged to, and now it is upon FERC in our federal jurisdiction to ensure that the hyperscalers are held to that agreement that they made with the president. And we at FERC ordered today, part of our order in the markets across the country, which each received individual orders tailored to how they are run, we are requiring more cost transparency on what is required to connect the data centers and the generation that they need than we have ever required before. And that transparency will make it such that no one can point a finger and say, well, we don't know how much it costs for the data center. We don't know how much the hyperscalers need to pay. Now we are going to have all of the data that we need, how much it costs to upgrade the grid to connect them, and they will pay everything that is required to get them the power that they need. And the American ratepayer will not absorb that cost.
Well, this is obviously a big change that you're looking to make. It's relatively sweeping, and I wonder if we should read this as a signal that your agency is going to have a more interventionist approach to this going forward.
We are going to vigorously protect Americans more than we ever have before, and that is incredibly important. I don't want to say that it's just a cost. Really, there is a way to integrate the data centers so that they can give the massive money injection into our economy that they are prepared to make with their investments of keeping what they're doing in our country. And we're just going to make sure that everything is fair. And I want to just make a point here, which is what FERC is doing is not limited to data centers. There's also massive industrialization that we are looking at, and that is another massive injection of money into our economy. And we need to make sure that people and investors are comfortable making that investment in our country, and FERC has a mind to ensure that there are clear rules and predictability so that the investors have that confidence.
Well, so how should an investor in a hyperscaler, someone who's just considering what this means for a company like Amazon or Meta, consider what you are doing here?
Well, I think if I were them, I would view this as, for the first time, the electric regulator in this country is very aware of the economic benefit that we may give to our country, because data centers are the intersection of not just energy, but also national security and jobs. And the same is true of industrial manufacturing. And the fact that today we are requiring the markets across the country to come back to us with very clear rules on how they are going to study what the data centers need, come up with transparency and tight timelines for them to come online, the investor should see that as a favorable regulator who is motivated to move quickly and ensure that everyone knows exactly what the rules are and how we're going to do this.
Well, what about a resident in Loudoun County, Virginia, for example, just a few miles outside of the district, who is considering not only what this means for their pocketbooks and the utility costs that you were speaking to, but also wondering what this will mean for their reliability and simple access to power? Are grids able to keep up with this kind of scale of data center build out that we are seeing?
Yes. Well, I actually grew up just a few minutes from Loudoun County, and driving around Data Center Alley, reliability is critical. And I will answer you frankly, the way that our electric grid is now with the generation that we have today, it is not going to work. That is why we have to be aggressive. We have to look at everything with fresh eyes and make interventionist and unprecedented action, which is what FERC did today. And I'm so proud to say that. And we are requiring the markets to actually look at what generation is necessary and come back to us 30 days from now and give us reports on how they're going to handle this generation issue. Now, getting to the local level in your question of Loudoun County, for example. So Americans' bills are about 1/3 of them are under FERC's federal jurisdiction. The rest of that bill that you pay is, depending on what state you're on, the cost of providing power and additional state riders and programs that will inflate bills. So unfortunately, I don't have any control over that, but I do have a control over 1/3 of Americans' bills, and I guarantee that we are going to drive that as low as possible.
Just in our final moment here, Chair, as you suggest that at least with the current state of play, this wouldn't work. Is our grid able to act fast enough to make the state of play ultimately work for all this build out, or do you see current data center build out projections as potentially being unrealistic and going to have to be scaled back some as you consider that reality?
Well, under the rules before today, no, I don't think the grid could act fast enough, but I'm sure giving everything that I have into trying to get it there. And we are pulling all the stops down and working with all our state and federal partners to ensure that our country can satisfy this and push us into the future and success.
All right. Well, it's great to have you on the day that the Commission is taking that step. That is the chair of the Federal Energy Regulatory Commission, Laura Swett, who's here with us in our Washington, D.C. studio. Another Nova girl like myself as we consider what all this means for Loudoun County and beyond. Certainly, Joe Matthew and myself have heard a lot about data centers, the build out, the costs associated with them, and how it's factoring voters' thinking as they head toward the midterms in November. We heard a lot about this in Georgia, too, another state that focuses closely on this issue. And of course, We're considering other issues more widely here on Bloomberg TV and radio today, including the now signed memorandum of understanding between the U.S. and Iran. The naval blockade has been lifted in the Strait of Hormuz, and the question is going to be how quickly energy is able to be exported through that strait once again. Certainly, you're seeing oil prices lower again today. We're around $75 a barrel on WTI. And as we were discussing with Christina Kino, stocks indeed are climbing as we end the trading week here, up about 1% on the S&P 500, up 2.5% on the NASDAQ 100. That does it for the early edition of Balance of Power. We'll be back for more at 5 p.m. Eastern, right here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
A very good afternoon, everyone. Live on Bloomberg TV, radio, streaming on YouTube and Bloomberg Originals. I'm Emily Griffeo. Alongside Isabel Lee, we are in for Carol Masser and Tim Stenovic, and it's on a day when stocks are climbing and a U.S.-Iran deal spurs an oil retreat. This coming after the conclusion of the Fed meeting on Wednesday, which saw traders pricing in a rate hike later this year. We're going to talk all that and more, but first, Isabel, how are you?
I'm doing all right, hanging in there. I mean, it's a holiday shortened week, Emily, but a lot has happened. We had the first Fed meeting of Fed Chair Kevin Warsh. BOE held rates steady. Knicks, if you're a Knicks fan, and then there's still the aftermath of the SpaceX IPO and just a relentless headline surrounding Iran. But we will break that all down in this show.
And I attempted to wear Knicks blue, but I think I'm a little too dark. I was also wearing Knicks blue yesterday and also on Monday, so we're slowly getting through the Knicks blue wardrobe. We're going to talk about all of that and more. Here's a setup at this hour on this Thursday, June 18th, 2026. We're going nuclear, and we're going to speak with Liz Muller, co-founder and CEO of Deep Fission. It's an advanced nuclear energy company that went public today, Isabel.
And we're going to have a chat with Sherry Paul. She's Managing Director and Private Wealth Advisor at Morgan Stanley Private Wealth Management. She has over 20 years of portfolio management experience. And a little tease there, Emily. She says we're in the midst of a generational economic shift toward women.
And it's not a Knicks win week without talking about Bloomberg sports business, and we can't do that with anyone better than Randall Williams. We'll have him on to talk about the Knicks parade, and we're also going to be talking about the World Cup with him.
But first up, a check on today's trade and top business stories with Charlie Pellet.
All right, thank you very much. Certainly blue and orange, the colors here in New York, New York. Color I'm focusing on right now, green. Right now, the Dow, the S&P, NASDAQ, they're all advancing. Stocks pushing higher. Wall Street staging a comeback after yesterday's rout. Right to the numbers here because it all has to do with crude. Crude oil lower, S&P up 78 now, up by about 1.1%. Dow Industrials up 152, up 0.3%. Tech is where the action is, specifically semiconductors. NASDAQ up 1.6%. The NASDAQ 100 index up by 2.4%. And the SOX, that is the Philadelphia Stock Exchange's semiconductor index, it is surging by 6.5%. Intel up now by 10%. We've got the VIX below 17, a 10-year at 4.43%, and the 2-year 4.15%. Gold down 0.7%, 42.28 the ounce, while West Texas Intermediate crude down 1.6%. WTI 75.63 a barrel. Barrel of Brent 78.58. Brent crude down by 1.2%. As we are seeing oil declining, we're also looking at oil majors moving lower. ExxonMobil down 2.6%. Chevron down 2.7%. ConocoPhillips now down by 3.3%. SpaceX bankers are preparing for a bond sale of at least $20 billion, and SpaceX is extending its two-day drop a week after the largest ever IPO. SpaceX right now down by 6.7%. Programming note, holiday for a lot of people tomorrow, Juneteenth, but we are here covering global markets at Bloomberg. Join us for a special edition of Surveillance from 9 a.m. to 12 noon with Tom Keene and Paul Sweeney. I'm Charlie Pellet. Emily and Isabel, that is a Bloomberg Business Flash.
Thank you, Charlie. Well, Federal Reserve Chairman Kevin Warsh this week vowed to restore price stability after officials left rates unchanged and signaled growing support for interest rate hikes. 2-year Treasury yields are steadying today, but yesterday they were up 13 basis points. It was the biggest jump since April 2025 when we saw a front-end move that large, and it matched the largest increase on a Fed meeting day since 2008. So a lot of superlatives to discuss here. For more on the Fed, we're joined by Michael McKee, Bloomberg TV and Radio International Economics and Policy Correspondent. Mike, you were in the room with Kevin Warsh. It was the first press conference with the new Fed chair. Was the vibe different than the Powell pressers?
Not particularly. I mean, Kevin Warsh is a completely different personality than Jay Powell, but everybody else in the room, all the reporters and all the Fed staff were the same. And so it didn't feel all that much different, except when Kevin was talking. He basically followed sort of the same script where he read the statement now. He had to read a lot less because they shortened the statement. And then he announced his 5 task forces. But then the question and answer period went about the same. And he doesn't want to talk as much, and he doesn't want to give as much forward guidance as Jay Powell. And it's hard to exactly slice what forward guidance is. So I think he was a little more restrained than he could be in other circumstances. But for right now, what you see is what you get.
What was your biggest takeaway? Was this a meaningful shift from the Fed's message? Do you think that he was able to establish the credibility that a lot of people were actually worried about coming into this meeting?
Well, he probably went a long way, and I think the markets were surprised by this. I wasn't surprised. I've known Kevin for a long time, and this was the Kevin Warsh I've always known, very hawkish on inflation, somebody who believes that price stability is the foundation for everything else that goes on in the economy. So I don't know exactly, what he told Donald Trump and why Donald Trump thought he might be immediately able to lower interest rates. But Kevin basically adopted the position of a growing number of people on the Fed that inflation is a problem. It's broadening out beyond just energy, especially in services prices. And so there is a concern that even without Kevin Warsh, they might have been moving in this direction. And now that he's signed on to that, I think the markets are right to anticipate that if we continue to see these kinds of moves, that they are going to look at raising rates. It kind of moves in inflation.
You mentioned the task forces. Can you just talk about how unprecedented that is, if it is, for a Federal Reserve to have something like this? And what kind of clarity do we have on exactly how many people are going to be on each task force? What is it actually going to look like in practice?
Well, the second part of the question is easy to answer because we don't have any idea. He said he's going to have internal people and external people and the best people. And that sounds kind of like a president coming into office saying, I'm going to have the best people in terms of my cabinet. We'll find out more as time goes on. It's not unprecedented for the Fed to do this. It's unprecedented to do it kind of as at the beginning of a Fed chairmanship and to announce 5 different task forces, but they've had task forces for quite some time. Every Fed chair goes through a period where they look at communications, and now they have a regular every 5-year look at the basic framework of how they make monetary policy. Just finished that last year, so that included the balance sheet. So some of this work may be duplicative, and they've had task forces for other things that they want to look at, other issues that they want to look at. So it's not unprecedented, and it isn't clear what it all will produce. Some of it will probably be to make people on the Fed feel they're included in the changes that Warsh wants to make and maybe give him a chance to convince people of some of the changes he wants to make. Others are a little more ephemeral. AI, I'm not sure that you can reach a conclusion on that. Right. You could have a lot of opinions. And then he wants to do one on the government statistics gathering for the economy. The Fed does a little bit of that, but that's mostly other government agencies. And they've struggled because their budgets have been cut. Maybe the Fed can print them some more money down in the basement or something like that and help them out. But otherwise, I'm not sure exactly where that goes either.
Mike McKee, the man in the room, thank you for that fantastic insight. Mike McKee, Bloomberg TV and Radio International Economics and Policy Correspondent. Thank you for joining us. Let's now bring in our next guest, Sherry Paul. She is Morgan Stanley Private Wealth Management Managing Director. We're so pleased that you're able to join us in studio in person. It's always a treat. Thank you. So let's stick with the Fed. The messaging marked a new era. Everyone is saying that this is a hawkish tilt. Even the dot plot was hawkish. What do you make of this after decades of doing this? Do you think it's going to be good for the markets?
Well, thank you for having me. It's a great question. I'm going to separate it out because there's sort of the policy discussion about what this means at the institutional level and how the Fed defines itself and its independence. But as a portfolio manager, really all I care about is what does it mean for client portfolios and where would we be investing if differently. And the bottom line is that at Morgan Stanley, we think that we don't see any rate hikes or cuts this for the rest of the year. So investors should be continuing to tilt on the short to lower intermediate part of the bond curve and be as liquid as possible in order to flex to change. It's interesting, though, to see how important language continues to be important. And having worked with Powell through COVID, he loved to pillow talk the market, before he actually took any action. And so we're going to see whether or not we get a little bit more of a direct call with this new Fed chair. But for now, we're not changing portfolios, and we think we're right where we should be for investors.
There was so much talk about, a lack of forward guidance going forward. Yeah. As someone in the markets, what do you think is going to fill that void? Are you going to be looking at some new signal to try and determine the path forward for monetary policy?
It's a great question. The initial answer I have is capitalism is going to drive that conversation naturally. And right now we're in a moment of what I'm calling candlesticks to light bulbs, and transformation, innovation occurring at a pace that we've never seen. And having managed client portfolios and client identities through the first wave of the internet back in the late 90s, that's going to make the internet look like the fax machine, the pace of change here. And so, it's important, I think, for investors, I'm talking about not individual investors, not to overthink to the point of paralysis. That's the greatest risk to return sets right now. And so as a goals-based, planning-based portfolio manager, our responsibility is to consistently make those decisions. And capitalism is going to drive that. So, for example, $1 trillion of expected AI spending through 2028. You just have to follow the money to know where to go, and that puts us in hardware and infrastructure and things like that. A little bit of a long answer, but that's where we are.
No, this is exactly where we want to go, because we want to go to your clients' portfolios, and I'm sure all of them are talking about AI. And in the notes you sent us, you said investors are willing to pay for what you call the AI innovation premium, but you're now talking about an AI installation premium. Talk to us about the difference.
Well, thank you for bringing that up. It's something that we've coined, my business partner Jacqueline and I, to explain to clients why we're paying the premium against PE ratios. And Jacqueline and I were very early to the AI investing trade over almost 4 years ago. And at the time, we were conveying this concept of what I was calling return on innovation, that something was happening with AI so rapidly that we would get this green shoot spike, which is what we've seen in the chips and cybersecurity. Now, what we're pivoting away from the return on innovation to looking at the premium for return on installation, because the moment that we're in right now is that, and this is really important, is that every company is now a tech company, whether they realize it or not. And those that don't will face corporate extinction, in my opinion, and those that do will move forward. And so the installation puts us back in that hardware, into cloud and into infrastructure, and we've shifted our investments, more towards those sort of hard assets.
Is that all on the equity side? Because I read about credit, and there is this discussion about if you really believe in the promise of artificial intelligence and you're a multi-asset investor, you should avoid the debt and just go all in on the equity, because that's where you're going to get actually an upsized return if you're actually bullish on this.
Well, now you're really speaking to something really important, which is transparency and liquidity, right? So the private debt market lacking in transparency, and then correlations, right? So what we're experiencing now is the correlations in the stock market, both at a global geography, and even at a market cap, are like 98% correlated. So you're not getting that constructive yin-yang in a portfolio that is so crucial to diversification. Now, the challenge set for private credit is liquidity and transparency. And in moments of change, I think that you really want both. For the clients that we work with in the ultra-high net worth space, we want them to be liquid and dynamic in that way. So I think that there's a duality there.
Okay. Zooming out more, you talk about a narrowing group of winners and losers in the market. So if you're winning, of course, everything is great. But then it also sounds like concentration is a risk. How concerned are you about that? The fact that the winners are dependently a relatively small group and is shrinking even smaller as we speak.
Well, you're touching on something I think that's pretty historic that doesn't get spotlighted enough, which is this consolidation and concentration and mutation. I'm going to call it a mutation of the S&P 500. Okay, this is why sector-based investing now is so crucial, and so are thematics, because the trade's crowded. 40% of the market cap is in 7 and 8 companies. So what investors need to do is stop arguing with that. Stop arguing. that's the way it is. And so as investors, what we need to do is figure out how to mitigate the risk in concentration. And from where I sit, the antidote to that is idea diversification. Your portfolio should be set across a set of ideas with different maturity rates. And if we're doing that, which is why our portfolios are still so US-centric, and overweighting and underweighting within your sectors, and then within at the company level, then you should be able to mitigate some of that, but not necessarily the volatility, but the risk that you're taking is higher. So therefore, the return set should be higher as well. There has to be an understanding and acceptance around that, because that's the way it is right now, and we're getting more and more concentrated.
What are some of those ideas? Can you give us examples?
Well, like right now, from a thematic standpoint, obviously AI infrastructure build out. I think it happens at a more rapid pace. We talk to clients a lot about neuroplasticity, frankly, and how the brain is it's the biggest impediment to accepting change and capitalizing on change, okay? So we can't think our way through this. We certainly can't feel our way through it, right?
Wait, so what do we do if we can't think our way and feel our way?
Yeah, so thinking's different than analyzing. That we have to start to distinguish the activity of the mind. So if we start to analyze and create a productive set of outcomes, then the broad-based themes are obviously the acceleration in healthcare and epigenetics, and how AI will lead to incredible vaccine breakthroughs. So investing in biotech and healthcare would be a great place to be. The convergence event that I want to point out that's really happening, though, is that the new modern military, we're deglobalizing. That's inflationary, less efficient, more conflict. So we're seeing modern military build out at the same time that corporations are trying to develop AI in a way that is cost reductive and productivity enhancing. And when you put those things together, those two constituencies are all competing for the same infrastructure. That's why we see chips exploding as a side note.
We can't let you go without asking you about what you wrote in your note, the generational shift for wealth towards women. If that's true, Emily and I will be so happy, number one. And number two, how should the financial industry be changing today? And are they taking concrete, actionable steps to address that?
Yeah, I appreciate you bringing that in, because we're calling it sort of the tale of two transformations. We're in the middle of this AI industrial revolution, but something seismic is happening here in the largest capitalist democracy, which is we have an asset transfer of almost 124 trillion, 50 trillion of that coming into the hands of women, which will make women the dominant stewards of wealth in the United States. And at a financial institution level, what I find ironic is that women want that collaborative, leadership-driven conversation. They don't need to be more financially literate. They are as financially literate as everyone else. And what they are, though, is they are incredible decision makers in selecting talent. They're picking out, school teachers. They're picking out financial advisors, and really what they need to do is just be great at making decisions around selecting people. But this will be transformative to the U.S. economy. It's really not being talked about enough, and I think it actually will have more dramatic impact on the economy than potentially even AI, because we know it's happening.
Something to talk about next time. We'll have to have you back on. Sherry Paul, Managing Director and Private Wealth Advisor, Morgan Stanley Private Wealth Management. Thank you for joining us. Coming up next, Liz Muller, co-founder and CEO of Deep Fission. We're talking about that nuclear company that went public today. Just taking a look at markets as well. S&P 500 up about 1%. Tech stocks taking the lead, though. NASDAQ 100 up 2.4% right now. This is Business Week Daily.
It's 2:21 on Wall Street. We do check markets all day long. Here at Bloomberg, oil is sinking. Stocks are gaining. The Dow, the S&P, NASDAQ solidly in the green right now. Holiday shortened trading week. S&P right now up 76 to 74.96. That is a gain of 1%. Stocks are climbing after a peace deal between the U.S. and Iran spurs optimism that a revival of the Strait of Hormuz will ease inflation risks. The Dow is up 0.3%. NASDAQ up 1.6%. Tech shares, specifically semis, are rallying. NASDAQ 100 index up 2.4%. And the SOX, the Philadelphia Stock Exchange's semiconductor index, up now by 6.5%. We've got the 10-year yielding 4.43% against the backdrop of a VIX below 17. The 2-year 4.15%. Spot gold down 0.7%, 42.28 the ounce, while West Texas Intermediate crude 76.19 a barrel. WTI down 0.8%. Barrel of Brent 79.27. Brent crude down by 0.4%. Amazon is in talks to sell its custom-made AI chips for use in other companies' data centers, a key expansion of its efforts to cut into NVIDIA's dominance. Amazon shares, they're advancing now by just about 2.4%. NVIDIA, again, part of a broader tech rally. We've got NVIDIA up by 2.7%. Recapping, Dow Industrials up 0.3%, S&P up 1.1%, and West Texas Intermediate crude down 0.7, 76.24 a barrel. A programming note, tomorrow is a holiday for a lot of us, but Bloomberg Radio and Television are here to cover global markets. Join us for a special edition of Surveillance between 9 a.m. and noon tomorrow with Tom Keene and Paul Sweeney. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you, Charlie. Well, we can't talk about artificial intelligence without talking about the energy that you need to power the AI build-out, Isabel. Growing electricity demand from AI and data centers is prompting a global need for different forms of energy. One company seeking to meet that need is Deep Fission. It's an advanced nuclear energy company developing small, modular, pressurized water reactors installed 1 mile underground. We're going to learn what all of this means. The company began trading on the NASDAQ today, priced at $16 per share under the ticker FISN. Pleased to say we're now joined by Liz Muller, co-founder and CEO of Deep Fission. She joins us from our San Francisco bureau. We're also joined by Will Wade, Bloomberg News energy reporter, here with us back in New York. But Liz, let's start with you. Just give us the elevator pitch for Deep Fission. What is the company and why did you guys go public now?
Yeah, Deep Fission, as you noted, is a different deployment model using currently available advanced reactor technology. So pressurized water reactors are the most common type of nuclear reactor we have today. But when you deploy it in a borehole a mile underground, you can deploy it much faster. You don't have all the construction that you would have for a conventional above-ground nuclear reactor. And so you can build it faster and at a significantly lower cost.
So for viewers just hearing about this, what problem does putting reactors a mile underground actually solve in nuclear deployment today?
Yeah, it's really two issues. The first one is nuclear has historically been too expensive. There's just too much construction, too many parts that need to get built. When you build it underground, you're able to take advantage of the rock that already exists. You're able to take advantage of a column of water above you in the borehole that is creating pressure through the force of gravity. And so you don't need big, expensive pressurizers. And so the result is we're much lower cost and we're much faster in order to build.
So, Liz, what I kind of like about your company is that it's taking existing technologies that we already have. We know how to dig holes, we know how to build reactors, and it puts them together in a way that nobody's done before. You haven't done it before either, of course. It's still new. We're waiting to see it happen. But can you talk a little bit more about how that can save money?
Yeah, so you're exactly right. This is using proven technology that already exists. So pressurized water reactor technology and standard commercially available fuel, but combining that with deep borehole drilling, which is also something that is commercially available and we know how to do. And when you combine those two, that's where you get something really special and a different deployment model. Nuclear is already very safe above ground, but when you put it in a reactor a mile below ground, the safety profile is extraordinary. And that means that you can take out a lot of the cost as well as a lot of the time to build.
it's an interesting idea. What sort of reaction have you had since you came up with this idea? Because I feel like it can go two ways. You can get people saying, oh my God, that's crazy, I've never heard of anything like this. Or you can get people saying, oh my God, I've never heard of anything like this. What a brilliant idea.
Yeah, I think we get both. So I think it does start off with a little bit of disbelief. Why are we the only reactor company that is taking this approach and doing something so different, which is building a mile underground? But then the more people start to understand what we're doing and that we're using existing proven technologies, the more people start to appreciate the benefits of being surrounded by billions of tons of rock so that nothing can get out of the borehole. Having that column of water that is a mile long above you in the borehole that is creating the pressure on your reactor, but it's also your emergency core cooling system. And when you're a mile underground, there's nowhere for that water to go. And so the safety profile, I think, also grows on people as they start to appreciate the differences and the benefits of building a reactor a mile underground.
So, Liz, nuclear projects are known for delays and cost overruns. Why does going underground make execution easier rather than more complicated, in your view?
Yeah, I'll give you an example of the containment structure. So typically for above ground nuclear power, you require a containment structure to make sure that nothing gets out into the environment. And that can take years to construct. And because it's all quality maintained, there's maintenance required, you need to make sure there's no degradation. And so that can be where you can have significant cost overruns and delays in schedule. But when we're doing it, we're drilling for that equivalent containment underground. And that drilling time, you measure it in weeks, not years. And so it's really a much, much faster build time to get something like the containment dome. And then it's similar for other parts of the reactor.
Liz, give us a sense of scale so far. How many reactors do you have? What regions in the country are they currently deployed in? And then plans for maybe future projects?
Yeah, so we are building our first reactor right now in Parsons, Kansas, and we're able to participate in the Department of Energy Reactor Pilot Program, which is allowing us to build a reactor faster than we otherwise would have been able to do. Now, importantly, as part of this program, we are actually deploying a first commercial reactor. So it is a test reactor under the Department of Energy program, but our intent is once we've built it, to then use it for the commercial generation of electricity. And we are targeting late 2027 or early 2028 for that first deployment and putting electricity onto the grid.
2027, 2028 for a new commercial nuclear power plant. That's just really fast. I'm amazed to hear you say that. There's so many other companies that are working and they don't have schedules anywhere near that fast. How can you do this faster than they can do it?
Yeah, again, this is when we're able to leverage technology that has already been proven and that is well understood and is even commercially available. So we don't need to build a manufacturing facility or a fuel fabrication facility. We're able to go straight to building the reactor itself using dozens of commercial vendors who can build to our specifications. So that means that we can deploy within these timeframes. Again, it's proven technology, and we're just able to change the deployment model so that we can get it built faster.
Can we talk a little bit about the market reaction that you've had? I know you were trying to get this IPO out the door a few weeks ago, and that was aiming for about $150 million at a $24 to $26 valuation. Today we saw that it was actually closer to $40 million, and the pricing was closer to 16, and today it's even down just a little bit. So what does that say about how the world sees you?
Yeah, I mean, what I think is we priced this IPO to give most possible investor confidence. And we are going to be able to reach that next milestone. Our big milestone is the commercial borehole proof of concept, which we are looking to do this fall. And that's a significant milestone because we are going to be proving out that we can build the borehole to our specifications, that we can emplace a non-nuclear reactor in that borehole, that we can get the sensors down there, and that we can start to measure the heat generation and all of these things that are new when it's in a different environment. So even though we're using the proven technology, the deployment model is something that we can prove out. And the 40 million that we're raising now is enough compared to combined with the 60 million that we raised previously to reach this next milestone.
Liz, how dependent is your story on the surging demand for AI and data centers when it comes to the future growth of your company?
Yeah, we're definitely seeing demand from data centers and for AI. So we've got 15 gigawatts of LOIs for deep fission reactors. That's very strong demand. I would say that probably more than half of that is from data center developer companies. So these are the groups that are building data centers, they need electricity, and they understand that deep fission has an advantage when it comes to time to market. So our ability to meet that demand and do it quickly, we're talking about 2028, 2029 timeframe, is much more attractive than having to wait into the 2030s, at which point, you know, the demand is there now, and the need to build is now.
What kind of public response have you had to the idea? What are people saying about the idea of a nuclear power plant buried in their neighborhood?
Yeah, I think initially people are a little bit surprised. This is very different from all of the other advanced reactor companies that are out there. And so the first response is, well, why are you doing it a mile underground? But the more we expand on the technology, the more we explain that this is proven technology that we are just deploying differently, I think people start to get really excited about our ability to get this done and to get it done quickly.
Liz, before we let you go, I'm curious if we could zoom out a little bit. When you think about the future of energy in the United States, let's say 5-10 years from now, what % of the total country's energy use do you think is coming from nuclear?
Well, it's about 20% now, and I think that's going to at least hold and potentially increase. What we're seeing right now, which is really remarkable, is that we need all the electricity that we can get. And so while a few years ago, people were talking more about energy transition, and there are clean energy benefits from transitioning from dirtier types of electricity to nuclear, but what we have right now is we just need to build. We need to make sure that we remain the leaders when it comes to not just AI, but also the production of energy, and nuclear can help us get there.
Liz Moeller, co-founder and CEO of Deep Fission, thank you so much for joining us. And thank you as well to Will Wade, Bloomberg new energy reporter here with us in New York. He knows everything energy and nuclear, so we thank him. Isabel, we're about 1.5 hours left in this trading day on a holiday shortened week here where the S&P 500 is up about 1% now, holding on to gains post Fed Day.
Yes, and you're seeing a gauge of chip makers hitting record highs. Intel soaring. We haven't talked about Intel, Emily. We have President Trump saying the firm will work alongside Apple to design and produce semiconductors domestically. So you see the stock popping there. Bonds are gaining after a rout. Oil slid to $75. Remember when it was $100 per barrel?
Yeah, not too long ago. When we come back, Randall Williams, who has some boots on the ground reporting from the Knicks parade. This is Bloomberg Business Week Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, all advancing right now. We've got just 1 hour, 20 minutes to go ahead of the closing bell till we wrap up trading on a holiday-shortened trading week. S&P now at 74.91, higher by 1%. Wall Street staging a comeback. Stocks are climbing after a peace deal between the U.S. and Iran. Crude oil moving lower. Right now, the Dow up 130. That is a gain of 0.2%. NASDAQ Composite Index is surging 393, up 1.5%. The NASDAQ 100 Index up 2.3% as Intel surges almost 11%. The Russell 2000 Index of small cap shares is up 1.6%. The SOX, the Philadelphia Stock Exchange's Semiconductor Stock Index, up 6.3%. All of this with the VIX just below 17. The 10-year at 4.44%, with a 2-year 4.16%. Gold down $35 the ounce, down 0.8%, while West Texas Intermediate crude oil flat on the day now, 76.78 a barrel. Brent crude 79.67. Brent has turned higher, little change, but higher by 0.1%. Sources tell Bloomberg bankers for Elon Musk's SpaceX are preparing to hold calls with investors as soon as next week to discuss a potential bond offering on the heels of the company's record IPO. Shares of SpaceX are down for a second day. SpaceX lower now by 6.2%. Programming note, tomorrow, yes, holiday for a lot of people, Juneteenth, but Bloomberg will be here covering global markets. Join us for a special edition of Surveillance, 9 a.m. to noon. Tomorrow morning, Tom Keene, Paul Sweeney, they've got you covered. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie. You're joining Bloomberg Business Week. This is Isabel Lee alongside Emily Griffeo, filling in for the Carol Master and the Tim Stenovic. But I think we're holding up pretty well, Emily. So it's Friday for us, even if it's Thursday. Markets have been relatively calm, I would say, compared to the past days. Should we talk about crypto? Because I just pulled up CRYPGO and it's down. All of them, right on the screen.
It's been a rough go for Bitcoin. That it just hasn't been able to hold on as a risk asset. But there's some exciting news, Isabel, in New York City.
Really?
Today.
What is that, Emily?
I don't know if you've seen social media.
I have.
But I've seen a lot of traffic. People getting stuck in the subway.
Yes.
But all for a good cause.
Yeah, I guess. I'm just not a sports person, but you know who's a sports person?
Randall Williams is a sports person. He's Bloomberg News senior reporter and co-host of the Business of Sports podcast. He was on the ground at the Knicks parade today.
I was.
How did you even make it back, Randall?
And what time were you there?
How did I make it back? That's an interesting story. So after Jalen Brunson was done speaking, I walked somewhere, found a city bike, and then biked all the way to Union Square, and then took the 405 back here. But that was quite the journey, as you can imagine.
What was the energy like? Like, was it really electric, palpable, or were people a little more annoyed because of the waiting? Like, I was monitoring Twitter or X, and NYPD, for instance, was saying that no one can enter and no one can leave.
Of course, there's going to be some people who are upset about NYPD shutting down different blocks, but this was a basketball party unlike anything that I've ever seen. You could hear the screams and shouts and celebrations from blocks and blocks on end, and as the Knicks got closer and closer to City Hall, they got louder and louder, and confetti poured onto the street, and so everyone is happy. You're talking about a 53-year drought from New York and the Knicks that was recently broken, and so I think the Knicks can live with the annoyance and the people who aren't particularly happy with them winning.
And you were at some of the finals games.
I was.
Right?
I went to 3 of the 5.
Oh, wow. What was the vibe?
Well, in game 1, I think the Knicks sort of took everyone by surprise, and the same thing in game 2. I think a lot of times the away team, as the Knicks were when they traveled to San Antonio for the first 2 games, they're expected to come away with 1. That's their goal. And when they won both, it was like, oh, the city's about to explode. And surely enough, President Trump came to game 3, and some might say he caused a little bit of bad luck for the Knicks. In game 3, they lost that one, but in game 4, that was the loudest arena that I have ever been in by far. We saw a 29-point comeback, and one of a memory that I think Knicks fans will remember forever with the OG Anunoby tip-in shot that put them up 3-1, and then they closed out the series in San Antonio the following on Saturday, so whenever that day was.
Yeah, that final game, it just felt like I was in disbelief. I didn't really truly believe that we were going to win until the very end. Maybe that makes me,
You're
you know,
blushing.
yeah,
Emily
a pessimistic
said, Emily
fan.
said we.
I know.
What is the future for the Knicks here? Because I mean, they're obviously in the spotlight, high profile. You can imagine that probably the economics would bode well for them. Or when are we going to see windfall, and what kind?
I think the players in particular are the biggest winners of this. If from the ownership perspective, the best case scenario for James Dolan, of course, was bringing home a championship. That was his end goal. However, it would have been better if they closed out the series in the Garden, because that's one more extra game and more revenue. But he'll take a championship ring all day after not being able to deliver one for so long. On the player side, they're going to see endorsements like never before. You're going to see players from the 12th, 11th, 13th, 14th man on the bench who might be able to, sign $50,000, $75,000 endorsements that weren't on the table before, simply because they're in the biggest media market and are playing for one of the biggest brands in basketball.
We have to get to the World Cup as well. From one major sports event to the next. You have a new video out, and I found it really interesting.
Sports City.
Yes, Sports City. It's about how the actual cities that host the World Cup, they don't collect the ticket revenue.
Correct.
But they still have to spend potentially billions to actually host the World Cup in their cities. Tell us about that.
Combined, yes, all of the cities. You think about the ownerships around these NFL teams in particular that are hosting these matches. A lot of them spend a lot of money renovating their stadiums, and then you think about the ticketing. FIFA takes all of that. So a lot of FIFA negotiated individually instead of collectively with these teams and organizations to license the stadiums, essentially. And from that perspective, the teams then have to strip their name, image, and likeness from it. You think about Gillette Stadium, that's called Boston Stadium now. MetLife Stadium, New York, New Jersey Stadium. And FIFA is going to extreme lengths. There was a photo that went viral earlier this week of tape on Gillette Stadium that said Gillette on the back of a seat. So they're taking it very seriously for not just themselves, but for their sponsors as well. They don't want alternative sponsors that are in the building. They want their partners to reap the benefits of an event that happens every 4 years.
Here in New York State, are we ready to host this event with the infrastructure and everything? Because it's going to be in New Jersey.
In my experience, I took the New Jersey Transit twice, earlier this week and then last week as well on Saturday, I believe. And going there was great. It was fun. I got there early. To get to the game, it was fine. I didn't run into any issues. But leaving, it was a completely different story now. I think Saturday was because of the fact that there was a Knicks game and the Knicks had the potential to close out the series. So NYPD, I believe, shut down specific areas around the Garden, which of course is right next to Penn Station. And then coming back earlier this week, it wasn't as bad, but it still is sort of like a concert. And if you've been to a concert at MetLife Stadium, you know what it's like to leave. It's just parking, it's running into people, it's long lines. And so I think they're doing a good job so far, but this is early on in the World Cup. We're not even into the round of 16 or the quarterfinals or the semifinals. So when those rushes get to New York, then we'll find out if New York's infrastructure can hold.
Okay, 30 seconds. Give us a preview of what we should watch in the week ahead in the World Cup. For maybe those uninitiated.
What watching the week ahead in the World Cup? Well, Portugal, they had a tie that was not very good. Cristiano Ronaldo did not play well. So let's see if Portugal can, I believe they play on Tuesday next week. Let's see if they can strike revenge and play with a little bit more fierceness.
All right, we'll be watching.
Yeah, because Randall said so.
Exactly.
Thank you all.
Randall Williams, Bloomberg News senior reporter and co-host of the Business of Sports podcast. Thank you for joining us. Thank you for getting back safely from that Knicks parade. Again, a lot of confetti kind of touching the streets of New York City on this historic moment here.
And again, we've established we're not sports fans, but what I like about the World Cup is it brings a lot of people together. Like my husband was watching. You see some people here watching. I mean, it's just fun. It's like all countries. I saw Ghana watching, and I texted my friend Richard Abbey. I was like, I'm watching your country. It's just, I think sports really has the power to unite people.
Yes, it's certainly a unifying event here, and it's great to have that Business of Sports reporting at Bloomberg to follow it all. Let's just take a quick look at markets here as we close out this hour. It's been so fun here with Isabel Lee. S&P 500 higher, up about 1%. Tech stocks leading. Crypto can't catch a break. Bitcoin down about 3%. And yields not doing much.
And oil around $76 per barrel.
A lot. When we come back, stocks on the move. This is Bloomberg Business Week Daily.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, we are wrapping up this hour of Bloomberg Business Week Daily. Isabel, it has been such a pleasure here on a day when tech stocks are rallying, the bond market's fairly quiet. You know, the bond traders tend to wrap it up before a holiday and they go home.
Really?
Yeah.
I want to be a bond trader.
Yeah, they live a life of leisure, but also pessimism, of course. The fixed income trader is always more pessimistic when you have a lot to lose.
That is true. I mean, you're looking at a NASDAQ that's almost up by 2%. So to your point, tech stocks are rallying. I think it's really the chip stocks. We're seeing a gauge of chip stocks really in the green. But maybe now we can take a look at individual equity movers. And for that, we have Denita Tekova, cross-asset reporter with Bloomberg News. So, Denny, as I like to call her, we sit together. What are you looking at?
SpaceX. It's been the week of SpaceX, but it's ending not in quite the way we were expecting. It turns out the multi-trillion-dollar company is similar to a multi-billion one. It's very volatile in the week of the IPO.
Up and down.
And it fell 5% on Wednesday, and it fell as much as 10% in earlier trading today. Now it's about 6%. The ticker we've been talking about, of course, is SPSX. You know, it's been a volatile day in the stock market, but it's been a very interesting day in the bond market. Emily, bankers for SpaceX are preparing to hold investor calls, and the number we're getting is raising at least 20 billion potential bond offering. It's going to be an investment grade one. You know, this is nothing new for Elon Musk. He has a lot of history with securing billions of dollars in back commitments. Some of them have gone pretty well, some of them not, looking at the 2022 buyout of Twitter, but definitely a very interesting one. Nevertheless, great week for SpaceX. It's ending the week 30% above the $135 price.
It's going to be fine.
Yeah. Historically, they're going to be fine.
You do have to imagine, though, or wonder if the news about potentially the company taking on, you know, more debt, is that weighing on the stock? But 20 billion, I mean, compared to the market cap, I think they'll be okay. What are you looking at next, Denita?
One company that is up today, Intel, soaring. It's both Intel and Apple news. Intel ticker is INTC. The stock jumped about 10%. It's coming off tweets from the White House. U.S. President Donald Trump posted that the chip maker would work with Apple to design and produce semiconductors domestically. Intel has been on a tear. It's obviously receiving a lot of support from DC, and that is helping. If you look at the stock year to date, it's up 260%.
Wow.
Today's reaction for Apple is pretty measured. It's up less than 1% compared to what we're seeing from Intel. Clearly, we see who's benefiting from this. We have previously reported that Apple has held exploratory discussion with Intel and Samsung. This is a big win for Intel. The whole comeback plan of Lip Bhutan has been about that chip production and finding those external customers. And what a better external customer than Apple. Clearly, we can see the reaction. And of course, for Apple, it's great because it relies on Taiwan semiconductor, and there has been so many supply issues and stuff.
Yeah.
So it's great news for both.
I think this is a record for Intel, so definitely
Absolutely
a great day
record
for
high.
them. I mean, the stock is really just rip-roaring. And what else? What about Take-Two? I think you're looking at that too.
Yes, computer games to end the week. Take-Two shares rose 6%. Rockstar Games is starting pre-order for GTA 6.
Oh, something we're all so familiar with.
Yeah, I don't know.
Do you guys play video games?
Not
at all.
I spent my childhood playing GTA.
Really?
Okay, so for
you
me,
dabble.
this is
so
important.
she's not sarcastic.
This is
Just you and me.
No, come on, guys. This is huge.
Yeah, but I just played Frogger and Mario. Okay, that's it.
I had to listen to the video game music growing up.
You
Keep
go
going,
home,
Jenny.
you have a homework, play GTA. But the GTA is expected to be one of the biggest video games releases ever. The previous one that was out had sold 225 million copies without Emily and Isabel buying them. The stock is down 6% this year, and you know there have been quite a few delays, and that has definitely weighed on the stock. But now the launch date is November 19, and now that we have that pre-order date, it seems like investors are pretty confident and excited.
Okay, so are you going to pre-order?
I think so.
Wait, why don't you play anymore when you played when you were younger?
Because I spend a lot of time at this office.
In the cross-asset
in the
team?
cross-asset
She's
team keeps me
focused.
busy.
Exactly. Denitza Sakova, cross-asset reporter with Bloomberg News. Thank you for joining us on this Stocks on the Move. For more conversations like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. Well, that's about gonna do it, Isabel Lee.
I think we have 60 seconds left, so should we savor this moment?
Yeah, I think we should. This has been a lot of fun. We're actually going to head to Carol Masser and Tim Stenovic very soon. They are in Las Vegas.
I know, we were just
They're on
talking about how they
assignment.
always travel, and it must be fun, but also tiring. But you're going to be in the best hands because this is their show. Carol Masser and Tim Stenovic will be in Las Vegas. We just held the fort for them here in the
Exactly.
New York studio for around an hour. But it's been an interesting day in markets. I mean, stocks climbing, oil dropping. Gauge of chip makers hitting records, oil sliding to $75 per
And the
barrel.
SpaceX news,
Yeah.
now that I'm a credit not an investor, credit reporter. I was getting a
You can
little
be an
bit of
investor.
FOMO. And now we get to talk about SpaceX in the bond market world, potentially, if they sell those IG bonds. For those of you watching on TV, next up is The Close. Bloomberg Business Week continues on radio, YouTube, and originals. Carol Masser and Tim Stenovic are taking the reins.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovic, live on Bloomberg Radio, television, and Bloomberg Originals.
All right, everybody. Yes, indeed. This is Bloomberg Business Week Daily. Carol Masser, Tim Stenovic, and we are live in Las Vegas. We've got a really special couple of hours coming up. We were talking about before we got going. We talked so much about AI. This is going to give you a different perspective and maybe help you in terms of figuring out what's the next narrative to focus on.
Yeah, if you're listening to us on radio, you're not watching on YouTube right now, you can tell that we're not in our typical studio. We're at Pure Accelerate 2026 at Resorts World here in Las Vegas, the event hosted by Everpure. It's the publicly held enterprise data storage company. It's got a market cap of around $25 billion. Shares up just about 10% so far.
They are indeed. And so we're going to talk to many leaders from the company, including the CEO who's sitting right next to us, to talk a little bit about how we have moved from an app-centric to a data-centric world. Also, we want to think about the investment spend, ROI. These are just different topics that are going to come up over the next couple of hours. So we just want to kind of tee it up. So we do have Charlie Giancarlo. He is sitting down right next to us. We're going to get it to him in just a moment. Rob Lee, Chief Technology and Growth Officer to Everpure, on the board level issues in the AI area. And I do think about what are the conversations, the very high level conversations that are going on with corporate boards at this moment.
Yeah, we've got the CFO joining us too. We've got Everpure's Global VP of R&D and Research, Customer Engineering. We're going to talk Vice President of Product as well. So we're going to get the whole product pipeline and everything in the future for the company.
It's all coming your way in just a moment. First up, though, we want to head back to New York and Bloomberg headquarters, and Matt Piper, who's in for Charlie Pellet on this Thursday. Charlie is off on vacation or getting ready to, but Matt, take it away.
That's right, Carol and Tim. Thanks. To the big board we go. Stocks looking good on this Thursday just before a holiday. The S&P is up about 1%, up 72 points. The Dow is up 0.2%. The Nasdaq is up 1.5%, doing the best out of all three at 400 points higher. The 2-year yield is at 4.17. The 10-year yield right now is up 4.45. Oil prices looking good, at least for consumers. Brent at $79 a barrel. WTI at $76 a barrel. The Bloomberg Dollar Spot Index is up 0.3% at 1218.01. As for stocks, we are watching. SpaceX is still falling, extending yesterday's decline after the company's historic NASDAQ debut last week. Its stock right now is down 6.7%. A point of reference, Meta plunged more than 30% in its first year after a similar record-breaking rise. Kroger is down after the biggest U.S. supermarket operator by sales said its costs remain troubling. Kroger right now is down 8%. Though Kroger's sales beat expectations today, its CEO says too many people are shopping for things that are on sale rather than going down their entire grocery list. Stocks once again with an hour left of trading. The Dow up 0.2%. The S&P is up about 1%. And we have a special edition of Surveillance from 9 to 12 tomorrow with Tom Keene and Paul Sweeney. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Matt Piper, and that's a Bloomberg Business Flash. Tim and Carol.
All right, Matt. Thank you so much. Matt Piper there in for Charlie Pellet. We are live from Pure Accelerate 2026 at Resorts World Las Vegas. As we said, the event is hosted by Everpure. And the event brings really together enterprise and tech industry leaders, customers, partners, and they're talking about market signals, they're talking about operating decisions, and they're also talking about innovations, which we know when it comes to AI, it's kind of fast and furious, a lot of things coming at us.
Yeah, and the structural reset when it comes to the infrastructure economics, so storage, power, cloud, enterprise buying behavior, and that is why we are delighted to kick this off with the chairman and CEO of Everpure, Charlie Giancarlo. Good to have you with us. How are you?
Well, thank you. Thank you for having me. I'm great. This has been a really fun event, and thank you so much for having me here.
Well, set it up for us, because what is it about? Who's here? Who's it for?
Right. So this is our annual user conference, but we also combine it with our partner conference. So we resell through system integrators, through value-added resellers, through ISVs, and they're here as well. They come with their customers. They come with our customers. And this is an event where not only do we train a lot of the people that work with our products, but really we come out with all of our new innovations over the year, and very importantly, our thoughts and our predictions on where both the data storage market is, but where the data market is going.
So where is the data market going?
Well, I think we're really at an interesting transition point. You know, tech every now and then, and over a period of decades, there are major architectural changes, right? And a major architectural change, for example, was the introduction of the internet. They completely changed the way IT was structured, right? Mobile was another one of these, right? Well, for the last 25 or 30 years, we've also been living in an app market. I mean, it was said, you know, not too long ago that software was eating the world, right? And, well, what it really was applications were eating the world. Now, if you go back that 25 years, it really started in a way with enterprise resource planning, ERP, right? That was a big transformation, and everybody wanted to get all of their data, all of their processes into ERP, and it was going to be the one application that would run all of the corporation. Well, over the last 25 years, though, applications have multiplied tremendously. I mean, we're roughly a $4 billion company. We have almost 1,000 applications running in our IT environment. You get to larger companies, they have many thousands, if not tens of thousands, applications. So applications have grown tremendously. Well, the way that those applications work is they create data and they run off of data. And now every time you run another application, and AI, in a sense, or an AI agent is another application, analytics is another application, it gets its own version of data. And so data has fragmented during this entire environment, right? And part of the challenge for enterprises wanting to use AI, or actually even just wanting to run their business right now, is there's no single source of truth. There are all these applications that, let's take customer as an example. You know, a customer relationship management like a Salesforce, right? It has a definition of a customer. Well, guess what? The definition of the customer in the finance organization may be different. It's the person who pays the bills, not the person that makes a decision. And then the customer in your support organization is a different definition. It's the person who calls you with a problem, not necessarily the person who made the purchasing decision. And then you go to the shipping department, and the customer is who they ship to, which may be entirely different. So just that one example, but expand that over your products, your assets. Different systems have different definitions of exactly the same thing. So what happens when you feed that into AI? What's the source of truth? AI doesn't know. it interprets. It hallucinates. It doesn't hallucinate. It makes errors because the data is not consistent. And so, so this then is really setting up what we believe will be a new major transition in how IT is built. It's app-centric today.
Right.
The apps, the data wraps around the apps. It gets replicated by the apps, fragmented by the apps. We think that in the future, it's got to be data-centric. That data has to be primary, and the apps have to revolve around the single source of truth, which enterprises need to control, which is the data.
So what does that mean then for all these app-centric companies?
Yeah.
Like, how does that change really the structure that we've all been living on for the last few years, and that has created some behemoths in the tech world?
Well, let me describe it from the customer first, and then we'll go there. From the customer first, it means they need to take control of their data. Okay? They may still want to use the apps for what the apps do, which is workflow, right? They have just fantastic workflow. They understand that, how their users want to be able to use the environment, how they want to be able to interact with other systems. But right now, the apps are controlling the data. From the customer standpoint, that fragments how they operate. So if the customers now control the data, meaning they create sources of truth, and they also control the understanding of that data, then the apps will work off of the customer's data rather than owning their own.
This is going to be a major theme for us over the next 2 hours with the executives from Everpure who we talked to. Another major theme over the next 2 hours is going to be memory pricing.
Yes.
I mean, that is the fundamental backdrop and the fundamental question for your business and so many
Apple.
businesses.
Was it Apple that recently?
Apple yesterday or the day before.
Yeah, so Apple shares are higher because Tim Cook told the Wall Street Journal yesterday that they're raising prices. And analysts say, okay, well, people are going to actually pay more.
Yeah.
How are you guys navigating this environment?
Well, we've had to raise prices. All right. So, it's the semiconductor manufacturers that are seeing this unbelievable demand, right, that has far outstripped the total semiconductor fab capacity of the entire world. Okay. And therefore, it's not only affected like the NVIDIA chips and, the high performance memory and all of that.
Right.
Because the semiconductor manufacturers have shifted their wafer starts to the more complex parts, the higher margin parts, it's also reduced capacity for the 10-cent parts. So everything has gone up. I got an email from like a small supplier of small electronic equipment for a consumer, and they said, "Yeah, we have to raise our prices." The whole thing they sells for $50, and they have to raise their prices. So. We have to realize that it is a worldwide, a complete semiconductor situation. We're an equipment manufacturer. We buy semiconductors, we put it into equipment, wrap our software around it, and sell it. So in a sense, we're a middleman for this. So let's talk about what we've seen. Memory prices up almost a factor of 10. Storage chip prices up between 6 to 8x. Wow. This has happened in like 8 months. All right. I mean, it's not like, we're used to seeing things go up or down 10, even maybe in a really serious environment, 20% a quarter. This is 8x.
Great for a company like Micron, challenging for a company like you.
Challenging. Well, and frankly, I want to put the focus where it really should be, is on the customers. All right. I mean, this has been really difficult, for our customers, because not only are the prices higher, but you have to realize it's completely unmoored them. Because as an individual customer, if your price goes up by 100%,
you're blowing your budget.
You're blowing your budget. And also, is it a good price? Is it not a good price? How do I compare it? What do I compare it to? I don't know.
Right. Well, there's no choice. They have to pay it.
And there's no choice. I mean, it's really put them in a very difficult position. So a decision we made in December was that we were going to raise prices slower. We were going to raise prices less, and we were going to share in the burden. So we made a conscious decision. We announced it at our Q4 call and we've had our Q1 call now. We announced that we're going to operate at the lower end of our traditional gross margin range, where for years we had been operating at the high end, and we chose
to help out your customers.
To help our customers.
One thing, and unfortunately we have to wrap up, but just got about a minute or so left. Where do you think corporates are in terms of AI deployment, based on your conversations that you're having with them? I mean, does AI storage demand eventually inflect like we've seen with cloud, or is the uptake kind of more measured, Charlie? Like, what are you hearing?
So one of the reasons why AI has grown so much in the cloud and why there are these gigawatt data centers being built is because the corporations are spending a ton of energy right now experimenting with AI. And if you're experimenting, you're going to the cloud because you don't know what the ROI is. You don't exactly know what is the specific application you're going to use it for that scales.
Right.
And so there's only been, I'd say, relatively small experimentation in traditional enterprise. Now, where there has been activity is in sovereign clouds, right? And sovereign clouds in even relatively small countries, as well as large countries, of course. In traditional areas of AI, such as healthcare, pharmaceutical, self-driving cars, automotive, big banks, hedge funds, that is certainly growing. I'd say traditional enterprise is holding back until they really find the breakthrough areas of AI that they know will scale.
The ROI?
The ROI, yes.
It's the magic sauce. Thank you so much. We can't tell you how much we appreciate it.
No, my pleasure.
Charlie Giancarlo, he, of course, is the CEO of Everpure. Thank you so much. We look forward to future conversations. All right, we're going to continue here in Las Vegas and have more conversations because Charlie talked about sovereign. We're going to get into that a little bit later on. But it is interesting in terms of some of the narratives that we're hearing and it, kind of where companies are going. I think it was interesting what he said about return on investment. That is something that you're seeing where companies are more discerning. The conversations are kind of shifting towards that, where people, it's not just maybe nonstop spend on AI. We've got to figure out where does it make sense.
Look at what the Uber executives did. They blew through their token budget in 4 months, in the first 4 months of the year.
Yeah.
So they're pulling back a little bit. That's a major theme that we're going to be talking about today. I also just want to go back to the Apple story. Apple shares are off their highs, still up 0.4 of 1%. As we mentioned, Tim Cook telling the Wall Street Journal late yesterday that the company plans to raise prices. Anurag Rana on our Bloomberg Intelligence team says a potential $100 per unit price increase would equate to about a $12 billion in new sales, assuming higher-end consumers aren't price sensitive, relieving pressures on gross margin. Look, like we just heard from Charlie, this is hitting every company that plays in the space. So, a lot of the analysts were like, well, what took Apple so long to actually do this?
Yeah, well, exactly. Well, you're hoping that
it's about time.
You're hoping that the prices are going to go down, that you don't have to pass it along to everyone. All right, we're continuing from Pure Accelerate 2026 here in Las Vegas. We want to continue on tomorrow's data-centric future. We just got a great kind of setup from the CEO of Everpure. Rob Lee is Chief Technology and Growth Officer at Everpure. He was an architect at Oracle. He focused on large-scale distributed data management systems, and he joins us right here in Vegas. Hello. Great to have you here with us. The AI narrative story, it has evolved over the last 3 years. And we just talked with your CEO about how the shift from kind of app-centric to data-centric. Talk to us a little bit about when you are talking with clients and customers, what is it that they are most concerned about?
Well, thanks for having me. Great to have you guys here as well. Look, I think the AI narrative definitely has shifted over the last 3 years. It's probably shifted quite a bit over the last 3 months, even. When I'm out speaking with clients and customers, I would say the biggest driver in their minds is, hey, AI technology is great. It has a lot of promise, a lot of hopes and aspirations. Connecting that then to reality and results and ROI, I think that's now dominating the discussion, especially in the enterprise.
Is it holding them back from spending maybe even a little bit? Like let me see how this is going to impact before I kind of move forward.
I think it's probably a little bit early to call that, but it's definitely entering into the narrative. I would say 6 months, 9 months, 12 months ago, it was very much more about, hey, let's get out there, let's experiment, let's try. Now, these days, I would say even earlier on in the discussions, ROI, understanding what that's going to look like, understanding what that path is going to be is starting to enter into those discussions. I do think that given more time, eventually, economics just says eventually, folks will need to understand what ROI looks like, how that's measured, whether it's productivity, whether it's velocity, whether it's efficiency. I think the industry is just in the early stages of sorting that out.
We just had this great chat with Charlie Giancarlo, the company's CEO and chairman, and he did a good job of explaining to us this shift that's happening from this app-centric world to this data-centric world. One area that I want to understand as a consumer and as sort of a layperson is what this ends up looking like for our day-to-day lives. What does it mean if a company can go from running 1,000 or 3,000 apps to taking all the data that feeds into those apps, having it in a centralized location, having AI actually make sense of that data in a way that is productive? Like, what does that mean for us?
Like AI not just being another workload.
Yeah, no, absolutely. Well, I think it's a great question, and I think time will tell to some degree. In some sense, it's not dissimilar to the early days of the internet. There was a point in time where everybody looked at the internet. They said, hey, if I go put up a web page, get a .com address, I've created business value. I think what history has shown us is that the internet is a great technology. It's then the use cases, how that technology is put into place that transforms lives. Whether it's, how you buy things online, e-retail, whether it's how you consume media, et cetera. Those are all applications of the technology. And I think with AI, we as an industry are in the early stages of that.
Do you buy the view that we're going to have agents acting on our behalf? Like, are you preparing for a world in which that exists?
I do. And to get back to your previous question, I think how we as consumers will appreciate that shift to data becoming primary and at the forefront is that architecture, I think, is inevitable. AI is accelerating it. And I think that that transition, the way it will play out is it will allow companies, it will allow technology to make faster decisions, better decisions in real time. If you think about how your consumer lives have evolved over the last 10, 15, 20 years, you have a lot more personalized experiences with every consumer vendor you deal with, whether it's things you buy, retailers, personal electronics. Those personalized experiences, though, if you think about it, take a while to adjust, right? You search for new products, you get ads a couple days later. I always run into this buying birthday gifts.
Good luck keeping it a surprise.
Exactly.
Yeah.
But if you think about it, the turnaround time on that is days.
It's kind of crazy.
To make agents effective, you have to make those decisions in real time. To make those decisions in real time, you have to process, understand, reprocess, and drive new decisions based on data in real time. The only way you're going to do that is through a data privacy type model where you can get the applications out of the way, you can work on the data directly, and you can do that in real time.
Talk to us about, we're going to actually talk with one of your customers a little bit later on, but talk to us about the relationship with Meta, because obviously when we talk about AI, one of the big hyperscale, like we just talk about the big players that are involved in this. What are you guys doing, and what's the opportunity for your company?
That's a great question. We have many relationships with Meta. As you might imagine, Meta is a very large company. They have their
Do they have a direct line to you?
They do, actually. They do. But as you might imagine, they have considerable IT footprint. They certainly have cloud footprint. They certainly have AI footprint. And we are privileged to work with them and support them in all of those environments. As you might imagine, their needs, the technology stack, what we're able to provide, the value is very different in each of those environments. On the IT side, they look like a very sophisticated, large enterprise organization. On the AI side, they're obviously a bleeding edge model developer. In fact, one of the first of the AI customers that we worked with. And then I would say the newer end of our relationship is really in supporting their cloud footprint. And we're really doing that with some of our core technology that we've developed, packaged and delivered in a more hyperscaler, large cloud player targeted product set.
Hyperscalers oftentimes like to do stuff on their own.
Yeah.
What would you say to somebody who says, maybe ask the question, why can't cloud providers just replicate what you're doing?
So I think it comes down to what's the differentiated value we provide and what is the hurdle rate to get to replicate that and what's the ongoing cost and maintenance and effort of doing that versus the opportunity cost of all of the other things that are maybe in hyperscalers' minds these days. It turns out when you look at the core technology we're providing, really, really efficient, fast access to underlying flash media, the ability to store data really efficiently, get it super fast, and to be able to do it super reliably at hyperscale, there's a lot of software sophistication that goes into that. Certainly, they have the sophistication to go and do that thing, but we already have it built, right? We've been doing this for 15 years. We've perfected it in the enterprise, and we give them a path. We give not just our existing hyperscaler customer, but the rest of that customer set. We give them a path to achieving that technology today without having to dedicate a ton of engineering effort in that area so that they can better compete on things like such as AI.
Right, and move in other areas. Just real quickly, 30 seconds, the NeoCloud storage providers. Do you guys have exposure in that segment?
Yes, so the NeoClouds are a newer, I would say, customer segment for us. We have really led our approach in that segment with our newer products that are, again, taking existing technology, packaging it, supercharging it with the performance needed for these large environments. But the other thing I'd say is people focus on NeoClouds with GPUs. They forget that part of a NeoCloud is actually a cloud. And so the rest of their storage requirements, whether it's block, file, object, actually looks a lot like large service providers, large enterprises, large tech companies that we have served through our core businesses. So our relationships are expanding. The GPU part of the NeoClouds is a newer part of the market that we're expanding into, but the demand for those solutions are growing quite rapidly.
Great stuff. Thank you so much. Really appreciate it. Of course, that is Rob Lee. He's Chief Technology and Growth Officer at Everpure here with us in Vegas.
Let's get back to the Bloomberg Interactive Brokers studio. Matt Piper, he's in for Charlie Pellet with the news flash. Hey, Matt.
Hey, Tim, thank you. It's 3:23 on Wall Street right now. I'm Matt Piper. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k, tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. To the big board we go. The S&P 500 right now is up 0.9%. The Dow is up 0.2. The NASDAQ is up 1.5% or 403 points. The 2-year yield is at 4.17. The 10-year yield is at 4.45. Oil prices still below $80 a barrel. Brent at $79.50. WTI at $76 a barrel. SpaceX falling for a second straight day, compounding on a similar size drop yesterday. Its first since it went public last Friday. SpaceX right now is down 6%. Shares are still up about 13% for the week and 35% from the $135 offering price. We are also watching Accenture. Shares in the IT services provider tumbled after it cut its guidance. Right now, shares for Accenture down 17%. It is its biggest sink since 2008 after its fourth quarter forecast fell short. Kroger right now is down as well, 8.5%. Though Kroger's sales beat expectations today, its CEO says too many people are shopping for things with a big red sales sticker rather than going down their entire grocery list and buying what they initially went in for at full price. Francis Donald is RBC's chief economist and says inflation is hitting everyone, including those in the aisles.
Inflation is a problem in America, and we haven't been hearing that from the Federal Reserve, and not just because of energy. 40% of the CPI basket is running above 3%, and that includes food, housing, daycare, medical services, everything to pet services is running too hot.
Recapping stocks, 30 minutes about left of trading before a holiday weekend. The S&P up 0.9% or 70 points. The Dow is up 0.2%. The NASDAQ up 1.5% or 407 points. And for the holiday tomorrow, we have a special edition of Surveillance from 9 a.m. to 12 noon with Tom Keene and Paul Sweeney. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Matt Piper, and that's a Bloomberg Business Flash.
Thank you so much. Matt Piper in for Charlie Pellet back at Bloomberg headquarters in New York City. We're back here in Vegas, and we want to continue talking about AI. And we really want to get into how teams are using it, productivity, ROI, and we've got a roundtable to do just that.
Sean Rosemarin is Global VP of Research and Development, Customer Engineering at Everpure. Also with us, Pradeep Bandaru, Head of Platforms and AI Workflows at the French mega-cap pharmaceutical company Sanofi. they work together. You work with Everpure. It's good to have you both with us. One thing that we've been talking about over the last, 26 minutes or so is understanding the transition from living in this app-centric world to this more data-centric world, and understanding what customers are doing differently in an AI-driven environment. Talk a little bit about how you're working with Everpure at Sanofi.
Yeah, so at Sanofi, we're working with Everpure for foundational data and AI infrastructure, particularly in our labs and manufacturing sites. And the way that we're implementing this is to really build the foundational, of course, storage layer, but then layer on more capabilities on top of that to ultimately capture data as it's being produced from the source of our lab devices, and then generate a lot of telemetry from those devices to ultimately understand what's actually going on in our labs in real time, and then ultimately process that data with a compute layer too. And so all of this really sort of sits in one lab in a box, if you will, that really sort of drives our modernization of our lab operations.
Now, you guys shared, Sean, your team shared some notes, and it talked about production AI, which we haven't really started talking about. What is production AI? And that's what you're talking about. Yeah. So what is that?
Yeah, so, I mean, look, we've been in this journey since the shot heard around the world, the ChatGPT moment. And, there's been a lot of pilots. There's been a lot of prototypes. There's been a lot of discussions about what's possible. We're now seeing, taking those solutions, those prototypes, what we've built, and now taking those to delivery at scale, production at scale, is, becoming the next big thing. It's like, hey, we built this, we tested it, it was kind of interesting. Now we want to roll into production.
Right.
And then how do we build a repeatable model to take the next projects, the next AI ideas, the next AI apps, the next AI workflows, and start to productize those at scale? And the most interesting part there is it's kind of putting some tension on, can we operationalize this? Is it affordable? Is it manageable?
I'm so glad you went there, because Pradeep, that's what I want to ask you. There's a big conversation happening right now about the return on investment for AI. And there are a lot of bulls out there, but there are a few notable bears who are basically like, this is not actually, we're spending a lot of money on tokens, but we're not seeing the results. Are you seeing the results?
Yeah, so I think when you compare, historically how software as a service had a lot of infrastructure at most enterprises to actually stand up software as a service, relative to AI and token consumption, as you're talking about, there's not much production AI infrastructure to support real production AI use cases, right? And so that's what we're trying to build with some of the new infrastructure that I was just talking about. And what actually happens is when you build that infrastructure, you actually start to mitigate your token costs from these sort of cloud-first models of token consumption, and putting them closer to your physical environments, closer to the edge, right? Where you can actually use open source models, and really all you're paying for at that point is the price of electricity, right? As opposed to cloud token consumption. So that drives ROI in the long run.
So even though we're moving from this app-centric to a data-centric world, Sean, come on back in here. So is it also, though, about kind of almost creating that app level? We've got so much out there when it comes to AI, but figuring out these platforms to take all this data and actually do something and make it productive.
Yeah, I mean,
how should we be thinking about this, of where we are?
I mean, here's my suggestion. This is the way I think about it in terms that I think everybody can get their heads around. We've coined the term AI factory. That's what we're talking about, these entities that are taking raw materials and producing outcomes. And I think, first of all, we have to think about, if we were building a factory, what's the first question we'd ask ourselves? We'd say, what are we building, right? Shoes, cereal, food, whatever it happens to be. And then we would look at what raw materials we needed in order to actually deliver against that outcome, and did we have access, or do we have access to those raw materials? The last thing we think about is, okay, now what machinery do I need to convert my raw material into that end product? And so when you think about where we're at, it does come down to obviously what problem you're going to solve, but what workflow are you looking to improve? We can't take this approach that we may have over the last few years, which is I don't know, I'll take whatever I have, I'll put it through a factory, I'll see what comes out the other end, I'll decide if it works. It's got to really be based on, what am I trying to solve? Do I have the raw materials to solve it?
So, Pradeep, what does that mean then specifically? When you guys are talking about what you're doing, what are you trying, what is the product you're trying to create? What's the problem you're trying to solve?
Yeah, so ultimately our mission as a pharmaceutical company is to bring life-saving medicines to people, right? And the data that we work with in doing that is incredibly heterogeneous, and it has a lot of metadata that needs to be captured and contextualized in order to make AI actually work. And so this is where we actually need to have technologies that capture all of that context and then structure that context into a knowledge graph, if you will, for these AI agents that are actually operating in production to do the right thing and produce the right outputs reproducibly over time, right? And so they need to also be governed and guardrailed.
Are you starting to see the payoff?
And we are starting to see the payoff in very real ways, right? And so the more context that we actually capture, the better our processes get. And ultimately what we start to see is a faster closing of this loop, as we say, right? So the faster time to science.
That's supposed to be a huge promise of this technology, Pradeep, is that it gets us to a place where medicines are developed faster. We increase health span and lifespan, life expectancy. Is that realistic? Like, you work with this data every day, so you understand it. Is that a realistic way for us to be talking about AI? Like, is it going to actually help us live healthier, longer lives?
Absolutely, and I think there's an entire growing industry of AI and drug discovery that is promising and now starting to realize those promises of speeding up the cycle time to discover new drugs and get them into patients. And so we're actually living through a pretty revolutionary time in the industry.
What does it compress? Like, can you give us years to months to days sort of corollary here?
Yeah, years to months, right? And so AI really has proven out its value in understanding the search space for new drug molecules, right? And so that's one of the most powerful applications of AI that we've seen so far.
So when we think about the ROI and the cost, can a good storage platform, Sean, essentially help bring down the cost per token? Like, this is what this is about.
Well,
or part of it?
Well, it's absolutely what it's about. So think about operational efficiency.
Yep.
And then think about economic efficiency. If I can make the ROI work and I can support it with my team without bringing any undue risk to my business, then I'm cooking with gas. Now I've got something that works. So when you look at the dynamics of it, and Pradeep talked about some of them, right? I want to minimize token usage because ultimately I am moving to a price per token. I want to maximize inference because ultimately that's what's going to allow me to turn around the answer as quickly as possible. And we're talking about a world where agents are talking to other agents as part of major agentic workflows. So as humans, we tend to think of latency is no big deal. I ask ChatGPT a question, I wait 5 seconds.
Yeah.
But agents are going to be looking for microsecond, millisecond, nanosecond type responses because they're part of much bigger workflows. So now I get to, okay, by indexing and vectorizing data, by bringing context, I now essentially get to lower latency.
Right.
But I'm also consuming less context to get my answer.
We got to run. Guys, thank you so much. Super interesting. Sean Rosemarin, he is Global VP of R&D, Customer Engineering at Everpure, and Pradeep Bandora, he is Head of Platforms and AI Workflows at Sanofi, joining us right here in Vegas. We're coming back right here on Bloomberg Business Week. Carol Master, Tim Stenovic. This is Bloomberg.
It is 3:40 p.m. on Wall Street. I'm Matt Piper. Let's go to the First Word breaking news desk for today's afternoon call. Here's Jordan Fitzgerald.
Thanks, Matt. The main U.S. averages are in the green as semiconductors advanced, and the Philadelphia Semiconductor Index hits a record high. The S&P cash is up 1%, with the NASDAQ 100 up about 2.5%. Turning to the Dow, Caterpillar, Disney, and NVIDIA are the biggest gainers on the day, with IBM, Chevron, and Johnson & Johnson declining. Accenture is holding declines at nearly 20% after results this morning, and SpaceX is extending its slump for a second straight day. That's the second day of declines for SpaceX since its IPO last week. Meanwhile, the U.S.-Iran peace deal is in effect, and the U.S. is lifting its blockade, and flows are beginning to pick up through the Strait of Hormuz. Wrapping things up, gold and Bitcoin are sliding on the day, with oil futures quiet, and the markets will be closed tomorrow for Juneteenth. My name is Jordan Fitzgerald from the First Word Breaking News Desk. All yours, Matt.
All right, Jordan, thank you so much. We have a special edition by the way of surveillance from 9 to 12 tomorrow. That is with Tom Keene and Paul Sweeney for the Juneteenth holiday. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Matt Piper, and that's a Bloomberg Business Flash.
Daddy, can I drive?
Yeah, sure, why not?
Do I look like I drive a minivan?
Shut up and drive.
Don't drive angry. Don't drive angry.
I'll drive. Shotgun.
This is the drive to the close.
If you had access to a car like this, would you take it back right away?
On Bloomberg Radio.
All right, everybody. Yes, indeed. We are driving to the close. Carol Massar, Tim Stanovic. We are live in Las Vegas. We were talking a lot about AI. We're going to get back to those conversations with the team members over at Everpure. I feel like we're learning a lot of stuff. But having said that, it comes against a backdrop where there's a lot of news within the semiconductor space, a lot of it AI-related or just kind of the macro overall.
Yeah, on that, Intel share surging today, up more than 10% as we speak. The president said that Intel will work alongside Apple to design and produce semiconductors domestically. The question I have is, Intel said anything about this yet?
Yeah, like details.
That's what I want to know.
We want to know. We also want to talk to Kujan Sabani. He is Bloomberg Intelligence Senior Semiconductor Analyst. He joins us from San Francisco. Kujan, there's a lot going on. What do we know about this? Because certainly investors like what they are hearing, and they're bidding up shares of Intel. But have we heard details about what this means?
Not at all. I mean, the good thing is that this is sort of an official, I hope, coming from the president, that Apple and Intel are going to work together, signs a key anchor external customer, but sort of the not so good is we don't have any detail, and the details is what matters here. Look, it could be a deal for Intel to use its, not the latest leading edge, the 18A, 14A, but rather 3 or 4, Intel 3 or 4 nodes, which could not mean a lot to boost confidence in its ability to compete with TSMC. It could also be that Apple is going to use Intel mainly for packaging needs, right? Because Intel has a lot of capacity, and that's what the recent deals that we have heard when it comes to external customers initially, that they're going to be packaging customers, or it could very well be 18A, 14 process nodes, which would be a significant vote of confidence. So the details could be a broad range, signifying significant volume and millions of dollars in revenue versus pretty small scale here.
So, because the details matter, and we don't know the details yet. I'm not going to have you speculate on why we haven't heard anything from Intel, but lay out the different scenarios for us like you just did, and sort of like how that would add to Intel's business.
Right, so starting from the bull case scenario, right? So if this is definitely a deal, let's say for the Intel 18 or 14 processes, which is Intel's most advanced leading edge node, comparable to something like a 2 nanometer process from a TSMC, right? So this would be a significant win for Intel, could significantly boost their roadmap of what they're really trying to achieve. That is, be the leading edge node foundry provider for any company competing neck to neck for TSMC here in the United States. This could be a blueprint for all the other names, especially the AI chip names, to come to Intel and start manufacturing. Again, this brings significant volume in terms of revenue, because this is where Apple builds majority of its chips, if it's high-end, the up-and-coming M5 and the up-and-coming chips for its new iPhone, right? Mid-range scenario where, let's say, an Apple is using it for a 3 or 4 process, these Apple still makes, builds chips on 5 nanometer, 4 nanometer, etc. Much less volume, sort of not that vote of confidence that Intel is ready today to volume manufacture at scale the leading edge nodes. And the sort of the worst case, I still want to call it a worst case, but the bare minimum would be that Apple is purely using Intel for its packaging needs and getting a few I/O diodes from Intel here and there.
So this is,
and that would be much less, packaging would be much less revenue.
So yeah, and so this isn't about something that could be really helpful for Intel's foundry business, right? Like this is what they're trying to build out.
I mean, something is better than nothing, right? And packaging is also part of the foundry business. Getting an external customer onboarded, whether it's for larger volume or whether it's for not the most leading edge node, it still brings a customer in where there's a hope now that once they look at your yields, once they qualify you for certain processes, the vote of confidence increases and eventually you can onboard them for much higher volume at lower nodes.
I thought Apple was trying to do more development in this on its own and rely less on outside partners. I know, and like I'm kind of oversimplifying things a little bit, but could you kind of explain how that falls into what a potential deal would look like?
Yeah, I don't think Apple has ever signaled or even suggested they want to go in the chip manufacturing business. I think they always want to do certain parts of the supply chain themselves, which they have been doing. I think what they have suggested, you might be implying to getting more control on the capacity for their own chips. So again, directly sourcing manufacturers and supply chain partners to sort of own that stack for themselves versus not to compete with other chip creators. But I don't think they've ever suggested they want to go into, we would be very, very surprised if they start manufacturing their own chips by themselves.
Hey, what's the matter?
Is Apple is a small, I mean, I'm looking at the SPLC function on the Bloomberg terminal, but of Intel's customers, Apple's a pretty small customer right now, right?
Yep, it is. I mean, Apple designs its own chips, right? So it has, for the majority part, taken out x86 chips from Intel. So it's not a big chip buyer when it comes to its central processing units from Intel. So definitely a very small customer today.
Hey, one of the things while we've got you, just got about a minute and a half left here. There's a story by Mark Bergen that talks about Amazon and talks to sell its custom-made artificial intelligence chips for use in other companies' data centers, a key expansion of its efforts to cut into NVIDIA's dominance. What do we need to know about this one?
Yeah, that's not a surprise. That has actually already happened. So if you remember, Amazon being an early investor in Anthropic, right? And Anthropic already has used cloud compute capacity, which are built on Amazon's own custom ASICs, which are an alternative to a GPU like the one from NVIDIA. So that is not a surprise. This has already happened. And there's also now a proven blueprint what Google is doing, right? Selling compute cloud capacity based on its GPU. So it's a no-brainer that sooner than later, Amazon was going to come in this route where they will now start offering, beyond just Anthropic customers, cloud accelerator compute capacity, which will be running on their own ASICs. So we have been expecting this to come for quite long.
Can we do quick 30 seconds on Apple and the company's CEO talking about pricing, just real quickly? Just things are expensive.
Well, yes, input costs across the board is rising, especially for memory, which they are seeing a significant impact from. So, I mean, this is no surprise. Foundry prices are rising. Most foundries are raising prices, plus component pricing are rising. So, I mean, input costs across the board to make a chip is going high.
It's expensive, folks. We know.
Yeah,
right?
that iPhone, $100 more expensive it could be.
Kunjan Sobhani, thank you so much. Have a great weekend. He's Bloomberg Intelligence Senior Semiconductor Analyst. Folks, we are counting down to the closing bell on this Thursday, holiday shortened week. We're seeing the NASDAQ extending to its session high of about 2.7%. We're back in a moment.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, yes, indeed, everybody. Bloomberg Business Week Daily, Carol Massar, along with Tim Stenovec. We're live here talking a lot about AI with the Everpure team, and I feel like what a kind of interesting, smart bunch of conversations, and then hearing about real use functions, if you will, with Sanofi and them talking about how they're putting things to work, and this whole idea of like data, but it's not just like a broad data grab and trying to figure things out. Like the inputs have to be smart.
Yeah,
And then, I don't know.
Well,
It's just fascinating.
It's the kiss of death when we're doing a program, and I bring up something that we talked to somebody about during one of the breaks. But we did have a fascinating conversation with Sean Rosemarin on mic, but also we kept him after because he explained to us context for how important context is with AI. And I think it reminded me of a conversation, we didn't have a chance to bring this up, but it reminded me of a conversation that I had at Bloomberg Invest back in March, hosting this roundtable with a bunch of AI executives from financial firms,
right,
who were talking about the way that people don't understand how to prompt LLMs because they're not providing enough context. And what they were telling us is, if your LLM is hallucinating, it's your fault. Basically.
You're not asking it
You're
the
not
right
asking.
way.
Yeah, and one guy at the dinner said, "I'm telling my employees to write prompts that are 2 to 3 pages."
Yes. I don't know if you know, there's like an internal Bloomberg course too that you can take, and that's the whole thing. Like, not the whole thing, but they say it's about how you ask, the questions you ask, right? And it has to be these broad, general questions.
Right.
That's why you're going to get yourself. It's going to pull in data that isn't relevant, and that's why you get hallucinating or something not exactly right.
One thing that I like to do is like point the camera at a bug and ask the LLM, "What bug is this?" Okay.
And is it right?
Well, I don't know if it's right because I don't know what actually bug it is. But what you get a much better answer if you say, "Okay, I'm in this part of the country,
right,
and it's this season,
right."
And you give a hyper-specific location, and that's a good example of sort of context for asking one of these LLMs or frontier models a question.
Well, talking with Sean Rosemarin, who's the global VP of R&D and customer engineering, he made this. He gave an example of like you in a picture in a canoe, on water, and AI can identify that it's a man in a canoe on water, but there's context around it. Why were you there? What were you doing? Like there's so much.
What was the meal you had the night before? Who's not in the picture?
And that's what you want, right? You want the context of things.
Easier said than done when it comes to, how people are using this technology.
Yeah.
But that part of the conversation made me feel pretty good about the whole AI versus human beings.
We just had a gentleman fall. Are you okay? Okay, we just want to make sure. There's a little step behind us, and I just want to make sure he was okay. We're on a little bit of a platform.
Humans versus machines. Like, it made me feel pretty good about the human element of that conversation.
Yeah, and how we think about it, right? I don't know. I think it's really interesting, and certainly for a drug company, a major pharmaceutical company that's thinking about how do we create new treatments, you want to make sure that the data that you're dealing with and how you're approaching it and using AI, that you get to an output that is safe, productive, useful, that advances things, right?
Well, that's potentially where guardrails come in. And that's,
it's the other thing
we haven't even mentioned today, but the question about, the federal government and the conversations it's having with Anthropic about its own Mythos model.
Right.
And the guardrails that need to be put in place for that, and Table 5.
Well, we've talked a little bit about sovereign AI, right? In terms of what governments,
later,
and we're going to do that later. And I think that's a really important aspect of it because they have to think about the guardrails and the security aspect of it. It's a big thing. Carol Massar, Tim Stenovec, we should remind everybody we are racing to the close. We are wrapping up the trading day and rating and the week overall. You've got the NASDAQ pretty much near its highs of the session here as we get ready to wrap up. So quite a rally as we get ready. 2.6% higher on the NASDAQ 100. So you've seen investors risk on trade. All right, stick around. We're going to have more, too, right here in Vegas. More members of the Everpure team. That's coming your way.
It's 3:58 on Wall Street. I'm Matt Piper, and Wall Street is staging a comeback after a peace deal between the U.S. and Iran spurs optimism that a revival of the Strait of Hormuz will ease inflation risks. Moments before the close, the Dow right now is up 0.2%. The S&P is up 1.2%. The Nasdaq is up 2% at 525 points. The 2-year yield is at 4.17. The 10-year yield is at 4.45. Comrex Gold up, down 3% at 42.35. The Bloomberg Dollar Spot Index is up 0.3% at 1217.37. Oil, AAA says gas prices dipped below $4 a gallon for the first time since March. Pump prices have retreated from their May peak above $4.50 a gallon, helped by a decline in global crude prices. Oil has come under pressure due to a combo of record U.S. exports, a sharper than expected slowdown in Chinese demand, and a steady trickle of shipments through the strait. Brent right now at $79 a barrel, WTI at $76 a barrel. We've also learned that a growing stream of stranded oil is making its way out of the strait as the U.S.-Iran interim peace deal sparks a flurry of activity. Olivia Paggi's with consulting firm J.S. Held and says there is a reduction of dependence incoming.
Iran now has the upper hand over the strait. They can use it as leverage. We have seen countries, the UAE, Egypt, and others are now desperately trying to create alternatives to the Strait of Hormuz. So they're building pipelines through the Red Sea. So there are attempts immediately now to try to diversify and reduce dependence.
Stocks we are watching. Intel shares of the tech giant surged after President Trump posted on social media that Apple will work with it to design and build chips in the U.S. At the close, let's take a look. First Carolina Financial Services is ringing the closing bell to celebrate its initial public offering. Right now, the Dow at the close gaining 0.1% or 74 points. The S&P is up 1% at 80 points higher. The Nasdaq gained 496 points at 26,517. A good day on Wall Street to end this shortened holiday week. We have a special edition of Surveillance from 9 to 12 tomorrow with Tom Keene and Paul Sweeney. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Matt Piper. That's a Bloomberg Business Flash.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
It is Bloomberg Business Week Daily. That is Carol Masser. I'm Tim Stenivek. We're not in our Bloomberg Interactive Brokers studio on this Thursday afternoon, this holiday shortened trading week. We are instead in Las Vegas. We are on site from the Everpure Accelerate Summit in Las Vegas. We're going to talk to more executives from the firm and also more customers of Everpure in just a few minutes. The conversations have been really focused around AI, the changing way that companies are turning from a world that really has been dominated by apps into a world that's dominated by data and making sense of that data. Suffice it to say, there are a lot of really smart people in this room who went to a lot of universities with, acronyms like MIT, and we're learning a lot.
Well, what's interesting is we have gone, it's interesting how we've gone where companies were penalized if they didn't spend on AI, right? And they weren't focused on it. And now we're moving into this, well, wait a minute. Okay, I get the spend, but let's talk about what are the returns, productivity gains, what's the return on investment? It's not just necessarily everybody just playing around with it. How do we really get a payoff? What's the output? What's the end game? And that's what we're kind of hearing more about it. So we're going to continue those conversations. We've got the Chief Financial Officer of Everpure. Talk about return on investment. I feel like this is the perfect person to talk to about this.
On the product side, Chad Kennedy is joining us, Vice President of Product Development over at Everpure. The question about re-architecting data to support AI and also the product pipeline, making sure that he and his team are making products that aren't necessarily that have a moat and aren't can't be copied by other companies very quickly.
All right, and then we're also we've touched on sovereign AI a little bit. Governments, right? Countries around the world, what they are doing to kind of protect themselves in this AI environment. We've got the CEO at HR Tech at FedHive talking about using federal cloud specifically as a proving ground. So if you think about security guardrails, they've got to be thinking about this. And what maybe they learn and what they do might be a model perhaps for the corporate environment or for institutions more broadly.
Well, just a reminder how we closed out the day from an equities perspective. It's only 1 o'clock here in Las Vegas, but equity markets are closed in New York. The NASDAQ Composite up by more than 1.9% today. The S&P 500 up by 1.1%. The Dow Jones Industrial Average up 1/10%, excuse me. In the S&P 500, information technology, consumer discretionary, communication services, and industrials led the way in the green. Energy, financials, healthcare, and consumer staples were lower. In terms of the individual movers in the S&P 500 day, as I mentioned, information technology leading the pack. SanDisk up 11.5%, Corning up 11%, Intel up 10.6%. We just spoke to Kunjan all about that. Supermicro up 10.3%. Accenture falling today. At one point the most ever, but it closed down by 18%. Kroger down 8%. Steel Dynamics down 7.5%.
Yeah, and I'm just looking for the week overall. I just pulled up the NASDAQ 100. It's up about 2.6% in this holiday shortened trading week. And then I'm just going over to the S&P 500 quick check. And of course it was, as we said, 4 days. That averaged whoops, it helps if I put the right year in. Up about just shy of 1%. All right, let's go back to Bloomberg headquarters in New York City and check in with our own Eric Weiner. He is Bloomberg News Senior Editor of Equities Americas, joining us. Eric, boy,
everything's fine, Eric? Seems like it.
You look at the NASDAQ 100, like the risk trade is back. Is everything fine?
It's been a weird week, to say the very least. I mean, you kind of nailed it when you were talking about the differences in what is playing and what isn't. I mean, if you look at the sectors in the S&P 500, this week you had tech and industrials doing really well. You had energy and healthcare not doing really well. These are growth areas that are coming along, and areas that usually are kind of safety areas, and energy where oil is falling. It's falling behind. And it's interesting that you're in Vegas at that show, because when you ticked off the names of the companies that were leading today, you're talking about everything that's going into this AI trade, whether it's memory stocks, SanDisk or something like that, or the fiber optic guys like Corning. You didn't mention chips, but like the SOX is on a crazy run. It's up like 90% for the quarter. It's on its way for its best quarter by a lot, like since forever. Like the closest would be like 2000 when it was like up 66%. So like all of this momentum, all of this money rushing toward products that are going to drive the technology of the future has caught enthusiasm, and it's playing up against what appears to be a reduced risk coming from Iran. So if that risk goes away, we're back to where we were. And if you think about it, the fundamental setup is pretty strong.
What if the risk doesn't go away, though?
Oh, well, that's the flip side of this. I mean, what's very interesting about all of this is that we know so little and are betting so hard on it. If you think about just forgetting about the individual points that are in the MOU, the fact that it's got a 60-day delay, and then we're going to really address those points, and then all of a sudden out of the blue, Trump comes out and says, well, if they don't agree to it, we'll bomb them again. So there's a lot of instability and a lot of hope that this is toward, we're getting to the end of things. What we've been hearing from traders really was that, for lack of a better term, Trump showed his colors. So he's willing to concede on all of these points that were supposedly inviolate. And now, we're looking at an agreement that doesn't address any of them. If that's the case, then the belief is that we will then get to some sort of end game. and then we'll see what happens. But as you question properly whether it's easily shaken out in terms of supply chains, whether it's easily shaken out in terms of pricing and inflation. That is something that remains to be seen, and the market is really putting a lot of faith in that.
I listened to Vice President J.D. Vance's whole press conference this morning. I think one challenge that it seems like people have right now is still the assets in that part of the country, or that part of the world, rather.
Yeah.
So, you have troops there, you serve, service members. They're basically there to make sure that Iran follows through with what's on this MOU. And again, the MOU is just that. It's an MOU. It's not some sort of treaty. It's not some sort of peace deal. It's an agreement to start talking about this other stuff, including the nuclear issue.
Correct.
And at that point, that is the core of what this is about. And it does seem like the equity market has looked past that. But I think, you hear from people that can still be a risk.
It's another clock ticking. Let's put it that way. And Iran now knows that they can basically bring the world to its knees. We've seen that in a big way. Hey, I just want to, before we go, SpaceX, down 2 days in a row. It's still up about 37% from its IPO. We did see Moody's actually come out with a rating on their debt, issued a Baa1 long-term issuer rating to SpaceX. They say the outlook is stable as a new issuer, balanced financial policies, and a commitment to governance, transparency, consistent with public company standards were key considerations to the assigned rating. I mean, is this just kind of to be expected? But I do feel like, there are going to be a lot of questions now that it's a publicly held company. We're going to be watching earnings very closely.
That's exactly it. We don't have the numbers yet. So what you got this week was that initial rush of Elon enthusiasm, and we've been dying to get into this stock, and now we can. But then as you start unpacking it and you start looking at where the valuation is and just the lack of numbers behind anything, it's very, very hard to value. So, you saw this big rush in, and then some people coming out and, pulling stock out. What you haven't really seen yet is Tesla falling apart. That's been interesting. Tesla's sort of been holding up. So the idea was, okay, well, we're going to move from one Elon vehicle to the other. But, right now, SpaceX is up and Tesla is still holding in there. And we wait for more information, a lot more information to come.
All right, looking forward to it. Hey, Eric, have a great weekend, a long holiday weekend. Eric Weiner, he's Bloomberg News Senior Editor at Equities Americas here at Bloomberg. Really appreciate it.
Now back to our coverage here at Pure Accelerate 2026 at Resorts World in Las Vegas. We're talking about how AI is resetting the economics for storage, power, cloud, and more. We're talking to industry leaders, customers, partners to really understand this shift. One of those leaders is Chad Kenny. He's Vice President of Product Development at Everpure. It's a roughly $25 billion market cap provider of enterprise storage solutions. Welcome. How are you?
I'm doing well. It's been a fun show.
Hey, you've got a really interesting background. It's kind of your second stint at Everpure.
Yeah.
You were first there in 2012. You were a founding member of the technical staff. Then you went to work some startups that were acquired by some really big names. Now you're back at the company. The landscape has, I think, fair to say, changed a lot.
Quite a bit, yeah.
Especially in the last 3 years.
Yeah.
You're leading product strategy, messaging solutions. How has that changed, the product development world changed since the AI boom began?
Yeah, so I think there's a couple different big areas of transformation. The first is, Pure built a really killer product, and it was great to simplify the way storage was managed. We realized pretty quickly that customers were looking to buy a platform to reduce silos, enable better workflows, get a better understanding and representation of the data. And as we've evolved, I think everyone's come to recognize that data is at the core of everything now. AI has really brought that to the forefront. And in doing so, we really needed to be able to rationalize the infrastructure stack in a very different way than what it had been seen before. And that's really kind of our mission. Our mission is to, make the data be a core, enable it to be rationalized by AI, and so customers can get the biggest value they possibly can out of it.
How are you seeing, though, companies be more discerning in terms of what they want to spend on, what they want to do, and what they're saying, well, okay, we'll do this, but, what's our payoff, or how quickly do we get there?
Yeah. So the ROI TCO discussion's pretty much totally at the forefront for any of these big investments. I think AI...
Is it really now? And
when you say TCO, you mean total cost of ownership?
Yes.
Okay.
Yeah.
And is that a significant change before you go into it? From maybe 6 months ago, 12 months ago?
We're definitely starting to see people wanting to rationalize the value that they get in the solution, like consistently. I think what they're seeing now is am I making the right investments that give me the agility to be able to execute effectively? That one's probably become more of the forefront in the last 6 to 12 months. If you think about the way things are changing, AI pretty much every 6 months is a completely different world. All new innovations are being built, and so you have to build a framework of which is super agile and can move with you. And so you definitely don't want to lock yourself into a corner in these ones.
What do you mean it's changing? Like,
Yeah.
what specifically do you mean?
Sure. New models come out, new capabilities, new workflows, new ways of accessing data in different mechanisms. If you look at what we're talking about here at this show, is we're talking about data becoming primary, data primacy. If you think about that world that exists today, architectures were built in a very different computing era. It was built in an era where compute was assigned to applications. Now we're really starting to rationalize that AI needs to have understanding of context of everything in order to truly make decisions and execute effectively.
So that's part of the training to inference conversation, which is something that we want to talk to you about. I'm just curious about how the inference part of this is changing how customers are thinking about storage and data infrastructure.
Yeah. So everyone wants to get value from these models. They have lots of power, whether they build a small one or a large language model that's out there as a foundational model. They want to use their data, though. They want to have the data be representative so they can run workflows. As an example, if you build an agent that actually executes a task, like a profitable order, as an example, only approve profitable orders. They need context from many different systems. It's not just the one system creating the quote. They need to know the supply chain. They need to know the how it's manufactured. They need to know the total cost. That context is siloed today in many different applications, and it requires human integration. But these agents only effectively execute with consistent shared context. And that's the big change that's happened these days is people are realizing while the power's there, the data is not ready for this. And they need that shared context. They need a system of record that's understanding across all these applications. And that's what's really changed lately.
What about security, though? Can all data easily be shared across the platform? Or is there a need to be those protective silos for some?
So what's even worse is people are taking agents and connecting them to all their apps, which has no security or governance really built around it. It's just kind of opening it up altogether. When you build a shared context model, you can apply governance there and controls to what has access to what. And that's really the big win, is you can start having agents do workflows, but govern the way they access the data below.
Do you think the private sector is going to be way ahead in terms of governance issues versus governments and global governments? Or is that like a really silly question, like naive?
No, I think everyone's kind of going after a similar methodology, right? They all want to be able to access their data more effectively. I think they're challenged by the way things have been built in the past, right? And so now everyone's got to try to do things differently, and it's not an easy path to get there. We built this thing called an enterprise data cloud. It was a vision to help customers on that journey, right? It was helping them get rid of storage silos first. It was helping them build autonomy around operations so they could execute more effectively. And now we're bringing this data intelligence layer, which allows them to rationalize their data holistically.
Yeah, I'm wondering about the competitive landscape out there. And as you know, you're VP of product, so you need to build something that is different than what's out there. Build something that keeps customers, attracts new customers. You've got Dell EMC, HPE, NetApp, the hyperscalers, Vast Data, among others in different parts of the business. What does your product pipeline look like to make your offering unique?
Yeah. So the first and foremost is we just had a simpler product holistically from the get-go. We then built an abstraction layer on top of that to make it like a cloud-like experience. That was what many people went to the cloud for originally, but we made the simplicity in operating the architecture. The big, though, win, which was today's or this show's big announcement, was being able to rationalize data outside of Everpure, meaning that our data intelligence layer can access all data everywhere without the customer having to send us all the data. This is a big difference in our architectural approach. Most people say, give me all your data and then I'll help you rationalize it. We are not saying that. We are saying, hey, it will work really great on our systems, and we built an amazing cloud to deliver that with our enterprise data cloud. But we can help you understand where your data, what your data is, where it exists. That is a very different approach than anybody has really gone after, and that's what we're doing with our universal data intelligence layer.
So I am curious, Chad, what does it mean from the investment perspective? Because I think about the things that certainly our audience, an investing audience, and are watching the spend by certainly the hyperscalers, the energy component. There's a lot of moving parts here. How does that change maybe the investment story?
I think our opportunity here is pretty massive in just scaling the company beyond what we're traditionally known for, which was just storage infrastructure and building clouds for customers. I think now being able to rationalize the data, we not only move to new personas and new buying centers, such as the chief data officers and those entire teams, which we weren't previously talking to, but opens up an even broader ecosystem of development on top of the substrate for next generation applications. So I think it brings us into a couple new massive areas that we didn't have access to. Oh, go ahead.
But more broadly in the investment space of what we all talk about and the build of data centers and the demand for chips and all the components, does that all still make sense to you based from what you guys are seeing and what your clients are needing from you, but then that bigger picture?
Yeah, I think we've become a close partner with the computing folks in the infrastructure area because we have that rationalization of data. People are going to want to pair that with the NVIDIAs and other computing infrastructures that allow them to be able to get that value out of their data as they build these next generation applications.
I'm wondering how day to day in your life and in your world you're actually using AI.
Yeah. Oh, a multitude of areas. So I have agents doing research that send me every single morning a kind of a download of what's going on in the competitive landscape. I have them sending me ideas on how I can change my workflows to actually make them more optimized.
Are they good ideas, though?
Oh, it's hit or miss, right? And what's funny is you can say this one kind of sucks, right? Give me something a little bit better. And it will actually automate and change the way that they actually do things. I use it quite a bit in content creation. So I have a version of me that writes exactly like me, and so it helps me be able to get content out faster. When we write PRDs for product development, it goes through and scores it as whether it's actually a good one or not based upon the feedback I many times get from engineering. We use AI in development of new dashboards to understand our own, business in a more dynamic way. It's really an interesting model because we create a very core data structure within our environment, and then we use AI to rationalize it, not through your traditional analytics environments, but actually just using natural language to ask it questions to give me answers to data versus me having to create dashboards to look at it.
How long in your career have you been talking about AI? and how is it so different, how things have dramatically changed and how it feels like the acceleration of change.
It's pretty massive.
It's pretty massive.
I think the newer models, especially in software development, have got unbelievable. They've gotten to a next level. We've been into AI since early days. It was 2016 when we did our first partnership with NVIDIA, and we built a stack with compute NVIDIA GPUs with our storage, and that was more around your traditional machine learning. This whole generative model world is a whole nother world altogether. And so I think we're using it inside the products. So when we say we're building autonomous infrastructure, we're using AI to actually take customers' telemetry data and help them make decisions because they can no longer run at human speed anymore. You've got to run at machine speed now. And so in that case, you're getting recommendations and you're saying, yes, I'd like to do that. Over time, you say, don't ask me anymore, just go do that.
So no question, it is making you more productive.
Oh my God, tons. I'd say we rate our PMs comically enough on you're
product
two
managers.
times, you're 2 times a PM from all the way up to 5x PM for people who are using all these various different types of tools, right? And so we're helping to grow them in this space so that they get more productivity, and we have different results than what we would have had if we had to try to do these things manual for analysis and the like.
Kind of wild. Unbelievable. Hey, good stuff. Thank you so much.
Yeah, thanks for having me.
Yeah, no, thanks for inviting us all in. Ted Kenny is Vice President of Product Development at Everpure, joining us at Everpure Accelerate 2026 right here in Las Vegas.
Let's head things back to the Bloomberg Interactive Brokers studio. Matt Piper is in for Charlie Pellet. Matt, take it away.
Hey, Tim and Carol, thank you so much. It's 4:21. I'm Matt Piper. Wall Street stages a comeback that saw stocks joining bonds higher. A gauge of chip makers rose to a record with Intel soaring. That was after President Trump said the firm will work alongside Apple. Intel closed up 10.5% on the day. Let's take a look at how the other major indices closed. The S&P gaining 1.1%, closing at 7,500. The Dow up a tenth, closing at 51,564. The Nasdaq taking in 1.9%, now at 26,517. The 2-year yield is at 4.17%. The 10-year at 4.45%. Oil still under $80. Brent at $79 a barrel. WTI at 76 a barrel. The Bloomberg Dollar Spot Index up 0.3% at 1217. The stocks we're watching, Smith & Wesson. The gun maker posted a 27% jump in revenue in its latest quarter as new products, specifically handguns, helped the company gain market share. Shares closed up huge, 17%. Well, we are still looking at and talking about SpaceX. Its shares fell for a second straight day, closing down 3.5%, still at $185 though. That extended yesterday's decline of nearly 5%. Volatility is likely to continue as investors weigh lofty expectations for future revenue growth without a clear path to achieving them. SpaceX, by the way, will be eligible to be added to the NASDAQ 100 index after 15 days of trading, thanks to NASDAQ changing its rules to allow faster entry to mega-cap IPOs. And for the holiday, tomorrow, a special edition of Surveillance from 9 to 12 p. Eastern with Tom Keene and Paul Sweeney. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Matt Piper, and that's a Bloomberg Business Flash. Tim and Carol?
Hey, thanks, Matt. Matt Piper in for Charlie Pellet. As we mentioned, we are at Everpure Accelerate 2026 here in Las Vegas, talking about how AI is resetting the economics for storage, power, cloud, and more. We've got Tarek Robbiati with us, Chief Financial Officer of Everpure. The $25 billion market cap provider of enterprise storage solutions. Tarek, good to have you on the program today. You were CFO of Hewlett-Packard Enterprise. You were CFO of Sprint. You've got a Master's of Science in Nuclear Physics and Electronics. So there are a lot of different directions we could go.
I feel like an underachiever. I'm just going to put it out there.
Well, I do want to start with we talked about this with Charlie a little earlier. The big theme of memory prices.
Yes.
I mean, because this is what you have to navigate as CFO.
Yes.
Of the company. Demand for flash storage, it's driven prices higher. Margin concern for customers, though. It's been a boon to some public companies, including SanDisk, Western Digital, Micron, among others. Component cost inflation. How is that changing the Everpure story?
So it has changed not just the Everpure story, but it has changed the entire industry, because what we're witnessing is a CapEx super cycle. And effectively, if you look at the next 3 years, and if you consider the cumulative CapEx spend of the hyperscalers, just that group, the estimates vary, but it's budget, right? So it's quite extraordinary.
Wow,
the
good
amount of money that goes there. And then off that figure, I've excluded the AI titans, so the likes of Anthropic, OpenAI, and so on. And then you have other players, neoclouds, players like CoreWeave and Crusoe and others. So the demand is real. And so effectively what happens is that the supply is tight, and the industry has to adjust and rebalance the supply-demand equation. And that's what we've gone through. So it is a change that is not temporary. It will revert back once more capacity becomes available, but we don't see that demand-supply imbalance abating before the first half of calendar year 27.
2027.
Yeah. Will it get back to what will the prices look like then?
The honest answer is no one knows.
Right.
And it really will have to revert back to the mean. How quickly will that be is a big question that everybody's asking. But that is typically what happens. And maybe there is a new mean as well. It may not be back to exactly the same level either, because the world has changed, and now, silicon is much, much more in demand than ever before. Mm-hmm. And that's the practical reality.
So how do you as CFO kind of think about your own needs within your company and balancing the spend where you do overspend because you need to be in it, versus holding back? Because these cycles, right? Like there's a ramp up, and then prices come down. Like you just got to kind of find your way through. So how do you navigate, and how do you make choices right now?
So the trend was very sudden and rapid, and started to materialize at the end of last calendar year. And you probably heard it from Charlie that the cost of NAND jumped by about 600 to 800%. Now, we are lucky because, by design, I should say, we're lucky to have a great team of engineers at Everpure that have designed solutions that use a limited number of components, and those components are managed by way of software. Mm-hmm. So when you really look at how much of our cost base is truly dependent on components, it's only about 17% of total revenue of the company. And
so that's a big plus.
That's a massive plus.
Yeah.
And so when you are having to face a very large increase on a relatively small proportion of your cost base, you can withstand the shock. But this is not something that was easy by no means. So sorry.
Well, what about customers withstanding the shock? Because because I'm curious about demand elasticity here, product delays among enterprise customers, or is AI infrastructure modernization remaining so strong that pricing has really not affected demand materially?
No, you're spot on. So we can withstand the shock, but we have to pass some of it to our customers. No question, and we did, but we wanted to share the pain. And so what we have done is we've taken a very intentional approach to the way we priced. Our price increases were more gradual than the competition, and they were also of a lesser magnitude on a cumulative basis. And the reason why we did that, it was very strategic. It was effectively, we did not want to profiteer from the crisis. We wanted to make sure that we manage the business for the long run. Customers have long memories. They won't forget certain things. And so what we have done is we wanted to make sure, to your point on demand elasticity, that we don't get to a point where we're testing levels that are unacceptable from a customer standpoint. And so we are very careful in the way we handle pricing. And we are operating, and we've chosen to operate at the lower end of our historical gross margin range. Our gross margin range has been between 65% and 70% on products, and we are operating at 65.5%. So really at the bottom, and that was intentional because we wanted to make sure that we managed the business for the long run and protected the franchise.
So what do you give up in order to be able to do that? As CFO, where you have to maybe make some choices.
Exactly, and that is about the trade-off you make between having more profits in the short term or more growth in the short and longer term. And we chose, I was a strong advocate that we needed to keep our market share, take a stance, and continue to grow the business and grow the top line. That's why we grew 35%.
So carry that over to clients and customers who are thinking about how much do we spend with you and other companies and entities within kind of the AI build-out, trying to figure out their own ROI and where to spend.
Yeah.
Take us there.
Yeah. So whenever you look at an industry that faces very sharp price increases, what tends to happen with customers who have still the need to spend is there's a flight for quality. And the reason why this is, and particularly important for the AI revolution that we are entering, is that your return on investment is measured over the long run. Therefore, if you invest today, choose carefully and choose the best possible product from a quality standpoint that withstand the test of time. Because the estate that any one of our customers has continues to grow from a fleet standpoint. They have greater and greater data needs all the time, and therefore they have to revert to solutions that will be there with them for the long run. And that's where we come in.
I want to shift the conversation a little bit to talk about revenue mix, and it's sort of where you see that going. The business has shifted. If you look back at fiscal year 2020, subscription revenue was only 25% of total revenue back then. Now it's more than 46% in the most recent fiscal year. How high does that get?
I quite like the fact that we are balanced between product revenue and subscription revenue. That's really, really important. We like the fact that subscription revenue is at about 46%, as you pointed out, but we want to continue to grow product revenue. And the reason why that is that product revenue measures your ability to really penetrate the market and to really expand your market share. Subscription revenue gives you more certainty, more ratable revenue, more certainty on free cash flow in the future. So we need a balance on both. Right now, I would say 54, 46 is actually a good mix. I like it that way.
So as is good, and investors and analysts should think to themselves moving forward, it's going to look like that if all goes according to plan over the next couple of years. It'll continue like that.
Yes, and also the thing that we have to reckon, and when you move revenue that is to a ratable revenue, then you're going to dilute your revenue growth. And the fact that we're growing in totality and on both is a really good sign for our company, and I'm very pleased with that as CFO.
I want to go back to conversations you guys are having with clients, because as everyone continues to play with AI, it's got some CFOs, as you know, again, I'm going to go back to concerned about their own budgets. Uber has set usage caps after it blew through its AI budget in just 4 months.
Yes.
So what are the patterns you're seeing? Are your customers kind of moving away from experimenting with the technology to budgeting for recurring spending? Like, are we starting to see more of that happening?
That is very hard to tell you. I would say you see a bit of both. You still see budgetary expansion, and you also see experimentation. And that's also why our Evergreen One offer, which is an SLA-based offer, whereby you subscribe to a contract that delivers specific levels of performance, is great to cater for those customers who still are uncertain about their budgets and how they want to go about continuing to experiment.
So they have to hit certain performance targets.
We have.
Or you,
we are
you
accountable.
do.
We are accountable
then-
by contract to our customers to deliver a certain level of performance, and the customer can ignore what the box that delivers a performance and just judge us based on what we deliver for them. And it's a subscription contract that has different terms depending on customer choice. And it helps them experiment and doesn't force them to buy something that they may feel is more expensive. And so you have both. You have customers who go for higher quality systems, they have more defined plans, and you have customers who are still searching for what they want to do, and we help them both ways.
We're always trying to figure out where we are in this cycle right now. I mean, and you have to look at projections, you have to understand where we are and where we're going. Is this a cycle? Or are you confident that today's demand is durable and sustainable rather than a temporary infrastructure build-out?
I think it's a super cycle. I am firmly of the belief that this isn't a short burst. I think there's real demand underpinning it. I mean, I go back to my estimate on hyperscalers. It is only representing roughly 90% of their operating cash flow, meaning they can afford it.
But just before you can afford something, doesn't mean you should spend.
Oh, totally. Totally agree. But they have very clear plans. Of course, I mean, my book, a budget is never an authorization to spend.
I was just going to say.
But I'm pointing to you that they have a lot of great plans, and their spend and the estimates that brokers have about them point to the fact that they represent about 90% of their operating cash flow. They're not stretching their balance sheet. That's where the uncomfortable zone for a CFO comes. And they can do that, and you have to, if you believe in the AI story of what it can do in terms of changing the world, which most people do, and increasingly do more, then you can accept that this is not a short burst. It's there to stay.
Great stuff. Thank you so much. Thanks for being part of our conversations here today. We really appreciate it.
My pleasure. Great meeting you.
Tarek Robiati, he is the Chief Financial Officer of Everpure, joining us here at Accelerate Everpure, Las Vegas.
When we come back, how AI is used in highly regulated environments like governments. That's next on Bloomberg Business Week Daily.